The sectors that could be in focus then, Tom, and we'll keep an eye on everything UK stocks related. We haven't seen a huge amount of movement in the pound because of the political news flow. Angela Rayner possibly ready to stand. Our reporting suggesting that she's is ready to stand. We'll watch gilt yields and see if that has an impact there. At the moment, the European bond market session has shown lower yields. So will that be continued by the UK entering the fray? Tech stocks in focus. We've got a lot of market closures around Europe, and some of those companies that you might expect to rally on the broad general AI enthusiasm we're seeing in markets right now might be in markets that are closed, so we keep that in mind. Burberry is in focus because we've had numbers out from the fashion group, sales rising more than expected at the end of the fiscal year, like-for-like sales rising 5% in the fourth quarter then, Guy.
Okay. Ascension Day. Here we go. Let's find out exactly what is happening in Europe. As Anna says, a bunch of markets are closed today, but we have some that are open. And here they are. We've taken Switzerland off the board. Some of the Nordic markets are closed as well. The FTSE 100 is expected to rally this morning, but we'll see what happens elsewhere. The Stock 600 expected to pick up as well. Not seeing the rally thus far. The FTSE, there we go, bit of green. There you go, Stock 600 up by, let's call it 1/10%. We're expecting a little bit more as these markets gather their momentum, but we haven't got it yet, which is interesting. So maybe a little cautious, a cautious start this morning. We'll wait for the CAC to open, the DAX, the AEX and the IBEX. The AEX is up by 0.3%, the IBEX is up by 0.6%. The DAX has clearly got no news. Yesterday was Germany Day, not today. The DAX is up a full 1%. The FTSE 100 beginning to gather a little bit of pace. The CAC is up by 0.7%. Tom.
Top sector right now, retail, currently up 0.9%. Tech is having a strong session, as we expect, with the handoff, of course, from Asia and the US. So tech is up 0.8%. Banks also gaining 0.7 at least so far. Just two sectors in negative territory. Basic resources, after a strong session, very strong session yesterday for that sector, is currently giving up some of those gains, but not all of them. Currently down 0.6%. That is the single sector right now that's in negative territory. Again, top of the list, retail, tech, autos and banks.
Yeah, we've got some weakness in the luxury sector, it would seem, in the shape of Burberry this morning, down by 3.6%. So that is one stock that we focus on in terms of the individual stock narratives. But there aren't a huge number of those, are there? We're not seeing a huge amount of corporate reporting in this morning's session. I'll go to the gilt markets then and have a quick check on what's happening there. It looks as if we are still seeing lower yields. I'm a little hesitant because it looks very similar to where we closed the move. The yield move looks quite similar to where we were yesterday. So I'm just, oh no, it is moving. It is moving. Down 3 basis points on the gilt story. So is that just sticking with the global narrative or the European narrative, which is for weaker yields this morning, despite the fact oil prices are still at 105? Is that what's leading things, and rather than any of the particular politics?
We knew yesterday kind of what was going to happen today, other than the Angela Rayner news.
Yes.
I think probably...
Isn't it surprising, the moves in gilts, given the Angela Rayner announcement? We hadn't seen that coming quite as soon.
Somebody from that area
would probably stand, wouldn't they? But yeah, so maybe that's the explanation. But for whatever reason, we're not seeing a yield spike, at least this morning. Let us bring in Paul Jackson, Global Market Strategist for EMEA over at Invesco. And Paul, let's start with stocks, because we are seeing some strength coming through in technology stocks this morning. This has been a bit of a global theme recently, and people are asking, is this over-exuberant or not? I was reading a John Author's piece that was pointing out this morning that the VIX is rising at the same time as stocks, and questioning whether that tells us something worrying. How are you thinking about the global tech rally?
Well, it's funny, we've kind of gone back to where we were last year. with some of these tech stocks doing extremely well. But I think it's been a more globalized movement this year. You look at where the real strength has been, it's been markets like South Korea and Taiwan. And yes, the US is joining in that. It is spreading throughout the world. But since the end of February, with the invasion of Iran, it's amazing how this trade has come back. It really wasn't being spoken about in the first couple of months of the year. And then with, I think, the concerns about the effect on the economy of rising energy prices, where is going to give you protection? I think tech is naturally a place to look at in those circumstances. And then all of a sudden, the AI trade seems more attractive again. So I think it's been a confluence of factors which has brought tech back to investors.
And where does that leave European stocks then? Because they don't have a huge representation of technology stocks. There are important names, and some of those rallying this morning. But it's not overly reliant on tech. So where does that leave Europe? We spoke to a guest in the last hour who was saying, partly because of Iran, European stocks in some places look cheap, and they've been loading up on some of those.
Yeah, Europe has clearly been an underperformer over recent months. Started the year well and then has been lagging since the end of February. And part of that may be the lack of tech weighting. It's also interesting when you look at, say, the European aerospace and defence sector, the underperformance since the end of February, despite the war with Iran, despite the rhetoric coming from the White House about pulling back from Europe from a defence perspective. Those defence stocks in Europe have really not been performing, probably because they did so well over the previous couple of years. So yeah, I think Europe is handicapped by the lack of tech. Last year it was all about banks, and bank stocks I think still continue to do well, especially somewhere like the US and the UK, where yield curves have been steepening and continue to steepen, probably for the wrong reasons this time. It's happening at the wrong end of the curve, but that does tend to help the bank sector.
Would you want to position for a snapback in European equities on a resolution around Hormuz?
Yes, I think that the European equity market is still relatively attractive from a valuation perspective. I think that there are things going on in Europe, not just the defence spending, but clearly we're going to have to ramp up even more rapidly than we thought the defence spending, the infrastructure spending in Germany, the UK economy, my goodness. And it's not just today's data. The UK economy for a couple of months now has been looking as though it's been beating expectations.
Are we underestimating the resilience of the UK economy?
I think so. I think overestimating the pessimism. I think the UK economy has been finding its feet and has been improving, whether you're looking at things like retail sales, whether you're looking at the GDP data. So the UK has been performing well. I think the Eurozone has maybe been struggling a little bit, doesn't quite have... There's not dynamism coming through yet, but within that, the German economy has been playing a more important role than it had over recent years. So you get a resolution to the Hormuz situation. Europe does get a benefit from that, certainly more than the US. Asia, despite what I was saying about some of those stock markets doing really well, Asia really is the region that gets the biggest benefit from a resolution in the Middle East.
What's the bond market telling the equity market?
Which one, or all of them?
All of them. Yields are going higher, equity markets are going higher.
Yeah, I don't see that as a particular issue. I don't think that the yields...
Does it become an issue?
I think you go beyond a certain point and it can become an issue. I've typically... If you look at it historically in the US, the correlation between bond yields and stocks tends to flip at something around... historically around the 5% 10-year yield level, and we're not there yet in the US. So I don't think we're necessarily at that point at the moment. I mean, let's face it, for a couple of years now, really since 2021, bond yields have been going up, and apart from 2022, the stock markets have done very well. But you get to a point where it
becomes a problem. And that's circa 5% on a US 10-year.
Historically, it's been around.
We had a 6% print on PPI yesterday. You start getting those kind of numbers being repeated. Are people dusting off their Burns playbook? Is that what we should be looking at?
I think you've got to look beyond the short-term boost to PPI, because that will fade. Imagine the oil price stays where it is.
Yep.
You no longer get PPI going up at kind of 6% rates. That eventually fades if the oil price doesn't keep rising.
Yep.
But more important is what is happening to consumer prices. And typically when the oil price in the US goes up, say at 50%, if you look at it historically, a 50% year-on-year gain in the oil price, and we're a little bit above that at the moment, is associated with about a percentage point gain in consumer price inflation. But it fades relatively quickly. If the oil price goes to 200, then you don't ignore it.
Yeah.
But I would say for the moment, I wouldn't get too worked up about it.
Okay.
Having said that, 5% gilt yield in the UK looks quite attractive to me. So, why not step in and take advantage of that?
Okay, that's interesting with the politics at play. Let me ask you, and this is a question that's jumping off the 3i numbers we got this morning. So this is a real underperforming stock. At least it was really underperforming. It was down 18%, in fact, when it started trading this morning. But now it's been suspended because of a breach of tolerance levels. So we'll wait for that to settle down. But the reason I mention it is because you said about the consumer resilience, and they're talking about some of this is an investment business, private equity business, and one of their companies, Action, it's a lower cost discount retailer, and they're warning about consumer caution in France and lower foot traffic in Germany, and they're citing the Middle East as one of the reasons that consumers are pulling back. I suppose that's a warning for anybody who's counting on a resilient consumer, perhaps.
Yeah, I think we've got to say that in March and the data that we've seen in April, and a lot of the April data so far has been surveys, but we will get retail sales data out of the US later today. But the data for March and April that we've had so far has actually been surprisingly good in that context. And you do imagine that at some stage, if the oil price stays where it is, if general inflation, having gone up, remains at a more elevated level than it was, that squeezes real incomes. But we haven't really seen the effect coming through yet. You may be suggesting that there may be some evidence coming through at the lower income
just
levels,
one example,
which is where you would expect it to bite first. So there may be some effects there, but I think in a lot of economies these days, that is not the bulk of consumer spending.
Where is the margin vulnerability most acute right now on the physical shortages as a result of the closure?
Well, it's always going to be things like travel and leisure.
How much of that is priced in at this point?
I think it's hard to say. It depends how long this goes on, doesn't it? And if we had a rapid resolution and you started to get flows through the Strait of Hormuz, then I think those stocks would rebound.
Right.
However, if we carry on with this closure through to the end of the year, then I would say, it's not priced in.
Paul, thank you very much indeed. Paul Jackson, Invesco's global market strategist, EMEA. Let's get a check on some of the individual stocks on the move this Thursday with Chloe Millet. Chloe?
Good morning, Tom. Burberry is seeing a lot of weakness this morning, which is perhaps surprising because at first glance, the results were actually quite good with sales beating expectations. But the luxury company did say that the consumer uncertainty because of the war in Iran could actually hurt confidence later in the year. And so that could potentially pile pressure on this ongoing turnaround for Burberry. And so we are seeing the shares run down quite significantly this morning for Burberry. Moving on to Siemens, which is having a better day than yesterday. Yesterday, we had seen a little bit of weakness after the earnings. But today, JP Morgan analysts raised the price target on the stock to a new street high, saying that automation and data center demand would really contribute to very strong momentum for that company, which means that there will be a very strong growth runway for Siemens. And so we're up about 2% on the back of that. We're also in the green for Telefonica. The telecom company had better than expected results. That was due to an easing competitive environment in Spain and also very strong performance in Brazil. And so we're up almost 5% for that company. It's also in the green for the chip stock. So the chip sector is reacting to a few things this morning. First of all, we had the ongoing supply crunch in memory chips, which is something something that drove this sector higher yesterday, and that's continuing today. And there's also the read across from Cisco results over in the US, which had better than expected guidance. And finally, 3i is down massively this morning. This is a private equity firm whose largest investment is a discount retailer called Action, and there the sales were slowing. And so this maybe is a sign that even really low-cost retailers are struggling in this muted consumer environment.
Chloe, thank you very much indeed. Chloe Millet with some of the stocks on the move. President Trump may dismiss and pour cold water on the UK Navy, but the UK Navy is very good at alerting us as to what's happening in the Straits of Hormuz. We have an update right now. This is a redhead across the terminal. The UK Navy says that a vessel off Fujairah has been taken, bound for Iran waters. Apparently, the vessel was heading towards Iranian, or could be, or is heading towards Iranian territorial waters. It was taken, quote, by unauthorized personnel while at anchor. That is an update from the UK Navy.
And the oil price goes a little higher, back over 106 on the back of that headline.
Do you wonder what's going on? This was a vessel that was at anchor off Fujairah, off the UAE,
yeah,
and is being now taken towards Iran. Was it an empty tank? What kind of vessel is it? I'm just trying to go on the UK MTO just to have a look and see what's going on, and there's not much further information there. So what kind of a vessel is it? What are they going to use it for? Why have they taken it? Are they sending a signal maybe to Beijing as well? Maybe that's part of the narrative here too. Do they need storage capacity? I don't know. There's all kinds of questions around this. Why would they do this now? I think it's an interesting question.
38 nautical miles northeast of Fujairah, the UAE. That doesn't sound very far, 38 nautical miles.
Well, it's not very wide.
It's not very, I was about to say, it's not a very wide piece of water.
Yes.
So, yeah, it's all kind of...
Okay.
A blur.
Key point, is this an escalation, I think, and does the US respond, and will they be constrained given that Trump is on the ground in Beijing? Coming up, Burberry shares lower even after delivering a sales beat. We're going to discuss the company's ongoing turnaround plans. That's next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back. Let's take a look at what the numbers look like this morning. By and large, we are positive, but not as much as the futures earlier indicated that we would be. Where you are certainly seeing some strength is in the DAX this morning. And it's interesting to see that in the light of some of the stories that we're watching at the moment, because you do have Siemens strongly to the upside. Rheinmetall is up strongly, Siemens Energy, Infineon. In terms of the points being added, all in the top 10. So Germany is having a fairly good day today. In terms of the mix on the downside, some of the oil stocks are a little soft. There's a lot of XD in the market too. Fair few closures as well.
Yes, some of the markets in Northern Europe in particular are closed. London is open though, and Burberry shares are slumping this morning despite sales rising more than expected at the end of the fiscal year. Let's get some analysis. Deborah Aitken joins us, senior analyst in luxury goods for Bloomberg Intelligence. Deborah, good morning.
Morning.
So the Burberry share price is down by 4.5% this morning, and it's sometimes difficult to work out exactly why. So what do you think is driving things here?
So there's a small beat on sales, but when we look behind the numbers and start out, it's about Europe being hit by the Middle East, and that's outshining or dulling what's happened positively. If we think about Americas and Greater China, which are both up by plus 10% in the 4Q. And then through the up line, we've got beat on the op margin. Down to the bottom end, we've got no dividend reinstated, even though the balance sheet is really back into order. Chairman change, lots going on. And overall, though, no 27 guidance, because of what's happening in the market. And already consensus is a little bit bullish into 27. Miss on earnings, so it's quite a mixed picture, but they're moving in the right direction.
So you've already explained what's happening in the Middle East. The Middle East is having an impact because of inbound tourism. What's happening in America? What's happening in Asia? Just give us a bit more detail there.
Yeah, so for the last 3 quarters, for China in particular, we've been looking at, across the board in luxury, a gradual improvement, and we are seeing mid to high single-digit growth, and here we have 10% Greater China, including Hong Kong, Macau, Hainan. Very solid in terms of where they were historically to really recovering their brand and being visible. And I've actually seen Asian tourists in Florence 2 weeks ago carrying Burberry bags. So that's also a breakthrough there. And then they're doing very well in outerwear and in things like their accessories, their scarf bars and others. So pushing that a lot with social media. So that's going well. And similarly for Americas, but Americas overall has been strong everywhere for all brands, doing very well in jewellery and hard luxury across certain brands which are recovering, and Burberry is one of them.
Just for guys shopping this, what are the accessories? There's the scarf. What are the other accessories?
The scarf, and then
they're posting on social because Sky is big on social.
Umbrellas. You've got the socks. You've got shoes. Some of the men's bags, women's bags.
Tom's asking for a friend. I'm not sure I'm the friend.
We like watches. And
they're selling in the States.
Watches in Switzerland. Is this a US story? I mean, that stock is up 13% today.
Yeah, so it's definitely a US story. So the 2 areas where they operate are the US and the UK. They did, over the last couple of years, some big acquisitions by pushing some acquisitions on distribution, and then of Roberto Coin on the jewellery side as well, so starting to mix. They're the number 1 on pre-owned with Rolex on certification.
They have that deal with Rolex, don't they?
Yeah, they do. And actually, America's across the board, the US in particular, this quarter and the last 2 quarters of 2025 have held up much better than expected.
Guy pointed out this may be an inflation hedge as well.
Yes, on gold. We actually have a nice a deep dive now out from Bloomberg Intelligence, actually out of China, looking at how Chinese consumer are still purchasing gold, Lao Pao and others. And what we're seeing also for the US, you're inherently holding a very good product. If you get into a wait cycle for a product, by the time you're receiving it, price has gone up. Second hand is holding up very well. You're paying premium for lots of the pre-owned as well. So
Just the stock market needs to hold up to keep that narrative,
that momentum going.
There we are.
What is interesting about the kind of the story of wealth, though, is that India is now heavily restricting imports of
they put tariffs on
metals.
Tariffs on gold and silver to protect the rupee.
Yes, but the rupee's been really sold off. Yeah, absolutely.
Because of the energy
and they're thinking of there was a red headline just earlier this morning about loosening the investment rules around debt to try and numb the pain that way. Deborah, thank you very much. Thanks for joining us. Deborah Aitken from Bloomberg Intelligence. Tom, let us move.
Let's check back in on gilts, and then we'll bring in Adam Linton from a broader view on these markets. So gilts, Anna mentioned this. There's a little bit of move into gilts today, so yields are down a little bit less than we had seen at the open of the session. But you're down between 1 to 2 basis points across the curve. The 10-year is currently still yielding 5.04, 446 on the 2-year, with, of course, the political uncertainty in focus. So Keir Starmer's efforts to hold back a potential leadership challenge showing new cracks as allies of leading Labour Party rivals signalled they were ready to challenge him for the Prime Minister's job. For more on the market impact, then let's bring in Adam Linton. Adam, what do you make of the gilt market seemed relatively sanguine today? Maybe they've already priced these kind of moves in.
Yeah, I think to some extent. I mean, obviously, it's a very fluid picture. I mean, yesterday we saw Wes Streeting enter the fray, who would potentially, if there is to be someone who replaces Starmer, probably the most market-friendly. But I think if you think about, the choreography of how this leadership race will play out, he's probably relatively unlikely to be the actual victor. And you're seeing that priced in betting markets now. His odds have definitely fallen off since Rayner's entered the fray. She's now the slight favourite if you look at, the Betfair exchange. And so, obviously, her policy campaign would be very much towards the left of Keir Starmer and to Wes Streeting, and that would definitely be a concern for the market. I think the market's actually just not really pricing it at the moment, because I think it kind of wants greater clarity on what the policy platforms will be, when we kind of get this leadership race. So I still think that we have more room to the upside to go for back-end UK yields. And I think from a UK perspective, for cable, I'm surprised we're still holding above 135 with all this going on. I mean, in a week where we've seen hot US CPI, we've seen hot US PPI, cable still hold above 135. It's quite a surprise to me.
Yeah, and euro against the pound against the pound as well, doesn't do very much. What explains that, do we think, Adam? Or what are you thinking of more broadly, away from the gilt markets? What kind of impact, what kind of assets should we be watching? Of course, the pound, where we see little movement. I mean, stocks, they're just going to take their read off gilts and the pound, I guess.
For UK stocks, I mean, obviously, the FTSE 100 is a lot, less domestically orientated. That kind of has this inverse relationship with the pound. The 250, that's obviously a lot more domestically focused. So if there is to be a wobble in UK assets, then it would definitely be more pronounced in the smaller benchmark. I think in terms of, assets beyond the UK, I think the big thing that the desk, Markets Live, are really focusing on at the moment is the dollar. Like I said, cable hasn't really moved. We've seen this hot US CPI report, this hot US PPI report. Do we get the US 10-year yields moving above 4%, the 10-year above 4.5%, and the 30-year staying above 5%? Well, I think it's definitely plausible. I think the market is definitely depricing this kind of inflation duration risk in the US. I mean, the whole narrative for the US is, it's an energy producer, it's relatively insulated from a lot of this. But the data that we've seen thus far this week is definitely playing at odds with that. And I think it's definitely the asset to watch in the FX space if, we potentially get a return of FX vol, which,
Isn't Walsh just going to cut rates?
He's just one vote, and it doesn't really appear to be the rest of the border with him on that.
Okay, let's see. Thanks for stopping by. Adam Linton joining us from our M Alive team. Coming up, we're going to pivot back to what is happening in Beijing, the summit between President Xi and President Trump. Diana Sholeva from Enodo Economics is going to be joining us. We'll get her take on what this is all about. Is it just about trade? Is there something wider going on here? We'll find out. That's next. This is Bloomberg.
80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Happy Thursday. This is the opening trade. We're 30 minutes into the Thursday session. Then you're seeing gains of 0.3% across the European benchmark. So building on the upside of yesterday, European stocks ended in positive territory. Then you have fresh record highs for US markets. The FTSE 100, though, is underperforming, as you can see, up just 0.1%. Burberry is a bit of a drag there. That stock is down on the back of earnings. The DAX is performing very strongly, up 1%. You're seeing gains on the CAC current as well. 39 points up, 0.4%, Guy.
Okay, let's talk about what we're seeing on the internals on this market. There's a lot of markets closed today, so ignore the volume number today. It's down sharply, but you can park that. It's nothing to do with this market feeling like it doesn't need to trade. It does. Again, in terms of some of the kind of the allocation today, where there's a few stocks out, that's why the numbers don't quite add up to where they normally do this morning. So we'll park that again. But I think you can get the gist. The market is on the front foot this morning. You've got a legacy that comes out of the United States yesterday that is positive. Today we're getting a bunch of German stocks in particular on the front foot. Some of the tech narrative is also still well represented. Siemens is trading to the upside by 2.5%. Chip stocks are also moving up as well. You saw what happened with Cisco yesterday. Huge move to the upside on the back of that. Haven't seen that for a while, have we? Anyway, we're up by 6/10 there. Defense stocks are also back in front as well. Rheinmetall up by nearly 4%. I actually think the downside narrative this morning is maybe one of the more interesting ones, despite the fact that actually the market is up. 3i down heavily, pointing to one of its portfolio companies under pressure at the bottom end of the retail space. That is interesting. ITV is down by 1.35% after producing numbers this morning. Burberry is also off. Deborah Aiken just running us through some of the details as to why we're seeing weakness in that stock this morning. It's off its lows, but it's still down by 2.75%. Bit of weakness maybe in Europe. America still looks okay. So interesting kind of macro stories are always worth taking away from some of these big luxury names. But Burberry down by nearly 3% this morning, Anna.
From the individual stock moves, let's get to some of the other bigger themes that we're covering this morning. The US Senate has confirmed Kevin Warsh as chair of the Federal Reserve in a 54-45 vote. That's the narrowest margin on record. The confirmation sets up a test of the Fed's independence, with Democrats fearing Warsh will bend to President Trump's demands to rapidly lower interest rates. Warsh has pledged to keep policy free from political influence when he takes over from Jerome Powell, whose term ends on Friday. Turmoil at the top of British politics, a potential challenge to Prime Minister Keir Starmer, is threatening to reignite a Labour civil war, with allies of Health Secretary Wes Streeting signalling he could quit the cabinet as soon as today and launch a leadership bid. Meanwhile, Angela Rayner, the UK's former Deputy Prime Minister, has been cleared of deliberate wrongdoing in an investigation into her tax affairs, potentially paving the way for another leadership bid against Starmer. And Cerebras has raised more than $5.5 billion in its US IPO in the year's biggest offering so far. The AI chipmaker priced its shares at $185 each, giving it a market value of about $40 billion. Tom.
President Xi Jinping, meanwhile, has signalled China is moving towards greater openness, with the state broadcaster reporting he told US business leaders the nation's doors to the outside world would open wider. We've heard that before. He struck an upbeat tone in his meeting with President Trump earlier.
Success in one is an opportunity for the other, and a stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together, and find the right way for major countries to get along well with each other in the new era.
Meanwhile, we have a redhead crossing the terminal right now. China is reopening the door to US beef plants as Xi and Trump meet. So they're renewing import licenses for hundreds of US beef plants, reviving trade in the meat as the leaders continue to meet. So the permits were renewed on Thursday and are usually valid for 5 years. Just an update there as we wait for more details, of course, of this meeting. Let's bring Brendan Murray right now, who leads Bloomberg's global trade coverage. You can tail that in as well into how you're thinking about your assessment, Brendan. But I guess the key question is what do you make so far of how this summit has gone, what it means on the trade front, what kind of details we've had, and what you were expecting that could come through?
Right. So we're still in day one, but already, as you said, we're seeing the deliverables for the Trump side, at least, starting to roll out. I think what we've seen so far is pretty standard diplomatic speed dating. You've got lots of handshakes and smiles and photos that set the tone. But there were two other striking things from today that I thought were noteworthy, and they mainly came from President Xi. The one was the tone that he struck on Taiwan. He came right out of the gate and said, this is essentially a red line. If you want anything in return, you better not cross that. He also, as your intro noted, said we're open for American businesses, and that seemed to be a direct response to President Trump's social media tweet the other day saying, hey, I'm bringing all these tech executives. They really want part of the Chinese marketplace. Could you please work with them? And so there seemed to be some give and take on a number of the fronts that both sides wanted to address.
What's China going to give on that front? What deals are we going to see?
From who?
China. What are they going to offer up in terms of deals to keep the businessmen that have come with Trump happy?
I think the most important thing for the U.S. side is some assurances, if not some specific commitments on the critical minerals. They showed the world last year that they really can leverage that and cause some economic pain. So we'll find out if the top aides of the President Trump behind closed doors can work out something other than just vague assurances that will remain stable. So the main thing for the U.S. side is stability and, of course, to maintain the flow of those critical minerals.
So do you think this is this a just reaffirming things we already knew about the relationship, Brendan, from a trade perspective, or will there be newness to the? Will there be more depth to the relationship? Because it's easy to have lots of words about a deeper relationship, and in fact we heard that from Xi earlier on, didn't we, that US businesses will have more access.
Right, exactly. I don't think we're going to get a big detailed announcement with specific numbers in them the way that we saw with the phase one trade deal that President Trump and the Chinese side negotiated in his first term. That was 50 pages long. It had all sorts of commitments laid out in it. What we're doing, the US and China, it looks like in this meeting, is to try try to reset things on a more stable tone and to set in motion some sort of process to make sure that each side can revisit the commitments that they've made and to make sure they're living up to those. That's why this Board of Trade idea is being floated as a sort of a way to make sure that the economic relationship stays on track.
Brendan, thank you very much indeed. Bloomberg's trade czar, Brendan Murray. Let's get another view on this and some more insight and bring in Diana Choileva, Chief Economist at Enodo Economics. Diana, thank you for coming in. Always great to get your insights on the China-US relationship. Anything that surprised you so far in this visit?
Nothing surprised me, actually. Not only is this visit quite clear to me, but also what awaits us. And rarely you get into these positions of sort of relative certainty in my role as a forecaster. And the reason is that, what markets are missing is that now the two sides are coming from an equal position of strength, which wasn't the case since China started using the critical minerals card. And so the likelihood of them reaching a more stable framework for how the industrial supply chain would sort of work and still flow is much higher. And while this is the first meeting, we have potentially another 3 now between the two leaders over the course of this year. So that gives enough time to iron out details. But what I mean by what I just said is that now America has the oil card. It's all about choke points. China surprised Washington last year and said, okay, we control the critical minerals and are prepared to use this card. And that could almost instantaneously stop quite a lot of U.S. manufacturing. The U.S. didn't have a commensurate card to play. If it had played the dollar card, it would escalate. And obviously tech restrictions, China's managed to go around them. The oil card is different. And however much I would say the media has not necessarily presented the Iran war as a win for America, it hasn't been the best possible case for America, but it certainly has shown China 2 things. It has shown that America still controls the security architecture in the Gulf, and that they were prepared because none of the Chinese commentators expected America to follow up and go to war with Iran, whereas I woke up in January 3rd, saw the Venezuela action, and instantaneously thought Iran is next.
Okay, there's a lot to unpack there. I wonder if Iran holds the oil card instead of the US, but maybe we can get onto that. But I think the top point that you made in the first part of your answer was these are 2 countries on an equal footing right now. But actually, that's good news in terms of industrial supply chains, and maybe the markets are underappreciating that.
Yes, that's my main point.
Where do we? How does that play out then? How is that market benefit? How does that benefit the markets in the long run? You start to see an easing of supply chain constraints. Is that what you're looking for, and if so, where?
So I would look for really more of a framework emerging on how is this going to work? How will the U.S. get a secure supply of rare earths over the next 3 to 5 years? Because irrespective of how much money they throw at building this up, it's going to take a while. And simultaneously, on the other side, China does want the stability of its supply of oil. And this is even more important for the Chinese right now than it is for the Americans in terms of political implications, because for the Americans it means midterms inflation, not drastic. For the Chinese, it's fertilizer, food, feeding your people, social unrest. So China is much more in a much more vulnerable position from that perspective, but feeling much stronger because it saw that rare earths worked and also its economy has stabilized. And
if China told Iran to open the Straits of Hormuz, would the Straits of Hormuz be open?
So it's very difficult to know the answer to this question, but what we have seen is a fairly successful military operation for both Israel and America. Strategically, that's a different conversation, but those 2 sides have managed to significantly degrade Iran's industrial and military capability. I'm not an expert on Iran, but obviously
You're an expert on China, though.
I'm an expert on China and the world, let's put it this way. China is the framework within which I understand the world, but I also run a geopolitical team with very heavy hitters on Iran, too. So I do have a team underneath me that does understand this side of things. And really what's clear is that, I mean, it's very difficult to know what is the situation of the intelligence services who run Iran right now, how much of a control they have. I'd say Israelis probably have the best intel there of what's really happening. The Chinese don't. They've shown that they're not particularly good at that side of things. So how much leverage they'll be able to apply, we don't know, because we don't know who's actually in charge in Iran and how does the leadership really work. But if anyone can, that's China, because obviously that's... so I would think that on balance, I would expect that the Chinese would be able to have that leverage.
Is Jensen Huang going to be selling more chips into China?
No, not in that way. So basically the technology and security, the technology, advanced chip infrastructure as very much part of the kind of security infrastructure the U.S. In the U.S. So it's not just up to Jensen Huang, and we have seen all the memes of him trying to be Ethan from, Tom Cruise, getting on the plane. So that was interesting. But on the other side, it's not just Trump here. It's the whole American political system, and across it, in particular through the national security complex, it's crystal clear that advanced chips are not something that China will have its hands on. They are trying to do this in roundabout ways, but it won't be part of the agreement. No.
Okay, so if we're looking for agreement here in areas of new coming together, if we get nothing on rare earths, does that make this a disappointment? Is that the secret to some sort of industrial détente between these two, Diana? And does that come at this meeting?
Yes, if we don't get a framework, some sort of framework of how this is going to work, that is, and the Chinese are looking for frameworks, that's very important. So they're willing to give that. And of course, they're willing to give, a bunch of headline deals.
What does that mean on rare earths, though, if they're looking for a framework on rare earths?
It means how are the two sides going to communicate? What is going to be the sequence? How will they, what is the quid pro quo? Now, we want, what I just told you, we won't see this in Iran will not feature like this in any of the communication. But that is the underlying mechanism. And so I don't expect to see, we'll help you on Iran. That's not going to be in what we see. But so far the optics have been very good. They don't signal friendship, they don't signal trust, but they signal two sides that understand mutual interdependence, that have fairly equal cards, and are willing to work out a framework for sort of keeping the global economy and industrial supply chain moving. They're neither of them giving up on fighting over AI and the future of the world.
On that note, we will leave it, but we'll get some stability out of it. That'll be nice. Diana, thank you very much indeed. Diana Sholeva, Chief Economist for NATO Economics. Coming up, still more ahead on the Trump-Xi summit, details on the state banquet, which is set to start in a few hours' time. Anna's interested in what's on the menu. We will find out, I'm sure. This is Bloomberg.
don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
When there were difficulties, we worked it out. I would call you, and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
So Presidents Donald Trump and Xi Jinping striking a mostly optimistic tone in their meetings. Our China correspondent Min Min Lo is on the ground for us in Beijing covering this event for us. Min Min, the next bigger item on the agenda then is the state dinner. What can we expect? Is that pomp and ceremony? Is it going to be a place for further conversation? What's going to be on the dinner menu? What should we expect?
Certainly there's going to be that pomp and pageantry that we have seen throughout this state visit, right? From the moment Trump landed, the red carpet rollout, the full security escort when he arrived this morning at the Great Hall of the People. There was the 21-gun salute, and you have the Chinese military band playing the U.S. national anthem. It's not every day that you hear that on the Great Hall of the People, the square there in the heart of Beijing. So we'll be looking out for the ceremony, the symbolism of that dinner as well. What's on the menu? That's certainly going to be of interest, because back in 2017, I remember President Trump had the Kung Pao chicken. That was on the menu, and it was a meal that was described as a middle ground between East and West. And I wonder if there's going to be some sort of beef dish on the menu as well, in a nod to China renewing those licenses, import licenses for these beef plants in the U.S. after allowing those licenses to lapse last year after the bruising trade war. So that was one of the key positive headlines we got out of this, one of the substantive deals that has come through so far. Although the actual quantity of import, that still remains to be seen, because it's coming at a time where these beef producers in China are already suffering from overcapacity and sluggish demand. We have, of course, news out of Reuters as well that NVIDIA appeared to have gotten a clearance to sell H200 chips to some 10 Chinese firms, and we had seen the market reaction with some of these NVIDIA suppliers in China, their stocks rallying, even though at the index level, you look at the Chinex, you look at the Shanghai Comp, some of these indexes have already given up gains that we saw yesterday, perhaps a bit of that phenomenon of buying the rumor and sell the news here.
Min, thank you. Yes, really interesting. We thought we knew a little about what the US were intending around those H200 chips already, and we're waiting for some news about what China will allow into the country and who can buy them. But we continue to watch that story, and the market does as well. Let's talk about something else that lies ahead of us, and that is a busy day in UK politics. The UK's Labour Party looks set to be heading towards a divisive battle over the country's top political office. Several ministers are said to be considering a leadership challenge, but the Chancellor, Rachel Reeves, has warned a contest could plunge the country into chaos. Let's bring in Bloomberg's Lizzie Burden, who is in Downing Street for us. Any comings and goings already this morning then, Lizzie, or is that still all to come?
Well, we've seen the Chief Secretary to the Prime Minister, Darren Jones, entering that black door behind me, Anna. It's fair to say, with the King's speech behind us, the gloves are off. It feels like, for all of Keir Starmer's defiance, a leadership battle is nonetheless coming. We've had the former Deputy Prime Minister, Angela Rayner, saying that she's been cleared of a tax probe, clearing the way for her to mount a leadership challenge. We had the Health Secretary, Wes Streeting, in there meeting Prime Minister Keir Starmer yesterday for less than 20 minutes. His allies say that he is going to resign from Cabinet and mount his own leadership challenge, although there are questions about whether he's got that magic number of 81 MPs to back a challenge. And then there's the Greater Manchester Mayor, Andy Burnham. Now, of course, he doesn't have a seat in Parliament. He'd have to find and win one. That could take weeks or even months. I do wonder whether Labour MPs have got the patience for that. Notably, Angela Rayner says she doesn't have a pact with Burnham to challenge Starmer. And interestingly, overnight, Polymarket odds have doubled that Rayner is going to be the one that takes over from Starmer. So she's now neck and neck with Andy Burnham.
Lizzie, is it in the price? Is this leadership challenge in the price? Is it all in the price? Is Burnham in the price?
Well, anyone who takes over from Starmer, the gilt market is going to think would be more fiscally lax. Of all the candidates, Wes Streeting is seen to be the most continuity candidate. But we heard from Rachel Reeves, as you were mentioning earlier, the Chancellor, saying that a leadership contest in itself will plunge the country into chaos. Of course, a prolonged leadership battle is going to put pressure on gilt. She's not wrong there. The last one took 3 months. It'll add to the cost of living for ordinary Britons. And of course, a reminder of the psychodrama that we saw under the Conservatives that Keir Starmer said he would end would surely weigh on Labour in the polls as well. Now, of course, in this morning's data for UK GDP, we saw that rebound in economic growth in the first quarter, 0.6%, most of it coming notably before the Middle East war. That could come down. It doesn't give much of a respite for Starmer, and indeed, it only means that investors will probably be treating the UK with caution.
Lizzie, great stuff. Thank you very much indeed. Lizzie Burden joining us from outside 10 Downing Street. Is Burnham in the price? I don't know. It feels like Rayner's in the price. We're not seeing much movement this morning, so you've got to assume that some sort of challenge from her was always kind of anticipated. How far does that go?
Yes, I mean, and then if we get some news that a Labour MP who is sitting in a seat that is safe enough, and that's an interesting thought, would be able to give that, offer that over to Andy Burnham, then that would be something that the market might move on. Interesting that Wes Streeting himself has a very, very thin majority in his seat, which I wonder how that's weighing into his thinking as to when is the right time for him to launch this.
How many of the current leadership would retain their seats if there was a general election tomorrow?
Which it also takes us back to the question about how far away from the manifesto they really want to go.
And the irony is that the growth picture is looking a little brighter. The Chancellor coming out and warning of
2 months
of market chaos.
Expected,
There's all sorts of question marks over this, but headline basis, growth picture looking a little brighter, particularly when you compare it to the likes of France. Unemployment at 8%, we've got unemployment around 5% here. We've got growth here, France is flatlining.
But you look at the polling and you look at the consumer confidence data, you look at the housing market, there are so many things which are sort of dragging down sentiment at the moment in this country. But it's interesting it's not being reflected maybe in the GDP figures.
We should mention that the Federal Reserve Governor Stephen Myron will be on Bloomberg TV at 1 o'clock London time. So that's interesting to add into the mix around the Fed. What is the confirmation of the new boss at the Fed?
How does he make the case for further cuts?
Well, he's not going to be there, is he? I thought he was about to. He's
but I'm sure he'll still be making the case.
And cutting pretty rapidly.
Sure. I guess with PPI at 6%, that's an easy argument to make.
Well, we'll see what he has to say. The AI might get a mention. That's certainly something that Kevin Walsh has talked about, isn't it? 8:56 here in London. That is it for the opening trade. UK politics in focus. Globally, of course, US-Chinese politics certainly in focus. The Pulse is next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The Chinese president tells U.S. business leaders his country will open up more as Presidents Trump and Xi say they hope for a more stable relationship. The UK Prime Minister Keir Starmer's rivals get ready to challenge his leadership as the Chancellor warns of chaos. Plus, Burberry sales beat, but shares fall as strong demand for scarves and trench coats fail to satisfy investors. So we cover all news. We look at the markets. If you look at NASDAQ, they're gaining a touch. Now, there's a little bit of optimism, or at least a relentless rally in technology stocks seem to be showing little sign of cooling. Again, we had a blockbuster share cycle. Cisco Systems earnings also highlighting that momentum around artificial intelligence. Technology stocks, chip makers in particular, seem to have been leading this unprecedented rebound in U.S. stocks. And then we have a little bit of concern, though, in the UK. Sterling 135.08, and you can see the UK 10-year above 5. Brent 106.66. Look, if you look at the European markets map, so a lot of the countries that have quite a lot of exposure to technology stocks are doing okay. The FTSE is pretty much flatlining just because of this possible leadership, well, not possible, this leadership challenge towards Keir Starmer. We'll see if the Prime Minister goes or stays. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Xi Jinping warns Donald Trump of a potential conflict over Taiwan if the issue is mismanaged. The U.S. president described their bilateral talks as great after the two leaders concluded their meeting.
When there were difficulties, we worked it out. I would call you, and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
Now we're waiting for the state banquet to kick off at the Great Hall of the People. Bloomberg's China correspondent Min Min Lo joins us from Beijing. Min Min, thank you for being here. It's a pretty exciting day where you are. What kind of reception has Trump received?
Well, it was a very warm reception from the moment he landed in China last night, right? We had the red carpet rollout this morning when he went to the Great Hall of the People. There was the 21-gun salute. There was a full security escort with him as well. And you saw President Xi with that smile on his face as he walked President Trump into the Great Hall. He kept the smile on throughout the opening remarks as well. And really a strong show of this bromance between the two men, right? Especially from President Trump, the effusive praise we heard from him talking about how the future of the relationship is going to be fantastic, and that was all sort of the positive tone that we saw in front of the cameras. And then after that, they went into that room behind the cameras for about at least 2 hours. That's when we started to get some of the more stern messages from China, from Chinese state media, right? The warning from President Xi about Taiwan, warning that, you know, the arms sales with Taiwan needs to be dealt with the utmost caution. And if that is mishandled, China says, it could push relations to dangerous territory. We also heard some positive headlines as well in the last couple of hours. There was news that China has renewed the licenses for these beef plants in the U.S. China had allowed those licenses last year to lapse, and that really tanked the beef trade after that bruising trade war. So the new renewal of the license is a very positive signal, even though the actual import volume, that still remains to be seen, because it's coming at a time when these beef producers in China are already struggling with overcapacity and sluggish demand. Another key positive has been from NVIDIA's Jensen Huang, right, the last-minute addition to the business delegation here, and we're hearing from Reuters that he appeared to have gotten clearance to sell those H200 chips to at least 10 Chinese firms, and we did see the market reaction with some of these NVIDIA suppliers in China seeing their stocks rallying today as well.
Yeah, and Min Min, of course, as you were saying, President Xi telling the U.S. chief executives accompanying President Trump that actually China will open up more. What more can we expect? Is it business deals? Are we confident that actually the two leaders will get along better from now on?
So we understand now that Premier Li Qiang is meeting with the business delegation that accompanied Trump, and we have the Vice Finance Minister Liao Min, the Commerce Minister Wang Wentao. They are all present. So all the big heavyweights in charge of China's trade and investment, they are all meeting with the U.S. businessmen. So after that is over, we'll be waiting for headlines. Potentially there could be deals on the table, right? Because we know Boeing CEO is there, and he has been lobbying for this mega 500 jet deal. Cargill is there as well, so potentially some sort of agricultural commodity purchase agreement could be on the table. And of course, you have the tech CEOs, Apple, Micron, as well as Qualcomm, and Elon Musk also there as well, likely to be lobbying for approval for the full self-driving and his autonomous taxis in China. So certainly want to wait for those headlines in terms of the transactions that could come out of this. So those are the transactions, but if you look at the broader relationship, right, President Trump has said the two sides agreed on strategic stability and will provide that guidance for the next 3 years. But it's likely to perhaps buy time for the two sides to maybe plug the gaps in their economy. For the U.S., it will be rare earths. For China, it would be to close the gap in technology. Whether or not the two sides are really, going to reset relations. I think expectations for that is very low. I think this trip is not about getting a grand bargain, but really to strike that equilibrium in their relationship.
Min, thank you so much. Terrific briefing there from Min Low, and of course we'll have plenty more throughout the day. So the U.S.-China détente may be back. The backdrop has been shaped by war in the Middle East, tensions over rare earths, and of course this accelerating AI race that Washington appears determined to win, if necessary, through measures like restricting Beijing's access to advanced semiconductors. Now, all of this is weighing on markets. Political instability in the UK is also something we're watching out for. Then we had the appointment of Kevin Warsh to talk investments and finance. We're joined exclusively by Jenny Johnson, Chief Executive Franklin Templeton. Jenny, as always, thank you so much for giving us a little bit of your time in your busy schedule. There's just a lot, right? It feels like trade routes are being rerouted. I don't know whether these cordial exchanges between President Trump and President Xi makes you optimistic for investments.
Look, the U.S. needs China and China needs the U.S., right? And so there's always going to be this opportunity to coordinate. You want them talking. I mean, as Trump said, we're now having conversations. President Xi said we need to be able to be more cordial and work together. We need each other. The good news is, I think there's a recognition of that. And so when you look at who the delegation is, both parties have brought to the table kind of what each other needs. I think that the other side of this is there will always be a distrust around technology, but the fact that you have, Elon there, Jensen there, Dina from Meta there, right? That's a sign that the U.S. is coming in to have conversations. We need them. We need them for rare earths. I think that's just the reality.
What do you see? The market are very optimistic, right, in general, even despite, and that's partly driven by technology, despite everything that we're seeing in the Middle East with no real resolution in sight. Is there too much euphoria when you speak to clients? What are they telling you?
Well, if you look at it, just in this first quarter earnings, 85% of the companies beat their projections, right? I mean, and it's a broad base. This is not just a technology AI driven. That's the reality. The U.S. market is very, very, and the economy is still very healthy. And so I actually think that the market, there's reasons for the euphoria around it. And I get it, that there's partly the U.S. is a little bit as a energy independent. We're a little bit more isolated from some of the problems in the Middle East, which it means that it's having less of an impact on it.
Is there anything you worry about? So you're here in London for an IPO from Uzbekistan, which I'll get to in a second. But do you worry about inflation? Do you worry about private markets? Is there something underlying that you could see some dislocation or something that makes you uneasy?
Yeah. So here's what I'd say. Look, I think inflation. I think the market has underestimated the realities around inflation. I know that there's this lot of concern that's raised around Kevin Warsh and will he be independent? The reality is, remember, it takes 12 governors to vote for whatever the changes are in rates. And Kevin Warsh's term, it's going to be 2 years under President Trump and then 2 years after that. So he's got to look at his legacy, too. I think he's going to be very practical. So I think inflation, the reality of inflation is it's sticky and it's probably, going to be more difficult than even the market. I think the market's probably underestimating it a little bit.
So you're here in London because there's, a company from Uzbekistan that listed, which so far 24 hours has been doing very well. I mean, are you expecting more companies to list?
Well, so let me give a little bit of background on that because it's actually very unique. So this is the Uzbekistan government has been very progressive with the reforms. Actually have one of the top performing economies. I think this current quarter they're at 9% GDP growth. Last year they're almost 8%. And so what they've done is they've hired Franklin Templeton to help them privatize state-owned enterprises. So they contribute into a fund, 13 companies. They cover transportation, utilities, financial services. And in that fund, we actually have the ability to change management, control the corporate governance. So what they're trying to do is bring FDI and foreign direct investment into Uzbekistan to help them do the reforms. This is a great way to do it. And so we actually did this in Romania 15 years ago. The returns were better than the S&P 500, which is why we have a lot of institutional clients who are very interested. The IPO on the London Stock Exchange, which will happen on Monday. So Tashkent, it's already opened up. is oversubscribed by 4 times, right? So this is institutional investors looking to invest in Uzbekistan. And I have to say, it really takes leadership to be able to do something like this, but it's critical to be able to reform an economy. So we're excited to do it.
So Jenny, what's the next, I guess, this is a portfolio of companies. What's next to IPO? I know there's a lot of rumors about Uzbekistan Airways, which would get a lot of investors quite excited. I mean, are you looking at it in terms of potential?
Yeah, so the objective within the fund is that actually all the companies ultimately IPO and you wind the fund down, which is what happened in Romania. There's a few of them left. In fact, in Romania, at the time that the hydropower plant was contributed to the fund, it was insolvent. We had to completely change the management team, restructure the business. It was the largest IPO in Europe in 2023. So the goal is to take the companies, and state-run companies often don't have the corporate governance that's acceptable to the institutional investor. And so our job is to ensure, and by kind of putting the stamp of Franklin Templeton on it, you're saying to the market, it will be at those international standards as far as corporate governance.
And Jenny, I mean, you're right that the reforms have been incredible. It's still, everything depends on the president. I think he still has presidential approval for everything. I mean, for investors, how do they weigh, I guess, this concentration of power compared to the investment opportunities?
So while it's concentration of power, the president understood that he had to bring in a third party to represent the minority shareholders. That's our role, and gave us the ability to change the leadership in the underlying companies, which oftentimes in state-owned enterprises, the argument is, it's a bunch of cronies of the government. We have the ability to change that if we don't think it's the right leadership. That kind of I think vision around doing it is what shows a real leader.
Jenny, I mean, if we look at the amount of private equity firms, I guess that could exit from deal. I mean, there's just a lot of IPOs that could come to market in the next 16 to 18 months. Can the markets cope with that amount, or does it have to move to secondary markets?
I mean, obviously, you're talking about the big IPOs,
I'm talking
the
about
SpaceX, the Anthropics.
Yeah.
And, it seems that they can, and you can always reduce the amount you float, right, if you're concerned about it. But I think as long as the market is strong, and actually a healthy market, we need to see more private equity companies have liquidity exits, because that's been one of the issues in private equity is that they've really held out too long. And so it's frustrated a lot of the investors. So, yes,
At some point, could you see the secondary market actually exceed the
meaning private markets?
Yeah.
Look, I hope that never happens. I mean, at Franklin Templeton, look, today, the average investor is better served in a liquid public market. Now, there are excess returns in the private markets, particularly as you see the differential in like private credit versus traditional fixed income. Those returns matter when you're saving for retirement. So both markets need to be healthy. But I think it would be really unfortunate. And I think that one of the things that the SEC leadership is trying to do is make being a public company more attractive. That needs to happen. It's not just about, quarterly earnings. There needs to be kind of some other reforms that go into place. But I think that it's a really good sign that we're seeing. And really, it's a global IPO market. So it's not just the U.S., but you see it in Hong Kong, you see it in India. Those are good things, and I think a sign of a healthy economy.
I mean, if we call them like the mega IPOs, right? And you're right, it's, the Tesla, the Anthropics, or the SpaceX, not the Tesla. I mean, should they be allowed, once IPO, to enter the index earlier than they currently can?
So, I think there's some question on, because you have people locked up in there, and what does that do? Does that distort? Because now suddenly you have buyers that have to buy the stock. I'm sort of the view that it would be better to wait and give it a little bit of time until those original are actually have exited. Otherwise, they sort of get this benefit of the... But, the other side of it is, how does the individual investor who's in a passive fund get access to those if they're not in the index? But this is one of the challenges, I think, with the index, because if you're a company that doesn't get in the index and you have 50% of the investors just investing in index, then it's really hard to compete.
Do you think that these will change? I mean, even a lot of, there's been a data center boom. Does it change the nature of markets? I don't know if there's like investor fatigue with data centers.
I'll tell you my one worry on data centers. I just think anytime you are planning for 20 years based on today's technology, with the pace in which we see innovation happening, that can be risky. And so, you have things like photonic computing that doesn't need nearly as much energy. And I know it's complicated and it's probably a hybrid, but like you're making assumptions based on today's technology needs and energy needs. So I personally am sort of watching that trade as those investments go. Now, it's really good for the economy. There's a lot of CapEx that's being spent that has been put into the economy that's helping, keep it going.
So where do you see the biggest disruption? Because you mentioned, technology, but also energy needs. And you're right, that could significantly change how we use everything.
For sure. I mean, look at the breakthroughs that we're seeing happening. And so, again, we're basing these assumptions on today's computing approach and today's innovation around energy. And we know that these things are both very, very quickly evolving.
What are you spending most of your time thinking about, given all of that? I mean, we could go in any number of directions. We touched on inflation, geopolitics. But is there something fundamentally that you think will change in how the markets operate?
Look, I think the fundamental change is around bringing private markets so you have true democratization to the average investor, right? Now, here's why it matters. Just take investment-grade fixed income. So if you invest in investment-grade fixed income in the private markets, you're getting a 1 to 1.5% excess return on that. Problem is, you can't get your money for 10 years, so you really need to be able to withstand that illiquidity. On the other hand, a 1% additional return can mean 20% more just over a 20-year period in your retirement. Like, that can make the difference between whether you have enough money or not. So to me, it's all about matching the right vehicles with the needs, because these are illiquid. It drives me nuts when I hear people acting like, oh, no, private credit's more liquid than you think. It's not. But it can be put in vehicles as a percentage of a vehicle that keeps the vehicle very liquid. And so I think that that's a very important. And honestly, I think the best place for this is in retirement accounts, like in the U.S., but in the challenge because people, put money in their retirement thinking that they're not going to get it until they don't need the liquidity.
And it's opening up a bit.
It is, but the reality is it's probably the highest, most litigious space in investments. And so, it's all focused on fees, and these aren't cheap products.
Jenny, thank you so much, as ever, for joining us. Jenny Johnson, the Chief Executive of Franklin Templeton. Now, coming up, Labour Party showdown is brewing in the UK. We'll get more on British politics and the market reaction with Subita Subramaniam of Sarazen & Partners. That's next, and this is Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Well, the UK's Labour Party is heading towards a divisive battle over the country's top political office. But a leadership contest could drag on for months at a time when the country's economy is facing a soft jobs market and rising inflation. Well, joining us now, Subita Subramaniam, head of investment strategy at Saracen and Partners. Subita, thank you so much for joining us. Look, we heard also, Rachel, were you saying, first of all, there's a fight for survival for Keir Starmer, but she worries now this is, they worry about a trigger in gilt selling, basically, in a market that seems already quite illiquid. Do you worry about chaos?
Yes, I mean, I think this is incredibly unhelpful, just in terms of just the broader geopolitical environment we're in. I mean, I think earlier, just before the Middle East war started, we were expecting rate cuts in the UK. Gilt yields were well below 4.5%. And actually, if you think about sort of bond markets globally, gilts have actually repriced the most aggressively. And then I think if this chaos continues, there's going to be a point at which the risk premium in the bond market is going to limit the options for the politicians.
But if the Chancellor is warning of a leadership contest, right, that would plunge the UK into chaos, would it really, or would, depending on who comes into power, do bond vigilantes or just bond investors give them a little bit of time to sort their house out?
I actually worry because there is sort of a relationship between the bond vigilantes and Rachel Reeves in the sense that the thing they have in common is that they both like taxes. And ultimately, I think bond vigilantes would be fine if taxes go up and sort of fiscal sort of prudence comes in. But the reality is that in this world, in the state of the UK economy right now, raising taxes might eventually be counterproductive. So I'm not so sure that, even the bond vigilantes actually get us to where we need, what the UK needs.
And so you'd see it in gilts, but also sterling?
Yes.
Is there one, is there a buying opportunity at some point, or just have to wait and see how this plays out?
There is a point where, if we have disorderly bond markets like we had during Liz Truss, I think that it does become an opportunity because we do know that there will be a political reaction and a policy reaction to it. So I think, what is the actual risk premium? Is it 50 basis points in UK gilts? Is it higher? I mean, if it gets higher than 50 basis points, it does become a bit more attractive to actually, take on gilts.
Subita, the other big story is, of course, President Xi and President Trump meeting in Beijing. I mean, they had pleasantries, actually. They seemed on friendlier terms than in the past. Does it change the dynamic for investment if the two superpowers get along better?
I'm not so sure it changes the long-term trajectory for either. I mean, they say in a partnership, or they'd like to be in a partnership. I think they are really in a rivalry. Okay. We might get, and I'm sure we'll get really good headlines after the visit. Yeah. We'll have a great trade sort of headlines. We don't know if that'll actually come to pass. I do think, she has strategic ambitions to basically, achieve certain goals, some of which may be Taiwan, security-related, technology-related. President Trump has one singular goal, which is to get a good trade deal and have really good headlines. So it's quite, transactional versus a more strategic sort of debate and dialogue.
But Subita, is this about, deals, and is this about deals with the chief executives that are there, or can they also get China to quieten things down in the Middle East?
Yeah, so will China step in and actually reduce sort of the strains in the Middle East? It's unclear. They have been unwilling so far. They have been unwilling in Russia as well. They have really stepped back. Because if you take a strategic view on these conflicts, it plays to China's strengths, right? Yeah. It comes across as a more stable trading partner. So, I mean, yeah.
I mean, there's been so much euphoria on technology. I don't know how, and this is on the back of earnings. There are also chip makers today really kind of on a tear. Are you expecting the talent on chip makers, this possible talent chip makers, the U.S. and China to make a difference?
Yes, so I think, I think Jensen Huang and NVIDIA has said this very well, which is that actually putting these export controls on chips has actually accelerated China's technology and has actually pushed it closer to the frontier and closer to the U.S. So I think there's now a tacit recognition that it's actually slightly counterproductive. Yeah. That doesn't mean that, some of the sort of capex that's currently taking place in the U.S. is going to stop anytime soon. Actually, it possibly, picks up even further because it now becomes a competition between the U.S. and China. They go from slightly, having sanctions and controls to more open rivalry in technology.
How much do you worry about inflation?
A lot. A lot.
As everyone.
Yeah, I think everyone does, but the fact that the market is not really pricing it actually means that maybe we are not collectively worried as much as we should be. I think we're right now seeing sort of the primary impacts of inflation, into first order effects from crude oil and gasoline. We're looking at it in refined products, but actually I think it'll start to seep into food prices the longer this goes on, and so. I think, it's here to stay.
Subita, thank you so much for joining us. Subita Subramanian there, Head of Investment Strategy at Saracen and Partners. Coming up, we'll talk a lot more about oil and the Strait of Hormuz. We'll also go back to the UK story with Keir Starmer's efforts to hold back a potential leadership challenge, showing new cracks. We're live from Downing Street next, and this is Bloomberg. Thank you so much.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a little ball. Put wasabi in the middle. Then my process 1 to 6. This is putting the between the rice air. Then make the 4 fingers curl, make sushi shape. Then touch this. 2. Then turn. Now that these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is 1 to 6.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Anand, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The Chinese president tells U.S. business leaders his country will open up more as Presidents Trump and Xi say they hope for a more stable relationship. The UK Prime Minister Keir Starmer's rivals get ready to challenge his leadership as the Chancellor warns of chaos. Plus, Burberry sales beat, but shares fall as strong demand for scarves and trench coats fails to satisfy investors. So the UK's Labour Party looks set to be heading towards a divisive battle over the country's top political office. Several ministers are said to prepare to run in a leadership ballot, while Chancellor Rachel Reeves has warned a contest could plunge the country into chaos. Now, for more, let's bring in Bloomberg's Lizzie Burden, who's at Downing Street. Lizzie, so talk us through exactly the expectation of who could formally challenge Keir Starmer, starting with Wes Streeting.
Yeah, well, I mean, the gloves are off, the knives aren't quite yet out yet, but allies of the Health Secretary, Wes Streeting, say that he could resign from Cabinet as soon as today and launch his leadership bid. There is a bit of a question about whether he's got the numbers to do that. He'd need 81 Labour MPs to back him to do that. And then, conveniently, given that that's what we're expecting from Streeting, the former number 2 to Keir Starmer, Angela Rayner, has said that she's been cleared of a tax probe. So we're also expecting her to be gearing up for a leadership bid. Now, the other figure in all this, of course, is the Greater Manchester Mayor, Andy Burnham. He hasn't got a seat in Parliament at the moment. He'd need to find one and win one, and that could take weeks or even months. But we're waiting for him to announce which seat that will be. It's hard to imagine that Labour MPs will have the patience for a long wait for Burnham. Interestingly, Rayner saying that she isn't in a pact with Burnham to challenge Starmer, and notably, Polymarket odds overnight doubling for Angela Rayner, that it'll be her who takes over from Starmer. So she's now neck and neck with Andy Burnham, Francine.
So how much market uncertainty might a leadership challenge actually create?
Well, you mentioned the Chancellor was out this morning talking about how it would plunge the country into chaos. The last time Labour had a leadership battle, it took 3 months. It's hard to imagine that that wouldn't put pressure on gilt, add to the cost of living for ordinary Britons, and at the same time, by the way, remind ordinary Brits that of the psychodrama that we saw under the Conservatives that Keir Starmer promised to end. But it looks like it's inevitable at this point. Latest polling from Ipsos, for example, showing that 2 out of 3 Britons don't think Keir Starmer is the man to lead Labour to the next general election. And yes, we had better economic figures from the UK this morning. GDP growing actually in the first quarter compared to the stagnation of the second half of last year. But once those energy prices start creeping in from the war, that picture could turn around as well. So for investors, it seems like this is going to be a time to treat the UK with a lot of caution.
Lizzie, thanks so much. Bloomberg, Lizzie Burden there at Downing Street. Now joining us now is Lindsay Newman, visiting research fellow at King's College London, and also Brendan Murray, who leads Bloomberg's global trade coverage. So we have a lot to cover. We need to talk about Trump and Xi, but actually if you start in the UK, Lindsay, and you're also going back to Chatham House, so congratulations on that. But when you look at the UK and the political uncertainty, what will you be looking for?
Yeah, absolutely. It's an interesting moment, Francine, that we're seeing. As Leslie referred to, the economic forecasts have actually come out today quite surprising. But even still, the political landscape is sort of a story best already foretold. And it's hard to imagine. Polymarket voting has Starmer surviving this month. But as it looks further down the line, by the end of the year, it seems overwhelmingly it's going to be a very difficult moment for him to survive this challenge. It's coming from all sides, as Lizzie highlighted for us. It's coming from within his own MPs, but also the broader Labour Party. And so the sort of ability to stabilize his leadership that he saw last fall, especially when Donald Trump came and offered all those investments and deals, that sort of shine has come off, and the realities are that people are feeling it in their wallets, their pocketbooks, and they are just no longer satisfied with the current leadership.
Do you worry? I mean, again, it's, without going too much into markets, that actually this uncertainty will cause the UK quite a lot of harm.
Yeah, absolutely. We know that when there's political uncertainty, it will be deeply tied to how the market reaction is. There are, of course, some factors that are very much beyond Starmer's control, the geopolitical landscape, I'm sure, that we will also talk about, but and that he doesn't have control over. But there is no doubt that the markets will be watching the fact that the already fairly recent prime minister is now facing challenges from within.
Brendan, so, President Trump is in Beijing speaking to President Xi. I mean, it was fairly actually friendly until then President Xi also warned of possible clashes if the Taiwan issue is mishandled. How would you describe the relationship between the two presidents?
Yeah, I think the choreography so far is playing out pretty much as expected. Both sides are portraying a friendly tone, and President Trump calling President Xi his friend and a great leader. And so the optics are kind of playing out in a way that most of us would have expected. We saw an announcement that China was going to lift a hold on U.S. Beef imports, and so that was kind of low-hanging fruit. But we're seeing the deliverables sort of roll out at this stage. The big questions are still, how are they going to resolve the main issues between semiconductors and American high tech and Chinese critical minerals? Can they find some sort of delicate balance to allow those critical items to flow between the world's two largest economies?
And we know, President Trump loves a deal. He brought chief executives, but actually, does he just really need China's help with the Middle East right now?
Yeah, what's interesting, what we've already seen today, is that Trump really wants to keep this mostly on the economic trade and investment track. He doesn't want to get into sticky political dynamics. Xi, on the other hand, has already said today, yes, the economic ties are very important between the two sides, but the most important issue here is the Taiwan question. That will not be good news for Trump. That is not what he wants to hear. If anything, he wants to stick in this economic lane, but as you say, he would like some help on the Iran front. And, the conflict has proven more difficult. He had hoped he was going to arrive in China with this behind him. That's obviously not the case. And he's looking to Xi to apply any pressure that they may have, pull any levers that they may have to help him get the U.S. out of this conflict.
But, again, what's the relationship in terms of, for example, chip makers and semiconductors? Because we also heard that as soon as the U.S. blocks China from accessing chip makers, NVIDIA chips, that's when they get much more creative and therefore better.
Yeah, absolutely. And we know that one of the big takeaways from these meetings this week will be, can they extend the trade truce that was agreed to last October, where Trump agreed to reduce some of the tariffs on China, and in exchange, China agreed not to block those rare earths. And this is really the heart of the relationship, is that there's this mutually beneficial, mutually interconnected supply chains, yet both sides are strategic rivals in the AI space. How do you untie those knots? And I don't think we're going to see that over the coming days, but there will be lots of conversations dancing around exactly that issue.
Brendan, I don't know if it's a change of heart from President Trump or whether he just understands he needs China maybe more than he needed them 18 months ago.
Yeah, exactly. A lot of different factors are playing a role in that. The Iran war and the energy shock are obviously playing into that as well. One place where we might see the geopolitics of the Mideast and the economics that are domestically important to President Trump right now are in the energy space, where China put tariffs on U.S. crude oil and natural gas, and so lifting those tariffs might be a way for China to kind of throw a bone to the Trump administration, while also kind of easing the energy shock and restoring some confidence in that area.
But Brendan, you're in charge of global trade for Bloomberg. This is no small job. So I know we're looking at the Strait of Hormuz on a daily, if not hourly basis. It doesn't seem like we're getting anywhere.
On the Strait of Hormuz?
Yeah.
Yeah, it looks like a situation that isn't going to end in the next 3 to 6 months. We've heard from companies that do business in the region that say, yeah, we're planning for this to last all year, and so it looks like Iran has a lot of leverage now, and they are poised to use it. In the meantime, we've gotten some inflation numbers in the U.S. this week that really step up the pressure. The producer price number yesterday means consumers are going to feel those higher prices in 3 to 4 months, and that leads you right into the U.S. Midterm election. And so the pressure on President Trump to resolve that is growing every day, and every time we get a number like that shows consumers are really bearing the brunt of the situation in the Middle East.
And Lindsay, we saw a bit of optimism, right, on the one-page memorandum, and then there was cold water over it. Is this the kind of pattern we're going to see? Because as Brendan says, as we get closer to the midterms, President Trump needs something.
Yeah, I mean, the issue is we are stuck in a stalemate right now, and neither side is really willing to pay the cost that will be required to unlock that stalemate. The U.S. administration very clearly does not want to pursue further military action. They obviously can. They obviously have quite a range of sort of facilities at their disposal to do so, but they know that it's deeply unpopular at home. And still, the popularity at home has only ever reached 1/3 of the American population have approved of this conflict in Iran. And so in order to sort of unlock that, the question is, how do you apply pressure that's sort of outside of the box, that's not militaristic? And that's where the China question comes in. Interestingly, this week we know that Iran not only expanded the zone of the Strait of Hormuz, but it said it's going to charge it's going to charge increasing costs for those traversing the strait, which means that that oil exports may not be that same source of leverage that it had been in the past.
Do we understand, or at least does the Trump administration understand how weak or strong this new Iranian regime is?
I think that is the big question, right? That there's sort of a optics that this regime has managed to survive this overwhelming threshold of attacks conducted by the U.S. and by Israel. But we know it's been degraded both militaristically, personnel-wise, Navy, its missile capabilities, and yet it managed to export the conflict for the rest of the region and the rest of the world. So it's sort of a bit of a whiplash, and trying to calibrate has been very difficult for the U.S.
Okay, thank you both for joining us. We unpacked a lot. Lindsay Newman, a visiting research fellow at King's College London, and Brendan Murray, who leads Bloomberg's global trade coverage. Coming up, losing its shine while Burberry disappoints investors despite delivering a sales beat. So we'll discuss the company's ongoing turnaround plans next. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
This week, leaders from the world's two largest economies will come together in Beijing. With geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, Burberry disappointed investors after the British luxury brand issued a cautious outlook for this fiscal year and warned geopolitical and economic uncertainty may hurt shopper confidence. While Burberry's conservative tone stood in contrast to results showing Chief Executive Joshua Schulman's turnaround is starting to pay off. Well, Andrea Felstead, Bloomberg opinion columnist, joins us now. Andrea, I'm always so happy to speak to you because we always have fun talking about fashion. Not so fun for Burberry because of their cautious outlook.
No, I mean, you can understand why they don't want to be too optimistic at this stage, particularly, you know, with the uncertainties over luxury demand. But the results were pretty good. You can't argue with that. But they probably prefer to under-promise and over-deliver.
So what can you tell us about the key Asian market?
Well, China sales were up 10% in the final quarter, which is pretty positive. We have seen some signs that China is indeed back, so that will be positive for the luxury brands. America's still doing well, which is also, you know, a key market until China fully recovers. So the two markets that really matter were going in the right direction.
Have we seen any impact from the conflict in the Middle East?
They're saying that in Europe, they obviously in the region itself, but they're saying in Europe it has had some impact on travel and a bit of confidence. But they said it's very localized into Europe. And Joshua Schulman, the CEO, said we're at the start of the tourist season, so we'll have to see how that develops.
Andrea, just taking a step back, what are people buying and what are they not? So there was a clear repositioning in Burberry, you know, compared to like outerwear and scarves. Yeah. Do people want that, or have they gone to other brands?
They do seem to want that. I mean, that is driving demand, and particularly the scarves, Burberry said, has helped them build credibility with younger consumers, which, you know, every luxury brand is chasing. I think the share price fall today is really a sense of, okay, so where do we go from here? I personally think the strategy of going up market and becoming a proper British luxury upmarket brand was the right strategy, but it takes time, and it was against the backdrop of a very difficult market. But there is a question mark: how far can you really go with outerwear and scarves? You need handbags, which they have sort of retrenched. I said handbags are doing well, but they have retrenched on that big push into handbags. The outerwear market's also pretty crowded. You've got Moncler, you've got Ralph Lauren developing in outerwear, and the affordable luxury market is getting quite crowded. You've got obviously Ralph Lauren doing great, Coach doing great. You've got a whole new brand of more accessible brands, Cézanne, Polène. You've got lots of competition. That white space is shrinking a little bit. So that there are definitely, you know, where does it go from here?
Okay, let's also talk a little bit about watchmaking, because there's this new collab between, Audemars Piguet and Swatch. I mean, it almost broke the internet, let's face it. And then we got the pictures, but it was like a marketing launch if I've ever seen one. What are you expecting from them?
Well, I think it's going to be very interesting. Everybody was very excited about the tie-up with Swatch and the Royal Oak, which is Audemars, iconic model. The disappointment is that it's this pocket watch that can be developed as you can have it on your bag, you can wear it around your neck, have it as a desk clock. Now, how many people will really want that? I think some collectors will, but I think most people want a wristwatch. That might have tested what Audemars was prepared to kind of give to Swatch. Perhaps the pocket watch protected its core business a bit, but I think that is definitely going to be a big question mark unless somebody, probably not Swatch or Audemars, can come up with a strap that cleverly, adapts it to a wristwatch. Then that might make it a people bit more demand for it, but I think that pocket watch is a real key question mark.
I mean, the algorithm on my Instagram has gone mental, I only have Swatch things, and you do see some companies, unknown companies, I've never heard about them, already pitching that kind of stuff. Andrea, thank you so much for joining us. I'm also excited because we're speaking exclusively to the Audemars Piguet Chief Executive, Ilaria Resta, and that will be Monday at 9:45 a.m. UK time. Andrea Felstead from Bloomberg Opinion. Now, the UK Navy says a commercial ship has been taken by unauthorized personnel off the coast of the UAE and is now bound for Iranian waters. Let's get more from Bloomberg's Anthony Di Paola. Anthony, thank you so much for being with us. So just bring us up to speed of what we know so far.
Good morning, Francine. Yeah, pretty much what you just said, that vessel has reportedly been being taken to Iranian waters. This would be the second one in as many weeks, because there was a vessel that the Iranians seized also last week, which appeared to be a vessel potentially with their oil that had previously worked with shipping Iranian crude. We're still trying to figure out the details of this vessel. And see what the situation is and where that might have come from. What I can tell you is that we are seeing a little bit of an uptick in traffic through the Strait of Hormuz. Of course, that's been closed since the war started at the end of February, and now not only is Iran blocking any other vessels from coming out through Hormuz, the U.S. is blocking any Iranian or Iranian-linked vessels from passing really through the Gulf of Oman into the Arabian Sea. So the U.S. is also blockading those Iranian vessels, and that's cutting off that flow of Iranian oil that had been coming out up until about mid-April. But we are seeing some vessels, turning off their satellites, sneaking through, coming through under the cover of the night. We've reported that those are vessels from ADNOC carrying Abu Dhabi crude, some Aramco hired vessels by their traders. We saw 2 LPG tankers, that's cooking fuel going to India. That's very important for the Indian market there. Saw those coming through today. So we're seeing kind of an uptick of those tankers coming through. So perhaps this is a little bit more positioning on Iran to try to assert themselves again, particularly when President Trump is in China, and this situation is probably coming up because the Chinese, of course, very dependent on oil coming out of the Gulf. So probably some positioning around this and around Hormuz, Francine.
Anthony, thank you so much. Anthony Di Paola there in Dubai. Now, the growth of AI data centers has been driving up demand for energy. The Iran war could lead to a rethink in global energy strategy, so say analysts at Goldman Sachs. Joining us now is Alberto Gandolfi, Goldman's head of European Utilities Research. Alberto, thank you for joining us. I mean, there's obviously a very big political desire to drive electrification in Europe. Are there signs on the ground that this is accelerated because of what is happening in the Middle East?
Hi, Francine. Good morning. Yes, there are signs. There's actually a very explicit paper by the European Commission that points out very important elements. First of all, I need to remind everybody this is the second large-scale energy crisis that Europe is facing in less than 5 years. And this European paper very clearly says we might be spending something around 400 billion euros this year to import hydrocarbons, which makes Europe very exposed to price shocks. Electrification would go a long way to solve this. And there's quite a lot of money unallocated from the Next Gen EU, some of the COVID funds, some of the previous crisis funds that were never allocated, that could be put at use. In our view, electrification is accelerating. It's already under acceleration. Nearly 20% of new car sales are electric already, and these policy changes at the EU are likely to accelerate further the process.
Alberto, how do you compare the situation with AI power demand, in Europe compared to the US, where it's obviously much bigger and much faster?
We are probably 3 to 5 years behind. I want to hope eventually we're going to catch up. We're 2 to 3 years behind. Typically, our view, and we expressed that in early 2024, is that Europe cannot miss the artificial intelligence train. It's too important on productivity of the economy. It's too important on national security. And we find unlikely to outsource the artificial intelligence infrastructure to another country. So we have seen ever since the build-up of quite a lot of data center projects across Europe. We calculate a data center pipeline. We've been the only ones to do it out there. Essentially, we are tracking how many data centers ask to be connected to the European power grids. That number today exceeds 300 gigawatt, which is essentially the total power consumption of Europe. Of course, some of these projects will never come to light. Some are speculative. But we forecast roughly a quadrupling of the data center capacity between 2025 and 2035. And in light of what is going on with AI agents and the faster than expected adoption rates in enterprise, we may be underestimating this.
Alberto, what does the rise in power demand actually mean for renewable energy?
It means the world, essentially, Francine. What we think is happening is that, you know, Europe has gone from 10% production from renewables in the early 2000s, which was really hydro, to around 50–55% right now, and this was merely decarbonization policy. This happened essentially without power demand growth. If you start to put through 2, 3, 4, 5% power demand growth, which is what we anticipate by the end of the decade, more in the mid-single digits, renewable additions have to probably accelerate 60 to 70% in Europe. But we have seen historically that demand tends to outpace supply for 3 to 5 years. Supply responds a bit slowly, which means not only that we need to build more renewables, but it means cyclically we are about to see rising returns in renewables, which is exactly what is already happening in the United States right now.
Alberto, in the very little time we have left, solar has been winning in Europe. Can wind catch up?
Yes, I mean, solar has been winning because of economics. Solar is very, very cheap. It has worked. Look at Spain. Between 22 and 27, Spain had a substantial acceleration of solar, which means that power prices in Spain, since the Hormuz crisis, have barely moved. So solar has been extremely successful at that. But there's a physical limitation to how much solar you can build. Half of the time it does not produce. You need to integrate solar with batteries. You need to integrate with wind. And as soon as possible, you may have to reopen a discussion about nuclear.
Alberto, thank you so much for joining us. Alberto Gandolfi, their head of European Utilities Research at Goldman Sachs. Coming up, Bloomberg's Katie Greifeld has an exclusive conversation with Andrew Schlossberg, Chief Executive Officer of Invesco. That's at 3 p.m. London time. Up next, it's Bloomberg Brief with Anna Edwards, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 60–65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
It's 5 a.m. in New York City and 10 a.m. in London. Good morning. I'm Anna Edwards in for Vonnie Quinn with your Bloomberg Brief. Let's get set up for the day ahead. Summit Day 1 underway. Presidents Trump and Xi discuss enhanced economic cooperation while CEOs meet with Premier Li. Tech marching higher after the Nasdaq 100 set fresh record highs. Cisco results giving a boost to futures this morning. And the Senate confirms Kevin Warsh as the next Fed chair in the narrowest vote ever for the post. Let us get a check around the world on global markets. Let's see what's moving things around. Here's Winnie Su with a look at the latest from Asia. Winnie.
Good morning, Anna. We're seeing that Asian stocks fluctuating today, especially with investors watching for the Trump-Xi meeting going on in Beijing. Now you are looking at the Kospi Index hitting a fresh record on the AI optimism, while the onshore Chinese stocks actually underperforming, down 1.7% as investors take some profit after such a strong run-up into the meeting. We're still looking at the gauge headed for 6 weeks of gains. Now you flip the board and see how that overall positive sentiment from the meeting is actually supporting both the onshore and offshore yuan, both hovering around its strongest level since 2023. While in Japan, we're looking at 30-year bond yield hitting its highest level since 1999, despite a pretty strong bond auction earlier today. And that goes to show how inflationary concerns are still weighing on sentiment.
Yeah, a lot of focus on those bond markets then. Winnie, thank you very much. Justina Lee is here in London for a look at how Europe is performing. Justina.
Good morning, Anna. Now, just as Winnie was saying, it's another positive day, kind of as tech optimism continues to support these markets. We're seeing, the STOXX Europe 600 up about 0.5%. Now, in terms of the bond market, we're continuing to see a bit of easing in terms of short-end bond yields as traders continue to reprice the chances of an ECB rate hike in June a little bit lower, kind of with oil prices slipping a little bit. Now, of course, the focus here is still on the UK. Now, we got some positive UK GDP numbers today, but it seems like investors are looking through that and still focused on the political picture here, with the pound kind of slipping a little bit. Now, if we kind of flip the board here, of course, the focus is all on the long end gilt yields. And we see here, for the 30-year yield, which reached the highest in nearly 3 decades just a few days ago. Now, it's continuing to slip a little bit, but I think what everyone's focused on is whether Keir Starmer is going to stay on as prime minister, as we kind of see a few more challengers that I think investors are worried might not be as focused on the fiscal sustainability of the country, Anna.
Yeah, all about who comes next if we move closer to a new battle for leadership. Then, Justina, thank you very much. Let's have a quick look at some other markets. Then check in on your U.S. futures, and this is the picture that we have stateside. Up by 0.3% on S&P futures, Nasdaq futures up 0.4%. That tech optimism that has been going around the globe. Yes, it was in the U.S. yesterday, but it seemed to continue after hours in the U.S. with numbers out of Cisco, the IPO that we had announced from the sector as well. So lots of tech positive vibes coming through. On the oil markets, let's look at where we are there. 106.15 is where we are on Brent, 101. So still over 100 on both Brent and WTI. We've seen a drip feed of some more vessels, coming through the Strait of Hormuz, but still closed, essentially, still not open. And some tensions around one Indian vessel that we are tracking very closely. The US 10-year yield pushed higher by the PPI number of yesterday, and that 30-year yield looking pretty comfortable above the 5% level. For some stocks that we're watching, here's Chloe Melly.
Good morning, Anna. NVIDIA was strong yesterday and continues to be strong this morning as its CEO, Jensen Huang, joined Trump on his visit to China, with Huang saying that the meetings had been excellent. And so we're seeing that enthusiasm reflected in those shares this morning, up about 2.3% in pre-market trading. It's also a good day for Cisco, which is also up in pre-market trading this morning after boosting its guidance and announcing major job cuts as it focuses on its strategy of really refocusing on AI, with analysts saying that the company is very well positioned for the AI build-out, and there's really strong growth prospects going into 2027 as well. And finally, Doximity, the online networking service for medical professionals, is down with a weaker than expected forecast. There, the problem was that AI investments have been really pressuring earnings, and there's actually also quite a lot of low visibility on the amount that pharmaceutical clients are willing to spend on advertising. And so we're down very significantly this morning for Doximity, more than 20%.
Thanks, Chloe. Chloe Melly with those stocks in focus. And coming up on the programme, we'll get a closer look at US-China relations. Lizzie Galbraith will be with us from Aberdeen in just a moment. And later this hour, BlackRock's Wei Li will be with us to talk about the implications of a Walsh-led Fed. Much more to come on that subject. But back to our top story. Let's go straight to Beijing, where Presidents Trump and Xi lay out their visions for US-China relations.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
We'll add to that the White House has been saying in the past hour that the leaders discussed increased trade in agriculture and in oil. Bloomberg's Anne-Marie Hordern is live on the ground for us in Beijing and joins us now. Anne-Marie, good morning to you. So a lot of the set-piece events, the big meeting having taken place, we've seen headlines on oil and agriculture. What stood out to you?
Yeah, certainly that's going to be the big win for this White House, being able to get some of these massive purchasing agreements from China when it comes to agriculture, things like beef and soybeans. And I would say as well, in terms of the White House readout, they also talked about Iran and how both of these countries agreed that the Strait of Hormuz should be open. But what's very telling to me, Anna, is that the White House readout does not mention Taiwan. And while this meeting was taking place at the Great Hall of the People, after really a very warm welcome with a lot of pomp and circumstance between President Xi Jinping and President Trump, what you had is President Xi Jinping, or China state media, releasing a readout while the meeting was still taking place, talking about Taiwan and how if this relationship, this delicate relationship, is not managed well, it could mean conflict or danger between the bilateral relationship between Washington and Beijing. And this is really one of the sharpest we've heard from Xi Jinping when it comes to Taiwan, and a warning really to the United States. And I think it's very telling that while the meeting was still taking place, this is the narrative, especially to a domestic audience, the Chinese wanted to push. Meanwhile, the White House readout didn't mention Taiwan at all.
Yes, indeed, the White House not mentioning that. I mean, we had President Xi talking about the Thucydides trap, which, not to dive too much into the Greek, Anne-Marie, seems to be a reference to him not believing, and he said this for some time, him not believing that it is inevitable that these two nations come to clash with each other. That was the tone, I suppose, that he was trying to set at the beginning. There is not an inevitability about that.
That's the first question he brought up when the two sat down for that bilateral meeting. And really this idea when it comes to the Thucydides trap is about the risk, the brewing conflict that can emerge when you have a rising power at the same time already dealing with an established power. And he posed it as a question really to President Donald Trump. Can these two massive economies avoid that trap and avoid conflict? And I think that sets the tone for this entire relationship. It is about managing that competition, which clearly the United States wants to do. A big part of this trip is to really extend the détente that the two had reached. That goes until October. Key focus for the United States for that is getting their hands, of course, on rare earths. And for China, it's getting their hands on more advanced semiconductors.
Yeah, absolutely. We heard some analysis earlier talking about how this was all about rare earths and all about oil. Anne-Marie, thank you very much. Anne-Marie Hordern joining us there from Beijing. And for more coverage of that visit, of that state visit of President Trump to China, you can go to the TLive blog, TLIV Go, on your Bloomberg terminal, and you'll be able to follow along with the day's developments. Joining us now with some analysis, Lizzie Galbraith, senior political economist over at Aberdeen. Lizzie, good to have you on the programme. Thank you very much for joining us. What's your first response to the headlines we've had out so far. A little bit of movement perhaps on oil, on the amount of oil that China will buy, although China hasn't said so yet, but the White House has been saying so, and maybe on agricultural products. That sounds quite usual for these kinds of meetings. What stood out to you?
Yeah, I think you're right. It has largely, I think, so far been in line with our expectations in that we've seen some progress in announcing deals or reverting back to previous deals in areas that are outside the areas of strategic competition that the US and China continue to try and manage. Some obviously positive signs when it comes to those purchase agreements. The proof is always going to be in the pudding with these sorts of things. It's whether or not both sides can actually meet these commitments that they make. But it is obviously a positive that we're in this position that we're kind of seeing at the moment, where both sides do seem to have been able to stabilize that relationship and be able to return to a sort of a steadier footing after the turbulence that we saw last year.
Yes. And what about the mention or lack of mention of Taiwan? The Chinese have mentioned it, and they've said that there's the risk in the relationship that if that relationship around Taiwan is mishandled, that there could be clashes between China and the US is the implication. And yet the US has not mentioned Taiwan in its readout. What do we make of the latest lines there?
I think this is, again, an illustration of that continued strategic competition between the two that really isn't going anywhere. This trip is largely around sort of resetting, recalibrating some of those guardrails, trying to restore some of the baseline trade levels that the US and China tend to enjoy when relations are good. But it's never going to be about being about kind of settling those big structural challenges that relationship faces, particularly on foreign policy, where US and Chinese interests are likely to remain kind of mutually incompatible for the next years, decades longer. It was never really going to be a summit where I think there are high expectations of a major shift in policy in either direction on that front. It's possible that we're not done yet. It's possible that maybe some statements to the camera are made before we see President Trump depart. But I think it is largely telling of that ongoing strategic competition that will continue to see the two sides take forward, even as their baseline relationship appears to be in a more stable position at the moment.
And so we shouldn't necessarily then, Lizzie, you think, expect some sort of grand bargain or reset of the relationship. Some have pointed to moves in the Middle East and suggested that the US has now, combined with what's been going on in Central America as well, more control over global oil flows, and that allows them to take the battle to China around rare earths. Should we expect the sort of industrial politics to come to the fore?
I think in a way, we're already seeing that. We are still seeing, both sides try to shape their supply chains, try to shape their economic development policies in ways that will bring them long-term strategic benefits as this competition kind of continues to develop over time. So I think that's still there in the background. That's not going anywhere. What we saw last year was that neither side really liked the consequences of that competition really coming to the forefront of their relationship. They're more than happy to take a step back and to cool things down. But we are going to still see, critical mineral supply chains be a really key aspect going forward for both sides. And of course, technology competition, particularly in advanced AI, is going to be a factor as well. So that's going nowhere. We're still expecting that to be a major feature of policy development going forwards. And that with it brings new strategic opportunities as well as countries like the US look to diversify their supply chains and look for alternative sources for some of these materials that the Chinese are currently so dominant in.
Lizzie, thanks very much. Lizzie Galbraith of Aberdeen with the analysis of the Trump-Xi meeting so far. Now to other top stories trending on the Bloomberg terminal this morning. Kevin Warsh was confirmed as Fed chair in the slimmest margin in the position's history. The 54-45 vote reflects polarized politics in Congress as Democrats fear Warsh will bend to President Trump's demands to rapidly lower interest rates. A UK naval group says a commercial vessel was taken by unauthorized personnel at the entrance to the Strait of Hormuz and is now headed for Iranian waters. This comes days after Iran laid out an updated process for ships seeking to cross the vital waterway. Burberry disappoints investors. Shares are down after it issued a cautious outlook for this fiscal year, warning geopolitical and economic uncertainty may hurt shopper confidence. Burberry did say it expects momentum to continue after like-for-like sales beat estimates in the fourth quarter. Tech rally, it's showing no sign of slowing down as Cisco surges with blockbuster results. More on that next.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Hazlida Amin in Davos, Switzerland, and this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back. This is Bloomberg Brief. I'm Anna Edwards, live in London. Let's move on to tech themes. Cisco extending its double-digit gains in the pre-market trading. That's after the network equipment firm boosted its full-year forecast and announced job cuts to focus more on AI. For more, let's bring in to the conversation Bloomberg's Henry Wren, who is with us on set this morning here in London. Henry, good morning to you. Let's start with the Cisco story then. A really strong rally in these stocks, in this stock after hours. What's so convincing about the story? Is it the way they are managing to pivot into the future of tech rather than the past?
Yeah, because Cisco, as we know, as a company, is a company that makes servers, switches, those old school, legacy networking equipment. But what we are seeing these days, it's more and more of those equipment are going to AI data centers, right? So what really excited the market in the post-hour trading, as we can see, it's up nearly 20%, is because it has raised its guidance for those AI-related orders. Those sales goes to AI hyperscalers. So the company is now saying that it's expecting $9 billion of orders, up from a previous guidance of $5 billion for fiscal 26. So that's why the market is getting more excited about the stock.
Right. Okay. And I mean, I say this slightly flippantly, but if anyone is getting carried away with comparisons back to the dot-com bubble, then maybe this won't help, Henry. Let me ask you about the chip maker Cerebras raising $5.5 billion in, what is this year's biggest IPO for now, at least, from the tech space.
Yeah, indeed. It's an incredible story because when you think about it, we have this final IPO pricing at around 185, but initially it was around 120, and it got raised for one time and raised again. So we are talking about a 50% increase from the initial pricing range. So that fact alone just shows you how much demand this market currently have for those new AI chip companies coming to the public market. And not to mention that its IPO books is more than 20 times covered as well. The sentiment is very high. We see the Philadelphia Semiconductor Index already gaining 80% year to date. But obviously, we'll see how it trades on Thursday. But yeah, sentiment is very high.
Sentiment is high, and I know that Arm and SoftBank, according to our Bloomberg News colleagues, were trying to buy that business at one point. That, according to our reporting. Let me ask you about what we're seeing reported by other outlets. Reuters suggesting that the US has approved various Chinese names to buy the H200, the NVIDIA chip. This seems to be adding to positive sentiment, even though I thought we knew that the US was okay with the export of H200 to China. It was the Chinese that weren't necessarily okay with the import. So what's new here?
That's indeed the situation, yes. It's still very complicated, but the incremental information we're getting is there are about 10 companies from China that has gotten approval for the US to buy those H200 chips. And those companies include the cloud providers. So we're talking about Alibaba, ByteDance, Tencent, but also some distributors, including Lenovo. So that's the new piece of information. But as you mentioned, the situation is still very complicated. For China, there are still cybersecurity concerns. There are also some concerns about whether those kind of purchase will be weakening the country's push for its own AI chip ambitions. So that's why we're not seeing so much in terms of buying orders coming through just yet.
Henry, thank you so much. Thanks for joining us. Bloomberg's Henry Wren on the technology beat. Gilt markets are focused on UK politics, of course. Coming up, UK Prime Minister Keir Starmer faces growing challenges as he attempts to stay on in the job. We will look at what could unfold later today. That's next. This is Bloomberg.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Burr.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
1
Welcome back. Let's check on some front pages for you then. First up, the Washington Post. Confidential U.S. intelligence analysis found that China is exploiting the war in Iran to maximize its advantage over the U.S. The assessment is said to have been produced for the chairman of the Joint Chiefs of Staff. Next up on the Wall Street Journal, AI wins for hedge funds. Firms such as Point72 and Whale Rock Capital posted strong returns in April, thanks in part to rallies in semiconductor and related equipment stocks. The Journal says these wins helped make April the best month for stock picking funds since December 1999. And finally, here in the UK, the BBC, former UK Deputy Prime Minister Angela Rayner telling The Guardian she has been cleared by the HMRC over her tax affairs. The legal development setting the stage for Rayner to potentially enter the leadership challenge to boss Keir Starmer. For more on the challenges to Starmer, the Prime Minister in the UK, of course, let's bring in Lizzie Burden, who is down at Downing Street for us. Lizzie.
Well, we're on tenterhooks here, Anna, waiting for a formal challenge. There hasn't been one yet, but the Health Secretary, Wes Streeting, was in here yesterday for less than 20 minutes with the Prime Minister. His allies say that he's expected to resign the Cabinet today and launch a leadership bid. Conveniently, as you say, the former number 2 to Keir Starmer, Angela Rayner, today announcing that she's been cleared of a tax probe, so laying the groundwork for her own leadership bid. And then there's the Mayor of Greater Manchester, Andy Burnham. He doesn't have a seat in Parliament yet. He'd need to pick one and win one. That could take weeks or months. I wonder if Labour MPs have the patience for that. But interestingly, Polymarket odds now giving Angela Rayner double the chance overnight, and she's neck and neck with Burnham now to take over from Starmer.
Lizzie, thank you. Lizzie Burden in Westminster. More analysis of markets coming up next.
Estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City and 10:30 a.m. in London. Good morning, I'm Anna Edwards in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day ahead. Summit Day 1 underway. Presidents Trump and Xi discussing enhanced economic cooperation while CEOs meet with Premier Lee. Tech marching higher after the Nasdaq 100 set fresh record highs. Cisco results giving a boost to futures this morning. And the Senate confirms Kevin Walsh as the next Fed chair in the narrowest vote ever for the post. Let's get to the markets then, and the futures picture looks pretty buoyant, looks positive, not as positive as it did an hour or so ago though. Nasdaq futures have paired early again, so up by just 0.2% right now. There is still a lot of excitement around tech themes, Nvidia in focus with that visit to China, IPOs in the sector, the pivot from Cisco toward AI, very positive, and so all of that lifts sentiment a little bit towards the US Open into technology. Let's have a look at where we are on the oil story though. Oil prices are trending a little higher this morning, up 0.9% on the global benchmark, the Brent price, with a 106 handle. We're getting a slow trickle of vessels coming through the strait, but really nothing markedly has changed there. And so whilst we watch what's going on in China, that is still on our radar. Now, for more of the stocks that we're watching this morning, here's Chloe Melly.
Good morning, Anna. Nvidia is in the green as its CEO Jensen Huang joined Trump on his visit to China, pointing to how important AI is going to be in this high-stakes summit. We've already heard from Huang saying that the meetings were excellent, and so we're up about 2% for Nvidia this morning. Moving on to Cisco, which has boosted its guidance on the back of strong AI-related orders and also announced some major job cuts as it focuses on being a really AI-driven, AI-first company, and so it's up very strongly on the back of those strong growth prospects. And finally, Doximity, the online networking service for medical professionals, is down after weaker than expected forecasts. And there, the problem is partly because it's made some really big AI investments, and that is pressuring those earnings. And so we're down more than 21% for Doximity this morning.
Chloe, thank you. Chloe Melly with a look at those stocks. Now back to our top story. The leaders of the world's biggest economies meet in Beijing.
When there were difficulties, we worked it out. I would call you and you would call me, and whenever we had a problem, people don't know, whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
A stable bilateral relationship is good for the world. China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals.
The meeting between the two reportedly lasted more than 2 hours. Next on the agenda for the presidents will be a state banquet scheduled to begin in less than an hour. Back with us is Bloomberg's Anne-Marie Hordern in Beijing. And Anne-Marie, you were reminding us that we've had mixed readouts from this meeting. It lasted a long time. Maybe the two sides couldn't have identical views of what was important, but one very clearly mentioned Taiwan and the risks associated with that relationship, and the other did not.
That's right. The White House readout doesn't mention Taiwan at all. This administration clearly wants to focus on the deals potentially they can ink when it comes to this bilateral relationship. If you look through the White House readout, really what they want to talk about is how the two discussed an enhanced economic cooperation, potentially how to get more American access to Chinese capital markets, as well as Chinese investment in U.S. industries. Also, Xi expressing increased interest in U.S. agricultural products, as well as U.S. oil and energy products. And then notably, when it comes to the geopolitical realm, the White House focuses on Iran and how Xi expressed that he doesn't want to see the militarization of the Strait of Hormuz, that he doesn't want to see a toll when it comes to the Strait of Hormuz, and the two agreed that Iran can never have a nuclear weapon. Not mentioned at all from the United States is Taiwan, which is interesting because Taiwan was really thrust in the middle of this bilateral meeting, because during the more than 2-hour meeting at the Great Hall of the People, after a ton of pageantry between these two officials, what we had was Chinese media putting out a readout of what Xi explained to the United States when it comes to Taiwan, and how this relationship really needs to be managed carefully, or it could lead to conflict and a dangerous relationship between Washington and Beijing.
And Anne-Marie, oil and agriculture, they seem to be the things that on the trade front have been mentioned so far. But markets get pretty excited about technology every now and again when they remember that Jensen Huang is present.
And he was present for sure. You know, we should note, and I was there when the president arrived and Xi Jinping greeted him outside Tiananmen Square in front of the Great Hall of the People, and standing behind the Treasury Secretary and the Secretary of State, Marco Rubio, was no other than Elon Musk and Jensen Huang, two individuals that actually traveled over to Beijing with the president on Air Force One. One was a late addition, picked up at the refuel stop in Alaska. No mention yet of technology, but remember, Anna, there's a state banquet tonight, and they're also going to be spending the day together tomorrow.
Anne-Marie, thank you very much. Bloomberg's Anne-Marie Horder joining us there in Beijing. And the updates, well, you can get plenty of updates on the Trump-Xi summit. It continues, of course, and you can go to the TLIV blog on the Bloomberg terminal to get more details of all that is passing between these two men and what it means for global politics and global markets. Over in Washington, Kevin Warsh is confirmed as the new Fed chair.
The ayes are 54, the nays are 45. The nomination is confirmed.
That vote was the slimmest confirmation margin ever for the top position at the Fed. Kate Ackley of Bloomberg Government joins us now from Washington. And Kate, what do we read into the fact that he was, yes, approved, but only just?
Well, it certainly speaks to our polarized times here in Washington and on Capitol Hill. There was only one Democrat that sort of crossed the aisle on this vote. That was John Fetterman, a senator from Pennsylvania, a Democrat, but who has been more independent-minded, if you might say, in recent months. So it was certainly what we had heard during his confirmation hearings was that Democrats, including Senator Elizabeth Warren of Massachusetts, just did not buy Warsh's pledge of independence, that he would be keep the Fed politically independent from President Donald Trump and other political pressures. And of course, you know, the reason that we have a new Fed chair is that President Trump was growing tired of Jerome Powell, the current Fed chair, the past Fed chair, for not lowering interest rates fast enough, as fast as what Trump wanted.
Kate, thank you very much. Kate Ackley with an update there from Bloomberg Government. Let's bring into the conversation Wei Li, Global Chief Investment Strategist at BlackRock. Wei Li, good morning to you. A couple of things for us to digest there. Let's start with the meeting that we're seeing taking place in China, and then we'll move on to the Fed. So the meeting in China, I mean, what's at stake for your portfolio, for the money that you're looking at, for the investment decisions that BlackRock is making or recommending? What is at stake in this China-US meeting right now?
Well, the meeting is taking place at the intersection of two of the mega forces that BlackRock identified. One is geopolitical fragmentation, and the other one is AI transformation. I would note that day one largely met expectation in terms of the very warm optics that we just looked at as well. But I would also observe that the $30 billion trade framework may be modest in size, but if President Xi's visit to the U.S. later this year could be confirmed, that could anchor near-term stability. And the big picture, of course, is day two, if we're going to see development on some of the tougher topics like Iran, like language on Taiwan, like AI in particular. But what is really clear is that both sides are incentivized to really kind of focus on and protect near-term stability because of the very interdependent supply chain. So that actually supports our current risk-on view.
So that geopolitical fragmentation being one of the themes that you invest around, or you're talking about investing around, Wei Li, does that express itself as higher inflation? Are we looking at a world of higher inflation as a result of that geopolitical fragmentation?
Higher inflation and higher rates likely going forward. And I would say geopolitical fragmentation is one driver of that. But if you look at AI transformation, before it can be disinflationary, it will likely be inflationary because of the greater demand than what supply can meet. And if you look at some of the other forces as well, the energy transition requiring more build out. So geopolitical fragmentation is just one driver amid a host of drivers representing inflationary pressure. This week we saw CPI, PPI surprising to the upside. And so far this year, we have seen markets pricing out Fed cuts to now even looking at potentially Fed hikes. We think that it's fair that markets are basically looking at Fed staying put for an extended period of time, and that represents, I would say, a very tough trade-off facing the Fed.
Okay, so that takes us to the Fed and Kevin Walsh getting that nod, getting that approval. Do you think that the market is having to rethink what we thought we knew about the Fed with Kevin Walsh taking over? Is this a new Fed with a new reaction function, or do we conclude that actually this is okay? Yes, he'll be the chair, but he'll just be one voice, and it's a group activity to set policy.
Well, he is just one vote. So that is point number one. Point number two is a lot of the dynamics that represents the tougher trade-offs facing the Fed predates him and also predates maybe even the Trump administration, because mega forces, structural supply constraints that has been really many quarters and years in the making, right? So right now we have an environment characterized by aging population and persistent wage pressure, and at the same time, if you think about the nature of supply disruption coming from the Middle East, that could weigh on growth on the one hand and pushing up inflation on the other hand. And I think that just makes it so much harder to make policy decision in this environment, which is why we see potentially more disagreements on the committee as well.
Yeah, we've certainly seen some of that, haven't we? More than we've previously been used to in the US context, so a bit more dissent. So what about the role of AI and what that does to the inflation narrative? Because Kevin Walsh has talked about that. Now, you say that AI means inflation goes up before it comes down, but this is such a new area of study, I suppose, for those trying to work out what it does to inflation. So how much conviction can we have around the effect that AI, the macro effect that AI will have on the US economy?
Well, I would say that if you look at the level of underemployment in the U.S. and also unemployment rate in the U.S., it has loosened a little bit, but still representing a very tight labor market, especially if you look at the participation rate in U.S. population as well. So all of that still points to aging population and immigration curves, making the labor market really quite tight. So for AI to actually have a disinflationary effect on the economy, it first needs to show up in the labor market. And we haven't seen that in a very meaningful way. And on the other hand, if you look at wage for some of the more AI build-out sensitive sectors, that is even more persistent than the broader wage dynamics would suggest. So the demand supply picture in the near term pushes inflation higher, especially against the backdrop of energy constraint too. But over time, if the productivity windfall from AI integration does come through, it could bring that lower. But if past transformation is anything to go by, that takes time.
Takes time. Whaley, thank you very much. Whaley joining us there from BlackRock. Now to other top stories that are trending on the Bloomberg terminal this morning. A UK naval group says a commercial vessel was taken by unauthorized personnel at the entrance to the Strait of Hormuz and is now headed for Iranian waters. This comes days after Iran laid out an updated process for ships seeking to cross the vital waterway. Watches of Switzerland revenues surged to a record last year. Profits will also come in higher than expected due to strong sales in the United States. The update marks a contrast to February, when it said margins would be slightly lower as brands raised prices due to higher raw material costs and President Trump's tariffs. And Cisco soars in pre-market after third quarter results beat expectations and boosted its forecast. It also announced job cuts as it focuses more on AI. Coming up, a major IPO in the works. Cerberus set to join chip-making giants on the NASDAQ Global Select Market, potentially challenging NVIDIA. That's next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Anna Edwards here in London. Let's talk about technology. AI chipmaker Cerebras raising more than $5 billion in what could be this year's biggest IPO. At least it is so far. Perhaps not likely to stay that way. Bloomberg's Neil Campling joins us now with more details. Tell us about Cerebras and what you took away from the scale and size and the oversubscription level of this particular IPO then, Neil. Oh, it looks as if we don't have Neil. We did have Neil, and no doubt we'll be trying to re-establish that connection. But that Cerebras story is certainly something to watch. Appetite for technology and anything that competes with NVIDIA in such a hot space, of course, is no doubt going to be watched very carefully by markets. And we're working our way towards a number of other big IPOs within the tech space, so we'll see if those do, in fact, come to pass. Let's check broader markets for you. We've got US equity market futures to the upside. E-minis up by 0.2%. NASDAQ futures up by 0.1%. And actually, we've seen some of these gains pairing. As we've been going through this program, I wonder if that's a lack of actual detail on any agreement that's to be done between the US and China over chips. I wonder if there was a lot more expectation that perhaps something would come through there, and we haven't seen that. We'll take a short break here on Bloomberg Brief. We'll be back shortly.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
This week, leaders from the world's two largest economies will come together in Beijing, with geopolitical stability and the future of global trade on the line. Trust Bloomberg to go beyond the headlines with on-the-ground reporting, expert analysis, and real-time market reaction. The Trump-Xi Summit. Special coverage all week right here on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Anna Edwards in London. Now a look at what is ahead today. We have some data hitting the docket. So U.S. retail sales and initial jobless claims out at 8:30 a.m. in New York. Lots of Fed speak today, including Stephen Myron's last interview as Fed governor on Bloomberg Surveillance. That's from 8 a.m. New York time. Plus, President Trump and Chinese President Xi Jinping continue their summit in China. They are gradually working their way towards a banquet, we understand. Let's check on the markets once again. Those U.S. futures fading just a little, but they are still positive, up by 0.2% on E-minis and NASDAQ futures. The Bloomberg US dollar is pretty flat, watching things develop over in China, but nothing to move on, nothing to see here yet, perhaps. And the US 10-year yield, after a busy couple of weeks when it comes to inflation data out of the States, 4.45 is where we find ourselves on the 10-year yield. The 30-year looking comfortable above 5%. Let's turn to tech. AI chipmaker Cerebras, as we were just discussing, or trying to discuss with Neil, raising more than $5 billion in what could be this year's biggest IPO. Not sure it'll stay that way. Henry Wren joins us now with more. And Henry, of course, we're working our way towards some potentially big IPOs, the likes of SpaceX, Anthropic, who knows which will, what we'll get and when. But talk to us about Cerebras. This is a business that wants to go up against NVIDIA, or goes up against NVIDIA, in a specific part of the chip space.
Yes, we know that it's a company that specializes in AI inference chips. It's the one that makes chips that has compute, has memory, bonding with it as well. So as you said, it's competing with NVIDIA on the inference side of the business. And we see there are a lot of interest in these names as it goes into public market. It's priced at $185, and the price, the IPO price, has been raised by about 50% from the initial price. We will see how it trades, but for now, the interest is very high.
Yeah, I was noting that US futures seem to be fading their enthusiasm just a little bit the closer we get to the start of the US day. I wonder if this is to do with the flow of news, or lack of it, that we've had coming out of the China summit. I know Reuters have been reporting that the US administration is okay with H200 chips going to a handful of companies, but we'd heard some of that before, hadn't we? So what's new on the chip front as it relates to this big summit?
Yes, the latest report coming out says that we're now knowing that some of the identities of the companies that are trying to procure those NVIDIA chips. And we know that about 10 companies are in this process. That includes some cloud providers, including the likes of Tencent, Alibaba, ByteDance, but also some distributors like Lenovo. But the barrier is still on the China side, because the Chinese government still have cybersecurity concerns. they still have concerns about whether this move will weaken their positioning in terms of advancing their local AI chip ambitions.
And how's the rollout of infrastructure spend going for the big hyperscalers? Because we've had Alphabet having to go around the world to raise enough money in the bond markets to fund its build-out. Does that tell us something, Henry?
Yes, obviously, the build-out is still going on, as we talked about Cerebras as well, right? So the demand for those AI chips is still very high. The hyperscalers are still going on in terms of spending, so that's it.
Okay, Henry, thank you very much. Bloomberg's Henry Wren. We have movement over in Beijing. Let's head back there now. They're setting up for the state banquet. Anne-Marie Hordern is on the ground. Anne-Marie, what can you tell us?
Well, and a lot of pomp and circumstance today. First, at the Great Hall of the People, Xi Jinping had a warm welcome for President Trump. And then this evening, they're going to be dining together. So this is a state banquet. And I believe the president has arrived at the state banquet. Alongside him, he is, of course, being flanked by some of the biggest American companies and their CEOs. We know that he traveled over here with the likes of Elon Musk and Jensen Huang, who are there as well at the state banquet. You can see on the video there, we're also seeing the Secretary of Defense, Pete Hegseth. Very rare and almost unprecedented that we would see a defense secretary have this meeting and travel over the president of the United States to Beijing. Some other individuals that are slated to attend the banquet this evening when it comes to Wall Street titans like the Citigroup CEO Jane Fraser. She was also on the steps this morning when Xi Jinping greeted President Trump, and also David Solomon of Goldman Sachs. Lloyd Blankfein, then the executive of Goldman Sachs of 2017, was also part of this trip when Trump made that visit nearly 9 years ago.
Okay, and some of these execs clearly a little starstruck, it seems. Elon Musk saying it was awesome to meet Xi. Anne-Marie, thank you very much. Anne-Marie Hordern on the road with President Trump. More coverage of that continues on surveillance, which is ahead. This is Bloomberg.
We've reached the quarterfinals in Rome. It's been a tough year for Iga Swiatek, but Wednesday, the former world #1, reached her first semi-final of the season with a commanding win over Jessica Pegula. The Polish star wrapping things up 6-2 in the second set to secure her first top 10 win in 2026. And don't forget, you can watch all the action live daily and head on over to tennischannel.com to download the app.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Stocks are going to continue to go higher.
Do you want to be in this market? Do you want to be riding this? Yes.
This is still a market with a lot of cash on the sideline.
We're doing our best to enjoy this sort of nirvana that markets are benefiting.
There is a lot of optimism built into the market, which does create vulnerability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday, looking for a boost from Beijing. The US reportedly clearing some NVIDIA chip sales to 10 firms in China as AI chip maker Cerebras is gearing up for the biggest IPO of the year. Cisco is knocking it out of the park, delivering a better-than-expected forecast. Cisco surging in the pre-market.
I feel like right now AI is the equivalent of blockchain. A number of years ago when Overstock came out and said that they were going to be really now a blockchain company, not a furniture company, and their stocks just absolutely surged. Cisco came out, and yes, they did deliver solid earnings, but they said that they booked $9 billion of orders versus the previous $5 billion expected for the full year, coming from AI hyperscalers. This idea that they are providing the systems, the networks, for some of the hyperscalers. That alone is giving a massive boost to a name that is reminiscent and it has the history in the dot-com.
You want to talk about the vibes? All the vibes in 99, Cisco crushing it.
Correct.
Big IPO coming up a little bit later. Had a marketed range, blasted through that marketed range and looking for a big move later this morning.
Yes, Cerebras initially was being marketed around $140 to $150 a share, came out at $185 a share. The market capitalization is something closer to $40 to $49 billion, depending on how you account for this. I keep going back to the idea of a unicorn being $1 billion. If something comes in as $1 billion, that's a discount. It's a joke. It's essentially a penny stock. This just gives you a sense of how much our benchmark has changed.
Let's talk about NVIDIA, a multi-trillion-dollar company in the pre-market, up by a few percentage points. This from Reuters this morning, reporting that the US has cleared NVIDIA to sell the H200 chips to 10 Chinese firms. What we don't know is whether China will let them in. So this is only one half of the story. And given they're in China right now, let's see if we get the other 50% of the story a little bit later this week.
There is this issue of what has actually changed, because supposedly these chips were for sale, then China wasn't buying, then maybe they weren't for sale and were blocked. The idea that every time the story comes back, NVIDIA notches another 2-3% gain gives you a sense of people's sentiment right now. Nonetheless, there is an expectation that something will come out of this, that tech will come to the forefront, that potentially there is an easing in tensions around the oil picture, at least rhetorically. The big question mark is still Taiwan, and that actually really is people's concern.
NVIDIA up in a pre-market by 2%. Anne-Marie on the ground in Beijing. We'll catch up with Anne-Marie a little bit later. For President Xi, this stood out for me. The doors to China for the outside world will only open wider. That felt to me like the issue of 10 years ago, 15 years ago. The issue of today is whether others will open the door to China. That's how things have changed in the last few years, the pushback from everybody else.
Because they've been cannibalizing the industries from Europe, from the United States, and people are saying that your policy of oversupply just isn't going to work for us based on lowering prices and putting people out of jobs domestically. What's interesting this time around is that the Chinese renminbi is on the longest winning streak versus the dollar going back to 2017.
Strength.
We've seen a real strengthening. When you take a look at the strongest versus the dollar since 2023, this isn't just lip service. This seems to be on a financial level as well. That is sending a signal that they want to be a world leader, that they want to be more of a reserve currency. That's sending bigger signals than some of the rhetoric ones.
Should we talk about the bond market?
I would love to.
And a signal from fixed income, 2s, 10s, 30s. Let's look at the long end of the curve, 30s. this morning, 5%. And something interesting happened at a 30-year auction yesterday that hasn't happened for almost 20 years. If you bought into that auction, you got a 5 handle, a 5% coupon.
Which is the first time you've seen that level being sold on a 30-year bond going back to 2007. This highlights the fact that people are looking at a new regime. It also highlights the fact that it isn't enough to really bring people in a rip-roaring way, because it wasn't a rip-roaring auction. It was tepid. Sort of the envy. I'm sure the U.S. government has a lot of envy for the likes of Alphabet that seems to be selling debt anywhere and anyhow with very low rates. Torsten Slok put out a note this morning. I thought it was interesting. Higher for longer continues. He said the parallels with the energy shocks of the 1970s are worrying. The last mile of fighting inflation is a marathon rather than a sprint, saying that given this and ongoing fiscal challenges, it seems like yields are going to be higher for longer.
Best of luck, Kevin Walsh. More on the incoming Fed chair a little bit later in the programme. Yields this morning on 30s, just about unchanged at 5.03%. Coming up this hour, we'll catch up with Julian Emanuel of Evercore as big tech looks to extend a record rally. Pierre Ferragu of New Street Research as top US CEOs chase deals in China. And Eric Nelson of Wells Fargo as markets brace for a Walsh-led Fed. We begin this hour with stocks adding to all-time highs. Julian Emanuel of Evercore writing, it is very clear that the investing public's love affair with tech stocks is in full bloom, driven by exceptional earnings and reasonable valuations. Julian joins us now for more. Julian, good morning.
Good morning.
Let's talk about the 99 vibes. The 99 vibes are one thing, but when you write that last slide there about valuations and earnings, how different is this moment to then?
Well, that's the biggest contrast, okay? Because back then, everything was a much more speculative in terms of the valuations. And look, if we go back to the benchmark of the last 3 years, stocks are higher valuation-wise. But the thing about the last number of months, particularly in the NASDAQ, is the earnings strength has been so intense that valuations have actually started catching up to earnings. And so for us, what's really happened, and also in consideration of the fact at the end of last year, there was a decided dislike of technology, which really pivoted at the March 30th low. But in a lot of ways, tech has become value.
There was the itch to rotate, and now the big complaint is the breadth is bad. The breadth is terrible. Can you see a picture ahead of you where this resolves bullishly?
Well, look, so, and the contra to that was, if you go back to the beginning of the year, there was a belief that the halo trade would be enough to take the indices higher without tech participating. That was debunked. The math tells you that at 55%, tech and AI exposure in the index, you need that. And so there certainly is a case for medium-term bullishness. But again, like everything else, this too shall pass. We just don't think you're anywhere near that time yet.
To build on what John is talking about, do you need to start seeing the return on investment in a material way in the non-tech names in order to keep this going? You have to see some sort of revenue prospect from this in order for people to keep buying at these levels, no?
You do, but again, going back to, even if you separate the issue of AI from the rest of corporate America, margin management continues to be incredibly robust. Sales volume is incredibly robust. And it's not just inflation. It's real, true demand. And yes, you can sort of tie it all back to AI, but we've had other periods in time where technology has been a driver of the economy. And again, it doesn't always end badly.
Margin management, nice way of saying they're still raking into cash. They're still able to pass along those price increases to consumers, which is a huge problem. We see what PPI did yesterday and what CPI did the day before. At what point do you have to start getting really concerned about inflation remaining in kind of 1970s-like patterns, which is what Torsten Slok was pointing to this morning?
Right. Well, I think we have to acknowledge something here, okay, is that we do still have an inflation problem. And from our point of view, whether it's the price of hamburger or $4.50 or $5 a gallon, or the fact is that when you think about the degree of the price spike in energy that we've had and the time of this spike, we find that there's a danger zone to where, if we're talking about triple-digit oil on the 4th of July, instead of looking at the fireworks display, we are likely going to run into headwinds.
I was surprised yesterday PPI came in much hotter than expected, following a much hotter than expected, or rather marginally hotter than expected CPI reading earlier this week, and yet yields dropped at the front end of the curve by a single basis point, not a big deal. The resistance you are seeing at certain levels in the bond market, I think, is somewhat notable, given the data we saw just yesterday.
People are looking for silver linings, and they found one in that the components going into core PCE actually brought that level down because of some of the portfolio management costs and a couple other metrics that do feed into that key inflation reading. Nonetheless, we do have an inflation problem. Even Susan Collins is talking about that. Fool me once, shame on you. Fool me twice, shame on me. That is what they're saying. So why are we not pricing in a greater chance of a hike?
Because this Fed doesn't want to hike. I think that's it right now, that ultimately this Fed really, really doesn't want to hike interest rates.
Not happening. Fed is not hiking this
So that's
year.
the 2-year dealt with, if you really believe that. What about further out along the curve, where maybe there's a bit more flexibility to price in some action?
Well, but again, that supports the idea of a yield curve steepening, and you know, we have to face it, and it's certainly has not been a bad thing these past 6 years, except for, you know, short bursts of time. But we have started a new multi-year regime where yields on the long end are going higher, and they're going to continue.
Does that present a challenge to equities or not?
In the long term, it by definition it has to. But again, the earnings strength has been so profound that in our mind, you know, we think that you're going to be okay until the 10-year yield starts nudging towards 5.
Could you ever see Magnificent Seven or just the tech sector in general with spreads trading inside of government spreads as they borrow so much money to fuel some of their spending plans?
Well, I think back to a number of years ago when I believe it was Austria issued the 100-year bond at 1%. You can't disbelieve that anything could happen in this environment.
The reason why I ask this is because we say that eventually it will be a constraint. If you get to maybe 5.5% on the 10-year yield. At the same time, we're at pretty elevated levels, and you still see different companies issuing record amounts of debt and going around the world to do so. At what point does this stymie CapEx plans in a more material way?
Well, what's fascinating about that, Lisa, is, again, remember, think of it as some of these hyperscalers issuing in Europe to insatiable demand because you've got the exposure to the hyperscalers that you want, and you have it in your home currency. And frankly, part of the narrative of the last year plus has been that, in our view, you made a long-term top in the dollar, and if you don't have to worry about FX exposure, that's a bigger plus.
It's the crowding out that starts to get interesting. Just going through the numbers, there's a fantastic write-up on the Bloomberg terminal about the sheer scale of the numbers that are being issued from some of these hyperscalers. On Alphabet specifically, close to $60 billion. And the team here at Bloomberg writes that's quadruple the amount of bonds Alphabet had sold in its first 26 years of business. This is a very, very different phase for these companies.
Yeah, and they're going around the world because they're trying to diversify away from the United States before the United States starts pushing back. Nobody wants a sale to go badly, so they're going around the world, picking the coins out of the couch cushions, as some people have said, and they're trying to figure out how to create a robust market in some of these places that really want hyperscale.
Julia, not all the big spenders are doing well in this equity market. Alphabet feels like a bit of an exception right now. Microsoft, Meta, Oracle have traded softer throughout the whole of this year to date, down on the year. They're the big spenders supporting the revenues and profits of the big chip makers who are absolutely surging. How are we going to resolve that tension?
Well, so there's been this residual fear is if your business model is associated with software in some way, shape, or form on the one hand. And frankly, actually, we're happier that that fear hasn't been completely cast away, because it's the casting away of fear in its entirety that will end up being the market's biggest problem at some point, when FOMO kicks in its entirety. And then, of course, there is the market picking and choosing amongst the hyperscalers that they're most preoccupied about the free cash flow profile. And look, it has edged down materially in the last several months, but it doesn't stop our semis analysts from predicting $1 trillion in AI-related CapEx next year.
Looking for more of the same.
Yeah.
Even more. Julian, it's good to see it. You've got to stick with us. Julian Emanuel there of Evercore. Equity futures on the S&P near session highs, up by 0.25% on the S&P 500, with an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, good morning. President Trump and Xi Jinping discussing a series of issues in Beijing on Thursday. Speaking for over 2 hours, Trump and Xi addressed expanding U.S. access to China markets and China purchasing more U.S. energy and agriculture. Xi did warn Trump of a potential conflict if the Taiwan issue is mismanaged. A UK naval group says a commercial vessel off the coast of the UAE was taken by unauthorized personnel and is heading for Iranian waters. The ship was taken while it was anchored. Its country of origin was not immediately clear. The U.S. Senate confirming Kevin Warsh as chair of the Federal Reserve in a 54-45 vote, the narrowest margin on record. Warsh says he will keep policy free from political influence when he takes over from Jerome Powell, whose term ends on Friday. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Thanks for the update. More from Vonnie later this hour. Up next on the programme, diplomacy on display.
It's an honor to be your friend, and the relationship between China and the USA is going to be better than ever before.
We're not trying to constrain China, but their rise cannot come at our expense. Their rise cannot come at our fall.
Up next, we'll catch up with Anne-Marie, live from Beijing, live from New York City this morning. Good morning.
At the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend. This is Bloomberg Television.
I count 6 XBX price target upgrades since the war started. Morgan Stanley, Mike Wilson, the latest 8K year-end, 12 months. The 12-month price target over at Morgan Stanley now 8,300 on strong earnings. Now, we can compare this moment to 99. I get it, all the vibes, but the earnings have been absolutely phenomenal, and that's what the price target hikes are based on.
You know, one thing that Julian Emanuel referenced is something a lot of people are referencing, which is that we saw a valuation reset when big tech was falling behind some of the other index. Remember the whole broadening out, and can we get another high without tech participating? That came along with growth in earnings. So all of a sudden people are saying we need to catch up to that, the falling behind that we saw at the end of last year.
All-time highs coming into Thursday, adding to them this Thursday morning, up 0.25% on the S&P 500, on the NASDAQ, up by 0.25. Under surveillance this morning, diplomacy on display.
It's an honor to be your friend, and the relationship between China and the USA is going to be better than ever before. Whenever we had a problem, we worked that out very quickly. We're going to have a fantastic future together.
We're not trying to constrain China, but their rise cannot come at our expense. Their rise cannot come at our fall. They have a plan. When that plan is in conflict with the national interest of the United States, we need to do what's right for the United States.
So here's the latest this morning. President Donald Trump in China touting his relationship with Xi Jinping. The two leaders wrapping up a bilateral meeting focused on trade and the war in Iran. Anne-Marie's in Beijing for more. Hey, Anne-Marie.
Hey, Jonathan, the two leaders are back again at the Great Hall of the People, where I was with them earlier this morning when President Xi really had this warm welcome to President Trump, his cabinet, as well as a host of the executives. About $20 trillion of market capitalization was standing on the Great Hall of the People's steps, welcoming both of these leaders. And they are back there right now for a banquet, surrounded by American, Chinese executives. Xi Jinping giving a toast, welcoming President Trump to China. And it comes after we've had slightly different readouts when it comes to the White House and when it comes to China. The White House didn't mention Taiwan once. Clearly, they want to focus on some of the wins here when it comes to agricultural purchases, discussing maybe more energy purchases for China to buy U.S. goods. And then when it comes to the Chinese readout, while the two leaders were sitting in a bilateral meeting for more than 2.5 hours about, China state TV and state media was already pushing a readout that talked about how these two nations, Xi wanted to say to the United States, these two nations need to deal carefully with the question of Taiwan, or potentially it could become a dangerous conflict for their bilateral relationship.
Anne-Marie, at risk of making too much of this moment, in your experience, how unusual is something like that?
This feels incredibly unusual, even just this state banquet, especially given the fact that we spent an entire year having this tit-for-tat trade war between Washington and Beijing. This is a president that, remember, had a rise in the United States because he was a China hawk and called out China for some of their unfair trade practices, their subsidies of Chinese companies, how they make it difficult for market access for American companies into the United States, which is interesting why you also really caught that line from Xi Jinping talking about how he wants to open up China. Well, that is a tale as old as time. We've heard from Chinese officials on the global stage, especially speaking to corporate America. I think for executives sitting in that room, you have Elon Musk, Jensen Huang, Dina Powell of Meta is there. You have David Solomon of Goldman Sachs, Jane Fraser of Citi. I think they would want to see more details and proof in the pudding when it comes to some of these words.
Anne-Marie, can we just finish on NVIDIA? I'm sure you saw the reporting that came from Reuters overnight, indicating the US had cleared NVIDIA to sell H200 chips to 10 Chinese firms. What isn't clear to us at the moment is whether China will actually allow those firms to buy those chips. What do you know?
Well, Reuters is reporting that the U.S. has signaled they're going to allow the sale of those H200s. Remember, the H200s were banned, and then there was a reversal in January, and they were allowed to be sold into China, but the United States would get a cutback, really a kickback of 25%. Okay, so Alibaba, Tencent, according to this report, can buy these chips. That was never the problem. The issue was China was not allowing these firms to purchase the H200s. That is still a key question. They are going to have another day of bilateral talks. We know that Jensen Huang is here. Potentially, we're going to get some clarity.
Anne-Marie, looking forward to catching up with you later in the programme. AMH over in Beijing, as we're having this conversation, some headlines just crossing from Xi Jinping directly.
Yeah, saying that China-U.S. ties have been stable with via talks with Trump, and then going on to say China-U.S. relations can only be improved, not worsened, giving a sense of where we're coming from. I will just say, though, this is probably the harshest rhetoric we've heard from China regarding Taiwan in a very long time, if ever, and talking about how this is the most important issue to China and that if red lines are crossed, it could become a very dangerous situation, is something that definitely was notably omitted from the U.S. readout.
I smiled when I read that headline as well, that they can only get better from here.
I imagine that's...
The bar has been pretty low. Let's put it that way. Julian Emanuel of Evercore with us around the table. Julian, let's continue this conversation with regards to China. Is this a market issue anymore? Does it matter whether NVIDIA gets access or not?
It certainly is a market issue, okay? It will continue to be a market issue, but it's sort of, you know, the drama plays out over longer time frames and in different nuances. But again, the subtext, it's not just chips, it's oil, okay? And we haven't heard any discussion of what may or may not happen around Iran. And obviously the ideas are different. there's more of an immediacy on the part of the U.S. to unblock the strait, and China clearly has patience, given that its stockpile of oil appears to be larger, but they are both incentivized, in the medium term at least, to get this unblocked, and you can't disaggregate chips and technology from oil. Is part of the entire dance.
You noted tech for oil seems to be your takeaway from these meetings. Do you think that there's going to be some sort of trade from the U.S. giving certain access to technology in return for either China releasing some of its oil reserves or potentially intervening in Iran?
Well, we may not actually ever know that, but to think that something like that isn't being discussed is likely naive. And think about the other aspect. Again, we have two readouts of the first session that are radically different. So what really happens and what really is going to happen is an open question. And in our mind, the most important thing to look out for is how does the oil price respond next week? Because if the oil price doesn't start heading lower, that's when there are going to be, thoughts around whether the tension has in fact eased because of these 2 days.
The Chinese leader just wrapping up these comments at this banquet in Beijing. We'll carry on tracking the headlines coming out of China. Just want to finish on this market with you. You've seen a lot in your career. I'm not aging you, just highlighting your experience. All-time highs on the S&P, record highs on the NASDAQ 100. Lisa and I were talking about regret minimization earlier this week. You remember back in .com that if you missed it, your career was under pressure. Being early wasn't good. In this moment right now, do you sense the same forces shaping some of the approaches to this market at the moment?
There's no question about it, but you have to understand and think about this. This has been a consistent theme since 1982, okay, when the secular bull market of several generations began, is that investors by nature are optimists. You can't invest without being optimists. So if that's the psychology, which it is, then, you are going to be penalized for missing the upside disproportionately to the regret of escaping the downside.
Julian, it's good to see you, sir. Thank you. Julian Emmanuel there of Evercore. Coming up on the program, Pierre Ferragu of New Street Research, as US CEOs look to expand business in Beijing. In Beijing, the President of the United States speaking right now at a banquet in Beijing. We'll take those comments and bring you some headlines throughout this morning.
problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of your net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
The president speaking in Beijing, China, at a banquet alongside the Chinese leader Xi Jinping. Let's listen in.
华盛顿总统，目前这个石碑已经镶嵌在华盛顿纪念碑里面。石碑上刻有当时的一名中国官员形容是一名伟大的将军和政治家，他们把他称为“人中豪杰”。
And across the centuries, this mutual esteem grew into a relationship that reflected the tremendous talent and potential of our two people. Chinese workers helped lay the railroad tracks that connected our Atlantic coast to the Pacific. American travelers to China helped spread literacy and modern medicine. And at the request of China's ambassador, it was President Theodore Roosevelt who provided the funds to establish President Xi's alma mater, Tsinghua University.
在过去几百年当中，这种相互的尊敬已经成为了一段全新的关系。这段关系可以说反映出我们两国人民之间巨大的潜力以及我们的努力和智慧。中国工人当初帮助美国建设了我们的铁路路轨，连通了美国的大西岸和太平洋沿海地区。美国当时早期出访中国的美国人也帮助中国提升了识字率，并且引入了现代医学，并且应时任中国驻华大使的请求，罗斯福总统也专门提供了资金，成立了习主席的母校清华大学。
As allies in World War II, President Franklin Roosevelt's mentions of the brave people of China, that's what they were, drew loud cheers in his speeches in the United States, and everybody loved what he had to say. Just as many Chinese now love basketball and blue jeans, Chinese restaurants in America today outnumber the 5 largest fast food chains in the United States, all combined. That's a pretty big statement.
The President of the United States with some comments in Beijing, China, at a banquet alongside the Chinese leader Xi Jinping. We'll get some headlines for you, and we'll share them as they come through on the Bloomberg terminal. Equity futures right now, the S&P is the price action. All-time highs, adding some weight to that rally, up by 0.25% on the S&P, on the Nasdaq up by 0.2. Plenty of fireworks to talk about in the bond market. The 2-year pinned around 4%. The 30-year gets more and more interesting, north of 5%. A fixed rate of 5% at a 30-year auction yesterday for the first time in almost 20 years. At the same time, we had hot CPI, hot PPI, and a new Fed chair.
This is a market that does not believe that this Federal Reserve will raise rates anytime soon. Even though it's starting to be priced in on the margins, the indication here in the steepening of the yield curve is that inflation will be a bit stickier for longer. You can see that in the break-even rates as well. The idea that 30-year bonds were sold at a 5-year handle, 5% handle for the first time going back to 2007 gives you a sense of how much things have shifted. It also gives you a sense that even that wasn't enough to bring some sort of blockbuster demand, and that, I think, is pretty telling about people's concern longer term.
Middling demand, it's fair to say. Not that impressive, even with a coupon of yield like that. Equity futures then, just about positive. Let's get you some single names, some morning movers. There's some big ones out there. Yahara has more. Hey, Yahara.
Exactly, John, and we start with that big one. We are seeing shares of Cisco soaring more than 16%, set for its biggest post-earnings jump since 2002. That's because the largest maker of networking equipment posted a beat and a raise and announced it is cutting thousands of jobs to focus on AI. Plus, it raised its forecast when it comes to AI orders from hyperscalers from $5 billion to $9 billion in the next fiscal year. Turning to NVIDIA, another strong day for that company, up 1.7% as we get a flurry of headlines out of Beijing. First, you have President Xi telling U.S. business leaders, including Jensen Huang, that China will open its doors wider to foreign companies, though those companies have heard that before and the barriers still stand. And then you have that Reuters report saying that the U.S. has approved several Chinese tech giants to buy the NVIDIA H200 AI chip, though it's unclear, as Anne-Marie was saying earlier, whether China has signed off on that. And we end on shares of StubHub. They are soaring more than 15% in the pre-market after it said after it reiterated its full-year outlook, pointing to a packed live event schedule and strong demand for everything from concerts to sporting events. And StubHub sounding especially bullish on the World Cup, saying that it expects to capture an outside share of those ticket sales. John.
Yahara, thank you. More from Yahara in the next hour. On our radar this morning, the President of the United States and Xi Jinping striking an optimistic tone at their summit in Beijing. Trump saying the US-China relationship will be better than ever before. Xi saying the countries should be partners and not rivals. The President speaking just moments ago, inviting Xi to the White House on September 24th. Elsewhere, the Senate confirming Kevin Warsh as the next chair of the Federal Reserve by the slimmest of margins that we have seen in years, a 54-45 vote. Warsh taking the helm after Jay Powell's term expires tomorrow. And finally, pressure mounting for UK Prime Minister Keir Starmer to resign. Rivals within the Labour Party preparing bids to challenge his leadership. The party seeing disastrous results in local elections and Starmer facing historically low approval ratings.
Yeah, unclear exactly who could actually get ahead, though, because there have already been a number of people who've taken out of the running. Wes Streeting, who you were talking about yesterday, is planning to quit the cabinet. This is widely expected. Still, there are questions about his ability to really be in the running. And then his former number two, I love how all the people around him seem to be just completely undermining him and ready to run against him. Is this sort of the, is this the norm in Britain?
It's becoming the norm, isn't it?
I mean, it's sort of who's going to stab you in the back first.
I hear people describe this as stability with the current government or chaos with something new. I would offer a different kind of way of viewing things. Slow decay with the current government or quick decay with something new. There needs to be a complete change in policy in the UK.
Well, I think that bond markets would agree with you. Some people might say that's incredibly harsh. Other people are saying, well, just take a look at the 10-year gilt yield. And you can see this concern that the bond vigilantes have that whoever comes into power is not going to have the answer to the fiscal situation. And even if Keir Starmer is going to preserve his role, yes, that might give marginal stability, but that still leaves yields very much the levels during the Liz Truss moment.
I heard one member of the Labour Party in the last 24 hours talk about the debt and how they shouldn't be governed by the bond market. If you don't want to be governed by the bond market, don't borrow so much money. That is true of governments, it's true of people too. If you don't want to be governed by the bank, don't take out a massive mortgage. Why is it any different for governments? Why don't they see it like that? It's not about being governed by the bond market like it's this boogeyman we've just succumbed to. It's the fact that over successive governments you've borrowed so much money, decade after decade, that you are now basically outsourcing policy to fixed income markets.
You could argue that, and markets do not give out runner-up prizes. They don't give a prize to everybody. They pick winners and losers, and ultimately that is going to be a problem that every developed market is going to have to deal with, and increasingly you're seeing that being priced into the yields.
That's the UK. It's messy. In the equity market right now, record highs stateside. Top US tech CEOs in Beijing pushing for the world's largest economies to strike new deals.
They're here today to pay respects to you and to China, and they look forward to trade and doing business, and it's going to be totally reciprocal on our behalf. So I really look very much forward to our discussions.
Reuters reporting this morning the US has approved 10 Chinese companies to buy NVIDIA's second most powerful chip. To discuss, Pierre Ferragut of New Street Research joins us now for more. Pierre, good to see you in person. Good morning.
Hi, John.
Let's talk about NVIDIA. Do they need access to this market or not?
Well, very near term, they probably don't need it because they just can't manufacture enough chips to meet the demand they're facing at the moment. Now, the concern of Jensen is far more strategic. In the long run, it's very dangerous for NVIDIA to let alternative ecosystems flourish and do well. So the more NVIDIA can actually sell chips into the Chinese market, the less it gives room in the Chinese market for an alternative ecosystem and chip maker to emerge and flourish, basically.
Have you seen anybody actually start to emerge and flourish in the Chinese market to actually compete directly with NVIDIA?
Well, for the moment, it's nothing really serious. You've probably heard about DeepSeek, who've made the headline a bit more than a year ago, training a model on NVIDIA chips and then complaining about the difficulty of keeping innovating without the NVIDIA chips. So for Huawei and others, manufacturing chips in China is very challenging. The Chinese don't have access to the most leading-edge technology, and their ecosystem is late, like the decades of investment in CUDA, in all the software that goes into an NVIDIA chip, of course, is something very difficult to catch up with. And the idea from here is, do you want to slow China, letting them access the NVIDIA chip, so it's slowing China in developing their own ecosystem, but it's of course accelerating China's ability to do well in AI? Or do you want to do the opposite, which is to cut them off from the best chips available around, the NVIDIA chips? And in that case, it slows them down in AI, but it's favoring the emergence of an alternative ecosystem.
The divergence between national security officials in Washington, D.C., who are freaking out at the idea of H200 chips being sold into China, and the markets that are getting very excited about that, because that will just broaden the investment base for this, gives a sense of the division, frankly, on a broader level, between people who say this is an existential threat, an existential moment for countries to invest in big tech, versus those who say it might be overhyped. Hold the brakes. There's a lot of risk developing here. Maybe we should hold it back. Do you think that the innovation that you've seen over the past couple of years justifies this feeling of existential risk and endless investment being a good thing?
Yes, so definitely. I don't know how much you're using AI, but like the pace of innovation is mind-blowing. The potential use cases, you're still looking at what you thought AI was 6 months ago, and you look at what AI is doing today, and then you hear about these new models that are so good that they can't even be released. There is something that is existential about AI, and there is something also that is extremely lucrative, and that's the reason why nobody needs to ask all these players to invest like trillions of dollars now in AI data center and running out of place to deploy them and talking already to send them to space. So that's the situation in which we are today, and that's a race. And that's probably the core of the meetings in China today.
People often compare the unveiling of ChatGPT to the unveiling of Netscape back in the mid-90s. With that in mind, where do you think we are compared to the 90s? What year is this? Can you pick a year right now?
From which perspective, John? Like
from the perspective of market performance and stock prices specifically.
Stock prices. The great difference between today and the 90s is actually valuation. Like these companies are extremely profitable. That's difference number one. And then difference number two is actually how the pace of innovation translates into growth. In the 90s, I can't remember like a Netscape or anyone else adding a couple of $1 billion of recurring revenues every week. And this is the situation in which we are today.
It's an amazing situation that we're in. It took us a while to find out the winners. And it took a while because we had to go through the bus first. Do you think that the sequencing is different this time around?
No, actually, that's very interesting. I find a lot of similarities. Like picking the winners in the AI race today is a dangerous game. I wouldn't venture too much into it. What's interesting is that I think you already have quite a lot of evidence that it's not going to be a winner-take-all game. So there's going to be multiple winners. You see it, and I think like the geopolitical and strategic aspect of it is very important. Like sovereign countries will want diversity, and even you see it in use cases where players start, specializing on specific areas of the application of artificial intelligence. But market shares are going to move back and forth very, very rapidly. It's going to be about innovation. It's going to be about cracking the new use cases, like the first to figure out software development agents is now taking over everybody else. We see that now. And it's going to be about compute. Because what's the primary driver of market share in AI today is compute. And so you understand the tension between the US and China from that perspective. If you want to be ahead of the curve in AI, you actually need to deploy the most cost-efficient data centers the fastest you can.
Do you think, though, that some of these AI names will move from being treated as growth or value stocks to utilities, where essentially they need to be incredibly regulated, they're incredibly asset-heavy, and they have to deal with different technology cycles that they have to finance every 3 to 5 years?
So if you talk about like the frontier labs, yes, for the moment, the frontier labs are actually facing so much like capital needs that you see that most of them actually are not even investing in the data centers themselves. They need the balance sheet of the hyperscalers, of the neoclouds to do the investment for them. So they are growing like their cost commitments. They will need to continue to spend gigantic amounts of money on compute, and it is a very competitive market. So where they emerge, we'll have to see. Now, keep in mind that this is going to be a very oligopolistic market. You don't see more than a handful of players really being able to invest at that scale or convince their ecosystem to invest at that scale. And that's just the beginning. Think about where you're going to deploy the next data centers. If we need to deploy 10 times more data centers than we do today in 10 years from now, this is going to be in space, right? And you see that going to go to space, you don't have that many players able to launch very large satellites in space. And so that competitive game is going to remain like very oligopolistic, and so I'm not too worried about their ability to make money from that for that reason in the long run.
Pierre, you've given us a lot to think about. Pierre Ferragut there of New Street Research. Good to see you, sir. Thanks for being here. Equity futures positive by 0.2%, with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump and Xi Jinping wrapping up comments at a state banquet in Beijing. Trump praising their, quote, extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House in September. Cerebras Systems raising more than $5.5 billion in its IPO, making it this year's biggest offering so far. The AI chipmaker pricing its shares at $185 each, giving it a market value of about $40 billion. Shares will begin trading on the NASDAQ today. Secretary of State Marco Rubio says the U.S. will push China to take a more active role in ending the Iran war. Rubio also highlighting the importance of striking a balance in foreign policy with China, calling Beijing a top political challenge. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the program, shifting leadership at the Federal Reserve.
The chair of the Federal Reserve has a lot of influence, but when it comes down to a vote, the chair is one of 12 voters. And so a new chair coming in will have to persuade his or her colleagues that this is the best course of action.
Welcome, Kevin Walsh. Eric Nelson of Wells Fargo joins us next, live from New York City. You're watching Bloomberg TV.
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Record highs in yesterday's session, record highs this morning, and it's some weight to the rally, up by 0.2% on the S&P. Likewise on the Nasdaq, some decent news out there. For the tech stock trade, Cisco absolutely crushing gear. We've got an IPO coming to market later, Cerebras, way above the marketed range. They're the 99 type vibes, but as many guests have already pointed out this morning, that's where they end. Valuations, earnings, pretty powerful stuff.
The earnings are actually outpacing the valuation gains, and that's the reason why people say, yes, Cisco might be the poster child of 2000, but it is not the poster child of 2026, at least not in a bad way, in a good way, because now they're booking revenue from hyperscalers, and this shows that they're able to recreate themselves in the guise of a modern company, and that is what people are pointing to. Not a lot of fear out there, frankly.
That's the stock market. Let's turn to fixed income, where maybe a bit of fear is brewing. Just a little bit. 5% on 30s at the front end of the curve, around 4%. Hot CPI, hot PPI. Under surveillance this morning, shifting leadership at the Federal Reserve.
The chair of the Federal Reserve has a lot of influence. The chair sets the agenda, what are the topics we're going to talk about. But when it comes down to a vote, the chair is one of 12 voters. And so a new chair coming in, whoever the chair is, whatever the environment is, will have to persuade his or her colleagues that this is the best course of action.
So here's the latest this morning. The Senate confirming Kevin Walsh as Federal Reserve Chair in the slimmest vote ever for a head of the central bank. Eric Nelson of Wells Fargo writing he will clearly face opposition from much of the committee on the idea of further rate cuts. Eric joins us now for more. Eric, good morning. Good morning. What are the prospect of delivering rate cuts later this year?
It is difficult if you look at where the sort of key forecasts for the Fed were in March. Core PCE, U3 unemployment. We're tracking above on core PCE and a little bit below on unemployment. So it's a difficult case. Now the question, of course, in markets is turning to, will the Fed hike rates, right? It's become a little more fashionable to talk about that. It's key to keep in mind, though, that for the vast majority of this Federal Reserve, just doing nothing is tightening, right? Rates are above neutral for most of this committee. So the market may be a little bit ahead of itself in pricing rate hikes.
Well, let's talk about that. So right now, 397 on twos. So you're trading just above the upper end of the policy rate at the Federal Reserve. Just above it. I wouldn't say it's the base case of a lot of people right now, that at least I speak to, that they expect rate hikes. How high is the bar to hikes?
I think it's quite high. I think if the Fed is going to hike, it's going to take them a very long time, and it's going to take a couple more things. One being inflation expectations, and that's out the curve, not just at the front end of the curve, right? Those really need to perk up. And, I think also you need to see very clear improvement in the labor market, not just relative stabilization. But again, I think, this is a Fed that if they're going to hike, they're going to be way behind the curve, and it's going to take many months, and rather than something that's going to be proactive tightening.
So then why wouldn't you just sell the long end if you're seeing all of this capital markets activity? You're saying that this is a somewhat restrictive Fed funds rate. A lot of people in the market would beg to disagree when they're getting IPOs and different mergers getting done. You see the incredible animal spirits coming back, the consumer performing better than many people expected. Where is this restrictiveness of which you speak?
That's a great question, and I think if you look at the market reaction to the last two inflation reports, let's zero in on the yield curve. The yield curve actually steepened a little bit on some of these very hot inflation prints. That's unusual. It's not supposed to happen, and that I think is a function of the front end being relatively pinned with hikes being unlikely. Let's go back to October 2023. Think about the bear steepening we had in the yield curve back then. The Fed basically said, the market's doing the work for us. We don't have to raise rates because the long end of the curve is actually increasing. We could see something similar this time around if that's what the market does.
Is this something that you think is feasible for this Fed, given the focus on the 10-year Treasury yield from one Scott Besson over at the Treasury? I mean, there's this question of, are they going to allow this kind of tightening, given that it disproportionately affects the areas of the economy that haven't gotten off the back foot, which is housing and a lot of mortgage payments?
Well, they may not have a choice, right? I mean, if they're not going to, if inflation is going to stay perky and unemployment's going to be stable and the back end of the curve moves higher, they can't do much of anything unless they're going to say, oh, we actually need to raise rates, right? So that's going to be the release valve until otherwise proven otherwise.
This from BNP Paribas yesterday. 5% not a ceiling. Went on to say, for yields to stop pushing higher, we think the Treasury will need to deliver something clear in the form of guidance that suggests coupon supply in the long end will be either explicitly or implicitly decreased. Someone will have to step in. This move in yields that we're seeing, I agree with you, it was notable, curve steepened. Yields at the front end of the curve actually dropped a single basis point. That's the market convinced of a dovish reaction function, an asymmetrically dovish reaction function at the Federal Reserve, that they're willing to ignore hot inflation. I don't think it's the market that welcomes it, hence the sell-off further out along the curve.
Yeah, is this essentially the market begging from some intervention from the Treasury? This is the speculation that they're going to issue significantly more of the debt on the front end of the yield curve. We haven't seen that yet. Is this sort of the invitation? Now is your time. Show us what you got.
This is what people are talking about. You bring down the balance sheet, because apparently this is what Kevin Walsh wants to do. It all gets issued at the front end of the curve. Rates have to be pinned to the floor, more than they otherwise would be, and the channel where this really plays out is the FX channel, and the dollar gets hammered. Now, that's just a theory. Do you subscribe to it?
Not hammered, but can it weaken a little bit? Yeah. And I think as long as inflation is rising, growth is stable, and the Fed is doing nothing, the dollar is going to stay under pressure, especially against some of the high yielders, high carry currencies. Now, at some point here, again, certainly if the Fed were to actually raise rates, that would completely change the game. But also, there still are some left tail risks or some downside risks that are out there. Some of the credit tightening that we're seeing behind the scenes in private markets. I think this is a market that's increasingly pricing in rate hikes, positioned for higher rates across the curve, especially at the front end.
Yep.
So let's not forget that there are still some of those risks on the other side of the spectrum.
Eric, it's good to see you. Thanks for dropping by. Appreciate it. Eric Nelson there of Wells Fargo. Up next, we'll catch up with Paul Quincy of JP Morgan Asset Management, the former senior White House trade advisor Kellyanne Shaw, Erica Najarian of UBS, and Mona Mahajan of Edward Jones. The second hour of Bloomberg Surveillance just around the corner.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Tariffs, I think, are probably the first time in my career I've had to deal with a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
The economy is really strong.
What we're seeing is a narrow foundation to growth.
We're in the early innings of what could be a really problematic path for inflation.
That longevity of the inflation myths probably starts to affect the psychology of consumers.
The brunt of the pain has not yet been felt.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action of scores look like this. All-time highs on the S&P, and it's a weight to the rally, up by 0.25% on the S&P and on the NASDAQ. The tech trade bouncing back, in this bond market isn't stopping it. 2s, 10s, 30s. 2s around 4%, 30s around 5%. The first fixed rate we've seen at a 30-year auction, going back almost 20 years. Things are changing in the bond market, not just stateside, but worldwide. More economic data later this morning, 8:30 Eastern Time. We will get jobless claims. You will also get retail sales. An important read on the consumer and just how much spending that consumer has been doing.
Are they absorbing the price increases that we're seeing in CPI and PPI reports? Can they continue to absorb this inflationary backdrop that we continue to talk about and that you see priced into bond yields? Ultimately, the answer has been yes for most of the readings. And so is there some sort of contradiction with the idea of this roaring bull market and an inflationary backdrop and nothing on the horizon that potentially could stop it? How much does that tension become something recognized as a risk versus something that can persist for the foreseeable future?
Two-speed economy. Christopher Onushatigas put it well on this program. This is not a consumption-led rally in the equity market. It's a tech investment-driven rally in the equity market. And if you based your equity market thesis right now on consumption trends and lower income groups in the US, you'd be aggressively short equities. The problem is right now that the equity market is made up of some massive tech firms that contribute to a massive weighting in the S&P 500, and those companies are doing tremendously well. You base it on that, you'll be aggressively long, and that's what the market's been doing.
And they've been right, and they've been seeing semiconductors lead, and you talked about bad breath. I know, insert your bad breath joke here, but that is what you're seeing right now in this rally, that only 46% of the S&P 500's members reached above their 50-day moving averages. That is the fewest in a month, even as we reach new high after new high. It is a handful of stocks that have been the beneficiaries of this incredible groundswell of infrastructure spending and the profitability stemming from AI.
So we talk about the vibes.
I would love to.
The 99.5 Cerebrus AI chip maker. What was the range over there for that IPO?
It was supposed to be 140 to 150.
Came in at 185. right? That's some pretty powerful stuff. Cisco. People remember Cisco back in the good old days, or rather the bad old days in the early 2000s where things went the wrong way. Cisco crushing it. Really strong forecast. Stock is surging in the pre-market.
You know, it's funny, when we talk about the 2000s, I remember when it used to be a cautionary tale. Now people are saying, well, some of the winners back then actually ended up being the winners today. It just took, 2 decades of doing nothing. So, people can look at this on either level. Cisco coming back, it's still alive and kicking and actually benefiting from the latest tech trend, the AI boom. Nonetheless, people are concerned about how much capacity there is to absorb the IPOs coming down the pike. Cerebras really highlighted how much demand there is, how oversubscribed it was, pricing at $185 a share, as you mentioned, for a valuation of $40 to $49 billion, depending on how you calculate it. Does this pave the path for SpaceX, for OpenAI, for Anthropic, as they continue to raise money in the private market?
Yeah, that's the biggest IPO of the year so far.
Correct.
Because later this year, you might see some even bigger IPOs. Not once, not twice, but maybe 3 times. Equity futures right now in the S&P, positive by 1/3%. Coming up this hour, Paul Quincy of JP Morgan Asset Management, with stocks adding to record highs. The former senior White House trade advisor, Kellyanne Shaw, on President Trump's meeting with Xi Jinping. And Mona Mahajan of Edward Jones, after the Senate confirmed Kevin Walsh as the next Fed chair. We begin this hour with stocks edging higher as tech continues to fuel the record rally. Paul Quincy of JP Morgan Asset Management writing, earnings are booming with AI and semiconductors driving profit expansion, not just in the US, but across regions through the broader supply chain. This is a good time to diversify. Paul joins us now for more. Paul, good morning.
Good morning.
Diversify the what or diversify the where? Because it is different.
Both. I think diversification in terms of style, so think about value as well as growth, and diversification in terms of region as well. Think about the rest of the world as well as the US.
Because region right now, I'd get excited about South Korea. I'd be diversified the where, but not the what. What are you interested in beyond just the AI tech trade?
Well, South Korea is a couple of stocks, not a region. So look, I think, first of all, the tech trade itself, you can't ignore it, obviously, and you can't just dismiss it. And yes, we see these warning signs. One of my portfolio managers told me she was called by her college-age son and asked about last week, is it a good time to start buying memory stocks? You see incredible interest in these ETFs booming. Those are things that worry. Those of us that have been around for a long time, but when you look at the fundamentals, they're incredibly strong. And history tells us that these kind of moves go on until, first of all, things get expensive. Secondly, volatility starts to pick up. That's a real warning sign. And thirdly, the earnings revisions peak. That's when you've got to really watch out. And that's not yet what we're seeing when it comes to semiconductors. So on the valuations, sure, on things like price to book, price to sales, multiples are getting up there, but the earnings multiples are still, for many of these stocks, still single digit. And that's true in the US, it's true in the rest of the world as well. So a mixed picture there. Volatility absolutely going up. You're getting enormous moves every day in both directions. That's a warning sign. Earnings momentum doesn't seem like it's peaking. You just mentioned Cisco. Every data point we've seen in the last few weeks just fuels the fire. Things are getting better, driven, of course, by, at the root cause of it, the frontier models inflecting, hyperscaler investment going up every time you look at the numbers. That trend hasn't yet changed.
Just to add to your fear, my 17-year-old son came to me on Tuesday after the 0.7% drop and said, I bought the dip. And I said, oh, dear Lord. But to that point, how do you diversify from something that is profoundly existential and rooted through every valuation of every company? It's rooted in the bond market. It's rooted on growth expectations and productivity. What does it mean to move away from that when it seems to be increasingly embedded in people's economic and financial expectations?
Sure. Well, I'll give you an example. So we've seen investors looking a lot at international value strategies in the last couple of years. So international value is diversifying about as far away from technology and Magnificent Seven as you can get, right? So it's geographic diversification and it's style diversification. And you can look at you can put together a portfolio of international value stocks, pay around 11 times earnings. They're decent companies. They're not growing that fast. Tech is it's something like 3 or 4% of that type of portfolio. And you haven't had to sacrifice returns. So you've made 40% in the last 12 months from international value. 25% type compound return over the last 3 years is actually significantly better than the S&P. Now, I don't think that's a realistic expectation looking forward because the starting point is higher now. But the point is there are other ways to make money in world stock markets. Our research team covers 2,500 companies, and not every one of them, their entire fate rests on AI.
How much is it a corporate story and how much is it an FX story at a time when a lot of people are expecting the dollar to weaken?
The dollar weakening, we tend to sort of look at the world bottom-up, company by company, so I always prefer to get excited about the corporate story rather than relying on the currencies. But yeah, currencies played into that a little bit. But no, it's been much more a corporate story. So for example, the European banks went from uninvestable to solid companies. You made 5 or 6 times your money in a few years. Energy stocks, written off a year ago, now their earnings are booming. So there are just other ways to make money in global stock markets. I think it's at a time like this when all the attention is in one place, it's really worth remembering that.
Can I throw another asset class at you? Started with FX, I want to throw bonds at you as well. Fixed income feels a little bit untethered right now. Looking at Japan, yield levels we haven't seen since some maturity started in the late 1990s. In Germany, at any given time, yield levels we haven't seen since 2011. You've seen the stats coming out of the gilt market in the UK, highs of the year stateside. What do you think is developing there? And is that a challenge to your asset class in the equity market?
Well, we have enough challenge keeping up the 2,500 companies that we're looking at without worrying too much about what's going on in the bond markets too. But we have to be aware of it. I'm old enough to remember the crash of '87 when no one cared about bond yields until they did. That was 6 months into my career as a portfolio manager. So that was a learning lesson right there. Look, we're a long way from that kind of extreme, right? So, but what we do, our observation about the economy is when we look at earnings and corporate profitability, it's incredibly strong, but it's very concentrated. So we're going to see earnings in the US this year up mid-20s now, our analyst estimates. That's up 4 or 5 points from where it was just a few weeks ago. And yes, it's broadening beyond the Magnificent Seven.
Yeah.
So the 493 are going to be up close to 20% this year. But it's still tech. So if you take tech out, and also energy, which is obviously something different as well, you've got around 8% earnings growth. That's okay, but that's not a boom. The boom is AI. So from a bottom-up point of view, the economy looks okay, reasonably strong, but all the excitement, all the inflationary pressure, it's in the AI space.
Your asset class, though, is in a competition for flows. If I can sort of boil it down to that, you've identified a problem, concentration. I'm identifying an asset class that's offering some real income now in a way that it hasn't for a number of years, in any given place, in any given time. And I'm trying to understand whether you would see that as a reflection of a better profile for growth looking out, yields higher, curve steeper, or whether you see that as competition for flows that would otherwise go into your asset class because of the concentration risk.
Yeah, sure. There is a little more competition, right? It wasn't hard to choose between stocks and bonds when bonds were yielding 2%. We went through this long period after GFC in which bond yields were just incredibly low by any kind of historic standard, and it was kind of hard to get too excited about bonds back then. We've gone from extremely low to what our fixed income teams think are more sort of normal, typical levels, so it's fine. It's not yet in the competition stage.
We've seen incredible returns, double-digit returns for a number of years now, and people are wondering whether we're entering a time of more tempered returns. Are you expecting to prepare your clients for more 8 to 10% returns on a forward-looking basis versus, the 20-some-odd% that we've seen recently?
Yes, I think that's very reasonable. So why such great returns? Obviously, fantastic earnings growth. We think that's going to continue, but at a slightly slower pace. So as we think about the next 5 years, our analysts get to around 10, 11% earnings growth a year for the S&P 500 companies. That's pretty good, but it's not 25% we're getting this year. So, and then on top of that, multiples, they've been going up at a modest rate. They're at the kind of high end of the range. That doesn't terrify us, but it's hard to imagine multiples going up a lot and building that in as part of your returns. S&P's trading around 21 times. We would think something like 18, 19 times. So it's a little bit high. It's not crazy, but I wouldn't build in from here multiple expansion. So it's all about earnings. It sort of always is, but even more so than ever when you're starting at, paying a pretty high price.
I was trying to attempt to get Paul to give Bob Michael some love on the fixed income side.
Well, I mean, not really. Although he didn't say that it was true competition, at the same time, he seemed to signify exactly what Bob's been saying, which is he doesn't see runaway bond yields because of the underlying weakness in certain parts of the economy.
Paul, it's good to see you. Thanks for being here.
Thank you.
Thank you, sir. Paul Quincy there of JP Morgan Asset Management. Stocks near session highs, up 1/3 of 1% on the S&P, with an update on stories worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump and Xi Jinping wrapping up comments at a state banquet in Beijing. Trump praising the extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House in September. Nvidia shares rising in the pre-market. The U.S. reportedly clearing several Chinese firms to buy the company's H200 chips. Reuters reporting companies including Alibaba and ByteDance are approved, but deliveries are stalled. And Cisco shares rising in the pre-market. The company reporting fourth quarter guidance, topping estimates by nearly $1 billion. Cisco also announcing plans to cut almost 4,000 jobs as part of a restructuring to focus on AI. And that is your Bloomberg Brief. John.
Chuck Robbins just absolutely crushing it. What a report. An earnings season for Cisco. The stock is up by 16%. Up next on the program, optimism in Beijing.
I want to thank President Xi. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
Anne-Marie on the ground in Beijing joins us next. Plus, we'll catch up with the former senior White House trade advisor, Kellyanne Shaw, live from New York City this morning. Good morning.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Live from New York City this morning. Good morning to you all. Equity futures right now in the S&P 500 firmer by 1/3%. On the Nasdaq up by 0.28, adding some weight to a record-breaking rally. Thank you to 2 names this morning. Cisco in the pre-market, surging 16%. Fantastic numbers. Great guidance coming from Chuck Robbins. Some job cuts, a shift to AI, all the stuff that investors want to hear right now is helping that name this morning. Nvidia also higher by 1.5%. I think we need some more clarity on what is going on here. A Reuters report earlier on this morning suggesting that the US has basically given Nvidia clearance to sell H200 chips to 10 Chinese firms. So they are export licenses. We also need to figure out whether China will allow those companies to import said chips into China. And that's where I think we lack some clarity still today.
Yeah, what's different? Because we heard about the H200 chips licenses for NVIDIA being sold. Also curious to understand exactly what some of the people back in Washington, D.C. will say. We were talking with Eddie Fishman yesterday, who said that the people in Washington who had to deal with national security were very concerned about Judson Huang joining President Trump on this trip. And now I just wonder if there's going to be sort of a pushback on both sides as well.
NVIDIA in the pre-market higher by 1.5%. Under surveillance this morning, some optimism in Beijing.
I want to thank President Xi, my friend, for this magnificent welcome. And it really was a magnificent welcome. We had extremely positive and productive conversations. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th, and we look forward to it.
So here's the latest this morning. President Donald Trump extending an invitation to the Chinese President Xi Jinping, the two leaders participating in a state banquet following discussing trade and Iran last night. Anne-Marie has the latest in Beijing. Anne-Marie.
Hey, John, good morning. What you're seeing right now is just absolutely warm ties, optimistic praise Xi Jinping has regarded in terms of President Trump and this toast this evening, as well as from President Trump and extending a state visit to President Xi Jinping. The last time he was in the United States was in 2023. That was on the sidelines of the APEC summit. He met with President Biden, of course, after the whole debacle with the Chinese spy balloon. But he hasn't had a state visit since 2015. Of course, this would come as well ahead of the midterm elections. So potentially a delicate matter for this White House. But I will say it's almost shocking to see the showering of praise and the warm relationship between these two leaders. Would you have guessed that more than a year ago, we were in this tit-for-tat trade war, export controls, what to do with highly sensitive AI technological chips, what was happening in terms of Chinese purchases of energy and agriculture, the sky-high tariffs? All of that seems to be unwinding during this summit, during this trip. Of course, there's a lot of still questions to be answered. They're going to have another day tomorrow. I think top of mind for most observers is going to be what the president says about Taiwan. While the bilateral meeting was happening today, we had a readout that this was the biggest issue that Xi Jinping brought up in the meeting and said if it's mishandled, it can mean a dangerous conflict between the United States and China. When you look at the White House reading, there was no mention of Taiwan.
AMH on the ground in Beijing. Anne-Marie, thank you. To build on this conversation, the former senior White House trade advisor Kellyanne Shaw writes the following: we have a long way to go in terms of navigating the future of US-China relations. Many of these conversations will continue well past September when the two leaders meet again on US soil. Kellyanne joins us now for more. Kellyanne, welcome to the program. Anne-Marie has alluded to this a few times, that this leader in China has taken a more assertive stance on Taiwan at this meeting. With that in mind, how sustainable is this more stable phase of relations between the two countries?
Yeah, good morning. I think this is the most highly anticipated leader-to-leader conversation of the year. Now, certainly there have been a number of mentions of Taiwan, predominantly on the Chinese side as part of the readout. And this was some of the fear on the U.S. side going into this meeting, that we might see President Xi lean on President Trump to get some sort of concession when it comes to Taiwan. But what I'll say about Xi's comments is this is not unusual. And I think back to the last phone call that the two leaders had, the Chinese readout was almost entirely focused on Taiwan and weapons sales. It is not unusual for the Chinese to emphasize this. The U.S. on the other side is basically not saying anything at all as part of the formal readout. And then you had Secretary Rubio just a few moments ago talking about the fact that the policy on the U.S. side has not changed. So while this will continue to be a pressure point, and it's one that we're watching very closely, I don't think anything has shifted, at least not yet.
Well, let's talk about things that might be shifting right now. The Chinese leader talked about China opening more to trade. We've been talking about that for ages. The more intriguing part of this is everyone else shutting the door to them. We heard from the Treasury Secretary speaking to the press earlier on this morning, who talked about Chinese investment and saying this: what we want to do is make sure that some of these investments don't get referred to CFIUS. Kellyanne, are things changing on that front?
Yeah, and this is one of the points that I was watching the most carefully in terms of what would come out of this summit. There have been a lot of talk about the Board of Trade and trying to manage the flow of goods going back and forth between the two economies. But there was really not a lot of clarity about what the investment commitments would look like. And frankly, a lot of concern by U.S. lawmakers, by stakeholders, that the president might allow more Chinese investment into the United States. And so I found this comment really curious as well. Now, to the extent they are talking about investment, and to the extent they're talking about the fact that there may be some transactions where there's really no national security nexus, they want to make sure that CFIUS is being used and calibrated appropriately. Maybe that's less concerning, but if what we're talking about is allowing large Chinese investments into strategic sectors in the United States, that's going to be very concerning for the president if he gets back home to that kind of outcome.
We've also heard that there is some sort of, or at least speculation from the likes of Julia and Emmanuel earlier in the show, that there could be some sort of trade tech for oil technology investments both into China in the form of selling chips and possibly China in the U.S. in favor of some sort of help with the Strait of Hormuz. Are you expecting anything on that front?
So my expectations overall for this summit were relatively low in terms of outcomes. I think the administration has forecasted for weeks, not much to see here. We're enforcing the Busan deal. And the fact that Jensen Huang was not included on the initial delegation list made it seem more likely than not that export controls would not be part of any sort of outcome. But of course, it wouldn't be a G2 summit, a Trump-Xi summit without a little bit of drama and some surprising deliverables at the end of this. So we could see some sort of broker deal around these things, but it wasn't part of the formal negotiating agenda going in. So I'll also be curious to see what comes out of a potential transaction that way.
Right now, how much do you expect China to reciprocate and come to the United States on September 24th, as the president has requested or invited?
Yeah, I think this has been on the calendar for a while. These two leaders will likely meet face-to-face 4 times this year. So I have every expectation that President Xi will come to the United States this fall. The two leaders will meet again later in the year as well. This is a very robust year in terms of potential developments, but what I will say is this is about managing the relationship. It's about keeping an otherwise rocky situation as stable as possible. These two economies are still going in very different directions, particularly in strategic sectors. And so having that leader-to-leader touch point keeps the connectivity, keeps the stability without this whole thing falling off a cliff. And I think that's in the interest of both sides, and that's where both leaders are thinking.
Kellyanne, I'd go one step further. It's in the interest of the world to make sure there is never a direct conflict militarily between these two superpowers. But we have to face the reality. The reality is this has been an adversary that supports adversaries of the United States, including Iran. How do we tackle that issue this year?
Yeah, I mean, Iran, I'm not really expecting any sort of joint announcement by President Trump and President Xi on Iran, other than the fact that they are both seeking some sort of de-escalation and opening of the Strait of Hormuz and something to try to address the energy costs as well as the ongoing conflict and to prevent it from spreading. Now, that said, both sides do have an interest in de-escalation. And so I think that behind the scenes and in non-public ways, we are going to see some cooperation come on the back of this. I completely agree with you that it is in the interest of the world to not have any of this break out into broader direct conflict. And I think that's what both sides are trying to do in their own way while continuing to compete on economic and national security areas where it matters as well.
Kellyanne, always good to see you. Thanks for catching up with us. The former senior White House trade advisor, Kellyanne Shaw. As we've been having this discussion, Marco Rubio, Secretary of State, speaking to NBC moments ago, saying we're not asking for China's help on Hormuz, and that the President, Trump, and the leader, Xi Jinping, have found common ground on Iran.
Yeah, the common ground being that they would prefer there not to be any kind of blockade in the Strait of Hormuz, which is lovely. Whether that actually results in action, you know, again, remains to be seen.
Also, as Kellyanne said, indicating policies on Taiwan have not changed. Secretary Rubio going on to say arms sales to Taiwan were not prominent in talks with China. Coming up next on the program, we'll catch up with Erica Najarian of UBS as financials continue to underperform.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets. Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Record highs on the S&P 500, the Nasdaq as well, adding some weight to that rally, up by 0.2% on the S&P. On the Nasdaq, up by 0.15%. The Russell, up by a muted 0.1%. In the bond market, the drama the last 24 hours. CPI was hot, PPI was much hotter than expected, and yet we moved a basis point in the other direction on twos, which is interesting. Very, very briefly breaching 4%, then dropping back down again this morning by a few basis points, 395.84. A market that looks at that data, acknowledges that not all of it will get passed through to PCE, but ultimately the bar to hiking is still very high for the Federal Reserve. So where have I got flexibility? Further out along the curve, 30s pushed higher, north of 5% still, the curve a lot steeper, or fairly steeper. And now you've got auctions, a 30-year bond auction where we see a fixed rate of 5% for the first time since 07. It's been a long time.
Yeah, so there are a couple of responses potentially to this. On one hand, a Fed that could hike, which a lot of people have written off as an improbable outcome based on what you just said and, frankly, market expectations. The second thing, the relief valve in the long end. And then the last thing is, if 30-year bonds are going to sell at such a low price, high yield, just don't sell them. And that might be what the Treasury ends up doing. I will just note, Susan Collins, the Boston Fed president, came out yesterday and said, more than 5 years of above-target inflation has reduced my patience for looking through another supply shock. And she said it is not in her most likely outlook, but she could consider a rate hike if this does persist.
I was going through some of the numbers from the teams on the 30-year bond auction, the lowest one we've seen, the lowest fixed rate, 125 back in May 2020. And of course, that particular bond now trades much, much lower because of how much higher yields are at the moment. The note from BNP really got my attention. I want to go over this quote again. 5% is not a ceiling. There's a belief that 5% is somehow a ceiling for the 30-year. They don't think it is. They think for yields to stop pushing hard, we think the Treasury needs to deliver something clear in the form of guidance that suggests coupon supply in the long end will either be explicitly or implicitly decreased. That's a bit of pressure on the Treasury, not on the Fed chair.
A lot of people are talking about the Fed Treasury Accord, right? The idea that the Treasury is going to issue more in T-bills is going to cast away the 30-year bond, because why should you sell bonds at such a high coupon that you've got to pay out that could potentially supersede some of the spending plans that the U.S. has? So just bring that down to the front end, have the Fed deal with its situation in certain ways, keep rates where they are so you lower your borrowing costs, and call it a day. The relief valve, as you pointed out, is the dollar. And do you get a much weaker dollar as a result? Some people say, as we were just talking to Eric Nelson, not much weaker. Depending on what you're comparing it to, maybe it's a different story.
If they're explicit about that accord and people latch on to that, you'd have to believe the dollar would get hammered.
Yeah, petrol.
My language hammered. Eric Nelson of Wells Fargo didn't like that language, but that would be the theory.
Yeah, and versus what? And I think that that is a key question. Who is the next power to kind of take on some more reserve status? China trying to take that away from Europe, which evidently is having a bit of issues.
Things are somewhat calmer this morning, at least. DXY at about 98, yields a little bit lower at the long end of the curve. As we count you down to the opening bound, nothing calm about these moves. Some major moves in the pre-market. Yahara has more. Hey, Yahara.
Hi, John. And with this move, Cisco is set for its biggest post-earnings jump since 2011. The networking giant delivering a beat and a raise, and announcing that it is cutting thousands of jobs as it shifts resources toward AI. This is a company that trailed many of its peers out of the gate when it came to the AI boom, though it is now catching up, and it is raising its forecast when it comes to AI orders from the hyperscalers from $5 billion to $9 billion next fiscal year. Turning to NVIDIA, it is bucking the rest of the chip makers, which are mostly lower today. It is up 1.6% on a flurry of headlines out of Beijing. First, you have President Xi telling business leaders, including Jensen Huang, that China will open its door wider to foreign companies, though they have heard that before and the barriers remain. And then you have this Reuters report saying that the U.S. has approved the H200 AI chip so that Chinese firms can now buy it. But as we know, the U.S. was never the problem. It was China, and we don't know whether it has signed off on that. And we end on shares of Wolfspeed. They are surging 3 3/4% this morning after a 16% surge yesterday, now headed toward 8 days of gains. And the catalyst coming after the research firm Citrini named this chip maker as a major beneficiary of the AI boom as it comes out of bankruptcy. John?
Yahara, thank you. Remember Citrini? All the worries about that?
Yeah.
I love the research coming out of that firm.
Well, I still think about that idea that we're all going to be without a job and the potential doom that we all
Still
are
haunted
toward.
by that, yeah.
I mean, it still is a conversation, frequent conversation.
At Casabramo, around the dinner table.
All right, we don't have to go back.
Look how many crises we've had so far this year.
Every night there's...
Overwhelming. We're about to talk about the banks, and I was reading through Erica Najarian's research, and I was just thinking, remember when we were worried about capping interest rates on credit cards? Remember that? That was earlier this year.
Oh, God. Was that really?
Yeah, people were saying don't buy the banks because these things are on the table now for the year ahead.
Yeah, that wasn't this year. That was 2001.
Feels like 25 years ago.
I mean, it's just, like, honestly, I don't understand time right now.
On our radar this morning, Xi Jinping warning President Trump that mishandling the Taiwan situation could trigger a, quote, collision or even clashes. The blunt remarks injecting some tension into an otherwise cordial Beijing summit. Elsewhere, according to Reuters, the U.S. reportedly clearing several Chinese firms to buy NVIDIA's H200 chip. The CEO, Jensen Huang, telling us here at Bloomberg, the U.S.-China summit has been an incredible opportunity to build a better partnership between the two countries. And finally, AI chip maker Cerebras will officially hit the public market today in the largest IPO of the year so far. The company pricing shares well above expectations at $185, giving it a market value close to $40 billion.
Yeah, raising about $5.5 billion in this IPO. So there are a couple of takeaways. Number one, if you're a chip maker, well, it is your time to shine. And if you want to raise money, now is your moment. So who else is going to come to the table to raise money? Is this setting the tone for SpaceX, for OpenAI, for Anthropic to come later this year? Even as there is some skepticism about levels, valuations, how far some of them have gone. I'm thinking about OpenAI losing some of its clout to Anthropic. Nonetheless, the fact that this was seriously oversubscribed put to bed all the worriers out there saying that this couldn't get done and really opened the door to what could get done later this year.
Some banks very excited about the year ahead. Let's talk about the year ahead for the financials. Erica Najarian of UBS writing the following: we think big banks could swing firmly back into favor versus regionals as investors contemplate the bargain bin following the sector's historic level of recent underperformance. Erica joins us now for more. Erica, good morning. Good to see you.
Morning.
Things have changed.
Yeah.
So last time we spoke, we were talking about those kind of issues. We were talking about the opportunity in the regionals, maybe not the major players. What's changed?
Iran and inflation, right? The two big I's. So obviously higher gas prices is really, putting like a kink in terms of the consumer spending that was supposed to be fueled by these tax returns and tax refunds. And so that's clearly an issue. Additionally, the secondary effects are going to be significant. If you want something delivered, or transportation costs, all of a sudden the shipping is $13.95, maybe not free, or $9.95. And I don't know if I want to add to cart if the shipping's not free. But regardless, I think that that's going to be an issue. And obviously, there are no cuts in the curve. There's a greater probability priced in of a hike rather than a cut this year. And so what investors are saying, wait a minute, for us to have invested in regional banks, we needed a steep curve as well. And so again, I think the G-SIBs become the hiding place, especially since, you just talked about, a large IPO, especially since the capital markets construct is still super robust, even taking into account a very slow April.
Within the major players then, does that make a Goldman and Morgan Stanley a little bit more compelling on the margin now?
Well, absolutely, right? Because they're, pretty much, just to oversimplify it, they're in the moving business, not the storage business. And if the concern is, okay, the consumer strength might be weakening, additionally, deposits might be more expensive, then you'd rather be in a transaction-based business rather than a balance sheet-based business. And that's why, even in the ugly days, Goldman and Morgan Stanley, Goldman more so, they've been like Teflon. They've just been up there on the screen, green, where every other bank has been red, even JP Morgan.
Well, do you see this as actually the likely bifurcation, that you want to be in the moving business rather than the storage business? Or do you see some of the concerns about consumer weakness as being overblown? I remember the private credit issues that happened about 4 years ago that have seemed to have evaporated, or the idea that potentially people aren't spending, which will be put to bed in about an hour when we see the retail sales. I mean, what's your sense of that?
I think that's a great question. I think the answer is yes, but it's hard to disprove the negative right now until you see sort of firmer numbers. Because while we'll get the retail sales number in a little bit, you've also seen some monthly credit card data that have implied that May was sort of a weak month for spend. Now, the banks and the card companies would argue that this is just sort of a reallocation of spend, so spending more in gas rather than everything else. But at some point, something will break. Right? But also, I think some of the concerns over higher rates and deposits, again, it's an opportunity for the other GSIBs, like a JP Morgan, like a Wells, like a Bank of America, where they've been sort of really underperforming Goldman and Morgan. And I think the concerns on the deposit side and the consumer side, at least for them, are overblown.
Do you think that we can consider some of these banks tech stocks increasingly as they invest billions and billions of dollars in different technologies? Potentially, they could start to cut staff. We've already seen the financial sector contract in terms of the total overhead. How much is that a tailwind that people haven't fully priced in?
I mean, that would be awesome because I get paid in bank stock, but I think the answer is unlikely, right? Here's the thing. You always have credit risk as an overhang, right? So that's always going to cap your multiple. Secondarily, like Jamie Dimon always says, and he cops this from Jeff Bezos, your margin is my opportunity. And even if they have improving, cost to income ratios in one part of the business because of AI and technology, the best managers will invest that somewhere else. So this notion that you get to keep all of the savings and then get a higher, I would love to believe that, but I don't think that's going to be the case.
Can we put some numbers on it, rough estimates? Look at staff levels now. Where do you think they'll be a year from now, 2 years, 5 years from now? How do you think about that trajectory at these big institutions?
So remember, we're a regulated industry. So let's say you can get rid of, 10%, 15% of your call centers. All of a sudden, utilizing AI in retail requires you to have more supervisory, more compliance. And all of a sudden, maybe you're not replacing headcount one for one at all, but you're replacing, call center headcount with something that's more expensive, somebody with a license, somebody that can oversee. So I'm not sure that this is necessarily going to be this, in 5 years, there's going to be 30% less headcount. Now, there could be 10% less headcount, but I'm not sure the cost per employee necessarily comes down.
We've been seeing those headlines come out of some tech firms. I stress some tech firms. I've always been wondering when we would see them cross the Bloomberg with regards to a large financial, and then the next would follow, the next would follow. But having this conversation, it doesn't sound like that moment's very close.
My guess is that it might happen, but it might not be advertised as such, right? I mean, you already are seeing attrition, and you're starting to see the numbers of total financial employees tick down, I believe about 100,000 over the past year or so, if you take a look at the BLS numbers. So clearly there has been attrition. Whether this comes as some sort of wholesale advertised cuts, that becomes political, and so you probably don't want to do that. But who isn't being replaced? Which new entrant isn't going to be trained or isn't going to be hired full time? These are some of the questions that people have been asking.
Erica, it's good to see you. It always is. Thanks for being here. Appreciate it. Erica Najarian there of UBS on the financials and a future of these institutions. Let's give you an update on stories worldwide this morning with your Bloomberg Brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. President Trump and China's Xi Jinping wrapping up comments at a state banquet in Beijing. Trump praising their, quote, extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House.
I want to thank President Xi. It is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
The leaders also set to meet in November and in December. StubHub shares surging in the pre-market. The ticketing company reporting first quarter revenue that beat Wall Street estimates. StubHub also saying it's on track to achieve its full-year guidance as it, quote, grows globally and increases profitability through greater scale. GameStop CEO Ryan Cohen is planning to take his takeover offer directly to eBay's shareholders. The Financial Times reporting Cohen plans to put the offer to shareholders soon. The report coming after his request to meet eBay's board of directors was rejected. And that's your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in about 30 minutes' time in the next hour. Up next on the programme, awaiting the Warsh Fed.
It'll be a pretty high bar for Warsh when he comes in to build consensus around the idea of rate cuts anytime soon.
There's only so much, of course, that Kevin Warsh can do as chair. He's only one vote.
Up next, we'll catch up with Mona Mahajan of Edward Jones, live from New York City. You're watching Bloomberg TV.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
We are allflation and no stag. CPI, PPI coming in hotter than expected. GDP growth numbers right now, pretty good. We'll get retail sales in about 40 minutes' time. Equity futures on the S&P 500, all-time highs coming into Thursday morning, higher again by a third of 1% on the S&P, on the Nasdaq up by a quarter of 1%. In the bond market, things get more and more interesting. Twos around 4%, 395 this morning, down by 2 basis points. Kevin Walsh stepping up to the plate. Under surveillance this morning, awaiting the Walsh Fed.
Kevin Walsh was going to inherit an already difficult position.
He's going to want to be cutting interest rates, and the focus on trimming inflation may not necessarily convince everybody.
It'll be a pretty high bar for Walsh when he comes in to build consensus around the idea of rate cuts anytime soon.
There's only so much, of course, that Kevin Walsh can do as chair. He's only one vote.
Here's the latest this morning. The Senate confirming Kevin Walsh as the next chair of the Federal Reserve with a 54 to 45 vote, the slimmest confirmation margin for a head of the U.S. Central Bank. Mona Mahajan of Edward Jones writing divisions will make it hard for incoming chair Walsh to build consensus for rate cuts in the near term. Mona joins us now for more. Mona, good morning. Good to see you.
Good morning.
Assuming he's going to push for those rate cuts, do you get the sense he will?
You know, look, I think with inflation coming in as hot as it is, as the labor market and GDP growth coming in above expectations, as earnings have been flying, I think the case for a rate cut here gets tougher and tougher, even for Kevin Walsh Fed. Now, all that being said, could you make the case that we are still somewhat restrictive and above neutral, and over time, Fed funds rate probably is 3.5% or so? Perhaps, but I think he's going to have to wait, be patient, and look for those signals.
Is that a problem? Is this a rate cut dependent bull market? Doesn't feel like one.
Yeah, I would agree with that. I don't think it is. In fact, I think we are doing quite well at 3.75% here. No problem with earnings or margins, certainly no problem with a consumer that is out there spending, corporations that are out there borrowing as well.
Which raises the question, if this is truly a restrictive policy, where are we seeing the restrictiveness?
Yeah. And look, I think last year there were some doubts around the labor market. We saw some softening. There's been a reversal in that labor market this year, surprisingly so to some. In fact, with new jobs created, with unemployment rate hovering around 4.3%, that labor market story is remaining intact. If there was a case for a rate cut, I would say the Fed wants to make sure they don't see a meaningful deterioration in that labor market. If there are any signs of that, that's when we start to see some movement, I think. So.
What were you doing at 1 p.m. yesterday? Were you buying some 30-year bonds?
I was watching the auction, which was great.
Well, so glad, but were you actually buying? Or are you a buyer of them at 5% yields?
Look, I think right here, our range for a 10-year Treasury for this year has been 4 to 4.5%, and we're very happy that this 10-year has stayed right in that range. As soon as we hit that 4.5% mark, we see those buyers come in, we see yields start to move down. And as soon as we hit that 4%, we think there's some caution there as well. So we think that range remains intact. We will say if we get meaningfully above 4.5% for whatever reason, that extension of duration makes sense to us.
Did you notice that she didn't mention 30 years? She just went straight to 10. Oh, yes. Sort of this one denomination she doesn't want to touch.
You're not alone, by the way. There are a lot of people who share that view.
Correct. We saw that yesterday in terms of the data.
Does 450 become a challenge to this equity market?
You know, we think we have to get closer to 5% to really see that pressure on not only valuations, but that softening in margins and earnings compression as well. So we're not there yet.
The one complaint we hear about this equity market is concentration risk and negative breadth. The question we often ask, is that a feature or a bug? Do you really want to be outside of the big winners right now? Do you really want to shift away from those big names that are driving massive returns?
Yeah, you know, look, those big names have been the drivers of this earnings growth. The 27% we've gotten this quarter, areas like tech and comm services have been 40 to 50% plus earnings growth for Q1. Phenomenal numbers. So those are underpinning the equity market for sure. We always say, you know, one of the key features of the U.S. equity market is its ability to innovate and to house those innovators. So all the Mag 7 are housed in the U.S. We're not seeing that innovation really play out in other parts of the world. So certainly right now we're hearing more from China and emerging markets. That's another area that we like if you want an alternative to U.S. technology. But all that being said, we remain overweight U.S. large cap, mid cap, and we like parts of EM.
Is that an alternative region or an alternative style? We asked this question in the last hour. I think it's a really important one. Financial news right now is dominated by people telling our audience to maybe look outside the US, in other regions, but maybe also other styles. Because in other regions right now, I can buy Asia, but Asian tech. What am I buying outside of technology?
You know, it's a great question. Look, we also like parts of international small and mid cap. And part of the reason is, one, we do think over time some of the productivity gains from AI will spread to other sectors. So whether it's healthcare, financial services, industrials, and a large part of Europe is exactly those sectors. And so over time, we want to make sure we have exposure to not only the winners of AI, but the sectors that'll gain from productivity.
Hold on a second. Are you saying you're overweight Europe?
International small and mid, we're underweight large because of the relative and probably the innovation story, to be honest.
So the person who we were talking about that with was Paul Quincy of JP Morgan, and he had really a lot of optimism about the global story and about diversification in that way. But he also said that he didn't expect returns to be as good as they have been over the past few years. He expected more of like a 10 to 11% return rather than last year's 17% return or the year before the 24%. And again, the year before that, the similar kind of move. Do you agree? Do we have to lower expectations for the types of returns from equities?
Yeah, you know, look, broadly, in the U.S., we've seen 3 years of double-digit gains. And in Europe and international, the last year and a half or so have been outperforming the U.S., those returns. And so it has been a really nice story. Now, do we expect the pace of gains to continue to that extent? Probably not. We are seeing, however, the same earnings story and earnings rebound we're seeing in the U.S. We are seeing it in the rest of the globe, and we're seeing it in Asia, in Europe. We're also seeing it in small and mid-cap stocks. So there is an earnings re-acceleration that is a tailwind for equities, we think, in the next 12 to 18 months. Beyond that, we think there could be a bit of cooling.
Paul was talking about European banks. European banks have been on quite a run. 2023, up 20%, 24, up 26%. Last year, European banks were up by 67%. They have had a massive move over the past few years.
Yeah, they've gone from instability to very much stability, and now a question of consolidation as there is more of an effort to create a greater buffer against any kind of crisis. The idea of bottom-up and looking at different companies to understand what can succeed. But what Mona's talking about, which is that you're seeing profits inflect higher around the world, kind of goes counter to the narrative that we hear from some places, which is that the global growth picture is deteriorating. So which is it, right? Can you have this kind of recovery story if you don't have the participation of economic data that seems to be surprising to the downside?
I think Samsung and TSMC have offered a helping hand to global profits.
Well, I would agree with that. And how much, again, can you get away from the AI story? How much is this AI in another way or told through another side of the balance sheet?
Mona, it's good to see you. It's always
Thanks,
good
guys.
to catch up. Thanks for being here. Mona Mahajan of Edward Jones. Coming up on this program, this is the lineup for the next hour. We'll catch up with the Fed Governor Stephen Myron, Jonathan Krinsky of BTIG. He's got some things to say about the chip rally, why he thinks this chip rally could reverse, and we could see a 20% decline in the semiconductor index. We'll talk about that in a moment. Nita Richardson of ADP joins us to break down the economic data, retail sales, jobless claims. Looking forward to that. We'll hear from Judy Beale as well. Governor Myron, it's like the exit interview, his last broadcast conversation as a governor of the Federal Reserve. Looking forward to this.
Very much so, especially considering discussions around the needs to change the Federal Reserve and the way that it operates. Someone who is inside, who has been critical of this institution, giving his sense of what needs to change and what he newly appreciates.
Looking forward to catching up with him in just a moment. Equity futures right now, the S&P, firmer by 1/3%, higher by 0.2 on the NASDAQ, up by 0.2 also on the Russell. From New York City this morning, good morning. The third hour of Bloomberg Surveillance is up next.
Famous dogs, you have they look like balloon kind of figures to some extent. How do you make those?
In the case of the balloon dog, I blew up a balloon dog. So I had this balloon, which is kind of like a latex type of piece, molded it, cast it, and then blew that up in scale and put it into a clay, and eventually had that transformed into stainless steel.
So when you have a balloon dog, let's say, a regular size one or then a big one, did people say, Jeff, you're crazy? Were you shocked that people were willing to pay very high prices for this?
When I was making my first balloon dog, one of the purchasers was Eli Bro. And originally I thought I could make a balloon dog for around $300,000 that I could manufacture. It's a large piece, over 10 feet long, or 12 feet long, 10 feet high. But it turned out that the fabricator came back to me and said, you know, Jeff, I can't do it for $300,000. It's going to be 650,000. But eventually, then they raised the price again, and they finally brought it up to 1.6 million. And I told Eli that this is the reality of it. I showed him everything, and he ended up paying for the production cost.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We are risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game. Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Haslida Amin in Davos, Switzerland, and this is Bloomberg.
Stocks are going to continue to go higher.
Do you want to be in this market? Do you want to be riding this? Yes.
This is still a market with a lot of cash on the sideline.
We're doing our best to enjoy this sort of nirvana that markets are benefiting.
There is a lot of optimism built into the market, which does create vulnerability.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures adding to recent gains, up by a third of 1% on the S&P, record highs on the Nasdaq 100. All-time highs again this morning on the cards, up by 0.2%. In the bond market, new levels for you. 5% on 30s, we're holding on to them, rejecting 4% on 2s. Intriguing, we're down 2 basis points, even with that hotter CPI and PPI data through this week. 395.63 on a 2-year. Heading into more economic data later this morning, 8:30 Eastern time. We will get jobless claims and retail sales.
Yeah, how much is the consumer strong enough to maintain the inflationary pressure that we've seen in CPI and PPI? One of the reasons why maybe we're seeing the bond market take a breather at the front end of the yield curve is because even hawkish Fed members have come out recently and said their base case is just to remain on hold for a longer period of time, not to hike rates. So even Susan Collins, who comes out and says, essentially, don't fool me again with another supply shock, says this is a reason why I'm not going to cut rates anytime soon. So people seem to be taking the chance of a rate hike a little bit off the table.
The bar is a lot higher than people think for that rate hike, and I think that's been reinforced by some of the communication we've had from Federal Reserve officials so far. As for the data at 8:30 Eastern time, I said allflation, no stag. We talked about the worries of stagflation. We've had deflation. What about the stag? These consumers, based on the credit card data we've seen from Bank of America, they're still spending.
Yeah, and particularly at the upper level of the income sphere. This is a reason why some people would have said, if we hadn't had the oil price shock, this would have been a boom economy. You would have seen real growth. You've started to see the employment market pick up. There is one little fly in the ointment, which is that the May credit card data has shown a softening. Consumer sentiment has softened. There are signs that maybe around the margins you are seeing a bit of the stag. Just it's overwhelmed by the AI inflation and the AI growth that seems to kind of knock that out of the picture.
That data moments away, 8:30 Eastern Time. Coming up this hour, we'll catch up with Fed Governor Stephen Miron with an uncertain path ahead for interest rates. Jonathan Krinsky of BTIG on the risks of a massive pullback in tech stocks, and Nita Richardson of ADP reacting to the latest read on the U.S. consumer. We begin this hour with stocks adding to record highs at a pivotal moment for the Federal Reserve. Rising inflation complicating the rate outlook as a new regime takes hold at the top of the central bank tomorrow. Joining us now in his final broadcast interview as a member of the Federal Reserve Board of Governors, Stephen Miron. Governor Miron, good to see you, sir.
Good to see you. Thanks for having me back.
We've got a moment to step back and sort of reflect on your experience at this institution. We talked lots about how you've been received externally. Can we just start with how you've been received internally over the last few months?
Sure. This has actually been one of the biggest surprises, you know, given all the drama at the beginning. I've been received internally, I think, very, very politely, very cordially, and very kindly. And I think folks have largely enjoyed some of the intellectual conversations, some of the challenges that I've leveled against some of the ways that there had been thinking beforehand, and I think that the overall response has been, you know, very welcoming and very kind, and that's one of the things that I'm most grateful for.
What are the kind of ideas that have been received well, that are shaping debates right now, that will linger and continue beyond your departure?
Yeah, sure. So an example of one of those things is the importance of regulations for determining the supply side of the economy. I mean, we spend a lot of time, you know, out in the financial world, out in policy, discussing the effects of a 33 versus 35% marginal tax rate. But the truth is that regulations are often infinite taxes. And being told you're not allowed to do something versus you are allowed to do something is a very, very strong difference. And this had played a very small role in a lot of the modeling discussions happening at the Fed, in a lot of the outlooks that I heard people present. And I came in and really hammered that idea, and I think sort of moved it forward. And now a lot of people talk about it very often, internally and externally, and, you know, sort of talk a lot about supply shocks. This is a positive supply shock that is unfolding and continues to unfold, and will, I hope, mitigate some of the negative supply shocks we also get hit by.
Well, let's talk about another supply shock, and I think it's been central to some of the arguments you've made on the committee, and that's population growth. The negative population growth that we've seen, which has lowered the break-even rate for the labour market and contributed to arguments in some places for hotter, stickier inflation. You've taken the other side of that. Can you just explain that for us?
Yeah, so I think this is a really subtle issue with a lot of moving parts. Now, at a very high level, what I would say historically is that we've seen a lot of countries in different places have declines in population growth rates and stagnant populations or shrinking populations. And I think the cross-country and historical evidence is that it's unambiguously disinflationary or even eventually deflationary. Now, there's a few ways that works. One is by reducing, there's a few consequences of lower population growth. One is it does reduce the break-even in payroll growth rate. So the number of jobs you need to create every month to hold the unemployment rate constant, that does come down. That's a mildly hawkish implication because it means you shouldn't get so concerned about very, very low job creation rates. However, there's also dovish implications as well, which are that it lowers the neutral rate. It brings interest rates down over time, and we've sort of seen that across countries and historically to be the case. And it's also disinflationary through long-lived capital and consumer goods. And if you think about something like housing, right? The supply of houses is relatively fixed in the short run. And if you throw millions of new people into an economy, you're going to drive up the price of rents because they need places to live, right? You're going to create inflation. And that inflation is very, very persistent because of the way that housing inflation is calculated. It's very, very sticky. If you have declining population growth, you don't need as much home price growth. And that very inflationary tailwind gets taken away and ceases to be a major driver of inflation. And I think you've been seeing that start to play out in the data. Market rents in this country have been growing at a 1% rate for the last few years. This is one of the biggest components of the inflation indices. And I think you're going to continue seeing measured PCE and CPI rents and measured PCE and CPI shelter inflation continue to converge down to those very low levels. So I think there's one hawkish implication, which is the lower break-even payroll rate, but there's also some very dovish implications because it reduces the neutral rate and it brings down inflation through some of these long-lived capital and investment goods.
This is a longer-term structure for how to think about inflation and the benchmark rate of the Federal Reserve and how it sort of it works with the sort of long-term inflation rate. Near term, though, one thing that you've been known for, a hallmark of your time on the Fed, was that you voted to cut rates at least once at every single meeting. Do you think that still holds, even though in the short term it does seem like the inflationary shock is overwhelming potential structural changes that could lead to disinflation.
I do, and I think this is maybe one of the biggest differences between me and a lot of other folks is that I take very seriously the idea of monetary policy lags, very, very seriously. Monetary policy doesn't hit the economy right now. If we changed interest rates today, it wouldn't flow through into the economy until 12 to 18 months from now. Right now, there's some disagreement over exactly how long those lags are, but I think 12 to 18 is the consensus view. And therefore, for any shock that's hitting the economy today, you can't think about what the effect in the next few months is. You need to think about what the effect in the next 12 to 18 months is. And sorry, the effect 12 to 18 months out. So if oil goes higher, it's a supply shock. Straits of Hormuz are closed, right? That's going to boost the oil price today, and with it a bunch of other stuff that's very tightly tied to energy prices, like airfares, right? That's going to go higher very quickly within the course of a few months, and we've been living through that, and that is very real, right? There's no way that is very real inflation, but it is not inflation that monetary policy can affect. Monetary policy can affect 12 to 18 months from now. So there's got to be a reason that you think airfares and oil prices are going to be moving higher in the summer of 2027 and the fall of 2027, not the summer and fall of 2026. And so it's those lags that really should be driving where you think about forward-looking monetary policy should be. And that's a lot of what I've tried to hone into when thinking about population growth and deregulation and saying that the traditional view that we should look through an oil shock should prevail. This is very, vanilla, basic, traditional monetary policy.
Part of the problem is that the market doesn't agree, at least not in terms of where longer dated bonds are trading and where yields are shifting, where you see them shifting higher even as the front end stays where it is. Do you think that in this type of environment, it's imperative to have some sort of Fed Treasury accord akin to what people have been talking about, where the Treasury steps in to sort of influence the long end while the Fed cuts rates on the short end?
So let me address this separately. So the market not agreeing is in part a Hall of Mirrors issue, because if the Fed says we're very backward looking and inflation over the last 12 months is going to determine policy that affects 12 to 18 months from now, meaning the economy in 2027 is affected by data in 2025 in that world, right? So very, very backward looking. If that's how the Fed communicates that it's setting policy, then the market is going to start to reflect that. And so the market reflecting a lack of interest rate cuts, right, is in part because the Fed is telling them we're backward looking, right? And so that's going to create a self-reinforcement problem. Now, on the Fed Treasury Accord, so first of all, I won't be involved in that if it happens, but, I have done some work on the balance sheet, and I do think it is important that one of the problems with having a very large balance sheet and lots of securities, lots of Treasury securities on the Federal Reserve's balance sheet is it does start to get the Fed involved in questions that have some fiscal implications, right? If we own a huge chunk of debt, then that means that we're impinging on decisions that traditionally are the realm of the fiscal authority. What is the distribution of public debt that it issues that's held by the public? And so I do think it is important that if you have a large balance sheet, there needs to be sort of some clear delineation about who's doing what. And to me, these questions are really murky, and they implicate independence to an extent, and therefore it's one of the reasons among many that I would favor having a smaller balance sheet.
How close do you think the Fed should work with the Treasury to achieve that? How closely should the Fed work with the administration?
Yeah, so my view is that the Fed having a big balance sheet starts to implicate a lot of those lines and becomes problematic. So the Fed should strive to have as small a balance sheet as it can, right, to achieve its goals and implementation framework. And if we can sort of improve that implementation framework and make it smarter to reduce the minimum size of the balance sheet that we need, then that's a great thing. And that was a major thrust of the paper that I wrote in the spring with Alessandro Barbarino and Anthony Dirks and Alyssa Anderson, and so that was a major thrust of that work. That was really important. Now, in terms of coordinating, right, the Fed should do what it should do for monetary policy, and the Treasury should do what it should do in terms of fiscal policy. And the level of coordination should I think be sort of separate, right? They should be doing what they want to do for each of their own priorities. However, there are times when there is going to have to be that type of coordination. So, for example, right now we're doing these reserve management purchases where we're expanding our balance sheet to sort of provide a minimum level of reserves into the economy to meet reserve demand. We're buying treasury bills. We're letting mortgages continue to mature off of our balance sheet and replace them with treasury bills, right? Like, in theory, if we did enough, sort of conversion of our balance sheet, of our existing balance sheet into treasury bills, we might be absorbing all of the supply, right? And then some. So this is an example of a time where there would have to be very tight coordination.
We've got an administration right now very interested in financial markets. The president often looks at where the index level is in the equity market. We've got a Treasury Secretary that used to trade this stuff. Did you speak to them in your time at the Federal Reserve? Did the president ever pick up the phone and say, hey, Steve, what's happening? Tell me what you're seeing in the market and the economy?
Yeah, so I spoke to the president when I went to go resign from the Council of Economic Advisors. I went to bring my resignation letter. But he doesn't tell me anything. He doesn't tell the whole world, right? This president is very forthright with his views, and he tells journalists all the time, including Bloomberg journalists, exactly what's on his mind about policy and where it should be. So no, I'm not in receipt of any information that's not public.
Because we've started this conversation by talking about how you were received internally, externally. I thought unfairly at times, basically everything you said about interest rates and on the economy was always described as just doing the president's bidding at the institution, at the Federal Reserve. Did people see it that way internally? When you put your hand up and said, I want a rate cut, 25 basis points, I'm dissenting, was there a roll of the eyes, here we go, this is the president's guy doing the president's bidding?
Well, thank you for those words. I do think it's clear that I've disagreed with lots of people on policy on lots of times. There have been times when there have been signals out of the White House that they wanted policy rates lower than I had my dots, and there have been times when there's been signals out of the White House where they thought that I was too dovish, right? So, for example, the NEC director after my first vote said that he would have preferred a 25 basis point cut, right? So I clearly do my own thing and have my views, and they're all, I think, grounded in very traditional economics. And we were talking about population growth before. Like, this is not new, right? Like 6 years ago, we all would have been talking about, is everybody becoming Japan? That would have come up several times a week, right? Like, none of this is new. None of this is heterodox economics. None of this sort of says we need to just discard with the entire framework. It's all within the traditional framework. And this is part of why I think the reception internally has been generally pretty good, is because I'm engaging with folks on their ground, right? Like, I'm within the world of normal economics, and we're talking about what drives the interest rate, and the neutral interest rate, and does population growth drive it, and is it inflationary or disinflationary? This is all well within sort of normal.
We're trying to figure out what kind of an institution Kevin Walsh is walking into, how he'll be treated, how difficult it will be to get people on his side as he starts to think about changing this institution, particularly when the former Fed chair will be sitting there as a governor on the Board of Governors. Can you help us understand that from a man inside the building, what that might look like in the next few months?
Yeah, so I think one thing that's important to understand is that people at the Fed are responsive to arguments. And as I said before, I've been hammering deregulation, among other things, since the day I got there. And, they start to respond, but it takes time, right? It's a bit of a slow-moving process.
Does Powell being there make it harder?
I don't know about that. Certainly, Chairman Powell built a lot of the institutions and processes that exist there, and so so that dynamic may play into it. I don't know, but that'll be an issue for Chairman Designate Walsh to deal with when he gets there.
When you heard the chairman in the news conference present to the press and to the world that he was staying on as a governor, was that the first time you heard of it, or did he tell the Board of Governors ahead of time that was his plan?
No, he didn't tell me ahead of time that was his plan, but he'd always said that publicly and privately that it's something he might do, and so it wasn't entirely a surprise.
What was your reaction to it?
Look, my reaction to that is that when I was the incoming chairman of the Council of Economic Advisors last year, I was very grateful to the previous chairman, Jared Bernstein, for spending time with me on the phone, being very generous with his time, several hours over days and weeks, giving me advice, for how to be a good CEA chairman. And I really appreciated that. And sort of how does the place run, and what are your responsibilities, and how do you do a good job? And I thought that was really generous of him, and I was really appreciative of that. And then I went out of my way to make sure that they very quickly put his portrait on the wall of former CEA chairman in the offices in the Eisenhower building, just to make sure that happened quickly without delay. And I was really grateful. So look, transitions are important, and I think that it is maybe helpful to have someone there to give advice. Here's how to be an effective chairman. Here's how to lead the committee. Here's how the building works. It may be a little bit different than it was 20 years ago, right? I think that can be helpful, but I still think it's important that it be a transition, because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split. I think you want to have a sense of unanimity and clarity. And so transitions are important, and I think it can be helpful to have help in transition. But I still think it's important that it is a transition.
Stephen, it's good to see you. Thanks for being here. I just wanted to finish on this. I think a lot of people might describe your tenure at the Federal Reserve as somewhat controversial. I see it completely differently. I've seen this play out now over a number of months, and I've said this repeatedly. You've had energized debate at the FOMC that spilled out publicly in a way that we haven't seen in a long, long time, if ever, at the Federal Reserve, where people are being much more opinionated about where we are in this moment. And the one complaint, the consistent complaint I've had about the Federal Reserve is one that you've had too, which is the groupthink. And it's very, very difficult right now to describe this committee and anyone working at the Federal Reserve as part of groupthink right now, because everyone's expressing themselves in a much newer, fresher, more welcoming way.
Yeah, it seems like right now, no one could accuse this committee of groupthink, given how fractured it is, and frankly, all of the commentary coming out. So over to you, Kevin Warsh, to come in and have that debate.
Best of luck. Steve's good to see you.
Thanks
for having me. Appreciate it. Stephen Myron there, Fed Governor Stephen Myron. Let's get you an update on news worldwide with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. President Trump and Chinese Premier Xi Jinping delivering remarks at their state banquet in Beijing. Trump praising their, quote, extremely positive and productive conversations, emphasizing his long-standing personal relationship with the Chinese leader. Trump extending an invite for Xi to visit the White House in September. United Airlines expanding its service to Japan, launching non-stop flights from the U.S. to the northern Japanese city of Sapporo, as well as new non-stop flights between Chicago and Tokyo. The flights are expected to operate on Boeing's 787 Dreamliner. UK Health Secretary Wes Streeting stepping down in the last few minutes from his post, paving the way now for him to launch a bid to replace Prime Minister Keir Starmer. Starmer's former number 2, Angela Raymer, also indicating she's preparing a bid to leave the party. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. Up next, we'll get you some Morning Calls Plus. Jonathan Krinsky of BTIG on how tech could see a major reversal. That conversation up next.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Good morning, Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals.
Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
Session highs, equities up 1/3% on the S&P. That is the price action. Here is your morning calls. First up, Wells Fargo raising its price target on Cisco, expecting more upside in 27. Citi raising its price target on Dell, highlighting the AI build-out as boosting server demand. And finally, Evercore raising its price target on Apple, predicting earnings and free cash flow to grow. Let's stock up in the pre-market. Let's talk about tech and tech optimism driving stocks to fresh record highs. Jonathan Krinsky of BTIG writing, we will see an equal and opposite reaction to the parabolic advance we've seen in tech over the last few weeks, which would mean another 20% lower. Jonathan joins us now for more. Jonathan, welcome to the program. 20% lower, and as you've pointed out in your research, that's all it would take just to get back to the 50-day moving average, Jonathan.
Hey, Jonathan. Yeah, I think it's just goes to show how far we've come, specifically in the tech AI semi trade. And as you mentioned, yeah, a pullback to the 50-day is pretty normal in even strong uptrends. And that just shows, again, how extreme the move has been. So I think there is pretty significant unwind risk in this one pocket of the market.
I guess what the pushback would be, Jonathan, is that just because it looks parabolic doesn't mean it's not justified. Just because it looks like some of the previous charts doesn't mean that it's the same based on some of the profits and earnings. What would be a catalyst to this type of reversal?
Well, again, I think that's an important part of the conversation, but that's why we're saying it's, if you think about the analogies to the late 90s, the end result of that was the SOX index and the NASDAQ, it's 100, ended up down 85% from their highs. We don't think we're seeing anything like that. So I think you can still have a very strong fundamental backdrop. And as I said, pulling back to the 50-day is well within the confines of even a strong fundamental and technical uptrend. It's just gotten so extended, and there's numerous ways to measure that, but yeah, it's a bit much by our work here.
What do you see, Jonathan, in terms of people who are actually starting to hedge against the probability or the possibility of that type of downturn?
Yeah, I mean, you're starting to see a vol up, spot up dynamic within the semis. If you look at, there's a VIX for the SMH ETF, and that recently closed the highest level since March when the semis were actually moving lower. So, typically in equities, you get the underlying moving lower as vol moves higher. But in certain situations, when you get kind of these parabolic moves and people they're actually chasing for the upside more than downside, right? And so I think that's what is the concern at this point is we're seeing more, fear of missing on the upside than the downside. And you're seeing that in the options market, you're seeing that in the volumes and ETFs, whether it's the inverse ETFs or the leverage ETFs. You're seeing a lot of extreme volume at the highs, which again can indicate an inflection point.
John, another way of looking at this is that the moving averages were depressed by the shock in the Middle East, and that actually some of these names are catching up to fundamentals, not detaching from them. When you look at these moves, yes, they are parabolic, they're massive, particularly over the last month. Together with the concentration, is there a way that you look at this and say, you know what, this could resolve in a bullish fashion?
So, that's the big argument. I think the conversation that we've been talking about has in recent weeks moved from, okay, how stretched are the semis, how much further upside is there in those, to why can't the rest of the market rally despite what the semis are doing? And, there's various ways to look at this. If we just look at sector ETFs, there's only 2 sector ETFs that have made a new high in May. That's tech, obviously, and REITs. 2 sectors made a new high back in March, energy and industrials. But outside of that, most of the sectors peaked in January, February. So there's a lot of deterioration below the surface. And we just think it's going to be hard for that to support the index if tech moves lower.
Hey, John, I've enjoyed the research. Appreciate the time. Jonathan Krinsky there of BTIG. Something to think about. Up next, some breaking data, jobless claims, retail sales, reaction from Nita Richardson.
morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Equity futures session highs up by 0.4%. The open about 60 minutes away. The economic data 20 seconds away. Up a third of 1% on the Nasdaq. A really, really good IPO coming from Cerebras, based on the pricing anyway, and some 99 type 5s when you look at the earnings coming from Cisco. Just fantastic earnings from them, supporting this equity market. In the bond market, yields are high. We've had a hot CPI, a hot PPI, yields at 444 on 10s. With that economic data, let's cross over to Mike McKee for more. Hey, Mike.
Good morning, John. Well, retail sales coming in at about what was forecast. The advanced headline number up 0.5%. We're still waiting for the other things to drop, so I'll point out that initial jobless claims, basically at 211. That's up from 199, a revised figure from last week. Continuing claims, 1,782,000. That's up from 1,758,000. So no real change going on in the labor market there. And as we wait for the retail sales figures to slowly come out, import prices up 1.9%, a big jump there from 0.9 last month, but ex-petroleum up only 0.7. It's still a strong number, may affect the PCE inflation index, but a lot of that is gas. Okay, we've got some more numbers now for the retail sales. Ex-auto up 0.7%, and ex-auto and gas up 0.5%. The same story for retail sales control. That's the one we really care about. It was up 0.8, a revised 0.8, which is a tenth stronger than last month, but it drops in the month of April to 0.5. So I'll check on the basic components of all this and be back with you in a minute.
Mike, thank you, sir. Looking forward to your coverage of this story. Our coverage from a market perspective looks like this. Equity futures still doing okay on the S&P 500. Not a big move here on the S&P, the Nasdaq, and the Russell. Futures still positive. Going into the cash open, up a third of 1% on the S&P. Turn to the bond market. Yield's not moving much on the 10-year or the 30-year. The 2-year down 2 basis points, the 10-year down by 2 basis points. That's where we were heading into this. The 30-year holding on to 5%. When you look at these figures, it's not really going to move the story on too much. These numbers for April, for retail sales, they're good, they're decent. Slightly better than expected by some measures. Put it together with jobless claims, that's fine, that's okay. 211 on jobless claims. It's still a decent story to tell about the U.S. economy.
This isn't the economy falling off a cliff. It's not necessarily people going out and spending everything in the bank. At the same time, the upside surprise, the consistent upside surprises gives you a sense of just how okay people are doing. The idea that not only is it an upside surprise for the control group at 0.5% versus 0.4%, but the previous month was revised up to 0.8% from 0.7%. The upward revisions gives you a sense the trajectory is higher, not lower. People are absorbing the costs, even if it doesn't make them feel good.
It's not consistent with record low consumer confidence coming out of you, Mitch, is it? Numbers like that.
Well, people are worried about gas. There also is a difference between the average and the median, right? I mean, this is something else that we keep talking about because there is a lower income cohort that is seeing any kind of gain from either from wage increases or the one big beautiful bill completely eroded by higher gasoline prices. That probably is not captured in this rate in terms of retail sales. It's people who do have discretionary income that are going out and spending on clothes and Shake Shack burgers.
Mike McKee's still standing by. He's not buying Shake Shack burgers. Mike, they've got way too expensive. We can talk about that another time. Mike, you've had a second look at the numbers. What do you see?
Well, it is, as we anticipated, a gasoline story. Sales at gas stations up 2.8%. Remember, retail sales calculated on a dollar volume basis. If you take gasoline out of the headline number, the headline would be a 0.3 gain instead of a 0.5 gain. We do see some declines here. Auto sales and parts down 0.4%. Furniture and home furnishing stores down 2%. Clothing stores down 1.5%. And department stores down 3.2%. Now, much of that department store money probably went into the internet shopping craze. Non-store retailers up by 1.1%. And perhaps one of the things that we really want to look at here is that food services and drinking places, which we always note is a very discretionary item, we're up a strong 0.6%. So there are still people out there spending. Some of the categories have changed, but for example, food stores still up 0.8%, groceries up 0.7%. Some of that is going to be inflation, but people have not completely backed off yet, even though some categories are down.
Mike McKee, thank you, sir. Breaking down the economic data. If you're just joining us, welcome to the programme. Retail sales coming in slightly harder than expected for the month of April. The control group came in at 0.5%. The estimate in our survey was 0.4%. As for jobless claims, slightly higher than expected at 211, but take the 4-week average. The 4-week moving average on claims is around 204. 204 is incredibly low. That is good news for this labour market. That data is okay.
Yeah, we aren't seeing anything in terms of a warning sign from that. I will just say my big takeaway from this, electronics are up 1.4% for the April read, which gives me a sense that it is no longer discretionary to have an iPhone or to have some sort of smartphone. Seriously, I mean, at what point are people saying that is sort of a baseline purchase along with going out to eat at different restaurants with my friends?
It's a staple. I agree with you.
I think that that's the shift, right? Why buy another, dresser if you can go out and buy an iPhone?
It's a very expensive staple.
I'm serious. I actually think that that's part of it.
Nila Richardson of ADP joins us now for more. Nila, good morning.
Good morning.
We'll avoid that conversation. We'll talk about the data we just got, retail sales and jobless claims. Is this data doing all right? Is this economy okay?
The headline numbers are all okay. You look at those retail sales, impervious in some ways to recent shocks, impervious to downbeat sentiment. You have a jobs market that's still functional, still producing jobs, and you have wage growth that's still holding its own. The interesting part is underneath the surface always. So going a level deeper, just how much did energy prices impact retail sales? That iPhone is now a durable good, not something we switch out every 2 years. So there is some change in consumer spending. And then you got some data from the BLS saying that real wages actually edged down. They declined. And so you put all that together, yeah, it's a pretty good economy, but that doesn't mean there's not tensions underneath.
You nailed the one tension, it's real wages, the squeeze. You worried about that?
Yeah, and here's why I'm worried. So when we look at our data at ADP and we're able to match individuals over time, we're seeing a couple things. The first thing we're seeing is very robust wage growth. Even when we put divided into the bottom quartile and the top quartile of income earners, wage growth is robust. But here's the rub. There is this widening inequality gap. We're tracking it in real time. Last year, the wealthiest 25% made about 500 times what the lowest bottom 25%. I know, you raise your eye. It's
crazy.
A lot. This year, it's more like 640% more. So we're seeing this widening gap. And that's an issue because the wealthier, the higher income you are, you start saving, you start investing. Good for you. Not so great for the economy. Consumers at that bottom end, they spend more. And when you don't have that savings lever and prices go up, you stop consuming as much. And that is the concern when it comes to wages.
This has been the conundrum when we talk about this all the time. It really is an increasing issue, and you're seeing it politically, but you're not seeing it in the overall averages from economic data. At what point does it become more of a concern on the averages, not just a political problem, but a market problem?
Yeah, wage inequality is really just, it's a long-term drag on economic potential for the reasons. We are not a savings and investment economy. We are a consumption-driven economy. And if you have a significant portion of the new jobs, remember, a lot of jobs that are coming on are those low-paid, hourly working jobs. So our labor market is being fueled by low-paid jobs right now. And then you have those very same people who traditionally spend more out of their income not consuming as much because of higher energy prices. So if I could bottle this up in like a tagline, monetary policy is really concerned with core. Consumers are really concerned with headline. And this wage inequality hits right at that headline difference in higher income and lower income when it comes to spending.
What would help the lower income consumer more? A rate hike or a rate cut?
That's a great question. If you're in the bottom quartile, unfortunately, buying a house is probably not on your horizon. It's just too expensive now. So borrowing money, it would help with credit card fees. If you're putting more and more of your consumption in debt, or that would be helpful. But that's not the way to increase growth. The way to increase wages is through productivity enhancement. So if you can get an economy that invests in a way that creates more jobs and increases wages and standards of living, that's wonderful. But will, a couple basis points downward or a couple rate cuts actually lead to those changes? It would be hard to see that in real time.
Are we seeing the standard of living climb for everyone? This whole conversation, and forgive me for sort of digressing a bit, reminds me of an address from Margaret Thatcher to Parliament. And she went at the left wing of Parliament at the time, and she talked about the gap between the rich and the poor. And her accusation to people on the left in Parliament at the time was that the only thing you care about is making the gap smaller, and you don't care if the poor get poorer. Do you remember that line from Margaret Thatcher? Now, for me, the gap alone is not concerning, so long as everyone's living standards are improving. So if you see the upper income cohorts get a lot richer than lower income, but living standards for everyone climbs, you've got an argument to make that maybe we're moving in the right direction. Is that happening now? Has that been happening?
Actually, you uncovered a tension that I have, because you are seeing really robust wage growth even at the bottom quartile. So it's not that lower income people are not seeing their wages increase faster than higher income people. It's quite the opposite. The problem is it's still not enough, and you still continue to see this gap widening. If the gap stayed the same or narrowed, there's an argument right in line with Thatcher. But the fact that it's widening is problematic in terms of economic growth long term.
Nina Smart, it's good to see you, as always. Nina Richardson there of ADP. The problem is the price of everything, and the price of everything is too expensive for many people.
And right now, the wage growth that you're seeing at the lower end isn't compensating for the higher gasoline costs. In fact, it's eating up any kind of wage growth. So this is a reason why, the question of what would help them more, a rate cut or a rate hike, what's the bigger tension? Growth not being fast enough, or inflation being too high and crimping their standard of living? Unclear right now, and that ultimately is a tension that Kevin Warsh is going to have to handle.
Equity futures positive in the equity market going into the opening bell. Let's give you an update on stories worldwide with your Bloomberg Brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. So recapping the data we just got then, jobless claims coming in at 211,000 last week. That's lower than the estimates for 205,000 claims. Retail sales for the month of April rose 0.5%. That was in line with expectations, suggesting high gasoline prices prompted some consumers to temper spending. Cisco shares rising in the pre-market. The company reporting fourth quarter guidance that topped estimates by nearly $1 billion. Cisco also announcing plans to cut almost 4,000 jobs as part of a restructuring to focus on AI. GameStop CEO Ryan Cohen is planning to take his takeover offer directly to eBay's shareholders. This, according to reporting from the Financial Times. The report comes after his request to meet eBay's board of directors was rejected. And that is your Bloomberg Brief. John.
Ivani, thank you. Appreciate the update. Up next on the programme, we'll catch up with Julie Beale of Kane Anderson Rudnick on how economic uncertainty could end up boosting markets. Plus, AMH is in Beijing for the latest on that summit between the two leaders of the two largest economies on the planet, President Xi Jinping and President Donald Trump. Equity futures positive here by a third of 1% on the S&P from New York. This is Bloomberg Surveillance.
The problem we've got as an industry is when the government's overtax, and let's say they tax at 30 or 40% of net gaming revenue, what happens is it starts making it uneconomical for the regulated operators like ourselves. And then the customers land up going to the black market, and the black market don't pay tax, do whatever, and there's no customer, there's no responsible gaming, and the fiscals of these governments don't collect any money. So it's finding a balance between overtaxing and then not regulating. Anything from 15 to 25% of the net gaming revenue paid on tax is probably the right number. And when you start going above that, the metrics start becoming a bit more complicated for lots of the operators.
Tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
Transitions are important, and I think that, it is maybe helpful to have someone there to give advice. Here's how to be an effective chairman. Here's how to lead the committee. I still think it's important that it be a transition because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge.
That was Federal Reserve Governor Stephen Myron in his last broadcast interview as a Federal Reserve Governor on the situation with Chairman Powell staying on as a governor alongside incoming Fed Chair Kevin Walsh. Kevin Walsh, of course, just confirmed his first day at the Federal Reserve, likely in the next 24 hours. Equity futures right now, the S&P 500 firmer by a third of 1%. On the Nasdaq, up by a tenth. We're adding to all-time highs. There are some really bullish tech stories out there this morning. Let's get you a few of them with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with Cisco. Shares are surging nearly 15% in the pre-market. With this jump, it will be Cisco's biggest post-earnings jump since 2011. The company delivering a beat and a raise and saying that it is cutting thousands of jobs in order to shift resources to AI. And in another bullish forecast, it is raising its outlook for AI orders from hyperscalers from $5 billion to $9 billion in the next fiscal quarter, in the next fiscal year. Meanwhile, we saw clothing sales fall 1.5% in the latest retail report, but Canada Goose is bucking that trend. Shares are up 3.8% after the maker of those pricey parkas delivered a big revenue beat, topping even the most bullish forecast on the street. And we end on shares of Klarna. They are soaring 12.4% in the pre-market after the buy now, pay later firm swung to a surprise profit last quarter, a major turnaround from the nearly $100 million loss it posted a year ago. The results pointing to a consumer that's still spending, but maybe leaning more on those installment payments in order to do so. John?
Yahara, thank you. Appreciate the update. Some of the challenges in retail right now. Have you seen some of these names? Nike's down by 33% year to date. Lulu's down by more than 40% year to date. You want signs of a challenge right now in retail. Brutal stuff. Brutal for those names.
Yeah, it seems like right now it's a sort of shakedown, or shakeout, I should say, of the winners and the losers, right? Because you've seen some do very well. You've seen, for example, Walmart or Amazon, which have other types of venues. But Nike, get back to running. Lululemon, with a new boss and a question of how you're going to resurrect a brand that's come under competition from a looser trend, not necessarily the skin-tight pants, and also a lot of competition. I mean, these are some specific challenges in addition to the broader, more stressed consumer.
Be aggressive, don't apologize. That seems to be where success is found in retail right now. Think an American Eagle, aggressive, didn't apologize. Well, great success off the back of that. Lulu, too apologetic, too nervous about doing certain things. Nike, the same thing.
Well, American Eagle and Gap have both been very sort of edgy and embracing that in different kinds of ways. I think that Lulu has been beset by a host of different issues, see-through issues, as well as, you know, just trend issues. And Nike, of course, a real question about its strategy, sell to consumers, sell through some of these other brands. So there clearly are questions. I do think, though, you're seeing a bifurcation between the haves and the have-nots within retail as well.
Went to the World Cup, notably not seen anything from Nike at all. Saw a great Adidas commercial with Timothy Chalamet, fantastic commercial.
I did see
nothing from Nike. See if the next few weeks changes things.
Yeah, maybe they can come up with a rival or bring Timothy Chalamet on and have sort of the next segment of that soap opera.
That would be very cool. Let's see if they make that happen. I doubt they will. As we count down to the opening bell, Julie Bieler, Kate Anderson-Rudnick writing, investors need to be able to compartmentalize some of the news, some of the gloom from the main event, which is earnings growth. Julie joins us now for more. Julie, welcome. Earnings growth has been just so powerful. Do you just want to stick with it, stick with this bull market?
Yeah, I mean, I think you can stick with the themes where you have a lot of confidence that there's long-term durability to the growth. It's hard to get super, super enthusiastic about some of these semiconductor names at these valuations, or some of these industrial companies, especially in small cap, that have some exposure to what we see in the tech build-out and the data center build-out, but that generally are kind of commodity businesses. Those are the ones that I think we want to skip out on. But broadly speaking, this level of earnings growth, up and down market cap across industries, it's really broad, it's really robust, and it's thanks to no one in the government, let's be clear.
Within tech, and I'm not going to take the bait on that one, within tech, are you starting to see a rotation from just the chip players to others? We've been talking about just how much Oracle, Meta, Microsoft have lagged. What needs to happen there for those names to work?
I think that people need to feel a little bit more confident that there is going to be a return on investment of all of this CapEx. I think they're going to stay in the doghouse, and part of what's really difficult is you have to separate some of the names where they are generating a real return and they've expanded and broadened their business. That's Google. But Meta, I think people are not satisfied by the idea that they eat their own cooking, that the AI is what makes their ad business stronger. I think that's not good enough right now for investors. People want to feel like we're building real logical businesses on top of this, because right now, at the level of spend that we're at, Anthropic isn't making any money. They're bleeding money. So is OpenAI. So we know that the way these large language models are structured, they're not profitable right now. And I think people need to feel confident that they're going to be at some point.
Do you think that any potential IPOs later this year
made up terms for, you remember when WeWork was community-based or community-adjusted EBITDA? We can't have that. It has to really be kind of clean financials, that people have a clear path that we're going to be able to raise rates on these tokens and earn a real return. It can't just be endless negative earnings for the foreseeable future.
I wouldn't describe you as grubby, Julie. I'd never do that. Judy Beer of Ken Anderson Rudnick. Would you describe Judy as grubby?
Oh, of course not.
Absolutely
not. I think that was wonderfully said, wonderfully put, perfectly put together.
Programming note, a little bit later on this evening, look out for this. Ambassador Greer, Jameson Greer of USTR, on the situation over in Beijing, China. Conducting that interview, none other than Anne-Marie Hordern, on the ground in Beijing. AMH, welcome back to the program. What are you looking forward to a little bit later this evening?
I think we want to get some clarity from Ambassador Greer on exactly what was discussed between President Trump and Xi Jinping, especially when it comes to his portfolio, when it comes to trade. Already, in maybe a sign of goodwill, we've already seen Beijing have a number of licenses now lifted and granted to have more beef imported into China. That is definitely a sign of goodwill. But what else when it comes to U.S. energy and potentially that Boeing jet order? What else was discussed in terms of these purchasing agreements? And what's the future more broadly of this relationship? There's been a lot of talk leading up to the summit about a board of trade potentially lessening the tariffs on both sides when it comes to a lot of consumer goods worth $30 billion. So these are a lot of questions for him. And then, of course, I think what on top of everyone's mind is what happened in terms of the readouts. They are so different when you look at what the Chinese express as their main concerns when it's Taiwan. While the meeting was still happening, the readout came from the China side, how they said if this issue is mishandled, it could mean a dangerous situation for the bilateral relationship between Washington and Beijing, yet Taiwan wasn't even a mere mention in terms of the White House readout.
Anne-Marie, appreciate your time and looking forward to your coverage a little bit later. Get some rest. Anne-Marie Hordern over in Beijing, China, on the summit between the two leaders of the world's two largest economies, President Trump and President Xi. Whenever we get these readouts, there's always differences. That's not new. What's interesting about this to me, and Anne-Marie's talked about it throughout this morning, was just the timing of the Chinese release, that they just got ahead of things. Whilst the summit was still ongoing and made Taiwan a big feature of the media coverage around this event.
Yeah, and they've talked before about Taiwan being a priority for them. And nonetheless, they came out with notably strong language saying that this is the red line. I just want to make a programming note. Yesterday, Eddie Fishman came out with the 5 Bs. I got this right this time. Beef, beans, Boeing, Blackwell, and Board of Trade, because I'm doing better, John. And today, Erica Najarian came out with the I's. Yes, 100%. Iran and inflation. So tomorrow, I'm excited. You know, it's sort of the Sesame Streetification of surveillance. We can sort of have another letter tomorrow that can try forward the narrative.
In a serious way, did I?
No,
Surely not. Come on.
No, not at all. He was like,
feel
hopefully,
so bad
no, please don't. No, that was hilarious. It was very well put.
Stage is set for another rally. How are things looking? Only up by about 1/4%, but plenty of bullish news around tech once again.
The idea that Cerebras could come out with such strong pricing, the idea that we saw such incredible results from Cisco, regardless of some of the naysayers, the profits continue to be there, and as a result, people are looking at this as a haven trade amid myriad concerns, whether it's inflation in Iran or whether it's beef, beans, and Boeing.
Nice. And Blackwell.
And Blackwell.
And Board of. There we go. All right.
Do
better. Coming up tomorrow, Matt Miskin of John Hancock, Savannah Rajappa of SocGen, Erin McLaughlin of the Conference Board, and Scott Cronin at Citi from New York City this morning. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
A cidade estava sitiada.
Isso é o começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business
then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Oh, hello there. Just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is.
Now, we do not.
More science.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Another new record high yesterday, and futures are up this morning. 30 minutes until the start of the cash trade. I'm Matt Miller. Danny Berger is on assignment. Bloomberg open interest starts right now. Coming up, Xi presses Trump on Taiwan, warning of potential clashes if the issue is mismanaged. The issue of Taiwan, very key here. Also, tech key in this summit. The rally continues as Cisco soars on a strong forecast and AI-focused restructuring plan. They're doing better, so they're going to fire 5% of their workers. Plus, the biggest IPO of the year, AI chipmaker Cerebras raises $5.5 billion in its offering, but the market cap is still less than 1% of NVIDIA. In terms of the stocks that we're watching this morning, Cisco ripping on that earnings report, up 16% in the pre-market. It boosted its full-year forecast. It announced job cuts to focus more on AI. Reuters is reporting that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 AI chips. Remember, President Trump made an exception for the H200 chips, but the Chinese companies weren't buying. Maybe they will after this meeting. And Morgan Stanley issued a bullish call on Ford, saying the automaker's energy storage business could make a deal with hyperscalers soon. You don't see that reflected in today's shares, but yesterday they rallied 13% in their biggest gain since March of 2020. Now, Presidents Trump and Xi wrapping up the first day of their summit in Beijing with trade, Iran, and Taiwan all in focus. Xi said the talks laid out a vision for stable ties with the U.S., while Trump said relations would be better than ever.
The relationship between China and the USA is going to be better than ever before. Tonight, it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together.
After those kind words from President Trump, President Xi warned the U.S. the Taiwan issue must be handled with extreme caution and could lead to conflict if mishandled. Joining us now from Beijing is Anne-Marie Jourdan, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. So, President Trump very happy to be there. It's a great honor for him. But President Xi was pretty harsh out of the gate.
Yeah, well, out of the gate, when it comes to the bilateral meeting, after they had this very warm welcome, and I was there for that outside the Great Hall of the People, out of the gate, President Xi Jinping asked this question about really the competition between the world's two biggest economies, likening this to the Sidious trap, which basically means could an emerging power continue to emerge without conflict of an already existing great power? That was the question he started out in terms of the bilateral meeting. And as the meeting took place, and it went for about 2.5 hours, why Taiwan is really the big subject matter is because while the meeting took place, China media pushed out a readout from Xi Jinping saying that he brought up the issue of Taiwan, saying it was the most important issue in China-U.S. relationships, and if it's mishandled, it can bring this relationship to a dangerous place. Now, it's not unusual that a Chinese president would bring up the issue of Taiwan, but it is interesting that it was brought up in a readout while the two were still in the bilateral meeting, and then hours later, when we received the White House readout, Taiwan was not mentioned at all.
It is fascinating. What about Iran, Anne-Marie? Because there had been some communication that the U.S. wouldn't be asking China's help on Iran, and then I saw comments from Marco Rubio on the plane that indeed that would be part of this discussion.
Well, Iran was definitely part of the discussion, according to the White House readout of how the bilateral meeting went. In terms of how the United States saw it, is that Xi Jinping expressed his displeasure with the militarization of the Strait of Hormuz, as well as he doesn't want to see a toll when it comes to ships passing through the Strait of Hormuz or attempting to pass through the Strait of Hormuz, and that the two agreed that Iran cannot have a nuclear weapon. Clearly, China, though, is the biggest revenue driver for this regime. They buy the lion's share of Iranian oil. They recently told a number of firms that they can ignore the sanctions when it comes to buying Iranian crude. So clearly they have at least some indirect power here, or direct power in terms of money, in terms of their influence on Iran. So that was telling that this was in the White House readout as well. Really, the national security geopolitical concerns is what is making a lot of headlines. But one thing that was also very clear to me from the White House readout is that this administration wanted to really focus on the deals. And already, I think, in a sign of goodwill, you have seen China have new licenses, import licenses, renew them to buy U.S. agricultural products like beef. They have another day of meetings tomorrow. Potentially, we're going to get more clarity, a number of issues, like when it comes to chips. Individuals like Elon Musk and Jensen Huang are here. I know there's a lot of anticipation, potentially. Reuters had a report about NVIDIA chips that the United States is saying that they can sell into China. Well, that already was an issue that was resolved in January on the U.S. side. The big question is China going to allow firms to actually buy them?
All right, Anne-Marie, great to get you on the program. Looking forward to your interview with Bloomberg with U.S. Trade Rep Jamieson Greer later on tonight. Anne-Marie Horton there in Beijing. Now, speaking of trade, NVIDIA CEO Jensen Huang says the meetings in China went excellent. He spoke with Bloomberg's Colin Murphy in Beijing.
One of the most important summits in human history. And the two presidents, President Xi and President Trump, have such a wonderful relationship. This is an incredible opportunity for us to rely on the relationships to build a much, much better partnership.
Did you get any specific customers for your chips for the H200?
We didn't really talk about. I'm here to support the president and to represent the United States.
Those comments coming as Reuters reports that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 chips. Treasury Secretary Scott Bessent saying he is not aware of any new approvals for NVIDIA. Let's get more at Bloomberg Tech's Ed Ludlow. So, Ed, this is a pretty murky situation, right? And I know that the U.S. has already given NVIDIA clearance to sell some chips as long as it kicks back a certain percentage of that revenue to the government. Are there buyers for these chips?
Murky on the China side, right? So throughout this whole period of time where the United States has granted licenses allowing NVIDIA to export, technically, those generation of chips, Jensen Huang's always been consistent in saying when we negotiate these, we don't negotiate them with the Chinese government. We don't negotiate them even with any government agency. If China permits that group of companies to buy the H200, then the companies will place orders. And back at GTC, which is NVIDIA's own annual developers conference in March, Jensen Huang said on stage that orders have been placed. So this is mostly just an issue of chronology, because whatever comes out of the summit in Beijing, NVIDIA reports its fiscal first quarter 27 earnings next Wednesday. And either those orders are material and they'll show up and be disclosed, or they won't.
All right, so we'll see when those earnings are reported. In terms of what we know today, Cisco absolutely knocking the cover off the ball with its revenue forecast, more than $1 billion, stronger than the street had anticipated, and yet they're firing 5% of their workforce. So they're saying, we're doing so well that we're going to eliminate thousands of jobs.
I love that expression. I think you mean baseball, right? But I would interpret cricket. Basically, Cisco
There's no cover on a cricket ball.
There is a leather cover on a cricket ball, technically. Let's get to the Cisco print, which is orders of $9 billion just from the hyperscalers. $4 billion of that will convert into revenue that will show up in the income statement this year. And Cisco is proving that it is a part of the AI story. But the reason, not just the 15% gain in pre-market is important, but the sort of feel-good across equity markets this morning, which our markets group, right, in the wrap credits to the Cisco print, is important, is that Cisco's role in a data center is real. If the orders are placed, it means the data centers are actually being built. It does networking, which in layman's terms is all the cabling, all of the switches, and all of the routers that connect all the rows of servers inside a data center. If Cisco's really ramping up its outlook and saying that we're going to book real revenues from the hyperscalers on this, then all of that capital expenditure that we've been focused on for so long is translating now into projects in the real world. And that's something to certainly pay close attention to through Cisco's lens.
We're paying very close attention to Cerebras today, an IPO. I mean, it is incredible that they had more than 20 times the demand for the shares out. They were going to price them at 150 to 160. Now they're pricing them at 185, right? $5.5 billion, more than that they're raising. So it just sounds amazing. But then you compare it to the leader in the space, NVIDIA, and they have less than 1/4% of the revenue of NVIDIA.
Yeah, I mean, on a fully diluted basis, you know, a market cap based on where the IPO priced of about $50 billion on a fully diluted basis. They have a big order backlog, around $24 billion. And what you need to know about Cerebras is that it doesn't just do what NVIDIA does. It doesn't just provide the sort of compute in the context of the silicon. It does full stack, fully integrated a supercomputer. It takes on the capital burden of the hardware. So how NVIDIA works is NVIDIA brings the GPU and the other core compute components in the tray. But someone like a Dell would assemble that server for them. Dell has margins in the low teens. Cerebras has margins 40–41%. But it's never going to have margins at the 70% that NVIDIA does. What it does have is a system, a completely fully built system that has 21 times performance in terms of dollar per token for inference. That's running the AI model. And so that's the story they've got to convince the market, that they are outperforming NVIDIA just on the computer performance basis, and that they can scale and meet the backlog that's there. But you're absolutely right to frame this more of them chipping away at what is an NVIDIA monopoly still.
Ed, great roundup there. I look forward to your program. Bloomberg Tech kicks off at 11 o'clock. Ed Ludlow and Caroline Hyde co-hosting. Catch Ed's interview, by the way, with the CEO of Cerebras, Andrew Feldman. That's at 11:30 a.m. New York time. Now, retail sales advanced for a third month in April, pointing to some signs of consumer resilience despite higher gas prices. Let's break it down with Michael McKee, Bloomberg's international economics and policy correspondent. So, Mike, what do we know about, I mean, obviously gas sales are going to be great, so the dollar number on the headline will be big, but what do we know about the consumer's ability to spend otherwise?
Point, that retail sales are denominated in dollar sales, and so it made a big difference this past month. The consumers are still here, although we're getting more and more categories that saw declines, which is even harder to do when you have dollar inflation. Retail headline in about 0.5% higher, but you take out gasoline, which was up 2.8%, and you get a 0.3 rise. Import prices, which I don't have on here, were up 7/10 without gasoline and petroleum in it. And I just point that out because imported gasoline up by 19%. So gasoline having a big impact on all of this. The retail core, which is what goes into the GDP numbers, up by 0.5%. That's still relatively strong. Jobless claims, no change really, still showing a stability in the labor market. Now, the biggest movers in terms of retail sales, gasoline, as I mentioned, electronics and appliances were up 1.4%. I don't know exactly why. It's not like there was a new iPhone or anything out at this point. But clothing sales down 1.5% and car sales down 0.4%. That's because Matt always just leases his cars.
That is not true. I've never leased a car. I always buy them. Well, I finance them usually.
Well, anyway, this all leaves the markets wondering what's going to happen. Obviously, we're seeing the consumer slow down, but jobless claims not up. So what does Kevin Warsh face when he gets in? Markets are still saying he faces interest rate increases. You look at what Fed funds futures are forecasting, and they see nothing but rate increases in the months ahead. Now, those don't mean a lot of different increases, but they are different percentages in terms of things going up. And we want to remind you that Kevin Warsh, when he takes office, kind of still on the clock. Scott Bessent was on CNBC this morning, and he was asked about the president and his patience, and Bessent said, we might get a series, 1 or 2 more hot inflation numbers, but then I think we're going to see a substantial disinflation, and then I think he's going to be in a very good position to cut rates. So the administration still has its finger on the rate cut button.
Right. Well, they're pushing for that outcome. The question is whether the economy or the markets will allow it. Mike McKee is our chief policy and economics correspondent. Coming up next, Maria Waitman of State Street says tech is the only story in the equity market. Tech is Tina. She joins us next. And later this hour, Danny Berger moderates a panel on the AI-powered workforce with the CEO of Bridgewater near Bardea, as well as Cisco's chief people officer, we're still using that term, and Authentic Brand CEO Jamie Salter. They join Danny live from the Global Citizen Now event in New York. This is Bloomberg Open Interest.
Are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
The phone is, what's great about it is it's a well-developed gaming ecosystem, right? So it, folks know to find games there, but it's also a highly competitive gaming ecosystem. So its developedness gives you both that upside and that downside. But what's exciting is that now we are moving beyond the phone to the TV. So I mentioned like one of the big gaming areas we're going after. One of the big gaming areas we're going after now is social gaming experiences that will show up on your TV. So we are now announcing, we're going to announce here actually, that we're going to have these social party games that you can play on your TV with your phone as the controller. And it's things like, recognizable games like Boggle, you got Pictionary, we've got a Lego party game. We, basically are going to like unleash this with a bunch of creators, and they're going to go figure out stuff that we didn't even imagine that they can do with that interactivity.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg.
The NASDAQ 100 set for a third record high since Monday. Maria Waitman, State Street Global Markets Head of Equity Research, says tech is Tina. Writing, for us, there is only one story in the equity market at the moment. Tech, it is the only sector with strong and predictable earnings growth and margins resilience. Maria joins us now, I'm happy to say. And, you know, it's a little bit concerning, right? If there's only one sector, if there's only one industry in this market that's reliable, can you still be bullish on stocks through the end of the year?
Yeah, I mean, I have to say, we are very bullish. We have been bullish on stocks for a while, exactly for the tech story. It is the largest sector. It is the sector with the strongest earnings, and it's pushing prices higher. And I think it's kind of interesting to understand that there is still plenty of liquidity in the market, and it's just going through a very narrow funnel into the tech sector. No other sector is being bought. No other sector is showing strong kind of earnings growth. No other sector is performing. So it is all the money going into tech sector, and there's still plenty of money, so that's kind of very big support for equity.
Are the other sectors, though, looking particularly weak, the rest of the market? I mean, with the closure of the Strait of Hormuz, with the doubling of oil prices, with the China-Taiwan situation, are we looking through all of that, or is it actually affecting the rest of the companies in the S&P 500?
I mean, I have to say, I drew this chart yesterday, and it really surprised me. If you look at performance by sector, by country, by region since the start of the war, US is up, Korea and Taiwan is up, tech is up, and everything else is barely positive, right? So we have this kind of all stocks making all-time high, MSCI World, NASDAQ, S&P, everything. But actually, under the surface, it's just tech that is rallying. Nothing else does. So I think market is not really looking through Strait of Hormuz problem and kind of worsening economic outlook. It just tech strength masks everything else. So I think performance is not that irrational.
At what point, though, do oil prices, does inflation, do higher rates start to come through, or will they have no effect on the tech bull market?
I mean, I think tech is probably more resilient than any other sector. So I think you see a lot more underperformance everywhere else before we start seeing tech cracking. But I mean, yes, it's not kind of tech is not kind of unbreakable. So there is a set of circumstances when we start worrying. But I think there are lots of other kind of dominoes to fall before we start worrying about tech in a serious way.
You know, the point has been made, Maria, many times that the U.S. is energy independent to some extent. Obviously, oil is a fungible commodity, so it trades at the same price around the world. But natural gas, for example, that feeds and powers our data centers, we pay less for it than we did before the war. And in Europe, you have a serious problem when it comes to energy. Is that going to affect, you know, the bull market run that Europe showed last year?
No, absolutely. And I mean, we were kind of the opinion that European rally was a little bit of a like hope trade. So European stocks, of course, they are they're cheap, they're trading at a big discount, and of course, like profitability was weak. And there was this hope at the end of last year that overall economic growth is improving, and there are fiscal spending coming from European governments that can affect those earnings in Europe, and kind of market tried to kind of move away from expensive and wonderful US to cheaper European stocks. And but like what we're seeing now, and particularly with the Strait of Hormuz issue and rising gas and fuel price, very kind of energy-hungry European companies, they are struggling. So profitability in Europe is, I mean, Europe seeing the biggest downgrades of all regions in MSCI World right now. We see very strong institutional investors selling. So it kind of makes sense that this kind of the rotation out of Europe and actually the rest of the world into US, that's really what we're observing in our data set.
All right, Maria, great to get some time with you. Really appreciate it. Maria Waitman there of State Street saying tech is Tina right now, but that doesn't dissuade her from continuing bullish sentiment on the broader market. Next hour, we get an interview with the CEO of Invesco, Andrew Schlossberg. We'll get his take when he sits down with our own Katie Greifeld at the firm's New York headquarters on what comes next for the asset manager as we look at futures higher again after yet another record high for the S&P 500, for the NASDAQ 100. The bullish sentiment continues as President Trump meets with President Xi in China. You can see S&P futures up 0.2%. NASDAQ futures just barely up, but the small caps gaining as well. And we're not looking at such strong rates either. 441 on the 10-year right now as we see the price of oil, Brent crude, holding at $105 a barrel, NYMEX just over 100. We are going to bring you the opening bell in just 6 minutes' time. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurray.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story. This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Take a look at some of the movers this morning. StubHub reported better than expected first quarter results, reiterated its annual forecast, and the shares are soaring. Viking also delivered revenue that beat and announced a C-suite shakeup, and those shares are up 9%. Klarna posted a small profit as it looks to diversify its funding sources. Also a big gainer, the opening bell on the other side of this break.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the U.S. or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch
Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend. This is Bloomberg Television.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jemana Bersecci in Davos, Switzerland, and this is Bloomberg.
After an all-new record close yesterday, we're looking at higher futures this morning. The trade is just about to start. This is Bloomberg Interest. Open Interest. I'm Matt Miller. You can see S&P futures up. NASDAQ futures not really moving so much higher right now, even though the story today is tech. It's Cerebras. It's Cisco. It's Ford, which is an AI story as well. It's Blackstone Digital Infrastructure Trust. They're ringing the opening bell at the New York Stock Exchange. That is a big dude, and it's a big day for them as they IPO that. Down at the NASDAQ market site, you've got the AI darling of the hour, Cerebras, ringing the opening bell. 20 times oversubscribed in their IPO. They were looking to price shares at 150 to 160. They went to 185. They're raising $5.5 billion. So it's all about tech today. Cisco is another big story after coming out with earnings that beat and a revenue forecast for the quarter that was $1 billion more than the street was expecting. They're also going to fire thousands of people, reduce their workforce by about 5% because they're doing so well. As a result, the shares are up 13%. NVIDIA shares up 2.33%. Reuters reporting on NVIDIA that the U.S. has cleared around 10 Chinese companies to buy NVIDIA's H200 AI chips, but the U.S. has already made an exception for H200 sales to China, as long as they kick back a certain portion of that revenue to the U.S. government. Let's talk about all this tech madness with Stephanie Aliaga, J.P. Morgan Asset Management Global Market Strategist. She joins me here at the desk. Stephanie, great to have you on a day when there's like nothing else but AI, and I think it's really representative of this market. It doesn't matter that oil is twice as much as it was a couple of months ago. It doesn't matter that rates are higher. It doesn't matter what the Fed does, as Kevin Warsh is confirmed chairman. All that matters is this AI CapEx story.
And it's true that the economy is a lot soggier this year for a variety of those reasons. There are still these headwinds, but we just have this AI rocket ship strapped to our back that is getting us through all of that, at least when it comes to what matters for earnings. And if we think about what has changed this year around AI, 2026 is going to go into the history books as the year of agentic AI, the year that the compute math was just completely rewritten. And we are in the midst of a market where the demand for AI is just accelerating. It's hitting this wall, and the supply of it cannot nearly catch up quite as fast. But I think what is really fascinating, particularly this year relative to like 2023, when we were first talking about chip makers like NVIDIA, is that the market for picks and shovels does continue to evolve. And standard economics, what happens when you have high prices and hot demand? You invite newcomers. You invite different parts of the ecosystem to come in. So we've had these legacy chip makers getting a second life, right? You've had all this demand extend overseas. Korea, Taiwan just continue to be in the focus point. So I think this AI wave, like, it still remains concentrated in the broad sense of it all, but it has broadened out. And the reality is, even if the charts of some of these stocks almost look like meme stocks, the exceptionalism is in earnings, not just in runaway multiples. And that is just something that we really do not see quite often.
You don't actually see runaway multiples, right? We were marveling over the fact yesterday that Micron was only trading at 8 times forecast earnings. I mean, that's just nuts, considering the chart is absolutely hyperbolic. Are we moving past kind of the boom-bust cycle? Are we moving out of, is this more than just a demand shock and maybe a change in the long-term run rate of growth?
Yeah, I think the reality is these chip companies have always been very cyclical in nature, right? Very tied to overall growth. But we're seeing that break down a bit now that you have structural demand growth around AI. And I think the reality is, beyond just some of the US chip makers, if you look at Korea, okay, that is an index that has gone vertical this year. And yet their forward valuation is hovering around 6-7 times. And that's also mind-boggling, right, given what you've seen the performance. But I think the reality is, you know, investor positioning, particularly globally, but even for some of these other parts of the supply chain, hasn't been as heavy as it's been on companies like the hyperscalers for the last few years. And that repositioning may have a lot more room to run if we're going to learn that some of the parts of this value chain that are most exposed to very attractive economics, because, look, we're going to be supply constrained around AI for the foreseeable future, for at least the next few years, those companies can come in and really participate more in this market.
Does the participation really broaden out? As you point out, the market for picks and shovels is just getting bigger and bigger. I mean, who would have thought Ford as an AI play? Yeah. And honestly, the stock rallied 13% yesterday on the idea that its batteries could be used in data centers. And it's not a laughable idea, right? I mean, it makes a lot of sense. So does that success broaden out? Do we see second and third derivative effects?
I think, broadly speaking, in different sectors like industrials, materials, we see a lot more runway. But I think at the end of the day, this is like a stock-by-stock kind of decision. You know, what are the moats that they have? What is their capacity to ramp up supply in the face of demand? And, you know, what is their competitive, you know, moat in delivering that? If you think about something like advanced chip fabrication, like what, you know, Taiwan has been doing for so long, that requires expertise that has taken decades to develop. And so I think there's a real question of, like, some of the competitors that are entering the scene here is, what are their core operations and how profitable can they be in this new AI business venture? Because, yeah, there's a lot of demand to go around, but what really matters is, you know, how you can, you know, produce that supply, your sensitivities to supply chain risks, input costs, and so forth. So all of that still matters.
Is there anything you want to steer clear of? I mean, this year, we've learned a lesson about software, for example, as it relates to the private credit, maybe over-investment, because the concern is that AI eats their lunch. Now, that hasn't been decided one way or the other, right? But is there anything that you want to just be careful about right now?
Look, I think we're still quite bullish around AI over the medium to long term, but we do think investors should be buckled up. And when it comes to disruption, or what I like to say, AI is going to create this environment of heightened creative destruction. Creative destruction is nothing new, but it is something that's going to be happening a lot faster this time around. Some companies, some industries are more exposed to that. Now, in its wake, we're going to be left with more productive, profitable, AI-ready firms, but that process can be difficult, and investors today may not have all that visibility today to estimate who those winners are going to be. So when it comes to an industry like software, a lot of the legacy business models, they need to be rewritten and redone. Where I have some caution, though, is just saying that it's going to be the demise to the whole sector, because we simply don't know yet.
Right.
And I think, you know, some of the recent positioning changes that these companies have made and reinventing the SaaS business model, like if you're catering towards agents, that could be a much wider demand pool than humans who are limited in nature, only have so many hours in the day, and are only going to use your tool tens of times a day at best. You have an agent that could be hitting your Salesforce systems or whatever it is, like thousands of times a day. You know, that's a significant shift, but can you monetize that? And I think that's going to be a big question. So I will say when it comes to the software woes, like some of that is definitely justified. Investors don't like uncertainty. We have a lot more uncertainty, but I think medium to long term, you know, there could actually be a lot of good news from this.
It's not boring, is it?
Yeah, no.
Stephanie, great having you on the program today. Thanks so much for joining us. Stephanie Aliaga there of JP Morgan Asset Management. Let's get a check on what's going on in the markets about 7 minutes into the session here. We see the S&P 500 up 25 points. That's good for about 1/3 of 1%. This is the move screen. I think it's the most dynamic way to look at any index on the Bloomberg terminal. We have good breadth today. More than 310 stocks are gaining for 186 that are losing. You can see NVIDIA adding the most points. Obviously, a $5.5 trillion company. When it moves, it tends to bring markets with it. It's adding 15 points on a 2.5% move. Broadcom is up. Cisco is up. Applied Materials is a gainer. Lam Research is up. So you see these big tech movers here, among them JP Morgan. Caterpillar, I guess, could be now an AI company, and ExxonMobil. The gas price, the oil price, and also the power story is one that we've been following closely this year. On the downside, Apple and Microsoft, as well as Intel and Google, are losers. Not big losers. You do see Intel shares down 3%, but they've had a monster run of late. You also see Eli Lilly and AMD and Qualcomm down today. So that's interesting to see a couple of those chip makers, and Micron a loser, only 0.7%. Obviously, Micron has been ripping face year to date. And when we come, well, let's take a look at the industry groups here, I should say. IT, obviously the biggest gainer, financials and energy on the upside, healthcare, communication services, and materials on the downside. When we come back, I'm so excited to get to this story because Ford, obviously an iconic car maker, right? A big industrial, maybe an AI play as well. After Morgan Stanley says it's possible they could do a deal with a hyperscaler for their batteries. That's next with Keith Naughton. This is Bloomberg Open Interest.
Is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Quick check on what's going on in the markets. We just showed you the S&P with the gain now almost 0.5%. It's 74.77 after another high yesterday, another high for the NASDAQ as well, and it is up 0.5%, 29,510. Brent crude coming down a little bit, and it's at $105, while NYMEX is at 100. So that's bullish for markets. Time now for your top calls. Some of the analysts' action and focus this morning. First up, TD Cowen is upgrading Starbucks to a buy, saying its North America comeback is starting to work and should drive higher sales and earnings. The firm points to strong coffee demand, multiple sales drivers, and improving margins. Starbucks shares up 2%. Yeti's stronger profit outlook is drawing upbeat reactions from Wall Street. William Blair says investors have little to complain about as sales growth looks strong. Citi points to better than expected sales, but flags tariff pressure and weaker U.S. consumer as a risk, but the consumer doesn't seem that weak, and investors like the stock. It's up 9% in this morning early trading. And finally, Morgan Stanley says Ford will likely land a big deal soon to supply battery storage systems to hyperscalers. The firm sees this new energy business as a major growth driver that could be worth $10 billion as Ford builds more capacity and wins customers, supporting its shift into a higher profit business. Let's talk about that right now with Bloomberg Autos reporter Keith Naughton. He joins us out of the Motor City. And Keith, what an incredible story, right? Ford fights currents for years to build this battery factory with a Chinese supplier, and now they could be selling container-sized battery storage solutions to hyperscalers for billions of dollars. Tell us about it.
Yeah, as my colleague Lee Denning wrote this morning, Ford now appears to be an AI stock. This potential for doing deals with hyperscalers has given the market a completely different view of this sort of old economy, 100-year-old warhorse. They now see it as being part of the AI boom. And why not? They're going to build these very large, batteries for data centers and for utilities and for hyperscalers that they'll put on sale next year. And demand for that is off the charts, right? It's expected to double by the end of the decade.
Yeah, one of these, I was reading about one of these DC blocks that provide like 5.5 megawatt hours of energy. If that were cars, it would be like 50 or 60 car batteries, right? And if you do a deal with one big hyperscaler, like a gigawatt campus, that would be like selling 200,000 or 300,000 EV car batteries in one fell swoop. So that just shows you how big this market could be.
Exactly. So that would be a full factory worth of cars, right, Matt? So that's why people are so excited. Also, it's a very high margin business, over 20%. The car industry is a single-digit margin business. So Ford is still plugging away at electric vehicles. They have plans to launch an affordable one next year. But this really shows how they can pivot away from the weak demand EV market to the very, very high demand energy storage market.
It's interesting because I don't know if Ford was planning this or it just lucked into it because of a shift away from the full BEV market.
Yeah, luck has a lot to do with it, Matt. The plant where they're going to build these big batteries originally was planned as an electric vehicle battery plant. And of course, electric vehicle demand went south. So they They are converting it to an energy storage plant. They also are fortunate that they already had the licensing agreement with CATL, the Chinese battery giant, and they'll be making their LFP batteries. So they've just shifted that licensing agreement to the Kentucky plant where these big batteries will be built. They're also going to build smaller energy storage batteries for consumers at a plant in Michigan that will open this year that will also make EV batteries. So the CATL deal really gives Ford a leg up among all automakers who are trying to make this pivot to energy storage.
Yeah, in fact, you know, I always pull up the comp function on the Bloomberg to look at shares of one car maker versus another, or a company versus an index. It defaults to 5 years. Over the past 5 years, total return on Ford stock, 60%. It has now outpaced General Motors to be the biggest winner in a 5-year period, beating Stellantis, beating out BMW, Volkswagen, Mercedes. It's the strongest stock in 5 years of all the car makers that I looked at, not including Tesla, of course. Do you think we're going to see others follow suit here, Keith?
Yeah, I mean, General Motors, Stellantis have both said they are going to get into the energy storage business. They have to do something with this battery infrastructure that they devoted billions of dollars to. So they're trying to make this change over to energy storage because it's such a great growth business. You can get into it more quickly. The overhead is lower. You know, Ford will have this up and running by next year. They're investing $2 billion to get it going, and the returns could be very high. The analysts are saying it's a $600 million a year EBIT business.
All right, fascinating stuff, Keith, and really appreciate your reporting. Bloomberg Autos reporter, he covers Ford for us, Keith Naughton out in Detroit. Definitely check out his work on the terminal. There's a great story that Keith and Colin Murphy wrote about the deal that Ford did with Cattle as well, or CATL, in Marshall, Michigan. Also, check out my podcast with Hannah Elliott. It's called Hot Pursuit. You can search Bloomberg Hot Pursuit on any of the platforms where you find podcasts, and just relax and enjoy an hour of car talk. Coming up next, AI chipmaker Cerebras gears up for the biggest IPO of the year so far. This is Bloomberg Open Interest.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Open Interest. I'm Matt Miller. Quick check on what stocks are doing just about 21 minutes into the session. We're at all new record highs. It doesn't matter what happens with oil. It doesn't matter what happens with rates. It doesn't matter what happens with the Fed. All that matters is AI CapEx driving us to 74, 75 on the S&P, driving us to 29,500 on the NASDAQ. Check out, okay, we do have oil down a little bit. Brent crude off about 0.5%, and it's only $105 a barrel now. NYMEX is only 100. But you have huge gains on, it's really earnings driven by tech, right? Klarna up 10%, Viking up 10%, NVIDIA gaining 2.5% on hopes that some Chinese companies will order some of its lower level chips. Alibaba doing poorly. By the way, if you look at the summit and try and determine winners versus losers, U.S. companies, U.S. tech companies are really soaring today, and some of these Chinese companies are doing poorly. So maybe the U.S. is getting the upper hand in those trade discussions. Ford up 5%. Now the maker of my beloved Raptor and the Mustang GTD is a tech company making batteries, hopefully for hyperscalers. Morgan Stanley says they could get a big deal soon. And Cisco knocking the cover off the ball with its revenue outlook up 15% in the early trade. So these markets continue to soar as we get a new entrant, AI chip maker Cerebras, raising $5.5 billion. It's the biggest IPO of the year so far. Let's bring in our IPO, meme stock, and SPAC reporter, Bailey Lipschultz. So it's, on the one hand, it's an amazing story of oversubscription, right? I mean, so many, everybody wanted to get their hands on these shares. They were going to sell them for $150 or $160, and they finally got out of the gate for $185. What do we know about Cerebras?
Yeah, big rally, big expectations. As you mentioned, $150 to $160 was actually well above what they initially were targeting when they launched. Some of our colleagues broke news that ARM and SoftBank were actually trying to acquire the company just in the weeks leading up to the IPO, but there are lofty expectations, as you can see. Market value about $40 billion. We have had subscription levels north of 20 times. Talking to buy-siders, there was more than $10 billion of demand for this IPO before it even launched. We haven't seen that in quite some time, and I want to call out the obvious and say semiconductors are absolutely in fuego. So if the SOX is up 50% in 2 months, it makes the bankers' jobs quite a bit easier.
Of course. Now, on the other hand, we say biggest IPO of the year, right? But they raised $5 billion, and SpaceX is going to raise like 75, right?
It's still big. So this would
I know, but it's a 50 all in, $50 billion market cap. NVIDIA is still worth $5.5 trillion, right? I mean, their sales are less than 0.25% of what NVIDIA does in sales.
It's crazy, though, that in 2026, we're calling a $5.5 billion IPO small because SpaceX wants to raise $75 billion at a potential $2 trillion valuation. That is not normal. That's not normal. But this is...
We're getting older, Bailey. We're getting older.
As we mature, our relationships mature. But yeah, no, I mean, this is right in kind of in vogue with everything that's been working. We've been seeing alternative energy rallying, anything around AI. If you're a chip maker with the kind of thought that you could compete with NVIDIA, to your point, if we're talking about a $5 trillion company, $50 billion, $100 billion is a small fraction of that.
I mean, the fact is we've already seen companies like NVIDIA and the other hyperscalers, we've already seen valuations on non-public companies like AI, like OpenAI and Anthropic soar. Yeah. And investors are just looking for anything else, right? So even if it's a company that only makes 0.25% of the revenue in NVIDIA, they're all in.
Well, and this is a company that tried to go public a few years ago at a small fraction of this. They raised money privately not too long ago at a fraction of the 40 billion, potentially much larger than that, depending on how it trades. So we've just been seeing quantums of capital being plowed into anything around this. And again, it's one of those conversations that, are we going to look back 5 or 10 years from now and say, that was kind of interesting back in May of 2026? Or is it the start of a seminal event? And that's kind of the beauty of markets, as the bankers tell me.
All right, Bailey Lipschultz, great to have you on the program. Are you hosting Bloomberg this weekend?
No, not yet. That's August.
Oh, okay. I
so
heard
far
Christina Ruffini said, you know, Bailey's going to be on with me, and I was like, I'm going to tune in for that. By the way, you can also tune in for the CEO of Cerebras, Andrew Feldman. He's going to join Ed Ludlow on Bloomberg Tech at 11:30 a.m. Man of the hour. In the next hour, the man of the next hour, Invesco CEO Andrew Schlossberg joins us on this program on what comes next for the asset manager. He's going to be interviewed by our own Katie Greifeld and Resilient Health CEO Dr. Dinesh Nagda on cloud clinics and affordable healthcare, making deals with maybe your employer or your insurer. Plus, Danny Berger moderates a panel on the AI-powered workforce with the CEO of Bridgewater, Nir Bardea, and others. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From ABC News, I'm Chuck Severson. Slowing down a bit last month, American shoppers, because some of the money that would have gone into buying other stuff instead bought gasoline at higher prices. The Commerce Department says retail sales in April rose 0.5%. The month before, retail sales were up 1.6%. The number of people making first-time applications for unemployment insurance went up by 12,000 last week to 211,000, more than double what analysts were anticipating. It would be a terrible mistake, says Secretary of State Marco Rubio, if China tried to take Taiwan by force and the U.S. position on the island is unchanged. Rubio is at the Beijing summit with Presidents Trump and Xi. ABC's Mary Bruce in China's capital.
In their over 2-hour meeting, Xi delivering a stark warning to Trump about Taiwan, which Beijing claims is its own territory. According to China's state media, Xi telling Trump if the issue is handled poorly, the two countries will collide or even clash.
Concerns in the Middle East, with British officials saying a ship that was anchored south of the Strait of Hormuz has been seized and is sailing toward Iran. No claim of responsibility. There are also reports that another ship has been attacked. The one American who tested positive for the hantavirus has been cleared to move out of isolation in Omaha, Nebraska, after testing negative. Here's what is bringing both sides together. ABC's Jay O'Brien on Capitol Hill.
This is a rare bipartisan partnership between the top Republican and Democrat in the House, Speaker Mike Johnson and Minority Leader Hakeem Jeffries, aimed at combating sexual misconduct on Capitol Hill. It will be led by two female members of the House, Democrat Teresa Legger Fernandez and Republican Kat Kemick, with the goal of identifying reforms and solutions to make Congress safer for staff.
Poland's capital, Warsaw, registering its first same-sex marriage today, implementing court rulings. You're listening to ABC News. Search and rescue operations continue at the site of a building collapse in Ukraine's capital, Kyiv, with nearly a dozen people reported missing, says President Zelensky on a post on X. This after possibly the largest Russian drones and missiles attack overnight. Several deaths. ABC's Ian Pannell.
Putin's military striking energy, water and transport infrastructure, but also hitting residential buildings. The capital, Kyiv, repeatedly hit.
Polls show the Russian leader's approval rating falling. Facing growing pressure to quit his job, more than 80 lawmakers in his own Labour Party urging him to do so, British Prime Minister Keir Starmer. This over the party suffering historic losses in local and regional elections. In London, ABC's Patrick Reevell.
It now does look like Prime Minister Keir Starmer could well face a leadership challenge, perhaps today. The Health Secretary, Wes Streeting, who is widely seen as a key challenger to Starmer, announced his resignation, saying that he has lost confidence in Starmer and that Starmer will not lead the party into the next general election.
Our Patrick Reevell. Honda says it racked up a full year loss for the first time ever, losing $2.7 billion in the last fiscal year due to a costly electric vehicle strategy. Japanese automaker abandoned many of its plans for EV models, including those in the works in a joint venture with Sony. Chuck Sievertson, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Thursday morning from the Bloomberg Interactive Broker Studio in New York City. We are streaming live on YouTube. We're streaming live on Bloomberg.com/video. That's where you'll find us here. Scarlett Fu out today. John, I'm learning something, John Tucker, that there's something called a travel day. I wasn't aware of such a thing.
Who comes back from San Francisco and goes to work that morning?
Dude, back in the day, we would red-eye back and put in a 14-hour day. That's how we rolled back then. That's how I was trained as a kid.
Smallest violin.
Exactly. So there we go. Scarlett Fu out today. But we got Stacey Vanek Smith here, Bloomberg News. She joins us here. She's got the podcast. What's your podcast that you and your buddy
Max
did?
have? Everybody's Business.
Everybody's
from Bloomberg Business Week.
Yeah, there you go. So we got that. So Stacey joining us here for the next couple hours, which is a good thing. Coming up, we're going to check in with Michelle Jamrisko, Bloomberg News White House and National Security Editor. Get the latest on the Trump-Xi summit happening in Beijing. They just finished up. It's about 10 p.m. over there in Beijing. Sylvia Jablonski, CEO and CIO of Defiance ETFs, will get her thoughts on the markets here. Michael McKee, Bloomberg International Economics and Policy Correspondent. He'll talk to us about Kevin Warsh. Got confirmed as Fed chair. I think that starts tomorrow for him as well. Dan Ives, the dude's in Poland. I have no idea why he's in Poland. I mean, are there tech investors in Poland? Dan Ives, from Global Head of Technology at Woodbush Securities, is going to join us. We'll talk technology there. So we got a lot coming up in the next couple hours. Let's kick it off with John Tucker and a Bloomberg Business Watch.
All right, guys, adding to the records for the S&P 500 and the NASDAQ, this Bloomberg Business Flash brought to you by IBKR. Will the Fed raise rates by 25 basis points in June 2026? Trade your predictions alongside your stocks and options at ibkr.com/predictions. Last trading day, June 17th. So what's in the driver's seat? Take your pick. Retail sales advancing for a third month in April. So some signs of consumer resilience despite all the inflation that we're seeing. Best performing stock in the S&P 500 right now, Cisco, after their earnings came across, they're up 13%. Overall, the S&P 500, 31 points higher. That's up 0.4%, 74.75 in the index. The Dow up 292 points. That's up 0.6% right now. And the NASDAQ Composite Index, 98 points higher. That is up 0.4%. And Brent Crude, the active contract, down 0.3% right now at 105.35 a barrel. NVIDIA climbing for a seventh straight day. And remember, they report after the close of regular trading. That's next week, Wednesday. Who knows if they're going to sell more chips to China or not. 8 of the 11 major industry groups in the S&P 500 higher right now. Information technology is leading the way. Just talking to Bailey Lipschultz. He was going on TV. I'm like, is it Cerebrus or Cerebrus? He said, say it both ways. That way they can't accuse you of being wrong.
Okay, I go Cerberus, but I don't know.
They did file the registration work with the SEC, aiming for this, IPO. So who knows?
So it priced last night, and it's going to start trading today at some point.
At some point,
yes,
this afternoon, we think. So anyway, we'll keep an eye on that. As soon as the first trade comes across, we'll tell you about that. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tracy. Hi, Tracy. Stacey.
Yes.
I go by both. It's okay.
Stacey Bannock Smith.
Yep, absolutely. She's sitting in for Scarlet Food because Scarlett's traveling today. So that's what the TV folks they do. They travel.
Well, she's the smart one.
She's the star.
I'm the
numb nut that rushed back. But anyway, we got Stacey Bannock Smith, Bloomberg News, joining us here, sitting in for Scarlett. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As John Tucker's just reporting, we got some green on the screen. We'll take it. Let's see where some stocks on the move today. We do that with Bloomberg's Matthew Griffin. Matthew, what are you looking at today?
Well, Paul, I have not been traveling this week, so I've just been here watching the market. And we've got a few names that I think are worth hitting on. One is, of course, Cisco, worth diving a little bit deeper into what's going on there. That stock, ticker CSCO, up as much as 17% today in their best day since 2011. And it is the latest big stock move in the wake of AI-related layoffs. Cisco says that they are cutting no more than 4,000 jobs, about 5% of their workforce, to give them the focus and urgency that they need to win in the AI era. They are going to, at the same time, be making investments in things like silicon chips. The networking equipment company is seeing orders grow from these hyperscaler customers, the companies that run the largest data centers. So I would compare this maybe to something like Meta, cutting jobs as it invests even more in AI and being rewarded by investors for it.
Is the job cutting just to free up money to invest more in AI?
This is what it seems like. This is not something like, for example, a Block, which says we are going to actually have each worker be more productive because of AI. It seems like they potentially they want to direct their cash flow elsewhere. That seems like the implication as you read the blog post announcing this.
All right, what's the next one?
I've also been looking at another AI-linked name, Legence. This has been one of the sort of high-flying AI-related industrial names, but it seems like the rally might be stalling out there. That stock, ticker LGN, down about 5%, even after the engineering company raised guidance for revenue and profit this year. This company does installation and maintenance for things like HVAC systems they sell to data centers. That stock, though, it was up more than 250% from its September IPO, and it seems like, I was going through analyst notes, a lot of positivity there, but it seems like investors don't see a reason to bid the stock even higher from here.
All right, last one, Bullish.
Bullish, the latest crypto company to have a disappointing reaction to its earnings. The cryptocurrency exchange reported a widening loss per share, $3.85 compared to $3.05 in the quarter. Digital asset sales falling, and they attributed it, like a lot of companies, to falling Bitcoin prices. That's ticker BLSH, down 11% today.
All right, good stuff. Matthew Griffin, Bloomberg News, giving us some of the movers there. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. The news of the day and overnight was coming out of Beijing. President Trump meeting with President Xi in Beijing. They had a full day of meetings, capped off by a dinner. And we saw President Trump and the various CEOs leaving the Great Hall of China just maybe about an hour ago. It's about 10 p.m. Local time in Beijing. Let's get the latest reporting from day one and what we can look forward to day two. Michelle Jamrisco joins us, White House and national security reporter for Bloomberg News. She's down in D.C. Michelle, what are the takeaways from day one of this meeting between the U.S. and China?
Yeah, well, a lot of rhetoric on both sides. And of course, as you always is the case with the U.S. and China, different statements were released based on what they wanted to project out of that meeting, the 2.5 hours of the two leaders sitting down together. So we did get some good news first. It seems like there were some agreements in terms of Chinese purchases of oil and a willingness to kind of move forward on some of the rumored deals that they think that they'll purchase more U.S. agriculture, soybeans, and the like. But we haven't heard details on that front. What really took over a lot of attention, though, was the issue of Taiwan, where we knew that Chinese President Xi Jinping would bring up the self-governing island that they claim as their own, kind of pushing for a change in U.S. policy, which they probably won't get. At least the U.S. side has said they won't get, and also putting pressure on Trump to not move forward with a $14 billion arms sales package that many in Washington have actually kind of supported and pushed the president to make clear he supports as well. So that offered a little bit of a thorn in the day's events. We haven't yet heard, Trump himself has been uncharacteristically quiet, at least on the first day of the two-day summit. So we haven't heard directly on this issue, but we did hear from Secretary of State Marco Rubio, who tried to downplay the issue of Taiwan, saying it didn't come up prominently in the talks, and also saying U.S. policy toward that island is unchanged. So that still remains to be seen. So we're expecting to hear a little bit more about maybe deals that they have put together. Also on the tariff issue, I mean, the whole point of this was as a follow-on to the October meeting in Busan, South Korea. And so we haven't yet heard exactly how they'll move forward on trying to de-escalate the tariffs that they currently have. There have been some rumors, and Treasury Secretary Bessent addressed this morning, that they may kind of follow through on a sort of billions of dollars and removing tariffs on goods on each side that don't threaten national security. So there's a lot in the offing still as we look ahead to day 2 of the summit.
It seems like there are a lot of different issues at play of all kinds. What would a victory look like for the Trump administration right now? What are kind of some of the key wins that they might be looking for?
Well, I think you have to look at it from Trump's perspective. In his eyes, it's always, projection of strength and sort of getting the headline deals in there. So I think, we did expect to have the Boeing order move through. That was one I forgot to mention just now, but we will expect to have a little bit more detail on exactly how many planes China's intended to purchase. So he's got a number of CEOs on this trip. That's been a key facet of Trump's trip over there is, Tim Cook. I almost made the president's mistake there. Tim Cook of Apple and Jensen Huang and, others that have Elon Musk and others that have been all along for the ride to kind of project this, willingness on the U.S. side to do more business in China and from China's side to open up for more business. So that's at least where some positive factors could come in and positive factors and positive headlines could come in on either side. I think what U.S. wants to project also is that Iran is not a problem, Taiwan is not a problem, Ukraine is not a problem. And so to the extent that they can have some sort of agreement or some statements from Xi that show a willingness not just to look the other way, but also to kind of engage on some of these issues and perhaps offer some solutions or some support for what the U.S. wants to do to resolve the conflict in Iran, that would be helpful from the U.S. side.
Michelle, about 30 seconds left. What's on the agenda for tomorrow?
Yeah, well, I mean, a lot of things that I just mentioned, mainly, solving these sort of contours around the deals. I think we would like to see how that happens. Of course, they're set to meet again, a lot of more ceremonial events. A lot of this has been about the sort of pomp and circumstance, the projection of strength on both sides, showing the elegance and the stature of these two largest economies. So I think just a few events to kind of show that they haven't derailed talks and that they're on track for a somewhat successful, even amid low expectations, summit of the two leaders.
Michelle, thank you so much. Really appreciate it. Michelle Jamrisko, White House and National Security Editor for Bloomberg News down there in D.C. I guess we're going to see, Stacey, some deals like Michelle was suggesting, maybe a deal for jets from Boeing, maybe a deal for some of the tech companies, and that might be some, I guess, tangible takeaways.
Yeah, well, it definitely seems like a lot of businesses and different industries have a lot at stake right now, for everything from agriculture to, like you say, aerospace. So it will be interesting to see what emerges.
Yeah, I'm thinking about this, the U.S. farmers. I think they'd like to see some big soybean purchases, those types of things, which you sometimes get from the Chinese, but it's hard to determine whether they actually go through with it. S&P up 35 points, the Dow up 300, the NASDAQ up 125. So Equity markets are moving here. Oil, global oil, absolutely unchanged on the day, steady. So that's probably a good thing. We'll have more coming up. This is Bloomberg Good Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. Well, right now we are pushing higher for the major averages, adding to the record close for the S&P 500 up 39 points. 0.5% higher, 74.84 the index. The NASDAQ Composite Index up 155 points, and that is a rise of 0.6%. Dow also higher, up 294 points. That's a rise of about 0.6%. 49,987 on the index. Well, Cerberus making its public debut at the NASDAQ. The ticker symbol CBRS. Now, right now, shares indicated to open at 350 buckaroonies.
Nice job.
Yeah, this is priced at $1.80. Now let me $185. When you have a mispricing like that, is that like
it happens?
Is that a good thing or a bad thing?
It's great for investors that bought the deal. It's not good for the company who's leaving money on the table. Maybe.
Okay. Well, Cerberus Systems raising $5.55 billion in the initial public offering. they drew orders for more than 20 times the number of shares available. Thus, you get that discrepancy there. Right now, 8 of the 11 major industry groups in the S&P 500 are higher, led by information technology, and that, of course, is where the semiconductors live. The SOX, the Philadelphia Semiconductor Index, up about 0.6% today. And I always love to say, the company that was founded on love. Yes, Cisco Systems, jumping by the most in 14 years. They had a better than expected sales forecast. Also announcing plans, unfortunately, to cut thousands of jobs. Best performing individual stock in the S&P 500, largest maker of networking equipment, and they're at this point trying to show they're successfully pivoting to the AI economy. Yeah, the founders, Lenny Bosak and Sandy Lerner, husband and wife team at Stanford, founded the company. They founded it because they wanted to find a way to communicate on their computers with each other because they were at different ends of the campus. They wanted to send their little love letters. Yeah, no, they physically got down into the sewers to run cables, the two of them at Stanford, and that's
the beginning of Cisco.
And now they're divorced. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Stacy and Paul.
Very good. John Tucker, thank you so much. We appreciate that. Stacy Vanek-Smith sitting in for Scarlet Food today. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker studio, streaming live on YouTube as well. Stocks ripping here. That Cerebras deal, I mean, you know, that just brings you back to some times of yore when these stocks would just open up huge on the IPO, and you bring a AI stock to market for a market that's, starving for AI pure plays. Boom, there you go. So perfect timing. We'll see how this thing trades here. Sylvia Jablonski joins us here, Chief Executive Officer and Chief Investment Officer for Defiance ETFs. So Sylvia, let's start there. What is kind of the AI play, do you think, in the marketplace today? Because, I mean, when this thing first started 3 years ago, it was just like, buy the chips, I guess, the NVIDIAs of the world, and that's all we needed to know. Now it seems like the market's trying to discern some winners and losers. How do you guys think about it?
Yes. Good morning, Paul. It's hard to beat that last story, by the way, of going into sewers and connecting cables.
I know, he brings it out
for a love story, but we'll try here. Yeah, I think you're exactly right. I think when, you had that ChatGPT moment and all that everybody knew about AI was that, you should buy some chip companies, right? And so the beneficiaries of that were obviously NVIDIA, AMD, maybe Microsoft because of the ChatGPT moment. But AI has just changed and morphed so much. So to your question, what is AI now and why is it interesting and where is it going to go? I mean, it's going to go in so many different directions, right? You have AI infrastructure, you have the picks and shovels, you have connectivity, you have space, you have photonics, you have memory. I think the opportunities to invest in AI are now endless. And to your point, this is why, you see this new pure play API coming to market and you see the excitement around it, right? I can only imagine what's going to happen to SpaceX, by the way, because of what we're seeing here. But it's just, there's just so much demand and appetite for this sector right now.
It seems like the whole economy in certain ways or the markets are almost unstoppable despite what happens in the rest of the world, largely because of AI. Is there anything that could slow that down, or are we just on kind of an unstoppable climb right now?
Well, I think it's going to ebb and flow like anything else, right? I think that there's so much excitement right now around AI and around some of these themes. And so you're going to see periods of time where the stocks run up around the momentum in the headlines and the belief of or hope for peace around it and stability and geopolitics and things like that. But what could kind of take it off of its path? It is just that, right? I think if we get any kind of news around a pickup or reignition in Iran, or that this is going to last much longer than we suspect it will, that's going to feed into markets. That'll feed into the psychology of markets and investors. That'll feed into inflation. It'll feed into the consumer's, balance sheet and things like this. So I do think geopolitics play a huge role.
What is optical connectivity, and how does one play it?
Yeah, so that's the idea of, in order for AI to work and in order to meet all of the demands, you essentially have to have scale for energy and essentially have ways for data to move. And that's basically like these companies like Coherent and Lumentum that can essentially move data through, the use of lasers and things like this. So it's just another way to actually process data, move data from point A to point B, and to be able to build out these technologies. So it's becoming, almost like a subsector of the AI trade along with memory.
It seems like there are a lot of IPOs that are expected to be just huge this year, most of them related in some way to AI. Is that, how are you expecting that to play into the markets and investing and how the rest of this year plays out?
Well, I think the great thing about this is that it's going to give investors loads of new opportunities to invest in for tech and for the future of tech and disruption and things like that. And they'll have those opportunities in different ways. So for example, I think you'll have a lot of AI names come out and investors can either buy that stock, shortly after it IPOs. If they're lucky enough to get an allocation beforehand, that's great. But and if they kind of wait a little while, you'll see it picked up in a bunch of the ETFs out there, right? So I think that if you look at the AI powered infrastructure ETFs, you'll see some of the pure play ETF AI stocks in there. I think if you look at the different connectivity and space and satellite types of ETFs, you might see some of the space names picked up after they IPO. So I think it's just going to open up a huge channel of new investment opportunities for investors. And it's incredibly exciting, right? It's moving technology forward.
Sylvia, thanks so much for joining us. Really appreciate it. Sylvia Jablonski, Chief Executive Officer and Chief Investment Officer at Defiance ETFs based in New York. Red headline crossing the Bloomberg terminal. Ford shares climbed 10%, bringing two-day gain to 25%. I'm like, what's going on here? And I look at the news that Bloomberg has. Morgan Stanley yesterday came out with a report highlighting Ford's energy storage business and the potential tie-ups with hyperscalers. So I guess, Stacey, if you're looking to juice your stock, I guess we've all kind of learned if you can get AI in your story,
I feel
somehow that's the play.
Everybody, even shoemakers, are now turning to AI for money. It's the growth strategy of 2026.
Yeah, so I mean, but this is Ford Motor Company. We all know what Ford Motor Company is. We all know what the growth trajectory is of that business. We all know what the challenges are. So for a company like that, so well known, so well owned, to have that kind of trading move. Again,
you're going to
in 2 ways.
Use your F-150 to power AI?
I know.
I think it would take a lot of Ford F-150s to power AI, which is part of the problem.
Got me for a week to drive the F-150.
Oh, that was cool.
The electric F-150. I'm not a pickup truck guy.
Did that really work?
Oh, it was awesome. It was
Was
awesome
it?
truck.
Did they have I heard they have a sound that there's a pedal where it can sound like you're revving the engine even though you're not.
Yeah, I didn't do that, but I don't know. I'm not an EV person. I'm not a pickup truck person. By the way, I worked on Wall Street. I don't drive pickup trucks, as all my colleagues would tell me. But it was awesome, that pickup truck. But anyway, Ford up 25% in 2 days. How about them? So good stuff there. I think we're going to get a new Fed chairman tomorrow.
I think so. Yes, Warsh was confirmed, and it looks like all systems go.
There we go. Michael McKee, International Economics and Policy Correspondent, joins us. So, Mike, it looks like Mr. Kevin Warsh was confirmed by the Senate. What are next steps to get him in the Fed chair?
Well, we got to check AI. I figured I'd work that into the conversation. The next steps are the Senate, which has probably already happened, sends down a report to the White House that he has been confirmed, and the president signs a commission that officially makes him chair.
Okay.
The problem is the president's not here right now. So nobody's quite sure exactly what the timing is going to be. It could be that they wait till Trump gets back on Saturday and then he signs it, and Monday they swear him in.
Okay.
It's not a big deal. Powell technically is chair until midnight Friday, and then he could serve as chair pro tem over the weekend if something terrible happened. But at this point, Friday or Monday or even Tuesday are possible, but it is happening. That's the bottom line. I don't think Kevin Warsh is a pickup truck guy either.
Probably not, yeah.
We have seen this week a lot of not great inflation news. What kind of situation is Warsh walking into? Because there are very clear expectations. He's supposed to go in and cut interest rates day one.
He's walking into a not good situation because he can't cut rates now. The rest of the committee won't vote with him on that because they are starting to get concerned not only at the level of inflation now, which they really can't do anything about because it's as long as it's oil supply, they can't open the Strait of Hormuz by raising interest rates. But they're worried about the fact that the inflation rate has been above the 2% target for 5 years now and doesn't seem to be making progress. So the idea of cutting rates is not a particularly good one. And also, the markets, I would imagine, would not let him. When we saw the reaction yesterday to the CPI, and now we're selling 30-year bonds at a 5% rate for the first time in how long?
Yep.
So he's going to have to wait a while for that. The question is not so much whether Kevin will wait a while and have patience as whether Donald Trump will have patience. Now, people have asked me, how's Warsh going to react to Trump? And I think he will humor him, but do the right thing. You remember that Warsh now has a 4-year term, and Trump's only got 2 years left. So he'll be chair when Trump is gone, and he also has a 14-year term on the Fed. So unless the Supreme Court decides that the president can fire anybody on the Fed, which legal experts don't think is going to happen, then there's really nothing the president can do to him except say nasty things on social media, and you can always delete your social media.
Right. Mike, about 30 seconds left here. Inflation, back half of this year, are we going to see a really negative surprise, do you think?
Well, I don't think it'll be a surprise. What analysts are saying is we're going to see negative numbers for a while yet because the supply chains are so disrupted, and there's nothing on the water right now in terms of oil. And so even when they open the strait, it takes a month to get there. So prices are going to be elevated for quite some time, and that's just going to keep being reflected in the data.
That's going to be tough politics, boy, I would think, especially as we go into these midterms. I don't know what the calculus is there, but that's going to be tough politics, I would think. Michael McKee, International Economics and Policy Correspondent for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. And looking at crude oil here, right here, WTI crude oil, Brent crude, pretty much unchanged on the day. We got Brent around $101 per barrel, and we've got Brent around $105 per barrel. So a little bit of stability out there as maybe global focuses shifts from the Middle East over to Asia. And we've got, again, a little bit of green on the screen here today. The S&P is up 37 points. The Dow is up 140 points. Coming up, Dan Ives, Global Head of Technology Research at Wedbush Securities. He's going to talk to us about how important it is for these tech companies that made the trip to Beijing. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. And let's start off with Cisco helping push the market higher. Up 14% right now. Shares of Cisco 13.9% to be exact after the earnings report. Best performing stock in the S&P 500. The S&P 500 adding to its record close right now 44 points higher, up 0.6%, 74.88 on the index. NASDAQ also adding to its record close from yesterday. NASDAQ Composite Index is up right now 182 points. That's a rise of about 0.7%. The artificial intelligence chip maker, data center operator, Cerebras Systems, shares indicated to open now at $380 apiece. So if my math is right, that's 105% above the initial offering price of $185. As you mentioned before, Ford becoming kind of an AI stock, I guess. Shares of Ford right now, they are up 8.5% with the hype over the pivot to energy storage. So Jim Farley, the CEO, said yesterday that he said this today, actually, that the automaker already seeing strong demand for the energy storage batteries that are going to go into production late this year. They're actually investing a couple $2 billion to get into the energy storage business. They're converting a factory in Kentucky from making batteries for electric vehicles, I'm going to give up on that, to producing large energy cells for the storage business. And yeah, it's just like energy at night is so much cheaper, so why not load up on that at night with your batteries and then run your house and your air conditioner that your kids like to put on even when it's winter during the day. So anyway, that's that story. The nation's biggest commuter rail line, I got to add this. If you live in Iowa, you don't care, but the Long Island Railroad could be striking as soon as this weekend because the LIRR, the biggest commuter rail line, and the MTA, they can't seem to agree on a wage package. So
the railroad, as we call it here in New York. All right, John Tucker.
Book your hotels now, kids.
Absolutely, or see about the ferry service. John Tucker, thank you for that. We got Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube. All right, you're a technology analyst. You follow technology companies. So where do you go? Poland. Dan Ives, global head of technology research at Wedbush Securities, finds himself in Poland. I'm not even going to ask. Dan, what I want to get to is it's seeming like half of the leadership of Silicon Valley is with President Trump in Beijing as we speak. What do you make of it?
I mean, look, it's a pivotal moment for AI and tech because it's about being able for NVIDIA to sell their chips into China, but also just more of an opening, in China, which is important for Tesla. It's important for Apple. It's important for chip makers. And look, this is a moment in time where it's important that when they come back from that trip, that it's been a huge step forward. And I think it's going to be another leg up in this market. And you're seeing it from the godfather of AI, NVIDIA, today.
We've been talking this morning about how important AI and tech are to the economy right now. They are hugely fundamental. How important is this summit for tech and AI in the U.S. right now?
I think it's really like a grand opening to what could be a next chapter of AI. Because when you think about it, the one black cloud over the AI trade has really been China. Raw materials, chips into China from NVIDIA. When you start to clear this path and this passes and you get the green light, I think it's another leg up. And what that means is more data center build out, more chips, and again, for the first time in 30 years, U.S. is ahead of China when it comes to tech. And that's very important in terms of the global market is more and more you're going to own U.S. tech stocks.
Dan, I guess this trip highlights once again kind of the change in power that we saw at Apple with Tim Cook giving up the CEO post, but retaining the chairman post. And I think as you've told us before, part of his responsibility is managing the relationship with China. Just give us a summary of kind of how that stands right now.
Look, if Cook has been 10% politician, 90% CEO, he's now probably 90% politician, right? I mean, that's a huge part of his value because he has the ears within DC from Trump to others. And that's so important for Apple as it navigates the political landscape. And China, look, China's hearts and lungs, that 20% iPhones, as well as, you know, where the massive amount of production happens with tariffs and everything else. It's not coincidental that Cook is on Air Force One.
Are there any specific deals or announcements that might come out of this summit, or is it more of a general breaking of bread?
I think it's more than a breaking of bread. I think it's about the official green light for NVIDIA to sell chips into China with no caveats. And I think Jensen, he's the biggest poker chip there because that's really what China wants. I think when you see an opening of China for businesses, I think this is really about robotics because right now China's leading in robotics. The big area, obviously, Tesla's getting into in terms of Optimus and humanoid robots. And it's very important that you have an opening of that market for U.S. to compete rather than just China winning in that market.
Dan, it's become, I guess, increasingly clear over the last 4, 5, 6 years that there's a technology Cold War between China and let's call it just the West. Is there any way to change that, make it less difficult for both sides? How do you see that playing out?
Look, I think, Paul, the problem is that it's a two-horse race, right? I mean, Europe, you know, where I am today, I mean, they continue to be stuck in regulatory data privacy and really nowhere when it comes to AI. But then you look at Middle East, India, they're trying to be obviously, you know, the number 3 players. But that's also why, like, U.S. needs China, China needs U.S. when it comes to the trade. Now, look, it's an arms race that's going to play out, and you're going to kind of see a splitting of these two powerhouses when they go after other markets. But it's a true fourth industrial revolution that's playing out. And U.S. and China both know no one wants to mess that up relative to, we continue to believe, third inning, top of the third, one out in this 9-inning bull market.
Hey, Dan, you know better than anybody, and plus you're in Europe as we speak. Other than SAP and maybe 1 or 2 other companies, there is almost no technology in Europe. They've missed the last 50 years. Are they going to miss AI as well?
Look, I just spoke at this Impact conference in Poland. You have people from all around the world speaking. I mean, that's a big topic because, you know, in terms of Big Brother privacy, worries about, you know, what we've seen from a technology perspective, it's taken Europe many years behind where everyone else is. And I think there's a huge battle going on between innovators, entrepreneurs, because otherwise, if they don't use privacy and some of the regulatory, you know, Europe's going to miss out on this. And you'll see a lot of entrepreneurs and innovators move to Middle East, U.S., you know, and obviously other markets. But I believe if I'm betting on a country that's going to break out of this, it's probably Poland. I think they're the one that's kind of showing the most kind of, you know, maybe vision when it comes to AI.
Dan, thanks so much for joining us. We appreciate you taking a few minutes out of your travels over there in Europe. You know, when I'm marketed in Europe, I go to, like, I don't know, Frankfurt, Paris, London, where the money was. Dan goes to Poland, but obviously speaking at a conference over there, and they might have some potential there for AI. So we appreciate getting a few minutes of Dan and I's time there. But it just seems like, you think about technology, it's been such the defining part of life for all of us, for the last 40 years. You think about hardware and software, and Europe just did not participate.
Well, I think for a long time they had some older industries like, you know, SAS in Germany. I think it was became such a big manufacturing powerhouse. But I mean, there's Mistral, but otherwise AI is, and it's harder and harder to get in. I think it gets more expensive.
Yeah, it just seems like how they can't. It's just amazing how you look at the stock markets over in Europe. You know, there's very little technology in those, and that's why they traded a much lower multiple, and why their performance has historically lagged that of the U.S. stock markets. But you think about AI and how transformative that's going to be, is currently being, and you just don't see a role for Europe at all. And it's just amazing to me. And Dan was, you know, suggesting some of the regulatory frameworks, the concerns about privacy, and that's kind of held them back. But it's be a shame if they don't participate in some of this growth associated with AI. S&P 500's up 50 points, the Dow's up 250, and the Nasdaq's up 214 points. That's 0.8%. We'll have more coming up. This is Bloomberg.
is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Given the turmoil coming out of the Middle East, a lot of folks or a lot of companies are wondering kind of how that's going to impact their business. One of those industries is generally kind of the travel business. Or people change their travel habits given what's going on out there in the world. And our good friends at Bloomberg Intelligence, they survey folks out there in the marketplace to figure out what they're doing and how that may impact hotels, cruise lines, all that type of stuff, airlines, that type of thing. Joni Lurie, Senior Credit Analyst for Bloomberg Intelligence, joins us here. Jody, what's your latest survey tell you about, maybe as we kind of head into this summer travel season, how people are thinking about how they might travel, where they might travel? How's that looking?
So I don't think you'll be surprised to hear this, Paul, but we are seeing some of the effects of the Iran war, the energy prices, enter our survey data. So, for example, personal safety is a concern among about 2/3 of survey participants, and that's the highest level since we started running this survey in December of 23. So that's not so surprising. What is surprising is how resilient the consumer has been, at least in terms of increasing budgets, in terms of planning to increase budgets, and in terms of still traveling despite the backdrop. That said, we are seeing a little bit of a bias towards domestic over international, which again, I think given the climate, given the Trump administration's stance on immigration and all the sort of components of that, the geopolitical risk, it's not so surprising to us what we're seeing, but it's very evident in the data.
I mean, obviously, we're coming up on the big travel season in the U.S. summer. How do you expect that to start impacting all of the businesses that rely on the travel industry? I mean, if people are going domestic, that could be positive news, but also gas prices are way up.
Sure, Stacey. So I think we're seeing still that people, despite knowing that inflation is a big factor, they're still planning on increasing their budgets. And so I do wonder at what point we start seeing a shift in terms of how people travel. One of the things that came out of the survey is if costs exceed budgets, they're willing to cut back on accommodations. So going for not as luxury accommodations, but they aren't willing to sacrifice activities and experiences. But what we are seeing, though, even so, is that things like outdoors and national parks are high up on the list in terms of where people are traveling, as well as beach vacations. Now, even marrying that into the conversation, we are seeing that Mexico and the Caribbean have decreased in terms of where people are traveling for the second half of the year versus what we saw in November. So we are, there is sort of a give and take in this scenario. Are people going to the Jersey Shore over the Caribbean? I'm not sure.
You know it. Come on down to the Jersey Shore. No problem at all. Hey,
Atlantic City finally getting the boom.
Exactly. Talk to us about the World Cup, Jody. There's been some reporting that the World Cup is a little underwhelming from the hotel perspective here, maybe Airbnb as well. What are you hearing from the companies you cover about the World Cup?
Yeah, so it depends on the company you're talking about. So some of the companies, from the gaming companies to the hotels, are commenting that they are seeing a little bit of an uptick in some of their markets. And what's so interesting about the way that the World Cup is run is just how North America it is, right? You're talking Vancouver, you're talking LA, you're talking New York and Philadelphia, you're talking Mexico. I mean, there's so many areas in which the World Cup is going to be penetrating the North American landscape. But I'm curious to see how much of that is going to equate in terms of travel budgets and people going places for it. You are seeing, just anecdotally, I am starting to see locally some of the promotions happening at restaurants and at different sort of attractions as we lead into the World Cup. I'm not sure what that's going to equate in terms of actual dollars spent by people as they sort of go to the matches and celebrate it. But we do have some survey data that it is mixed. We have some people who are prioritizing sporting events over vacation, but by and large, we aren't necessarily seeing that that's the top priority for how people are going to spend their vacations for the second half of the year.
So you mentioned that people are kind of switching to domestic. Overall, how is international travel looking right now? Are we seeing it decrease a little bit? Is that maybe part of why there's a little bit of softness around the World Cup bookings?
Correct. Yes. So, Stacey, I mean, I think more so than the World Cup bookings per se. I think it's just we're seeing a decline in terms of travel internationally overall. We're seeing fewer people planning on 3 or more vacations or 2 or more vacations internationally than we did in November. So that's a big sort of cutback, right? And then we're also seeing that the key places that were, attractive spots going into this year, including Canada, including Italy, including Portugal, Japan, all of them, Dubai, of course, all of them are sort of seeing a little bit of a decline from November in terms of locations that people are planning on traveling to. Now, what is surprising is the UK actually bumped up in terms of priority of where people are planning on traveling next year. I don't know if that has to do anything with, USA 250, so people feel celebratory and want to show our independence for 250 years.
Yep, I don't know. I was around for the bicentennial, kids. That was big when I was 9 years old. Jody Lurie, thanks so much for joining us. Jody Lurie, Senior Credit Analyst for Bloomberg Intelligence. Red headline crossing the Bloomberg terminal. This is from President Trump. Xi offered help on Iran, pledged not to send weapons. So there you go, social media posts from President Trump. So we'll have more on that coming up. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The other hour of Bloomberg Intelligence starts right now.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
All right, Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Coming up in this hour, we're going to check in with Mara Shore. She's a senior equity analyst at Columbia Threadneedle. Get her thoughts on retail sales. Tyler Kendall, Bloomberg Washington correspondent. Get the latest reporting on the Trump-Xi summit. Again, we just had a tweet from President Trump saying that China pledged help on Iran, so we'll get some latest reporting there. Ruben Hovasanian, Managing Director, Generalist Portfolio Manager at Fixed Income Group, will get us his thoughts on the markets. And then at the bottom of the hour, we're going to have a simulcast with Bloomberg Television. Andrew Feldman, he's a Cerebras CEO. Remember, that company priced its IPO last night. Hasn't begun trading, but it's showing that it might open at twice the price it was priced at last night. So the CEO is going to join D-Tech anchor Ed Ludlow, scheduled for 11:30 a.m. Wall Street time, and we will bring that to you. So a lot happening here. All right, let's kick off this 11 o'clock hour with the Charlie Pellet.
Thank you very much, and here's what's going on. We do have U.S. stocks pushing higher. We got a revival of the AI trade. That is fueling momentum in U.S. stocks. Right to the numbers, because the S&P at a record, closing it on 7,500, 74.96, where we stand right now, up 52. That is a gain of 0.7%. In the YTD column, up 9.5% on the S&P. Dow Industrials up 380 right now, above 50,000, 50,075 on the Dow. A gain right now of 0.8%. NASDAQ ripping higher as well, up 0.8%, higher now by 216 points. All of this with the VIX right below 18 right now. The SOX up another 0.6%. That, of course, the Philadelphia Stock Exchange's Semiconductor Stock Index. As I mentioned, the VIX below 18, the 10-year 4.45%, the 2-year 3.98%, and the 30-year 5.00%. Gold down $6 the ounce, just about flat on the day at $46.82, down by about 0.1%. West Texas Intermediate crude holding above $100, $100.39 on WTI. Right now, crude is down 0.6%. Barrel of Brent, the global benchmark, 104.94, down by 0.6%. Kevin Warsh scheduled to be sworn in tomorrow as the next chair of the Federal Reserve. So, what's the outlook for rate cuts under Warsh? That question this this morning on surveillance for Seema Shah, Chief Global Strategist at Principal Global Investors.
I think it's a really difficult environment for a central bank to be cutting interest rates. So with that in mind, staying on hold and really taking the time to see how this plays out is probably the most likely, which suggests that even with a new head of the Fed, actually the policy impact is going to be quite minimal, at least in the near term.
Principal Seema Shah interviewed this morning on surveillance. You can hear more of the conversation on the Surveillance podcast. You can download it wherever you get your podcasts. Last night we heard from Cisco Systems. Shares ripping higher now by 14.1%. Coming up after the close of trading today, we will be hearing from Applied Materials. Round one of the PGA Championship underway at the Aramitic Golf Club in Pennsylvania. At last check, Stefan Jaeger sits atop the leaderboard at 4 under par. And for our listeners in New York, Boston, and Washington, D.C., we'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. Recapping S&P 500 index at 74.99, up by 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pella, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. As Charlie is just reporting, stocks are higher this morning. Let's take a look at some of the stocks that are on the move today. We can do that with Carmen Reinecke, Deputy Team Leader for U.S. Equities for Bloomberg News. Carmen, what are you looking at?
Yeah, let's actually start with NVIDIA. So ticker NVDA. Shares are up about 4% right now. This is on track to close at yet another record high. We've seen really an incredible rally in semiconductor stocks over the last month and a few odd weeks, really since March 30th. NVIDIA is really leading the charge here today. There's some positive news out kind of around the company. One of its major server assembly partners, Han High Precision, reported a really solid earnings report. Jensen Huang is also in China. Alongside, Trump meeting with Xi, there's some hopes that the company could sell into that market again. And then the other thing is we have earnings coming up next week. This is the big and sort of the finale, I guess, that we think of earnings season. So we usually see some positive moves in the stock ahead of that report. So watching NVIDIA now and for the next few days ahead of those earnings. Obviously, AI has been powering the markets all year, but what is going on particularly this week? Why are we seeing so much excitement and so much money trading hands this week? I think that people are just getting really into the risk-on trade. I mean, we've seen the stocks just continue to rally day after day. So I think it's up also today to close at a record high. This is the Philadelphia Semiconductor Index.
Right.
I mean, Broadcom's up, Marvel's up, AMD is up. I mean, even today we're seeing the Cerebras IPO. There's so much demand for infrastructure.
All right. How about Cisco here?
Yeah, so Cisco obviously also having a huge day. This is ticker CSCO. Shares are up 14% right now, also on track to close at a record high. Its intraday high is the highest or the biggest daily jump since August 2011. Really great results here. The big thing here is that Cisco's really turned it around. So it's been around since the dot-com bubble. It was a winner there. And now it's been able to embrace AI and do really well and sort of come back into prominence.
Good stuff. All right, last one, Doximity. I have no idea who these guys are.
So, Doximity, for a completely different story. This is ticker DOCS. Shares are down 25% right now intraday, and this is on track to close at a record low. So this is a healthcare software firm, and it had some really disappointing earnings. So it gave a full year forecast that was weaker than expected, and specifically AI investments are pressuring the company's earnings. So AI not working out for this one.
Gotcha. All right. Carmen Reinecke, thank you so much. We appreciate that. Carmen Reinecke, Deputy Team Leader for U.S. Equities there. And for more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. We had some retail sales came in today. I think they were pretty good given all the challenges and cross currents out there and all the headlines out there. Retail sales kind of hanging in there. But let's talk to somebody who looks at that stuff for a living. Mari Shore, Senior Equity Analyst at Columbia Threadneedle Investments. Mari, what did you make of the retail sales today?
Yes, thanks for having me. Overall, as you said, it was a very strong report. We actually saw an acceleration in the trends versus last month, looking at retail sales on an adjusted basis. And it was the strongest print we've seen in 2 years on a 2-year basis. So overall, very strong. I think for me, notable was strength in some of the bigger ticket categories like electronics, and that was largely a benefit of the higher tax refunds that we saw and that the consumer benefited from in the first quarter.
Mari, I'm wondering how this is possible, because I feel like for years now, there's just been this expectation that consumer spending is going to take a hit, that all the forces kind of working against the U.S. consumer are going to have some effects. And it seems like the U.S. consumer just keeps spending. What do you think is going on?
Yes, we've talked so much about the K-shaped economy, and the truth is that that higher income consumer is really who drives the majority of aggregate spend. And so that consumer benefiting from higher housing prices and equity market values is in a good place and continues to spend. You know, we have seen more pressure at the lower end, especially now with rising gas prices. But overall, the underlying consumer spend does remain very healthy. I will caveat that with we continue to see pockets of strength and weakness when we look by category and more specifically by brand and retailer.
Mario, I'm going to focus right now on the upper end of that K-shaped economy. How's luxury doing these days? Because for me, one of the big drivers has always kind of been China, both internally within China. Are they buying, and are they traveling around the world buying stuff?
Yeah, we actually have started to see better results coming out of China from companies like Estee Lauder and Tapestry and even Canada Goose who reported this morning. And I have spoken to some management teams that say they are sensing a more constructive tone on the ground in China. But, you know, for a lot of the European luxury companies, I would say consumers are still pushing back in a way against all of the pricing that they have taken over the past few years. So when you talk to companies like Tapestry with their Coach brand, they really think that they're benefiting from the very wide pricing gap that the Coach brand sits at relative to luxury. So again, even I think for that very high income consumer, you're seeing them spend in a more choiceful way, clearly spending on things like travel and not spending as much on things like certain luxury goods.
How are retailers feeling about all of this right now? Because on the one hand, this is really good news. On the other hand, if their earnings are depending on a shrinking group of consumers, that seems potentially a little fragile.
Yeah, I mean, at the end of the day, retail is a low single-digit growth category, and it really is all about share gains driving revenue. And so the best companies are focused on taking share across the income spectrum, across category, across channel. I think Walmart is probably the best and most successful example of this. I would say for some time now, the retailers have taken a cautiously optimistic view. They are planning inventory very carefully. They are not taking a lot of pricing in order to protect volumes in the wake of tariffs. But I think they have been surprised to the upside in terms of how resilient the consumer has been. It's really investors that have been a lot more cautious, especially as we stand here today at the edge of the cliff of tax refunds and now facing much higher gas prices and tougher comparisons as we move through the rest of the year. So I think the retailers have been happily surprised and probably are a little bit more optimistic than investors at this juncture. And there's just, of course, a lot of eyes on what happens in the Middle East in terms of getting resolution there.
Mari, what we're not talking much about these days is tariffs and the impact upon retailers and upon consumers. How is it kind of all shaken out 1 year plus into this tariff?
The good news about tariffs at this point is we are past the maximum point of pain on tariffs as it relates to margins. So at this point, all of the companies have put in place their mitigation strategies. They're now starting to benefit from those. And in fact, we're starting to see certain companies record refunds from the government in the wake of the Supreme Court decision.
Yep.
So overall, I think the worst of it is behind us as it relates to tariffs. And importantly, the companies really have not taken as much pricing as I think they maybe could have taken. And the best companies have really been focused on protecting and driving volume gains and not taking too much pricing. So I would not expect any real changes in pricing moving forward, even as we see the maximum pressure from tariffs subside.
All right, Mari, thank you so much for joining us. We always appreciate getting your opinion. Mari Shore, Senior Equity Analyst for Columbia Threadneedle Investment. She's up there in Boston. She's one of our go-to voices. It seems like, when you think back to tariffs, and again, we don't talk about that much as we used to.
Oh,
it seems
yeah.
like most companies in most industries took the policy of, we're going to take as much of this as we can in our own profit margins and minimize, kind of what we pass along to the consumer.
Oh, yeah. I mean, if someone had told me on Liberation Day, when there was that whole raft of announcements that seemed so shocking at the time, that we wouldn't even be talking about it now, I would not have believed them.
And now, as Mari was just mentioning, we're starting, the U.S. government is starting the refund, which I don't know how that works. I'm not sure who gets the refunds. Is it the import-export person? Is it the wholesaler, the retailer? Is it consumer? I'm not sure how that's
I think
all
it's a big mess right now, from what I understand. I think there's a lot of confusion.
Yeah, so we'll see how that shakes out. But again, for the retailers, they fared, I think, fairly well. I think they did as about as good a job as you could probably do. And again, you look at the retail sales today, came in at 0.5% gain, kind of right in line with expectations. It was down from the last period, which was 1.7, which really kind of shocked people as people kind of front-loaded a little bit. But the control group up about 0.5%, and consensus was 0.4%, so a little bit better there. So the consumer seems to hang in there. I think what I've learned over many, many years is do not underestimate the strength of the U.S. consumer.
Oh, yeah.
And that's kind of where you go. So the other big news of the day is, of course, President Trump in Beijing, China. We're going to go check in with the news there, and we can do that with Tyler Kendall. She's a Washington correspondent for Bloomberg News. Want to get her thoughts there. It's about 11:15 p.m. local time in Beijing. Tyler, thanks for staying up for us. What's the key takeaway from day one of this summit?
Well, Paul, at this point, it appears very evident that the efforts here on the ground in Beijing are aimed at stabilizing ties instead of overhauling them. So that is considered to be a positive development, that the two sides are keeping this ongoing dialogue going. Though at this point, we did get this comment from Chinese President Xi Jinping earlier today that Taiwan does risk derailing the U.S.-China relationship. And that is threatening, perhaps, that we could see a dimming in the mood here for what has really so far, I think it's fair to say, been a pretty cordial meeting between the two leaders. And his comments actually come after really what's been days of U.S. officials signaling, at least publicly, that they do not have any intention to change their Taiwan policy at the moment. Now, it is fair to say that Xi Jinping's comments do fall in line with what has been longstanding Chinese policy, but these do mark his perhaps toughest, bluntest remarks yet. And it came against this backdrop of the White House readout and the Chinese readout, having perhaps some mismatches when it comes to what happened behind closed doors. For example, the White House readout did not mention Taiwan at all. Instead, there was this huge focus on economic cooperation. We can talk a little bit more about that, but it seemed very evident that both sides wanted to show that there could be some greater cooperation. We heard from the Chinese president signaling that there may be some more greater openness when it comes to the Chinese market, though despite the messaging, we haven't seen tangible steps really announced around this quite yet. But Paul, you had a very optimistic President Trump basically previewing that we could expect these purchase commitments related to U.S. agricultural goods and energy products as well.
Tyler, thank you so much. We really appreciate that. Staying up late. Tyler Kendall, Bloomberg Washington correspondent. She is in Beijing with the president. President did come out with a tweet just recently, a couple of minutes ago, saying she offered help on Iran, pledged not to send weapons. So that's the latest communication from President Trump via social media. We'll have more on that coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:20 on Wall Street. We do check markets all day long here at Bloomberg. S&P 500 index right now at the best level of the day. This Bloomberg Business Flash is brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide, goldencrestmetals.com/guide. We are awaiting the start of trading for Cerebras Systems, an AI chip company, priced at shares at 185. Shares scheduled to, or will trade under the ticker CBRS, indicated to open at 350. S&P 500 index right now holding at a record. We do have the S&P at 7506. It is up now by 0.8%. AI enthusiasm helping send stocks higher. Dow Industrials trading above 50,000. 50,096 on the Dow, up 403 right now, up 0.8%. The Nasdaq Composite Index up 260, up now by just about 1%. The VIX below 18 with the 10-year 4.44%, that 30-year 5.00%. Gold little change, down under 0.1%, 46.84 the ounce, while West Texas Intermediate crude still above $100 a barrel, $100.91 right now, down 0.11%. U.S. retail sales advanced for a third month in April, pointing to some signs of consumer resilience despite sharply higher gasoline prices. Mary Shore is senior equity analyst at Columbia Threadneedle Investments. She was interviewed moments ago right here on Bloomberg Intelligence.
I think for me, notable was strength in some of the bigger ticket categories like electronics, and that was largely a benefit of the higher tax refunds that we saw and that the consumer benefited from in the first quarter.
She mentioned electronics. Best Buy right now up by 1.5%. By the way, you can hear more of that conversation on the Bloomberg Intelligence podcast. You can download it wherever you get your podcasts. RegenX Bio shares plunging after 2 patients developed significant complications after receiving its gene therapy for a deadly muscle disorder. Shares right now are down by almost 37%. So again, recapping, we do have the Dow, the S&P, NASDAQ all pushing higher. S&P 500 index up 0.8, trading at a record. Round 1 of the PGA Championship underway at Arenaminick Golf Club in Pennsylvania. At last check, Stefan Jaeger sits atop the leaderboard at 3 under par. And for our listeners in New York, Boston, and Washington, we'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker studio. Coming up at the bottom of the hour, we're going to have the CEO of Cerberus, as Charlie was just reporting that they went public last night, trying to get that stock open here. Andrew Feldman, Cerberus CEO. He's going to be speaking with B-Tech anchor Ed Ludlow around 11:30 a.m. Wall Street time, and we'll dip into that for a couple of minutes. But first, let's talk about the bond market here. Ruben Hovnanian joins us. He's a general portfolio manager at TCW's fixed income group. They're based out there in L.A., some of the smartest folks you'll ever talk to in the investment business, to a person. They're very sharp. Ruben, what are we doing here in your bond market here? A lot of cross currents out there. I think people are probably looking for some reasonable risk-adjusted return opportunities in your world of fixed income. Where are you guys focusing these days?
Good morning. Good to be back on the program. I'd say the key question or the key debate in the bond market, in the rates market, is whether the supply disruption that we're seeing now is going to lead to unanchoring of inflation expectations and runaway inflation similar to 2022 episode, and therefore whether we're going to see hikes in interest rates. Yields are higher in terms of opportunities. Yields are 50-60 basis points higher from where they were in February, and the market is pricing in 75-80% probability of one hike through the middle of next year. We think while it's possible, you can't rule it out. We think generally the bar for hiking rates is very high because this is a supply side shock, and in order for the Fed to hike rates, you have to see some serious unanchoring inflation expectations and some serious meaningful reacceleration in core inflation. But we don't think that we have the conditions that are that will lead to that. More specifically, we don't think we have a strong and accelerating labor market, or overly lax and stimulative fiscal policy. We did have stimulus in 2026, which was a considerable stimulus for consumer. However, we know that a lot of that has been offset by higher gas prices, and if we agree that gas prices are going to remain higher under most scenarios for the rest of the year, we will see that eat into the sort of consumer stimulus. So our base case is that we are not going to see the hike. So we think the front end of the curve, the 2-year part of the curve remains attractive.
Well, we certainly, it seems like, are not in a situation where interest rates are likely to be cut anytime soon, although we do have a new Fed chair coming in who has something of a mandate from the president to do just that. How is that factoring into what you're looking at right now?
Well, I would agree that the bar for cutting rates, at least in the near future, in the next couple of months, or maybe quarter and more, is going to be is higher as well. The Fed will want to be patient. They will probably, also telegraph that they're moving closer to the center and they're more balanced, monitoring both sides of the mandate. However, the new Fed chair you mentioned, I think, the Fed FOMC by design is a collegial body. It's comprised of 12 members, and no single member of FOMC, even the chairman, will be able to change drastically the trajectory of monetary policy. These are 12, very people with strong opinions, and we don't think that the chairman will have to build a consensus, and as much as he, they will be the most important determinant for the rate trajectory from here on is going to be inflation, and the new Fed chair is not going to change that drastically.
All right, Ruben, thanks so much for joining us. Really appreciate it. Ruben Hanasian, he's a generalist portfolio manager for TCW's fixed income group out there. I'm looking at the I&Go function, and it gives you some returns in the corporate bond markets and government bond markets. The best return year to date is in U.S. corporate high yield. The total return is 1.1%, and that's kind of leading the game. And if you go on a global basis, global high yield, 1.4%. So it just shows you that investors are still willing to take credit risk out there, which would seem a little counterintuitive given all the craziness that's going on out there in the world.
Well, there's a lot of money everywhere, and I think people are trying to find some way to make more of it.
Yeah, and they're just willing to take that credit risk when you wouldn't think they necessarily would here. Right now, let's go to a really cool interview. Andrew Feldman, Cerebras CEO, speaking with BTech anchor Ed Ludlow on their IPO day.
Cerebras CEO. Cerebras priced this IPO, Andrew, $185 a share, above the top end of the marketed range. I'm looking at the Bloomberg terminal. Shares indicated to open $350 a share. Your reaction to that?
Pretty good day, huh?
How you feel? I mean, did you see this coming? There's some mechanics to it, right? But I know you. I know you like to, let's be honest, you like to talk about what's happening in AI, the big focus on inference, Cerebras' place in it. But this is the biggest IPO of the year so far. What does it mean to you and your employees and your backers?
It's the biggest tech, one of the biggest tech IPOs in history, and it's the biggest semi-IPO in history. We couldn't be more proud. This is the culmination of a decade of work, of countless late nights and long weekends. We are enormously proud and excited and ready to get back to work and start working on the next great thing.
Again, the market is indicating shares to open at $350 a share. Let's see where we're at when trading starts. But you're being priced in as a major player in this field now. What evidence would you point to that you are in fact a major player? A lot of focus is on the concentration in the relationship with OpenAI. Tell me about some of the other frontier labs or other names that you have some concrete talks with.
Sure. In the last 4 months, we announced a deal with OpenAI that's north of $20 billion for 750 megawatts of compute. We also announced a major engagement with AWS, where our equipment would be deployed in their data centers. I think those are obviously the largest, but there are dozens of others that are in what used to be a big deal in the $10 to $50 million category. And so there's just an extraordinary demand right now for fast inference. We're the fastest, not by a little bit, but by more than an order of magnitude. We're 15 times faster than the next nearest competitor. And as AI has become useful, everybody wants it to be fast. Nobody wants to wait.
On that, 21x on performance, and also like a lot of emphasis on the dollar per token, right? That is the metric that the field cares about. But that's on paper. You just talked about the AWS relationship as an engagement. When does the word engagement end and real revenues start to show up for you from those relationships?
Sure. We signed a binding term sheet with AWS as described in our S1, and we're working through the master agreement. I think in dealing with organizations of that size, it takes a little time to dot all the I's and cross the T's. But we are extremely confident that they will be an enormous channel for us and a partner in delivering our technology to large enterprises and medium-sized enterprises around the world.
All right, that was Andrew Feldman, Cerebras, CEO. I'm mispronouncing it. Everybody is, but we'll eventually get it. He's the CEO. The company went public last night, and they went public at, I think it's $185 a share. One of the last indications for where this might open this morning is $350 a share. So quite a premium to where the stock priced. But I was just reading kind of the prospectus, and the language they're using in the prospectus, it's not the typical language describing a semiconductor company.
What does it say?
We're an AI enabling company, and our products enable the growth of it. So it's obviously, as you would expect, totally rewritten how every other semiconductor company has described itself over the last 50 years.
How can we
put
the word AI in as many times as possible?
Exactly, and it worked. Just looking at where the stock is indicated to open here, but it's just a monster transaction. And it bodes well for some of the other big deals we have potentially coming down the pipe. We've got SpaceX, from Elon Musk.
Oh, yeah.
Anthropic.
The $1 trillion potential
exactly.
IPO.
Anthropic, OpenAI, and again, all of these deals are going to be mega billion-dollar deals. That's going to test the IPO market, but it looks like here, at least today, looking pre-market here, it did pretty well. And apparently this thing was like crazy oversubscribed, like 20 times oversubscribed.
That's what you're looking for, right? The pop? Yep. Isn't that what they always want, the pop?
Not this much pop. I mean, if I did this when I was on the equity capital markets desk, first of all, I would have had the stock open by then. We got our stocks open by, IPO stocks open by 10:30 at the latest. And we left more than 20% on the table. We felt like we didn't do a good job. But that's a nice pop that we used to like, a nice IPO pop, 20%. But we'll see how this plays out. We'll have more coming up. This is Bloomberg. Good morning.
news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We do have the S&P 500 index at a record 7507. This Bloomberg Business Flash is brought to you by Chapter. The average couple spends over $300,000 on healthcare in retirement. Want to know how much of that you could keep? Find out today in under 20 minutes with one free call to Chapter. Go to askchapter.org to get started. Right now, as I mentioned, the S&P pushing higher by 62 points, up by about 0.8%. AI enthusiasm fueling stocks today. Again, the S&P at a record 7506. The Dow is above 50,000. Dow Industrials up 369, now up 0.7%. 50,060 on the Dow, up again by 0.7. NASDAQ up by 1%. The NASDAQ 100 index up 0.9%. The 10-year currently at 4.44%. The 2-year 3.98%. The 30-year 5.00%. Gold, a lower little change, down under 0.1%, now at 46.85 the ounce, and a retreat for crude. WTI down 0.2%, $100.77 a barrel on West Texas Intermediate crude. We are awaiting the start of trading for Cerebras Systems. Shares are indicated to open 89% above their listing price. Fed Governor Stephen Miron says outgoing Fed Chair Jay Powell could help create a smooth transition with his successor, Kevin Warsh, by staying on the central bank's Board of Governors.
But I still think it's important that it be a transition because you want to have people's loyalties undivided. You want to have there be very clearly one chairman. You want to have a place where there's no question about who's in charge, and there's no talk of rival factions and things being split. I think you want to have a sense of unanimity and clarity. And so transitions are important, and I think it can be helpful to have help in transition. But I still think it's important that it is a transition.
Fed Governor Miron made the comment this morning on Bloomberg surveillance. We are awaiting the start of Cerebras Systems, the AI chip company. Scheduled to open. Shares likely will open around $360. Round one of the PGA Championship underway at Aranamek Golf Club in Pennsylvania. At last check, Stefan Jaeger sits atop the leaderboard at 3 under par. And for our listeners in New York, Boston, and Washington, we'll bring you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Stacey Vanek Smith sitting in for Scarlett Fu. I'm Paul Sweeney, live here in our Bloomberg Interactive Broker Studio. Looking at Cisco Systems stock here. Remember, folks, Cisco's it's almost a $465 billion market cap stock. It's up 15% today, the most since 2011. Stock's up 52% year to date, up 91% on a trailing 12-month basis. This is just ripping. And for those of us back in the day, this was the stock in the 90s. This was the one to own big time. It's been finding its way ever since, and I think it's kind of found a little AI love here today. Ryan Vestelica joins us here, equities reporter for Bloomberg News. Ryan, I know Cisco reported some numbers. Wow, what did they say?
Hey, thanks for having me. Yeah, pretty blowout report across the board last night. Very strong growth, very strong forecast. And the company also announced some job cuts as it is focusing even more on artificial intelligence. So it really seems like there is a growing consensus that Cisco is now a real part of the AI infrastructure trade. It's a real part of that firmament, and it does seem like people are really glomming onto the idea that this is going to be a company that's going to be showing very strong demand trends really for a while.
I have to say, I feel like there's a trend happening of layoffs being announced very close to really high earnings. What is going on here? Is this part of a growth plan? Are we back to the days of Jack Welch, or what do you think?
It does seem like this is really part of their prioritizing AI right now. They are making a lot of investments into this. It doesn't really seem like they're talking about AI is replacing these workers or anything like that. It doesn't seem like that's really the focus here. It does seem like more they are seeing so much demand from hyperscaler customers, from the data center build out. So they are really transitioning as much of the company as they can to focus on the opportunity that they see there.
So is this a story of new products? Are they repositioning existing products to meet, some of this demand that may be coming from the AI build-out? How are they achieving this pivot here?
Well, there's a growing appreciation that a lot of Cisco's products, we're talking networking components, optical products, all of these are really a critical part of building out these data centers and having them be optimized for AI-related workloads. We've seen a lot of these kinds of companies really skyrocketing this year, including in the optical space. So companies like Lumentum, Coherent, Corning, the specialized glass company, all of these types of components, which have historically been on maybe the sleepier side of the tech trade, not nearly as exciting as, higher growth areas. All of a sudden, these are all really catching a bid, as it does seem like we're at the stage of the AI build out where these kinds of components are really in demand. It started with processing chips, now it's moving on to networking chips and other kinds of components like that.
Yeah, it does seem like there's a lot of excitement around infrastructure for data centers. Why is there so much excitement over that aspect of it as opposed to kind of AI breakthroughs and innovations?
Well, right now we are really seeing infrastructure being where we are seeing the most clear-cut demand and really the strongest growth. So if you're looking for AI pure plays, right now this is really the best place to look for that kind of thing. All of the hyperscalers, which is companies like Microsoft and Amazon and Alphabet and Meta, when they reported a couple of weeks ago, they all really doubled down on their really aggressive AI-related spending plans. And that is really translating almost directly into revenue at the companies that are involved with building out the data centers. So you have all these huge cloud computing companies and all the equipment that is needed to actually run those. So we've seen it in servers, in chips, in memory, in storage, and in all these different sort of optical and networking components. Very sort of technical and specialized products, but ones that are really becoming more and more critical to this stage of the build-out.
So I'm just looking at the historical financials, Ryan, of Cisco. It's been kind of the last 4 or 5 years, kind of a mid-single-digit revenue growth story, mid to high single-digit revenue growth. I guess the street's kind of re-rating the top-line growth outlook for the company. What's the company saying about their revenue outlook?
Well, it does seem like they are very much encouraging the idea that they are going to be a real significant winner within artificial intelligence, that the demand they're seeing isn't just going to be a blip, that as we see the AI infrastructure build out over the coming quarters and maybe even years, that they will continue to benefit. So we are looking at a higher rate of forward growth for them than I think investors have gotten used to in the past. I mean, this has been, even a few years ago, considered a pretty sleepy legacy company, slower growth, lower multiple, pays a dividend, not exciting the way it was in the dot-com era when it was, like you said, the most exciting company out there. It's starting getting some of that momentum again.
Did it pivot at some point? Was it in the right place at the right time, or was there a decision that it made that kind of put it on the path to see this kind of growth?
I think that their long-term focus has been in sort of these networking products and things that were just not quite in focus in the pre-AI era. It does seem like they are just sort of in the right place at the right time, and they are able to pivot to focus on this in a more direct way. But I know they've made some acquisitions with optical companies. They've certainly been making a greater push to focus on AI, and it does seem like that is paying off for them.
Ryan, thanks so much. Appreciate it. Ryan Vostalica is equities reporter for Bloomberg News, giving us the latest reported earnings coming out of Cisco. Again, some better than expected quarterly results, better than expected revenue forecast, and we're seeing that in the stock. Again, the stock up about 15% here today. I'm looking at the ANR function on the Bloomberg terminal. That's analyst ratings. We got 18 buy ratings, 9 hold ratings, and 0 sells. So those folks with the hold ratings, they might want to rethink that, because it seems like maybe the business model's changing here, and you don't see that very often with an established company, where you really have to rethink some of the business outlooks for a company. But we saw it with Intel.
Yes.
Now we're seeing with Oracle. Some of these historic long-term technology companies, they're trying to pivot to position their companies for the growth in AI. Some are successful, like Intel, like Cisco now.
Yeah.
And we'll see how some of the others do. So we'll see. And that was a good story for Cisco. Again, in the 90s, folks, Cisco was the tech name to own. It was, if you wanted to own the internet, broadly defined, you just bought Cisco. Just like the early days of AI, when you wanted to own AI, you owned NVIDIA. So that's how that works. S&P 500 up 65 points. This is Bloomberg. Good morning.
listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, Stacey Vanek-Smith sitting in for Scarlett Fu. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Big IPO. Cerebras Systems pricing last night, $185 a share. Still has not opened. We got it indicating $325 a share. So we'll keep an eye on that right now. But let's take a look at just kind of how this deal came about and what it means for the IPO market. We can do that with Anthony Hughes, equity capital markets reporter for Bloomberg News. Anthony, just give us kind of the postscript on Cerebras here. Boy, we haven't even gotten it opened yet, but man, it was just a successful deal any way you look at it, right?
Yeah, I think the main point to make is perhaps that it was just perfectly timed. I mean, you look at the broader market and how so much of the returns at the moment, the S&P 500 are being driven by stocks that are related to AI, but also specifically chips. And obviously Cerebras is offering the sort of tantalizing notion of being a NVIDIA challenger. And if, you know, Cerebras is, you know, I think 7 months ago it was perhaps valued at below $10 billion. And today we're going to perhaps see it valued, you know, well above 50 billion and maybe towards 100 billion. And, you know, I think it's just a tantalizing prospect for investors that, you know, could this be the next NVIDIA? And I think that's probably getting ahead of ourselves substantially, but this is the way the IPO market works. And, you know, there's a lot of enthusiasm for the story.
We have been waiting on this all morning to open. What do you think the holdup is? And is this a good sign or a bad sign?
It's pretty typical for IPOs, particularly hot ones, to not start trading till after lunch and not afternoon. You know, the hotter it is, almost it's a little bit harder for the banks to make sure that the opening price is a good clearing price and it's not too volatile after the stock opens. So I think they've obviously taken some huge orders for this IPO, and there's a lot of interest. And you know, they're also trying to identify people who actually want to sell early. And you know, you really have a technical supply-demand mismatch early on in these IPOs, which can lead to some pretty, substantial pops that, and you know, sometimes it can go badly as well. But that sort of dynamic becomes somewhat of a technical dynamic where there's a lot of demand for the stock, but not a lot of supply. And you know, the banks just want to make sure that there's a relatively orderly opening of the stock. If the stock was to open high and then close below that level, that would be considered in the equity capital markets business to be a bit of a disappointing outcome, and the banks might take a bit of blowback from something like that, but not, you know, maybe not significantly, but that's not an ideal outcome. So you just want to make sure that it's an orderly start to the trading, and you know, that can take a while, and usually, you know, 1 o'clock can be later sometimes.
Again, in my day, it was 10:30 at the latest. Otherwise, you're in deep trouble. Red headline crossing the Bloomberg terminal from President Trump. Trump says China agreed to order 200 big Boeing jets. That's according to Fox, and big being in print, in quotes. So we'll get further reporting on that. Anthony, this going to be a busy potential calendar for the IPO market. SpaceX, maybe, you know, Anthropic, maybe Open ChatGPT. And that makes being first in the marketplace really important. So Cerebras, the company, their advisors, good job getting out first, because all the demand is all yours. You got the whole market to yourself.
Yeah, I mean, I think SpaceX could be a June listing, and that's going to be an even bigger fanfare than this, obviously. What this has demonstrated, I think, that there is a lot of demand for the right story. I mean, if you look at the CEO, I think even on the interview with Bloomberg earlier here, said that the IPO was 25 times oversubscribed, and you can do the math, and you know, this is a $5.5 billion offering, so you can see the level of demand that there was. Now, obviously, there's a lot of other IPOs around that aren't getting that level of demand, and because they don't quite fit the narrative of the market, but this one does pretty well, and SpaceX is probably going to too. But obviously, there's a lot of concern that SpaceX is going to suck a lot of liquidity out of the market. But I think it remains to be seen, because ultimately the banks are going to pull on lots of different pools of capital. They can bring in some of the sovereign wealth funds and some different pools of capital to make these things work. So that's obviously going to be a more very interesting situation.
Is there a kind of halo effect from a potential SpaceX IPO later in the year, or OpenAI or something like that? Is that part of why this company is getting valued so highly? Or is this company really, like, if you look at the fundamentals of it, is this a good price for it?
Well, I think the company, you can look at the fundamentals of the company and argue that this is a very expensive valuation. and there's a lot of execution. The company's going to have to grow substantially the sales of these dinner plate sized chips they're selling, but they've their business model, their product has been endorsed somewhat by OpenAI in the sense that they've done a deal with them, and then that's another issue with this situation where OpenAI has got a warrant for 33 million shares, and that's a little bit dilutionary. That's another issue that might be a little bit of a negative in some ways, but negative and a positive. But yeah, I mean, there's a lot of interconnectedness in the AI ecosystem now, and Cerebras is part of that. So, I think people just want a slice of the AI ecosystem, and you could, because this company has a relationship with OpenAI and Amazon AWS as well, it's somewhat of a leverage play to those stories as well in the overall AI story.
All right, Anthony, thank you so much. We appreciate it. I'm sure we're going to be speaking with you a lot in the coming weeks and months. The IPO calendar looks pretty darn crowded with a lot of mega deals, deals we've never, ever seen before in terms of size. Anthony Hughes, Equity Capital Markets reporter for Bloomberg News. Again, the Trump headline says that China has agreed to order 200 big Boeing jets. Boeing is down about 4.5% right now. I think the market was anticipating an even bigger order, so we'll see how that plays out. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. Stacey Vanek-Smith, thank you so much for sitting in for Scarlett. Great job. Always a spot for you there, helping out today. We'll be back. This is Bloomberg.
From ABC News, I'm Michelle Franzen. In China, talks between President Trump and President Xi touched on trade and the Iran war, along with Taiwan. ABC's Mary Bruce is in Beijing.
In their over 2-hour meeting, Xi delivering a stark warning to Trump about Taiwan, which Beijing claims is its own territory. According to China's state media, Xi telling Trump if the issue is handled poorly, the two countries will collide or even clash. Trump tight-lipped.
How are your talks, sir?
Great.
Great place. Incredible. China's beautiful.
Trump hoped to use their sit-down to seal deals on trade and technology, bringing along with him over a dozen American business leaders.
The president will hold executive meetings and working groups today. The economic strain of the Iran war becoming more evident each week. Retail sales dipping in April, and ABC's Jim Ryan says businesses are also scaling back on workers.
The number of people filing their first claims for state jobless benefits rose by 12,000 last week to 211,000 altogether. That's more than double what employment analysts were anticipating. The overall number of people receiving some kind of unemployment has slipped a little to 1.7 million.
In Britain, more signals Keir Starmer's days as prime minister could be numbered. He's facing growing pressure to step down after his Labour Party losses in elections. ABC's Patrick Reevell is in London.
It now does look like Prime Minister Keir Starmer could well face a leadership challenge, perhaps today. The Health Secretary, Wes Streeting, who is widely seen as a key challenger to Starmer, announced his resignation, saying that he has lost confidence in Starmer and that Starmer will not lead the party into the next general election.
The one American cruise ship passenger who tested positive for hantavirus has been cleared to leave the biocontainment unit. You're listening to ABC News. The now bankrupt Spirit Airlines facing a lawsuit following the collapse of the carrier.
Former employees of the now defunct Spirit Airlines have filed a class action lawsuit alleging they were not given ample notice of the airline's closure before they all lost their jobs earlier this month. The plaintiffs are seeking 60 days of wages and benefits from the company and are asking the court to cover all 17,000 affected employees. Dave Packer, ABC News.
Students in the U.S. are falling behind, performing worse than their peers a decade ago. Researchers say reading scores dropped in more than 80% of school districts compared to 10 years ago. Math scores dropped 70%. Here's ABC's Andrea Fujii.
Congress, back in 2015, scrapped the No Child Left Behind law, which held schools accountable for student performance through standardized testing. Critics argued the law was too rigid and prioritized teaching to the test instead of a well-rounded curriculum. The ongoing teacher shortage is also being cited as a factor. Chronic student absenteeism is also a problem, which took hold in the pandemic. But researchers say there is hope. Test scores increased dramatically between 1990 and 2013, and they say it can happen again.
Researchers also blame social media for the decline. While some students are falling behind, a group of kids in Long Island High School forging ahead. There are 21 valedictorians for this year's graduating class at Jericho High School. Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump gets a warning at his first meeting in China. Welcome to the Thursday edition as Beijing warns the U.S. of possible conflict if Taiwan is not handled correctly. A stark message we will discuss in just a moment with Bloomberg's Tyler Kendall, who's on the ground with the president. Insights ahead from geoeconomics analyst Adam Ferrer. As news breaks now, there is a deal to sell Boeing jets in China, and the stock is heading lower. Ben Jensen joins from CSIS later this hour on reports that Iran's missile program is in fact still largely intact. And as we watch oil prices today, we'll bring you an important conversation this hour with Delta Airlines CEO Ed Bastian. It's all after a look at Wall Street. We start there with our friend Charlie Pellet, live from World Headquarters in New York. Hey, Charlie.
Hello there, Joe Matthew. Big news on the S&P 500 index above 7,500 for the first time. Right now, we do have the S&P trading at 75.16. That is a gain of just about 1%. Dow Industrials up 489 on the Dow, gain there of 1%. NASDAQ Composite Index up 295 for NASDAQ. That is a gain of 1.1%. Tech stocks ripping higher after Cisco Systems reported earnings last night. That stock, Cisco, up 14.5%. Our Mag 7 index up 0.9%. And the SOX, the Philadelphia Stock Exchange's semiconductor stock index, up now by just about 0.6%. All of this with the 10-year 4.44%, the 2-year 3.97%, and the 30-year 4.99%. Gold is down $10 the ounce to $46.77 right now. The precious metal down 0.2%. West Texas Intermediate crude $100.70 of the barrel, down now by 0.3%. A revival of the AI trade is fueling the momentum in stocks. Market also rising after retail sales this morning showed signs of consumer strength despite a war-driven surge in energy costs. Again, West Texas Intermediate crude down 0.3%, $100.70 a barrel on WTI. Bitcoin up 2.1%, 81,374 on Bitcoin. Recapping, S&P pushing higher at a record right now, but 75.15 up by 1%. I'm Charlie Pellet. That Joe Matthew is a Bloomberg Business Flash.
All right, Charlie, thank you so much. He'll be back in about 15 minutes with more on the markets here. Nice move. Welcome to the Thursday edition of Balance of Power. The Thursday trade is shaping up nicely, and we're live from Washington here on Bloomberg Radio, as we are every day at high noon on the East Coast. Satellite radio, channel 121, and if you want to find us on YouTube, we always have great visuals here on the program. We're going to show you what's going on in China, including our very own Tyler Kendall. Search Bloomberg Business News Live. We have news on the Little Friday edition. If you've been waiting for something to happen in China, it just took place, beyond the ceremony and, well, the warning that we'll tell you about. I guess there's a lot of news, actually, from China. But how about deliverables? That's where we're looking for news, and we just got some. The president's talking to Fox News Remember Sean Hannity was somehow on Air Force One? So it was like Elon, Jensen, Hannity. Hannity got the interview. President talking about a deal for jets. This is the Boeing deal that has been in the making, I guess you could argue, for more than a decade. Remembering that we thought this might be part of the reopening coming out of COVID, the big Boeing deal. Bloomberg Intelligence said it could be somewhere in the area of 500 737 MAX jets. Big business. Boeing shares went up in anticipation when we heard Boeing CEO was on the trip along with the boss at GE Aerospace. Well, we just found out. President Trump telling Fox that President Xi has agreed to buy 200 big ones from Boeing. Big ones, not qualified specifically, and they don't make 747s anymore, so I'm not sure what kind of plane we're talking about. As I read on the terminal here, and we're just getting all this information, the president says they agreed to order 200 big Boeing jets. Boeing wanted 150 is the quote. They got 200. But that doesn't jive with the numbers that Wall Street was expecting, and lo and behold, on a day like this, let me plug it into the terminal, Boeing shares are lower. Disappointment over this number, down 4% to $230. It's not the only news to come out of this meeting, of course, and they spent 2 hours in a room together. President got a good piece, apparently, of President Xi's mind behind closed doors when it came to Taiwan. We got a reciprocal invitation to bring him to the United States. Listen to the president from earlier today.
The relationship between China and the USA is going to be better than ever before. Tonight, it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together.
You heard from both of them there, of course, President Xi through a translator. And there's news on beef imports as well. I don't know if we have a guarantee on this. We're going to talk to Senator Steve Daines about it a little bit later on. He was instrumental in making that happen, which brings us to our conversation with Tyler. I guess she's keeping East Coast hours, or she's up 24. I don't know how this is working, but she's awake right now it's after midnight in Beijing. Tyler, you look great considering the schedule you're keeping here as you join us from nighttime in Beijing. Why don't you start with what we know on jets, on beef, and the actual takeaways from this session?
Well, Joe, I should also start by saying that the blackout curtains are definitely my friend this week, but it is worth it to stay up and talk with you about what really is turning into some news here when it comes to a summit that so far has been, I think it's fair to say, rather cordial. It's really been about sustaining the stability in U.S.-China relations rather than making substantial progress, though now we do have some deliverables that have been put on the table. Fox News reporting, as you mentioned, that China has agreed to a 200 Boeing jet purchase. We're still waiting to see exactly which type of make and models that this will include. You had mentioned it there. Bloomberg News previously reporting that China was mulling a 500 737 MAX jet deal. Perhaps there will be more added on here as we await for the Chinese confirmation. Important to keep in mind here that China is the world's second largest aviation market, but hasn't made a substantial purchase of Boeing jets in nearly a decade. But a deal like this is considered to be sort of a win-win for both sides, if you will, because our reporting indicates that Chinese airlines are really in need of updated aircraft, and then this would cap really what would be years of negotiations. So a successful deal that has been ushered through under the Trump administration. We're waiting for some additional details when it comes to what other purchase agreements we may be able to get, such as U.S. agricultural products. I am watching, in a particular, soybeans and corn, also energy products. That was part of the U.S.'s readout from the closed-door meeting between the two leaders. You mentioned beef. It does appear that China has granted hundreds of these general licenses to allow for the import from beef plants from the U.S. into China. That was sort of the the appetizer, if you will, for lack of a better word, that appears to have set the groundwork that there could be some additional agreements in the pipeline. There really was this emphasis from both leaders today when it came to the economic agreements. You heard Chinese President Xi Jinping, for example, say that, seem to indicate that there will be a greater openness when it comes to the Chinese market, though we haven't gotten tangible signals quite yet on exactly what that will look like. But it was very clear that this was geared towards trade, just considering the executives that were in that room, including executives that already have sizable share and exposure to the Chinese market, but also companies like Micron, which have some of their products actually banned over cybersecurity concerns here in China. So definitely an interesting dynamic, but I'm sure, as we'll get into, not everything was smooth sailing, including when it came to Taiwan, as well as the differences in the readouts related to Iran.
Tyler Kendall points us in just the right direction for our conversation with Adam Farrer. Tyler, thank you. We'll see you in our second hour. Thank God for the blackout curtains, or we wouldn't have news here. Boeing shares, as I mentioned, are trading lower on this. Market expected a lot more, but 500 jets. We got 200 stocks down 5% right now. And Tyler mentioned Micron. It's also lower, maybe not due to this trip. That's a whole story on its own. It's down 2% right now, $788. It's down $15 at the moment. All-time high today, though, for NVIDIA, and I'm very curious to hear what kind of business Jensen Huang might be doing. But I want to stick with Taiwan here. Adam Farrer joins us, our Bloomberg Economics senior geoeconomics analyst, is back with us on the case here as Taiwan emerges as, yes, a major priority. And Adam, a lot of folks didn't necessarily expect that, but President Xi apparently went for the fastball in their first sit-down behind closed doors, essentially warning that there would be conflict between these two nations if Taiwan is not handled properly. Is this a change of course in his rhetoric? How significant is this?
So I think from our perspective, it's not a change of course. It really is a reflection of how President Xi has continued to talk about Taiwan as a critical element of not only China's future, but his own legacy and the way in which he sees U.S. involvement in whether that be supporting Taiwan independence from his perspective or continuing to utilize American defense industry to supply Taiwan with critical defense goods, to limit China's ability to coerce Taiwan, all as critical components in the broader U.S.-China relationship. And so here, while the language was certainly stark, it isn't in and of itself a change in how he's approached the problem in the past. And some of the language he's used just in the last several months, if we remember, he actually spoke with President Trump on the phone earlier this year on this explicit issue and pushed back hard on a large announcement by the United States of $11 billion in arms announcements for Taiwan, and that being the largest in history. And we were hearing of an additional announcement, potentially upwards of $14 billion in arms as well, that has supposedly been delayed. And some elements of Congress have written to the president pushing for him to announce that, notify Congress so that that can move forward. And the question now is, how effective was President Xi's message? What happened behind closed doors? And how is the president kind of understanding Xi's red lines, and what could that change in how the United States operates, whether that be in trade or towards Taiwan?
I thought it was striking to hear so little from the president. That one-word response, great. How's it going in there? Extended silence, great. Somewhat out of character for somebody who's known to hold forth for 45 minutes in the White House driveway. What comes from here in these talks when you consider this conversation about Taiwan? President's rolling with Jensen Huang, who's not only from Taiwan, but all of his chips are made there. Micron, Qualcomm. The president's not about to change his stance on Taiwan, is he?
So we don't think so. We don't expect to see a formal shift in the U.S. policy approach. I think and actually Marco Rubio, Secretary of State, came out afterwards and said just explicitly that. And in fact, he actually went further by saying that arms sales in and of themselves were not a particular focus of the conversation. Although again, what that means could be up for debate, and there are additional opportunities for the president and the presidents to speak, whether that be at the dinner that concluded recently and or the meetings tomorrow. So I think the bigger concern and the thing we're looking out for is how the president, again, will interpret Xi's red lines and whether that could lead him to take a more caution cautioned approach to further announcements and or increased delays on arms shipments to Taiwan, seeing the risks to the broader trade, the trade deal that continues, the fragile trade truce, or, as well, this potential for other leader-level visits in the coming weeks and months that he would want to protect, and that President Xi could intimate would be disrupted if the United States proceeded with some of those actions.
Wow, this is really something. I want to ask you about Iran. The president was asked about this in his interview with Fox News. I guess he's traveling with Sean Hannity as well. Maybe he'll get a deal in China. The question about whether President Xi can help reopen the Strait of Hormuz. Here's what Donald Trump said to Fox News.
He would like to see a deal made. And he did offer, he said, if I can be of any help at all, I would like to be of help. Because,
he did say that.
Yeah, he did say that. And look, anybody that buys that much oil has obviously got some kind of a relationship with him. But he said, I would love to be of help. If I can be of any help whatsoever, he'd like to see the Hormuz Strait open. He said, if I could be of any help whatsoever, I would like to help.
Okay, read between the lines for me. What do we think President Xi actually thinks about the Strait?
I think we're not seeing any big change here, right? President Xi has come out very vocally since the start of the war, emphasizing de-escalation and reopening the Strait. The president is right that China receives a huge amount of its oil that goes through the Gulf, comes from the Gulf and goes to the Strait of Hormuz.
Could he not pick up the phone and have an impact?
And I'm sure he has engaged. We know that China is engaging with Tehran both publicly and in the background and emphasizing their desire for things to de-escalate. But the fact that they haven't should highlight both the limits of China's influence, particularly as the new leadership in Tehran sees this conflict as existential, right? Whether or not their relationship with Beijing is important, which it is, at the end of the day, the decision calculus is being decided as they look towards the survival of the regime and the system they've set forth. And if they see the Strait of Hormuz as their primary deterrent against further action against Iran and its nuclear program, then there's a lot of reason to maintain control. So I think the president and President Xi almost certainly had a detailed conversation about this, but we don't see a lot of movement or expect a lot of movement to change the status quo as it sits today just because of this meeting.
Sure. We're going to be hearing in a couple of minutes, Adam, from the CEO at Delta Airlines. Ed Bastian's going to be talking here on Bloomberg in just a moment. You'll want to hang out for this. Caroline Hyde will be holding forth with him. They've got their own oil refinery, which is pretty fascinating, the way Delta has managed to hedge what's going on right now, and that goes back a long way before this war began. But I'm looking at crude in the U.S. at $100, Brent at $104. They're both down a little bit today. But the idea of physical shortages is becoming real in some areas, and an airline like Delta that flies around the world is going to experience this, whether you're a U.S. airline. If you're multinational, this is your reality, right?
That's right. And there are markets like the United States that are not as impacted by this, but particularly as we look towards Asia, even just weeks into the crisis, we saw airlines cutting back on flights across the region as they both faced an initial significant price pressure, right, which is forcing them to raise costs on consumers who are buying the tickets, but then also actual shortages.
Yes.
And here is an issue that's going to grow over time, right? All the buffer and stocks that were in reserve around the world are still being drawn down, right? The Strait of Hormuz remains closed. I think we're kind of losing track of that almost.
It should be the headline every day.
For so long. And while, again, I think the market has been more resilient than many expected, and certainly in some of our initial assessments expected prices much higher at this point, the reality is that eventually we run out of those backup stocks, and we expect to see prices continue to rise and pressure build not only on jet fuel but other refined products more broadly. And as many guests on this show have highlighted, it is an international oil market, right?
That's right.
It doesn't mean just because the United States is a net exporter doesn't mean we're not going to see the imports, the effects of that. And right now we're seeing it primarily at the pump, and that's going to continue to grow.
Always great to spend time with Adam Ferrer. Thank you, Adam, so much. Bloomberg Economics senior geoeconomics analyst, and always the voice that we need here on Balance of Power. As we turn to the conversation I mentioned, Caroline Hyde's out at the Spark Summit in Napa, beautiful Napa, California, where she sits down with Ed Bastian, the CEO at Delta Airlines. This is live on Bloomberg.
For having me, and it is fabulous to be out here. I think it's on everyone's top of mind right now. In our business in transportation, it's actually interesting. It's the one market of the world where travel has not returned to post-COVID levels. In fact, it's less than half of what it had been because the two countries, not just economies, have been decoupling a little bit. And so it's so important, the fact that we have our leaders of both countries together talking about how we can start back again to start building trust and creating better relationships.
Now, that coupling, in many ways, the conversation has been around a geopolitical moment of anxiety when it comes to conflict in the Middle East that has big implications for your business.
Absolutely.
Now, can you remind our audience, TV and radio, how much you've seen jet fuel increase for the business and how you've managed to weather it? Because you put plans in place over the years that you've been running this business to ensure that you can really weather such shocks.
Yeah, so several things. First, jet fuel prices have doubled just since the start of the conflict. So over the last 30, 60 days, we've had at Delta over $2 billion of higher costs in the current quarter. On a run rate basis, it's almost $10 billion a year, so huge amount of money. The way we've managed that, first, is building a brand that is resilient, that people understand. If fuel prices are up, we're going to have to find ways to cover it. We have a consumer base that is willing to pay a higher cost. We're not covering the whole thing, but in the current quarter, we're expecting to cover relatively half of the increase in price in a relatively short period of time, which is pretty good. The second thing we did over a decade ago, we bought our own refinery on the East Coast in the Delaware River outside of Philadelphia.
That's some foresight.
And in this quarter alone, we expect to save somewhere between $200 and $300 million of cost, fuel cost, which is more than twice what we paid for it.
So you're able to, in many ways, try and mitigate it for a consumer, but a consumer that you have very thoughtfully tailored yourself towards being more premium, ultimately. How are you thinking about Delta leaning into that as we continue to see a remarkably resilient consumer's willingness to spend and to travel?
Well, there's several consumers out in the marketplace. People talk about the consumer. Our consumer is a higher-end consumer and is incredibly resilient. We have seen the demand strength right throughout the year. In fact, when the war started, it seemed like it even ticked up another notch. So we're seeing significant growth, and we're continuing to see significant growth in our business.
Why would it tick up another notch? Like, suddenly people were like, I need to buy now?
I think there's a little bit of that. I think more important that people understand that typically when wars happen, people pull back and sit back. We've been through so much change, so much disruption. There's so many things coming at people. And I think some of this is the post-COVID effect. People say, I'm not going to sit and wait to see what the next headline is going to be. I'm going to go now. I'm going to go as long as I feel safe and be willing to invest in myself, invest in our experience, see the people and the places I need to be at.
You've been willing to invest in even new routes just in the last week or so, announcing that you're going to be going to certain parts of Europe. So transatlantic routes, because it's dining off a moment of sport and football. But how do you decide which routes are working for you right now, which ones you open, which ones you slow down on?
Well, our routes to the Atlantic, to Europe, are doing very, very well. Now, I would say exit Europe travelers point of sale into the U.S. has been down a bit, but that's a trend that we've seen for several years. But Americans specifically are going to Europe. We're launching just in the next week to Sardinia. We're launching to Malta. We're launching to Porto. Just in the three brand new routes for us in the midst of everything going on. So that tells you where the consumers want to be and who they are, and they're principally Americans wanting to invest in their experiences.
We are with Ed Bastian, the CEO of Delta, for our TV and radio audiences at Bloomberg. I'm interested in how you also invest in your people, because you've actually increased wages in this inflationary environment in a time where you're just saying you've got $2 billion more in costs of jet fuel. How tough is that to do for you, or is it just a no-brainer?
On the surface, you would think it'd be difficult. But when you understand our strategy, when I talk about our asset, our most important asset are our people. It's our culture, protecting the people that get us through tough times. It's an even more important time to invest in them. So we were pleased to announce a couple of weeks ago that we'll be increasing everyone's wages, the company, by 4% starting June 1st. That's our typical schedule every year, sometime in the spring, that we announce the increases. And it's the most important investment I make. You know, there's a lot of things about this business that cost a lot of capital. But human capital is the most important capital that we have, and particularly in times of trouble, because they're the ones that are keeping customers coming back and providing that premium experience and opportunity for our brand to continue to rise.
In times of trouble comes opportunity, particularly when you're on such solid footing. Look, in many ways, do you look at talent that now comes on the market very sadly because of what's happened with Spirit? Or are you thinking about the way in which the industry is going to change around you? Because we might see consolidation. Might not be from you, but it might be more broadly the way the market has to go.
Well, you're seeing rationalization. Whether it's consolidation or not, I don't know, but you're seeing rationalization because when fuel prices at this level, companies such as Spirit, by the way, which didn't go out of business because of fuel prices. They went out of business because they had a bad product that people didn't want. It was a bad strategy. Good people with a bad strategy. And we've hired a fair number of the Spirit people, as many of the other airlines are, bringing their equipment in. You know, our industry continues to rationalize itself. And if you've got a good product that people are willing to pay for, you can grow. And you see at the lower end of the marketplace, those airlines that don't have the quality of the experience, even though they're a lower price point, they can't afford to offer the lower prices in the environment in which we're in.
With that pressure on prices, there might be this worry that companies are more anxious about innovating, investing in innovation. Now, and time and time again, we have you actually on our tech show because you're so aligned with the tech area. With Joby, I think of the way in which you've thought about the future of travel. You're also, though, thinking about the future of premium flights, and Wheels Up is another area in which you've worked with. How are you thinking about innovation at this moment in time?
Innovations are lifeblood. You know, airlines, people think about it as a transportation company. Airlines are a technology company. And whether it's the app and the ability to give consumers better control of their experience, better information, better displays, whether it's our own people having better data to make better information, whether it's the engine technologies we deploy. You know, we're in the high-tech business fundamentally, but it's tech for human's sake. And I think that's the other thing in this AI world. A lot of people get confused about tech for tech's sake. No, it's tech to make our people smarter. I love to call AI augmented intelligence.
Right.
I don't know why we have to call it artificial. It should give people tools to do a better job. And then it gives them the opportunity to preserve and grow their development, not actually limit their opportunity.
You've actually just made a commencement speech, I believe, where you used AI initially to maybe put thoughts to paper of what you were going to say, and then you ripped it up. You said, I have to use a pencil here.
Yeah.
What was it that you feel that AI can bring to you as an individual, AI can bring to your employees, augmented? What is it that they can't?
Well, I did that, and it was more out of curiosity. I was never intending, but I was just curious because I was in the middle of writing it. And I said, I've never done that before in terms of used AI for something like that. So let me say, and I've done commencements in the past. And it came out that but it was very sterile. It wasn't my voice. And people wanted to hear me and who I am, the soul, the warmth, the appreciation, not some algorithm of me. And so and by the way, I thought the speech went quite well. That got the biggest applause from everyone in the room because there is such lack of trust in the technology.
But there's also anxiety. Look, there's a whole world of new graduates who are worrying about jobs that they're going to get, worried about AI displacing them. How are you talking about your employees about doing that? Because I'm sure you're using AI to benefit and ensure that we're more productive, but does that come at the cost of actual people that you hire?
Well, no, not necessarily. I think that over time it's going to make us better. It's going to make us smarter, not less. Better able to serve customers, be able to provide more attention to needs, give better information to support. No, so I do not believe that AI in our industry is principally a cost-saving measure. It's an opportunity to develop better service. And if you have better service, you're going to have better growth and better revenues.
And thinking of innovation, many have hoped that we'd see innovation solve some of our climate issues, some of that cleaner jet fuel, for example. How are you able to balance that in this moment as well, Ed?
Well, we're still paying attention to it. Sustainable aviation fuels is our pathway. It's hard, it's expensive, there's not a lot of technology that's being deployed. We're continuing to invest in it. We need all stakeholders around the table. We need government, we need customers, we need the energy companies to participate. I'm impressed, we're seeing improvements there, but it's been very slow.
But you are able to remain committed for your stakeholders in a transition to a cleaner output from the aviation industry.
And I think the biggest thing that people miss is not just the sustainable fuels, it's the better engine technologies. It's about being able to forecast the skies, the turbulence and whatnot, so that we can provide safer, more reliable, actually cleaner service, through the air using technology there. Looking at new forms of transportation, and Jet Zero is a company that we've been involved with, where they have the opportunity to reduce fuel emissions by 50%. And I think over the next decade, you will see planes flying with such a significant less amount of fuel being utilized. Those are the moonshots. So sustainable aviation fuel is going to take a long time. That's the ground war. But actually, the opportunities are in the sky.
And the opportunities are with leadership, and that's exactly what we're talking about throughout this day at the Cancelo Spark Summit. Bastian, what a joy to have you with us. For our radio and TV audiences, I send it back to you, the CEO of Delta.
All right, Caroline Hyde, really interesting interview. Live from Napa, California, Ed Bastian. Imagine running an airline that has its own oil refinery. He did talk about that, and also getting into the idea of demand. There have been big questions about whether people are still traveling, considering the impact on airfares, considering the impacts that we're all paying for energy prices. The Delta CEO saying consumer demand is ticking up, not down, despite costs. And went on to say that he's hired a fair number, as he put it, of Spirit Airlines employees. Thanks for joining us on the Thursday edition of Balance of Power. It's Little Friday. I'm Joe Matthew in Washington, where we're still trying to get our arms around this story from the New York Times yesterday as we keep our attention focused here on Iran, and one that we talked about right around this time yesterday, classified intelligence assessments fronting the New York Times to indicate Iran has regained access to most all of its missile sites, launchers, underground facilities, the ones we spent weeks bombing. More specifically, Iran restoring operational access, the paper says, to 30 of 33 missile sites along the Strait of Hormuz. Back to start here on the game board? We're going to talk to Ben Jensen about this in a moment. I did ask the senator from Connecticut, Richard Blumenthal, serves on Armed Services, his thought on this and whether he could confirm these reports. Here's what he said.
What's in the New York Times is certainly no surprise. It is consistent with what I have been told by very reliable sources. And I will say, Joe, that it should be no surprise to the American public, because a lot of these missiles and missile launchers were buried underground.
Yeah.
Now they have taken them above ground. The message here really is that Iran still has a very powerful capacity to attack ships in the Strait of Hormuz. 30 out of the 33 launching sites are still operational to one degree or another, and that poses a major dilemma for President Trump. He is really stuck because he's accomplished none of his objectives at the start of the war, and the path to negotiations is a very difficult one.
Let's talk to an expert about it. Ben Jensen is back, as I mentioned. He's director of the Futures Lab and senior fellow defense and security at the Center for Strategic and International Studies. This man tracks every missile that is launched and is purchased and everything else in between. And it's great to have you back with us in studio. Ben, does this smack as true to you? How could they possibly bring this many facilities back online?
This is why it's great that you love having war nerds like me come tell the
Okay,
truth.
good.
So first, let me just say,
this is not truth, then.
I'm suspect. Yeah. Count me in the suspect category, as the kids say, the sus category. First, we're being analytically loose with what we say is a missile.
Fair.
Missiles come in a wide variety of categories and different types. So the campaign in Iran, we have to differentiate strategic targets and operational targets and tactical targets. So to say that the bombing campaign, which I would say is largely focused in the first phase on strategic targets, command and control, leadership, long-range weapon sites, was unsuccessful is just a complete misnomer. It's just not true. Now, does that mean Iran couldn't get access to additional stored weapons underground? Yep. Sure. But just remember, the U.S. has air superiority over Iran. So any Iranian going with a semi-truck or a mule cart to pick up a weapon from a buried site, if hostilities recommence, is a target. Right. And to think that we couldn't generate sorties, meaning aircraft in the air with munitions, with ISR, to begin to attack those at a moment's notice is a misnomer. So does Iran still possess large stockpiles of missiles? Yes. We always knew that. Okay. Right? But are many of those sites still buried or being excavated? My guess is yes. And then three, even if they did have access, we know the access points. We've been building the intelligence. Right. So I think we've been cherry picking the word missile here to draw conclusions that are more about politics, to talking about a war we don't like, which takes us away from the operational reality.
Well, when we talk about unearthing, if they've been digging these missile sites out after we bombed them and effectively buried them, is there a world in which maybe we let them do that because there were possibly CIA operatives on the ground? Maybe we're setting them up to feel like they've got this covered and can roam freely. So if and when kinetic activity resumes, we know right where they are.
Yeah, I mean, there's a wild range of options. And
Okay.
when we think about modern military planning, usually it's about generating different options you can present to the commanders. So they go up to Admiral Cooper, they go to General Kane, they go to Secretary Hegseth, they go to President Trump. And the higher commanders will determine the degree of risk. So I could see a world in which, if you ask Ben Jensen's opinion, I'm not going after every missile.
Yeah.
I want to target the system.
Okay.
So I want to destroy the launchers. I don't care if you have missiles if you can't get them on a launcher. You saw some really interesting reporting from early in the war where there was even the possibility of mines being laid at the exit sites from some of these. So it was even harder to move the mobile launchers out. My guess is what we really need to focus on is if hostilities resume and the U.S. is asked to go deeper into the Strait of Hormuz, which it doesn't get enough attention, we've had 2 and then 3 destroyers go in and completely repel IRGC attacks. If hostilities resume, you're going to have to see balancing that campaign from Tomahawk missiles fired from ships, a lot of carrier-based aviation. All of these assets are going to be striking missile sites. And again, the more important thing, starting to hunt a different type of missile, going from strategic targets to operational. I've got to take out the anti-ship cruise missiles that are mobile. Those are actually the hard targets because it looks like any truck. They can move them around because they're mobile. So again, can we do that? Yes. We've established air superiority. We'll put the strike packages back up and we'll begin to go hunting. So I think there's a lot of range of options. And the U.S. has a lot more leverage here militarily, even though there's a lot of political bargaining on Iran's side that I think is being captured in a lot of the reporting.
Okay, so all of that said, is the resumption of strikes inevitable?
I mean, that's always a political question.
Yeah, the strait's still closed. The talks aren't working.
It is. Well, unless you're a Chinese ship, right? So we found that some of the Chinese ships have been allowed to go through, which makes sense, right? The president has to balance global responsibilities. So talking to China, which truly is our main rival, can't be disconnected from ongoing considerations of strikes in Iran. So there's a careful balancing game of what he prioritizes when. But I think that the probability certainly increases when he comes back from his trip, this historic summit. And I think the one thing we have to watch is what could that look like? And in particular, what does it look like in terms of what I really want to see is that the U.S. has made changes to its plans, gotten the right equipment in place to really do more effective counter drones. Where the Iranians have surprised us, sadly because they had Russian and Chinese help, is the ability to harden some of these one-way attack drones so that they could strike some of our most valuable radars, they could hit our bases. So I want to see in this period that the U.S. military is adapted, we're in position, we can counter the drone threat, because we've demonstrated the ability to strike any target we can find in Iran. Now we got to take away their offensive punch.
You're so good at this. What do you make of this report that we've deployed a hypersonic missile or missiles in Iran? Are we just saber rattling, or are we going to use them?
Maybe, but honestly,
what would we use them for?
Look, we control the airspace. We can drop old dumb iron bombs.
Well, sure. So why would you need something like that? You're going to drop a Ferrari on Iran?
Yeah. Well, hopefully I get to drive it. I think, again, because you can't separate, if you're the president of the United States or you're his advisors like Secretary Rubio, you're looking at a global set of problems. And so there are instances in which I do want to demonstrate one capability in a war with Iran to signal to China. If I'm in China right now, you know what scares the heck out of me? I still import all of my oil. I still import tons of food. And the U.S. military, the Navy in particular, has demonstrated it can blockade a key choke point at a time and place of its choosing. That is going to cause the little hairs on the back of Chairman Xi's neck to stand up more than he's going to publicly.
That's fascinating. That's a projection of power that nobody's acknowledging right now.
Exactly.
The other side of the coin, as it were. If we did resume kinetic activity, would it look much different? If we decided to reopen the strait, would it look different than what we've seen, and would it require troops on the ground?
I think you're asking the key question, and there's no one way to reopen the straits. I think, again, that military menu of options is pretty big. So usually what you think you would see at the beginning is you would see a resumption of the air campaign. I'd need to have constant what are called CAPs, combat air patrols, over suspected launch sites for what are called FAC, they're little Mosquito Navy, those small boats, over potential launch sites for anti-ship cruise missiles. So there's going to be a heavy air component to set conditions and shape. Then when I begin to move ships in, which I got to coordinate with industry to have them come ships out, I'm going to have that air package, and I'm going to have additional assets that include helicopters, that include destroyers, creating this layered defense around. And so the best way to do that at that that lower rung is you're almost securing the sea line of communication, but you're doing it in a way where it's almost like a bait and ambush. You're basically setting conditions where the second Iran counterattacks, now you know exactly where they are, and you can resume operational strikes in depth. You can begin to hit them in those sites, hit anyone who made a cell phone call from a little boat. You're using signals intelligence, you're using imagery intelligence, and you begin a strike. So that's at the lower end. At the higher end, it could include a wider range of activities. So that could even include, there's always been discussions about small islands in the strait. You could have limited objective raids. You would want to even have deception, signal that you might do that to pull the Iranians out of position. So the opening of the strait is a doable and viable military option, but it's always a question of risk relative to the political objective the president has centered on.
And then, of course, keeping it open is a whole other mission. I say it all the time here. It's so refreshing to speak with people who know what they are talking about. Ben Jensen speaks the language and has been extremely helpful for us here understanding what's going on. I'm really glad that you could come in, as always, from CSIS, the Center for Strategic and International Studies. Ben Jensen, director of the Futures Lab. Fascinating. If you didn't hear that whole thing, get the podcast or find him online. Back it up and listen to Ben. I'm Joe Matthew in Washington. We'll assemble our panel next with the president still on the ground in China and a lot to talk about here in the nation's capital. Let's get to Wall Street. Charlie Pellet has the latest on the Thursday trade. Charlie, how are we doing?
Right now looking at a record, Joe Matthew, on the S&P 500 index, trading above 7,500 for the first time ever. The big question, we're going to close above or below that number right now, though, looking at a record 7,500 even on the S&P. We're up 56 now, up by about 0.8%. Dow Industrials above 50,000. Once again at 50,055, up 365 points on the Dow, up 0.7%. The old record, by the way, 50,188. That was set back in earlier in the week. We've got right now, we do have the NASDAQ Composite Index. It is advancing by 245 points, up 0.9%, and the Bloomberg Mag 7 Index climbing higher now by just about 0.6%. Right now, the 10-year, 4.45%, with the 2-year, 3.98%, and the 30-year, 5.00%. Gold is down $13 the ounce to $46.75, down by about 0.3%. West Texas Intermediate Crude, 101 even, right now unchanged. Boeing shares are trading lower. Boeing down by 3.8%. President Trump says China has agreed to buy 200 planes from Boeing in a multi-billion-dollar deal that would mark the nation's first purchase of American-made commercial jets in nearly a decade. Some disappointment, however, among investors. They were expecting a bigger order. Some of the other stories that we're following, we are awaiting the start of trading for Cerebras Systems. They're indicated to open 82% above their listing price. And sources tell Bloomberg a group led by Silver Lake executive Egon Durbin is acquiring 25% of the Las Vegas Raiders. Round 1 of the PGA Championship underway in Pennsylvania. At last check, Australia's Minwoo Lee sits atop the leaderboard at 4 under par. For our listeners in New York, Boston, and Washington, D.C., we will be bringing you live play-by-play coverage of the PGA Championship starting right after the closing bell here on Bloomberg Radio. Recapping, S&P at a record 74.98, up 0.7%. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, many thanks, sir. He'll be back at the top of the hour, 1 p.m. Eastern Time, as we welcome our global television audience to the program with our eyes on Wall Street today. Pretty remarkable, considering everything we're talking about here. A closed Strait of Hormuz, oil prices, gas prices on the rise, a frustrated, if not depressed, consumer, and the Dow Jones Industrial Average hits a new all-time high. The president's he's probably sleeping right now, but he's not been busy on Truth Social. He really hasn't been talking at all outside of the formal events in China, but I'm guessing he's happy to see Dow 50,000 again. He certainly talked about it a lot when we first got there. I'll tell you what, fascinating stuff there from Ben Jensen. That's going to take me a minute to get my head around all of that. But we're going to assemble the political panel to get their sense on what's coming out of China so far today. Charlie just mentioned it. We got a deal on jets. We do have that. Not what the market was hoping for. Remember, we told you 500 737s. Well, they got 200. President says they expected 150. That was not in the analysis here at Bloomberg, and that's probably why Boeing shares are down 4%. We've also got a resumption of beef imports. We'll have questions about that next hour when we talk to Senator Steve Daines. He was over there just last weekend trying to set the table for this whole thing, pun intended, with a question about lack of guarantee and how much beef China will actually buy. But hey, we've got a reciprocal invitation. President Trump inviting President Xi to come to Washington a couple of months down the road. Here he is at the big event this morning.
Thank you again, President Xi, for this beautiful welcome. And tonight it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th. And we look forward to it. And I'd now like to raise a glass and propose a toast to the rich and enduring ties between the American and Chinese people.
You can hear the clinking of glasses all the way from here. Let's assemble our panel for their take on how this trip and the summit are going so far. Bloomberg Politics contributors Rick Davis and Adam Hodge are with us. Rick is our Republican strategist to partner at Stokecourt Capital. Adam is our Democratic strategist and managing partner at Bully Pulpit International. Great to have you both here. Rick, we've talked about the prospect of a big Boeing deal for years, about a decade, as a matter of fact. Is this good news? Is it a letdown? How are the deliverables sounding so far?
Yeah, I got to tell you, I'm shocked that it's actually as meager as it seems to be. Yeah, it's a letdown. I mean, expectations were 500 jets, as you said. And by the way, that would be sort of a normal standard order for a country like China. And instead, we get less than half of that. And I would not hold my breath on that either, because like all these other categories, China cut these deals in Trump's first term. Phase one, remember that? And they never fulfilled them. $200 billion worth of transactions, and most of them never saw the light of day. So, yes, I think it's good to have these conversations. Great, cut as many deals as you can, but don't trust the fact that it's actually going to happen the way it's said.
Adam, if this actually is a trade mission, is the president going to have to do better than this? I know that Elon Musk is there. He says he's had productive talks. Jensen Huang, we've got NVIDIA at an all-time high today waiting for something. What are we going to hear?
Well, there's no question that trade has been on the front seat in national security, despite everything else going on in the world, seems to be the second-tier priority for the administration. I'll just quickly take a step back, though. During my time at USTR, we were trying to implement and trying to deal with the Chinese and their purchase agreements. And this seems like a more continuation of what we've seen before, where they have a lot of talks about potentially buying the products, but don't actually live up to their commitments and live up to what they said they were going to do. The same is true on beef. Same has certainly been true on soybeans. And that has weighed on the president's political standing in some of those key states that he really needs and his party really needs to hold on to in the midterm. So I think this will continue to be a bit more about trade, but we should not lose sight of probably the most consequential piece of news today, which was President Xi being very clear about how important Taiwan is to him and to the country. Not necessarily a surprise, but the stark language that was used was shocking. And it troubles, I think, some of us in the national security space to see the U.S. not meet that with as forceful and a clear response as it so rightly deserves.
Well, you point us to it, Adam, and I'd like your take on this, Rick. The readout from the foreign ministry in China. The Taiwan question is the most important issue in China-U.S. relations. If it is handled properly, the bilateral relationship, it reads, will enjoy overall stability. Otherwise, the two countries will have clashes and even conflicts, putting the entire relationship in great jeopardy. President Xi reportedly told Donald Trump this behind closed doors, Rick. What do you make of it?
Look, we know that President Xi has been fluxumed by the unstable nature of the Trump presidency, changing direction, changing the procedures for summits like this, coming up with all new approaches to what have been, I'd say, heavily negotiated approaches to things like Taiwan. And so I think that there's a lot of fear that we've noticed on the China side about just Trump's instability to decide one day to do something that was well outside expectations. And of course, it's the opposite of how China operates, right? They want to send clear signals. They want to stick to those signals. They want to have their plans supported by everybody in the world, regardless of whether it's in their self-interest. And I think she is right, is that, this is the core of the conflict with the United States. And the problem is that the U.S. has probably drifted even further from Xi's point of view on the U.S. should basically acknowledge that there's a right to Taiwan for mainland China, and if anything, selling weapon systems to the degree that we're doing it now kind of betrays that approach. And so, yeah, I think there's a lot of concern in Beijing about Trump, and maybe that's the best possible strategy we could have, is keep them guessing.
Well, there you go.
The thing about signals, though, Joe,
go ahead, Adam,
that I just want to quickly jump in on is the rest of the allies in the Asia Pacific are also watching those signals, and they want to know rightly whether we're going to keep our word and our promise when it comes to delivering the weapons to Taiwan that the Congress has already authorized. And I think if you're in the Philippines, you're in India or Japan, South Korea, where you've seen some of our assets moved out of the region to fight the war in Iran, you got to really have questioned if the White House and the president cannot continue to hold the diplomatic line on Taiwan, what that means for your own safety and security, and whether the bedrock American promise to be that partner still exists. So that is why the language matters, and that's why all across the Asia Pacific, they're watching how the president stands up to this issue, and he needs to be crystal clear that our position and the status quo cannot change.
I've only got 30 seconds here, Adam. Are you concerned this conversation about weapons shipments to Taiwan will bring a change in policy?
Yes, I think there's absolutely a fear that the president may walk away from this commitment. I think that is why you've seen Republicans and Democrats, this is bipartisan, sound the alarm about the potential for this sale not going through because of the signal that it sends. And I think it questions whether the president is actually going to continue to hold the line. And it's troubling. There's no question about it. It is very troubling.
We're going to explore this further in our next hour with our great panel. Bloomberg Politics contributors Adam Hodge, Rick Davis are with us. They'll roll into hour two as we spend time as well with Senator Ted Budd, the Republican from North Carolina, and Senator Steve Daines, just got back from China. This is
from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump says we have a deal. Welcome to the Thursday edition as the president announces a deal for Boeing to sell a couple hundred jets to China. Not as many as the markets wanted. I'm Joe Matthew, alongside Kaylee Lines in Washington. Kaylee, we've also got an agreement to resume U.S. beef imports, but the real news seems to be this warning from China to the president over Taiwan.
Yeah, specifically saying that that could cause clashes between the two countries if not handled properly. And so fascinating when you look at the readout on the meeting from China and then from the U.S. China's obviously focusing on Taiwan. No mention of Taiwan in the U.S. readout. The U.S. readout does mention the Strait of Hormuz. China's does not.
We're trying to get our heads around all of this now, and the president is not done. That big ceremony that took place in a roughly 2-hour-long summit this morning did bring a fair amount of news. We'll be curious to hear, Kaylee, if other deals emerge, whether it's with Elon Musk or NVIDIA.
And of course, aside from geopolitics, something else we were watching today here on Bloomberg TV and radio has just happened. Cerberus. Here
we go.
Just opening trading at $350 after a $185 IPO. Remember, at $185, that IPO price already priced above the range, which had already been increased from the initial marketed range. And now we've opened, 85%, a little north of that, above the IPO price. Just an incredible debut for this company that, of course, makes an AI chip maker, chips that power artificial intelligence. Ultimately wants to be a competitor with other publicly traded companies in this realm, like NVIDIA, of course, the king, but quite the debut for Cerberus right now.
Yeah, so much for skepticism about the AI spend right now. We're at $385, $5.5 billion IPO. Nora Melinda is standing by live in New York right now with her eyes on this new issue. Nora?
Well, this is really major for the market, especially as we see so many people fixated on another place to essentially put their money for the artificial intelligence play. Everyone really even concentrated in NVIDIA. This is a name that people are saying could potentially be a competitor to that. So this is a massive IPO. Of course, a lot of people seeing this as the biggest IPO of the year. Still, when you look at the market cap, it isn't nearly as big. People saying about 1% is what I'm hearing on Wall Street when you look at the market cap in comparison to NVIDIA. But the idea here is that people are trying to find a place to put their money where they can bet on the future and not necessarily put it in some of the names that we've really been seeing driving this market, like NVIDIA. So you're certainly seeing people thinking about diversification right now in this moment. So clearly a lot of people on the street really digesting this, and I'm sure we'll see some really strong numbers throughout the day.
Well, yeah, clearly this is quite a reception. The CEO of Cerberus was on Bloomberg earlier today talking about how oversubscribed this IPO was. And as I mentioned, you already saw the range increased and then a pricing above the range. Now, obviously, trading well above that IPO price. What should we make, Nora, of the money that was left on the table here?
Well, that's something to definitely dig into because, I mean, when you think about these companies and you think about IPOs, this is a major moment for a company like this. And of course, the broader sector as well. Take a look at the trade that we're seeing in the macro here in the S&P 500. Information technology still the best performing sector in the S&P. We know that this is the case as we were kind of looking at this AI trade resuming today, but of course still getting a push up about 1.8% when you take a look at that sector. So this is a name that a lot of people are essentially depending on, and certainly you'll see it fueling other parts of the market. That's what I'm hearing from the sources that I'm speaking with.
This is the biggest IPO of the year so far, Nora, but it won't be by the time this year is over, right?
Right.
We've got SpaceX in the pipeline, Anthropic, OpenAI. What else do you have your eyes on?
I mean, the list goes on. I think that you mentioned them. These are some names that a lot of people are really familiar with. And of course, we know with SpaceX, that's something that we've been eyeing. Of course, Ed Ludlow, B-Tech, Caroline Hyde, keeping an eye on these names. And of course, a lot of people are just looking toward the end of the year. As you mentioned, this may not be the biggest that we see this year. So we'll have to keep an eye. But of course, these are some major tech names, and we're really seeing them debuting to the market right now.
Fascinating stuff. This thing is on fire, Kaylee. 89% surge.
Yeah,
Insane.
It's really, really incredible. $385 is where we're trading. Again, the IPO price was $185. Nora, what do we know just quickly about the geographic exposure that this company has relative to a company like NVIDIA, whose CEO, mind you, is in China right now, as there's an active conversation about the ability to send H200 chips to Chinese buyers. Where's Cerberus in that?
Yeah, I mean, especially as we keep an eye on the broader story of line of NVIDIA, China, this is something that we're also keeping an eye for this company, because if you think about some of these names, it's really important that they have strong partnerships and where they're really placing their money and where they're putting their emphasis. So that's something that investors are really digging into as well with this company, that they do have big customers that they're able to really rely on and see them really power this company forward here, Kaylee.
Well, it is being powered forward at this debut of trading, Nora. That is for sure. Bloomberg's Nora Melinda, thank you so much again. Cerebras just having opened up on the NASDAQ after a $185 IPO that raised $5.55 billion. The shares are now up some 90%, closing in on 400. I believe 385 is where they're trading right now, as we consider the artificial intelligence story and the chips that power them. As I mentioned, of course, chips very much in focus in China today, where not just President Trump, but the CEO of NVIDIA, Jensen Huang, were on hand for this state visit and meeting, which of course focused on a number of other subjects, as well as the president was properly feted by Chinese President Xi Jinping and then went into more serious conversations. Just take a listen to the characterizations earlier today.
The relationship between China and the USA is going to be better than ever before. Tonight, it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th.
China and the United States both stand to gain from cooperation and lose from confrontation. We should be partners, not rivals. We should help each other succeed and prosper together.
So let's get the latest now from Beijing as we turn to Bloomberg Washington correspondent Tyler Kendall, who is joining us from there live. So Tyler, walk through what happened today, as it is now obviously the middle of the night and you are up very late or early for us. Walk us through what happened and what fundamentally tangibles have been delivered here.
Well, Kaylee, at this point, we've actually gotten some breaking news and headlines within the last hour in terms of deliverables here in Beijing, including President Trump saying in an interview that China has agreed to purchase nearly 200 Boeing jets. We didn't get any additional information beyond that, exactly which types of makes or models that these would be, but it does mark a pretty significant development considering that the Chinese market is the second largest aviation market in the world, but hasn't had a significant purchase of Boeing aircraft in nearly a decade. That was one of those big ones that we were keeping our eyes on as we await further details on whether or not we will see some tangible purchase commitments when it comes to China buying U.S. agricultural goods. I'm tracking soybeans and corn, as well as energy products, as the U.S. Treasury Secretary earlier today seemed to preview that perhaps we could see a reduction in tariffs on nearly $30 billion worth of traded goods. There was a lot of optimism, I think it's fair to say, when it came to both sides talking about more trade between them. But then we started to see some mismatch, if you will, when it came to the public readouts between the U.S. and China about what happened behind closed doors. And there were some developments when it came to Iran, including President Trump telling Fox News that China has pledged to help with Iran and will no longer or will not ever send weapons to the country amid the conflict in the Middle East. Yet we haven't gotten confirmation from the Chinese side yet. And in fact, in their public readout, they instead mentioned that there was this dialogue about the situation in the Middle East, but didn't put as firm of details on it as the U.S.'s readout did, including the U.S. saying that China did agree that the Strait of Hormuz should remain a free waterway and that Iran cannot obtain a nuclear weapon. Lastly, we're also closely tracking any developments surrounding Taiwan. As you well know, we saw earlier today Chinese President Xi Jinping say that Taiwan potentially risks derailing the relationship between the U.S. and China amid what has been a summit that has been focused on stability. At this point, the U.S. is downplaying that there were any real major concerns between the two sides. Secretary of State Marco Rubio saying that it was only briefly discussed behind closed doors, as U.S. officials have signaled in the days ahead of this summit, Joe and Kaylee, that their policy regarding Taiwan is not expected to change.
Tyler Kendall with us up late in Beijing. Tyler, thank you so much for the readout. That is the very latest as Tyler's traveling with the president. And we want to introduce Senator Ted Budd, the Republican from North Carolina, joins us with his view from both the Armed Services and Intel committees. It's great to have you back, Senator, on Bloomberg TV and radio. And I guess I'll pick right up where Tyler left off with this warning now from China involving Taiwan. I'm not sure what you made of that language. It seemed pretty stark coming from overseas this morning, but there are questions about potential policy changes and whether the U.S. should continue to provide weapons to Taiwan. What is your thought?
Well, first of all, talking is a good thing, and remember that the president right now is on Xi's home turf, and that's certainly something that Xi has promised to his own people, an aggressive approach to Taiwan. Remember, I mean, you know, I would say strategic ambiguity and just keeping the pressure on without allowing it to metastasize. And as long as we can just say, look, these are people that we respect, we have trade relationships with, and you know, I think as long as we just keep the pressure on. One of the things China has to make sure that they maintain is respect on the international stage. And if they are seen, you know, in an increasingly totalitarian fashion, and if they're aggressive towards Taiwan, they begin to lose respect in the other free parts of the world. So they have a balancing act themselves, and I think it's helpful to remind them of that. But I think, again, President Trump being there, his personal strength, the way that he's negotiating right now with Xi is a good thing for America. But I would say we're going to have relationships. So much of what we design here in the U.S. when it comes to chips, they actually get produced there. It's very important. We would not want China to have complete control of that, which is ultimately what they would seek. You know, there's a massive amount of trade that goes through that area, and a lot of it is produced that affects our economy here. When it comes to chips, you know, China doesn't just want, you know, they want Huawei to be producing chips on par with what we're seeing here with NVIDIA. So that's their ultimate aim. But again, I would just say we need to keep the pressure on and keep up our relationships as we have them right now with Taiwan.
Well, I'd also like to ask about how Iran factors in here in the Strait of Hormuz, which, of course, Senator, still remains closed as you are speaking with us. The president, in an interview with Fox News, suggested she offered help when it comes to the strait, though the Secretary of State, Marco Rubio, in a separate interview suggested that Trump didn't ask for that help, that the U.S. does not need China's help. Is that really true? Senator, if we don't need anyone's help, why is the strait still closed? What we need is
non-interference. Yeah, we need non-interference right now. Look, the benefits of opening the strait is not just good for the U.S. and the American consumer. It's not just good for Europe. It's also good for Asia, particularly China. I mean, much of what their energy, it comes through there. So it would benefit them as well. You know, we have demining operations going on. Ships that are not to or from Iran are able to pass through there. But I would say we can increase the safety over the coming weeks in regards to the strait. Yeah, I was with the CENTCOM commander this morning, so I think they've had an incredible operation since February 28th. You look, this is a very significant 50-year-old problem that president after president has kicked the can down the road on, and President Trump's not willing to do that. He is solving a 50-year issue. And if it's going to take since February up until now, I know nobody wants to get this done quicker than President Trump and get this wrapped up and get prices lower for the American consumer. But you cannot have a nuclear Iran, and President Trump is fixing a 50-year problem.
You mentioned that you spoke with the CENTCOM commander, and I'm sure you can't share details of your conversation, Senator, but I'm just curious what you think about the options on the table here. If this strait remains closed, with or without assistance from China, do we need to resume strikes to force its reopening?
I'm going to leave those options up to the president, but he needs to have as many options on the table as possible. But let's not look at it as something that began end of February, beginning of March. Let's look at this as something that started in 1979. And we want to be done as quickly as possible, but you can't have a nuclear Iran. This is a country that has chanted death to America. I wouldn't say the bulk of the 93 million people have, but I would say the leadership, which is very oppressive and very disconnected from its own people, have chanted death to America for 50 years. And then they took ballistic capability, which they demonstrated in recent months, plus nuclear enrichment. They tried to marry those together. You know, this is something that we can't have on the international stage. look, if you're paying $3 a gallon for gas or $2.75, and now you're paying, $4, it doesn't matter if a nuclear weapon is headed your way. Let's fix this issue, and then that will fix the energy issue, and we'll get back to lower gas prices, but a lot more peace in the world after President Trump resolves this issue.
Well, Senator, you mentioned their ballistic missile capability. I'm sure you saw the reporting in the New York Times earlier this week that new intelligence assessments say Iran has regained operational access to 30 of its 33 missile sites and still has about 70% of its mobile launchers across the country and retained roughly 70% of its pre-war missile stockpile. I'm not sure if you're able to confirm classified information, but can you at least tell us, Senator, if you think those figures are wildly off base?
Well, I can't confirm any of that, but what I can say, if they dig something out from underneath the rubble and they stick it back out there, we certainly have access to decapitate it once again. So if they're willing to continue to allow their own weapon stockpiles that remain to be degraded, that's in our favor.
There has been some skepticism thrown on those numbers, which is why we ask, Senator, more broadly, are you being briefed from the administration? I know you mentioned, again, that you met with the CENTCOM head this morning, but is the White House briefing members of armed services and intel to your satisfaction? Because we're hearing from a number of Democrats and even some Republicans who say no.
Well, we've had the Secretary of Defense come here, Secretary of War come in. He's been very open, and not just focused on CENTCOM issues, but other issues. I mean, we've got hostages being held in Africa. We have major concerns around the world. It's a dangerous place. We're very blessed here in this country, but I'm grateful for their leadership. I'm grateful for their clarity. And look, they want to be very protective with the latest intelligence, but they are willing to share it when they come in, and we ask the right questions. They're forthcoming, and I'm grateful for it.
All right, Republican Senator Ted Budd of North Carolina joining us live from Capitol Hill here on Bloomberg TV and radio. Senator, we appreciate your time, as always, joining us here on Bloomberg, where, of course, we're keeping our pulse on what's happening here in Washington, but also what's happening on Wall Street, or more specifically on the NASDAQ today, is that a new stock has just been listed and has begun trading and is doing quite well. Cerebras, after a little more than $5.5 billion IPO priced at $185 a share, it is now trading at $360 a share, up 95% in this debut. We want to get more on this now as we turn to Bailey Lipschultz, who covers IPOs and the like for us here at Bloomberg. So, Bailey, obviously we know anything in the AI realm is hot right now. It makes chips that powers artificial intelligence. You could probably assume that this was going to go fairly well, but going this well? How mispriced was this IPO?
See, we were debating that on our desk, and if I put on my banker hat for a moment, the issue with pricing an IPO is you can't really tell what retail is going to do in the immediate aftermarket. Yes, the stock is up 90%. Yes, we've only had 3 IPOs that raised more than $2.5 billion close up more than 90% in their debut session. But when we look back to Figma over the summer, it opened up like 160% and is now well below what IPO buyers paid. So a lot of froth in the market, a lot of excitement, as you mentioned, around anything AI. You throw out NVIDIA competitor and people just get jacked up. It'll be interesting to see where the stock is trading 3 days, 5 days after their first earnings, and more importantly, 6 months from now when insiders are unlocked.
You know, considering all the concern about the sustainability of the AI spend, this is awfully reassuring for investors in the space. But I wonder if we need to look at this somewhat differently. Is this simply underscoring the incredible amount of spending that's going on? Because here you have a company that's going to receive that spending as opposed to ponying it up like the hyperscalers are. Is this going to be another NVIDIA?
Well, I think that's the question, Joe. And when you talk to investors, their perspective is, when this IPO would call it at $40 billion in market value, well, NVIDIA is right now trading at $5.7 trillion. So even if the stock doubles or triples or quadruples from here, we're still talking about a drop in the bucket relative to the world's biggest company and relative to the amount of spending that is anticipated in the coming years. To answer your question, I guess more pointedly, there was concern 2 years ago when they tried to go public around just exposure to G42. Then they inked contracts with OpenAI. They've been talking about others. There's just a lot of potential spending, and as kind of you alluded to, if you're the companies either selling chips or building out these data centers, at least from an investing perspective, right now that's more attractive than underwriting some of the massive capital expenditures that those hyperscalers are.
Yeah, wow.
Well, and when we consider where the hyperscalers are deploying resources and who ultimately is going to be the beneficiary of all of this, the users of this technology, how does an IPO like this for Cerebras, which, as you say, of course, is much smaller in scale than an NVIDIA or, say, some of these other artificial intelligence AI LLM companies that we believe may be pursuing IPOs in the not-so-distant future. If you're an Anthropic, I would imagine you see this and you're like, all right, we figured appetite was going to be good, but it might be better than we could have even anticipated.
No, I think that's true. And one thing that we keep an eye on is the private markets trading. And Bloomberg has reported that Anthropic's talking to private investors about raising money north of $900 billion in market value, which is astonishing from a year ago. The question inherently is, what would that company look like as a public company? And I think we're going to get a big test in not too many weeks when SpaceX is expected to go public and how that is going to trade. Yeah. So those are going to be interesting test points.
You know, I was asking Nora about this a minute ago. Bailey, when SpaceX hits, when Anthropic hits, when OpenAI hits, where's the money going to come from? Are we going to see investors harvesting gains in stocks like this, in NVIDIA, so they can buy the new issues?
We've been talking to everyone about that exact question. If you're a professional money manager, you're likely fully deployed, which means by definition, if you want to buy a new stock, you have to sell something. So we're looking at the Mag 7 names. We're looking obviously at Tesla, given the overlap with Elon Musk. We're also keeping an eye on Bitcoin, because if you're a retail investor, if you're willing to bet on SpaceX at any kind of cost, you likely are deployed to crypto. So certainly going to be dynamics that we track over the coming weeks.
Wow. Let's see if the market can handle it. Is there enough money to go around, Kaylee? I don't know. Bailey Lipschultz with us in the clutch here on another IPO day and the biggest one of the year so far. Bloomberg News senior equities reporter. Cerebras is cranking here, Kaylee. We're up 84% now, below the highs of the session. But for what? It was a $185 IPO. We're at 337. We're doing okay, I think, so far. Charlie Pellet's got a view on the broader market here right now, because we'll see if the rising tide is in fact in place here. He's at World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe and Kaylee. Lots of moving parts, and yes, we are looking at a record right now on the S&P 500 index. We were trading above 7,500, very close right now, on track for a record close. Right to the numbers with the S&P at 74.87. That is a gain of 0.6%. Dow Industrials below 50,000 now. 49,982 on the Dow, up 290, higher by about 0.6%. NASDAQ at a record up 174, higher by about 0.7%. The NASDAQ 100 index also rallying up 0.6% and trading at a record. All of this about AI optimism. The 10-year currently yielding 4.45%, with a 2-year 3.98%, and the 30-year 5.00%. Spot gold down 0.1%, 46.82 the ounce, while West Texas Intermediate crude up 0.5%, 101.47 a barrel. Barrel of Brent 105.55 now, lower by 0.1%. As we have been reporting, Cerebras Systems jumping 93% in its trading debut, out of the gate at 185. Cerebras right now trading at 335, up again by roughly 89%. Round one of the PGA Championship underway in Pennsylvania. At last check, South Africa's Aldrich Potgieter sits atop the leaderboard at 3 under par. Again, recapping, S&P at a record, up by 0.6%. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We'll, of course, continue to check back in with Charlie on the wider markets and on Cerebras trading after this incredible debut on the NASDAQ. Apparently being a competitor to NVIDIA gets you quite the warm reception among investors when you come to public markets. But, of course, as was pointed out to us by Bailey Lipschultz and our own Nora Melinda, Cerebras has a long way to go if it wants to be the size of NVIDIA, the scale of NVIDIA. The question, of course, for NVIDIA, though, is how much it is able to scale and in what markets, as it would like, obviously, to be able to sell some of its chips in China. So how convenient that the CEO of NVIDIA, Jensen Huang, was picked up in Anchorage and traveled on Air Force One to Beijing, accompanying the president on his trip for the summit with Xi Jinping. There's been a lot of question as to what exactly may be inked or at least talked about when it comes to NVIDIA's H200 chips in particular. And Bloomberg had the chance to speak briefly with Jensen Huang on the sidelines of this trip. This is what he said.
One of the most important summits in human history. And the two presidents, President Xi and President Trump, had such a wonderful relationship. This is an incredible opportunity for us to rely on the relationships to build a much better partnership.
Did you get any specific customers for your chips for the H200?
We didn't really talk about. I'm here to support the president and to represent the United States.
Really interesting there. Did you get any specific customers for your chips? We didn't really talk, he said, but I'm here to support the president and to represent the United States. What's this all leading to? We heard about the deal today with Boeing, 200 jets instead of the expected 500. And that's not all. There's also an agreement to resume U.S. beef imports, which we'll talk about later this hour with Senator Steve Daines. He was in China just last week to help pave the road for that agreement. This summit is not over, though, and we're joined right now by someone who's had a real focus on China for the past couple of years as a lawmaker here in Washington, Congressman Raja Krishnamoorthi, Democrat from Illinois, who was the top Democrat on the China Select Committee at one time and still is steeped in this conversation. Congressman, it's great to see you. Welcome back to Bloomberg TV and radio. I don't know if there will be a deal announced by NVIDIA, but the stock is at a new all-time high today. And I wonder if you are still concerned about the president mortgaging our national security for the sake of cutting a deal with China.
I am. I think that the president is going into this summit from a position of weakness. I think that the Iran war has sapped us militarily, and it has sapped us economically, and consumers obviously know that because they're paying for it at the pump. And I think, unfortunately, it feels like the Trump administration is almost a supplicant here, asking Xi Jinping to lean on the Iranians to end this godforsaken war. And because of that, I'm concerned that Xi Jinping is going to ask for something in return. What that is, I'm not sure, but it could be anything from easing export controls to us backing off of our support for Taiwan and the status quo and negotiating all differences at the bargaining table, to any number of other issues. And so I'm very concerned about what's going to be discussed today and possibly tomorrow as well.
Well, on Taiwan, Congressman, what was your assessment of the frankly pretty blunt words from Xi Jinping about Taiwan, warning that it's something that could lead to clashes with the United States?
Well, I think that he is basically trying to get us to back off our commitment and obligations under the Taiwan Relations Act, our 6 assurances, our different communications that we've made repeatedly, both to Taiwan and the world, with regard to the situation there. Look, I think that this situation with regard to Taiwan should be negotiated at the bargaining table, but Xi Jinping has basically told the People's Liberation Army hierarchy that he wants them to be ready to take Taiwan by force by 2027, which means next year. And so we're kind of in this zone of danger where if Xi Jinping, if he were to make that decision, I believe would be a terrible mistake, would be catastrophic, and now we should be communicating to him the same, and I fear that we're not. And through our body language and through our request for favors with regard to the Iran war, we're basically giving an opening for Xi Jinping to possibly get something in return that could lead to conflict and possibly war down the road.
Well, then, if China is, in fact, offering to help the United States or agreeing to help the United States reopen the Strait of Hormuz, should we take that assistance?
I don't know. I don't know exactly what they want and what they're getting in return. I think, to me, because we are basically not working with our friends, partners, and allies on the Iran situation, because this is an unjust and illegal war, we don't have even the consent of the American people who are terribly opposed to this situation. I think that, again, Trump is in a corner, and I feel that he's isolated, and I'm concerned that he's going to make precipitous decisions that really endanger our national security, because he knows, and everybody knows, that we should not be in this war in Iran.
Well, on the subject of national security, returning to the question around NVIDIA and its ability to sell advanced chips to Chinese buyers, Congressman, how wary are you of that notion, knowing it would advance a tech giant that is, frankly, playing a very large role in sustaining at least U.S. financial markets, if not contributing to the economy overall? Where should the limits be for NVIDIA or for anyone else, knowing that China obviously can do things with that technology?
Look, NVIDIA is doing just fine, thank you. I think that the problem that we have right now is that if you ease those export controls, you do two things. One, you basically funnel our highest end technology to help modernize a military, which is basically arrayed against us and trying to erode our national security. And then secondly, you're also helping to fuel a techno-surveillance state, which is putting down the Uyghurs through their Uyghur genocide, that's harming their dissidents, that's harming their Hong Kongers. And it's essentially going against our values to provide them with the highest end technology, not to mention helping our competition to displace us. And so I think we should keep those very important export controls in place that Joe Biden put in place, the previous Trump administration had put in place. They cannot be eased. I'm also concerned about them being skirted right now as is, as we've now heard reports that NVIDIA might be enjoying sales through third-party nations that are funneling some of these chips to China. So we should not only not ease those controls, but we should enforce them even better than they are right now.
Well, interesting. I've only got a minute left, Congressman. I'm just curious your thoughts on the invitation to President Xi as well. Apparently he will be coming to the U.S. and visiting the White House in September. Is that a good thing?
I think it's always good to have these high-level visits and high-level talks. However, one, you have to be prepared, and two, you want to bargain from a position of strength. And if you don't have both of those particular conditions in place, then we enter as supplicants, and we're begging for favors. And when you ask for favors, guess what? The other side gets to ask for things in return, and I'm concerned that in a moment of peril, the Trump administration and Donald Trump in particular, who likes to freelance, will give away something that could cause us great harm.
All right, we will leave it there. Congressman, appreciate you joining us. It's Democratic Congressman Raja Krishnamurthy of Illinois here with us on Balance of Power. As we further this conversation now with our political panel, Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us, or rather Adam Hodge, I apologize, also a Bloomberg Politics contributor. Forgive me, Adam, our Democratic strategist. Rick, of course, a Republican strategist and partner at Stone Court Capital. I would love, Rick, just your reaction to what we heard from Krishnamurthy there, who clearly thinks that the U.S. is the one with the weaker positioning around this summit and has grave concern about acquiescence to Beijing. Do you share them?
Well, certainly this is a good example of the defeat of the notion that all politics ends at the water's edge. I mean, that's the most full-throated sale on the president's trip to China that I've heard all week. So I guess kudos to the Democrats for getting their talking points out. Look, this is not the greatest time for a summit. Obviously, it wasn't the original schedule, and doing it when you have a shooting war going on in the Middle East is never a good idea. That being said, not speaking to our only global rival for long periods of time is equally bad. And so I think you got to give the president some credit for, even though it's not good timing, people were speculating on this trip getting canceled just a week ago. That he's there and he's putting as good a face on it as he can. I thought it was a smart move by bringing over a lot of our premier U.S. corporate executives to mix it up a little bit, try to get some good old-fashioned trade deals done. None of that really matters in the big global scheme of our relationship with China and our protection of Taiwan in an uncertain time. But at the end of the day, so far from what I can tell, no harm done. And the president will return with some novel items in his shopping bag that wouldn't be there if he hadn't made the trip. And everything else seems to be pretty much status quo ante. So knock on wood that the trip continues to go well tomorrow, and that we pass this moment without a net loss and some incremental gain.
Adam Hodge, what do you make of that? Should politics end at the water's edge?
It should, but I mean, come on. Look at where we are in 2026. And I have the receipts from my time in the Biden administration when we were traveling abroad to know that that was not how the Trump administration and their officials operated. But that aside, look, I think what you heard from Congressman Krishnamurthy was really important, but that idea of giving away some of the crown jewels of our American innovation is a real risk. It's something that was important as part of the Biden administration's small yard, high fence strategy that we tried to implement. And it had the buy-in of our allies in the region. And I think the thing that China was most concerned about was that we finally got our act together. We had strengthened ties between Korea and Japan, between Japan and the Philippines. We deepened our ties with India, all while making billion-dollar investments here at home that strengthened us, that made us more competitive. The Trump administration has walked away from all of that. And I think that is why you see some concern about, in this weakened state that he finds himself, is he then going to give away the store to try to get some backward deal? That is a real concern I think should be on the minds of all Americans.
Bloomberg Politics contributors Adam Hodge and Rick Davis, thank you both for taking a swing at this. Senator Steve Daines is coming in next on Balance of Power on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher, S&P at a record, and Cerebras System shares are jumping in their first day of trading, up right now by 81% after the AI chip maker and data center firm raised $5.55 billion in the year's largest IPO, out the gate at $185. Right now, Cerebras is trading at $332. S&P 500 index right at 7,500 now, up 56. That is a gain of just about 0.6%. The artificial intelligence trade fueling a record-breaking run. Again, the S&P at 7,500. We've got the Dow above 50,000, 50,060 on the Dow, up now by 0.7%. NASDAQ also at a record, up by 0.9%. The NASDAQ 100 index also at a record, up now by 0.8%. All of this with the VIX just above 17, the 10-year at 4.45%, the 2-year 3.98%, and the 30-year at 5.00%. Spot gold, little change, down 0.2%, 46.79 the ounce, while West Texas Intermediate crude up now by 0.7%, 101.70 on WTI. Barrel of Brent 105.75, up now by just about 0.1%. Cisco, after earnings, up 12.8%. Coming up after the close of trading, we will be hearing from Applied Materials. Round one of the PGA Championship underway in Pennsylvania. At last check, South Africa's Aldridge Potgieter sits atop the leaderboard at 3 under par. Recapping, S&P at a record. Right now it's 74.99, up 0.7%. And shares of the hottest IPO, biggest so far this year, Cerebras Systems, up now by 81%. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. The biggest IPO of the year, yes, and a very hot stock in its trading debut today. We'll continue to track that for you here on Bloomberg TV and radio. We'll have more on the implications of Cerebras' strong demand that it is seeing and what it means for the overall artificial intelligence trade with Bloomberg's Michael Shepard in just a moment, especially how China factors into that entire conversation. Knowing it is China, the President Trump has not only been focused on, but has been visiting over the last several days. Of course, properly feted by Xi Jinping in Beijing today, going into hours of talks, and of course, setting the groundwork for more talks in the future, including for the first time since 2015, inviting President Xi to a state visit at the White House in September.
Thank you again, President Xi, for this beautiful welcome. And tonight it is my honor to extend an invitation to you and Madam Peng to visit us at the White House this September 24th. And we look forward to it. And I'd now like to raise a glass and propose a toast to the rich and enduring ties between the American and Chinese people.
Those rich and enduring ties do come with some deliverables today. As you've been hearing on Bloomberg TV and radio, there is a deal for Boeing jets. This is something we were specifically looking for with the CEOs of Boeing and GE Aerospace on this journey. Not as much as the market hoped for. 200 jets. We're not sure what they are. There was an expectation they would be 737 MAXs, the president referring to them as the big ones, the biggies, and we'll have more on that for you. Boeing shares are lower on that announcement, and there is as well an announcement on a resumption of beef imports, U.S. beef imports to China. We're still waiting for news on agriculture, specifically soybeans. None of these deals might have been able to take place, though, without the help of Senator Steve Daines, the Republican from Montana who spent part of his career in China, was back there with an important delegation earlier this month. A longtime advocate for the beef industry led a bipartisan delegation to China with discussions covering all of these deals that I just mentioned, and I'm glad to say that he joins us now live from Capitol Hill. Senator, we've been looking forward to this conversation, and we can start picking through these one at a time. Why don't we start with the beef imports, because I know that's important to you. This shipment for the shipment licenses, I should say, for hundreds of American slaughterhouses appears to have been scaled back since the original announcement. Can you give us details on what has actually been agreed on?
Well, first of all, it's important to remember it's the second largest beef export market in the world, and U.S. beef was prohibited from that market until 2018. I was over there that year negotiating with China to getting access for the first time, which we did, but then these licenses expired last March, and the Chinese did not renew them. So everything I'm hearing is it's positive, it's moving forward. I think the left hand doesn't know what the right hand's doing sometimes to get the final pieces done on the licenses. But when we were there last week, it was about Boeing, it was about beef, it was about beans, and sure enough, as we're starting to see, we're unpacking these deals. This is real good news. It was about $2 billion of exports of U.S. beef to China before it ceased. So this will be good news here, certainly for farm and ranch country.
Well, and on Boeing, as Joe just mentioned, Senator, the president told Fox that China will be buying 200 big planes. Was it your expectation that that order would be larger than that? Because it certainly seems the market's was.
Well, I haven't seen the mix between the Maxes and the wide bodies yet, specifically, but I know China had not purchased a Boeing aircraft in 9 years. And of course, it's one of the largest commercial aviation markets in the world and one of the fastest growing. Very important we're in that market because the Chinese have their own homegrown brand of Comac, which are now commercially viable. They're flying several of those aircraft with airlines like China Southern, China Eastern. But just stepping back overall, this is good news, and I'll tell you why. Let's not forget that China and the United States are 40% of the world's economy in terms of GDP, the two largest militaries in the world. It's very important that we are de-escalating, that we're not decoupling, that we're de-risking, and bringing our two leaders together. And trade can be a wonderful way to keep the diplomatic ties open, as well as to thaw what was a pretty frosty relationship last year.
Yeah. Well, as someone who understands the nuances of our relationship and the psychology inside the government in Beijing, more than most in Washington, I'm curious what you thought of the rhetoric surrounding Taiwan today, because it raised a lot of eyebrows. Many thought Taiwan wouldn't really be a major factor in these discussions. I know the president indicated he would discuss weapon sales to Taiwan, but the foreign ministry readout says President Xi told Donald Trump behind closed doors the Taiwan question is the most important issue in China-U.S. relations. If handled properly, our relationship will enjoy overall stability. Otherwise, the two countries, he said, will have clashes and even conflicts, putting the entire relationship in great jeopardy. What is President Xi getting at here? And will the president alter the sort of ambiguity that our stand has been known for?
Well, first of all, that's not a surprise. I worked in China with Procter & Gamble. We were some of those first early expats that were based in Guangzhou back in 1992. We had two little kids and we moved over there. We had two more babies born in Hong Kong during our 6-year assignment there launching American brands. But I've been watching the Taiwan issue for a long time, and China and the United States have remained consistent in their respective positions. You go back to the Taiwan Relations Act of 1979, what President Trump was talking about today with our foreign minister Wang Yi and as well as Xi Jinping is just consistent with where we have been as a country, and China is holding their consistent position as well. So I'm not surprised by it. This issue came up when I met with their foreign minister Wang Yi last week in the Great Hall of the People. Similarly, when I met with the Premier Li Qiang, we did talk Taiwan. It's always discussed, so I'm not catching that by surprise. I'm a little surprised the media is saying it's a surprise because, frankly, it's not a surprise. It's always an issue. It's always top of mind for the Chinese, and some we always have to be prepared to stay consistent with the position we've held since 1979.
Well, obviously, Taiwan was in the Chinese readout of this, Senator. But it was not in the United States, the White House's readout in terms of what was discussed at these meetings, though the U.S. explicitly did mention the Strait of Hormuz. And President Trump went on in an interview on Fox to say that President Xi said he wants to help in any way he can and wants to see the strait open back up. Should we accept that help from China if offered? Do you expect it would come at a cost?
Well, I think we should accept that help. When I was in Beijing last week, meeting with Foreign Minister Wang Yi, the day before I met with Wang Yi, the Iranian foreign minister was sitting in the same chair I was sitting in a day later, talking about the issues in Iran and the conflict. And the readout from that meeting was that the Chinese want to help stabilize the situation, to de-escalate it and get the Strait of Hormuz open, get the flow of oil moving forward, getting the price of oil down, getting the price of gasoline down. That'll serve not only the United States and China, but the global economy. So they were being helpful. And I'm glad to see that President Trump and Xi Jinping continue that discussion. And everything I'm hearing, it was constructive. And we need China to help us. They do have a unique role to play as an interlocutor with the Iranian government, and we need them to be leading and helping us stop the conflict in Iran and helping us bring this to an end.
What will we hear about agriculture in our remaining moment, Senator? Will there be a deal on soybeans?
I think so. There's deals out there lingering as the largest soybean purchaser in the world, and our farmers, certainly in the United States, need access to that market. I'm hoping that we'd also see something in areas like wheat, barley, and chickpeas, as these are all important to farm country, and farm country is struggling right now with lower prices and higher input costs.
All right. Senator, we appreciate you joining us so fresh off of your own trip to China. Senator Steve Daines, the Republican from Montana, live with us from Capitol Hill. And as we continue to explore the themes around this visit, not just President Trump's visit to China, of course, but a lot of corporate executives visit to China, too, including the CEO of NVIDIA, Jensen Huang, who, of course, probably infamously now joined en route, hopping on Air Force One in Anchorage. A late ad, an invitation from the president, but a significant one at that. And this is something we've continually discussed over the last few days with Bloomberg's Michael Shepard, who covers strategic technology for us here at Bloomberg. Shep, just quickly, we want to talk to you about the Cerebras IPO as well, because it, of course, wants to compete with NVIDIA in terms of supplying chips that power artificial intelligence. But on NVIDIA, do you expect Jensen Huang is going to be walking away from China with something he wants in hand, which is more ability to sell advanced chips into the Chinese market?
Well, that is certainly his hope. And the Chinese government has been one of the final hurdles standing in the way of that. The U.S. has granted permission through licenses to sell some of those H200 chips. They're part of the Hopper generation of semiconductors used to run and train artificial intelligence systems. It's the second generation behind the current market-leading Blackwell line that we talked so much about. The U.S. has cleared it. Chinese authorities, though, haven't allowed their companies to do so and to make those purchases. And what Jensen is going to be looking for is maybe a loosening of the restrictions on the import side in China. Unclear whether he actually gets that done, but his presence there and President Donald Trump, of course, may be stepping up. It's unclear whether U.S. officials will actually try to break a sweat to do so, but clearly this big CEO delegation, they've got that kind of a goal in mind.
We caught up with Jensen on the sidelines of the summit earlier today. Remarkable language that he used when he was asked specifically, did you get any customers for your chips for the H200? He said, we didn't really talk, but I'm here to support the president and to represent the United States. Is he just playing coy?
You know, Jensen in public can be kind of cagey on those, but he has said previously in public remarks that they have a lot of customers waiting in the wings in China to be able to buy these chips.
Just waiting for a green light.
Just waiting for a green light, and more on the China side. He has been careful not to cast too many stones in that direction, but we do know from our own reporting that really is the case, and Secretary of Commerce Howard Lutnick even told lawmakers last month here in Washington that China was really the main obstacle standing in the way of those added H200 sales. But we'll have to see if we can catch Jensen again somewhere in the sidelines to see if he has an update on those remarks. And certainly next week when they are delivering their quarterly results, he will be asked about it Wednesday afternoon. Tune in then to see if he has more to add off the trip.
Well, I wonder if it'll be Wednesday that serves as the catalyst for this becoming a $6 trillion company in terms of market valuation. They're getting awfully close. Cerebras is not close to that figure yet, but with this IPO today, they do have a value above $70 billion. Pretty incredible demand we're seeing. The IPO priced at $185 a share. That was above the range already. Opened at $350. We're now trading around $311. So a little bit of steam has come off this right now, Mike. But what does this tell us about the appetite around AI and chips in particular?
Well, Kaylee, it really is another sign of the times when it comes to AI and this relentless demand for infrastructure needed to help power this technology. There have been all sorts of questions about will the boom start to run out of steam? But based on what we heard from the 4 biggest AI developers that are publicly traded here just last month with their results, and we're talking about Meta, Amazon, Google, and Microsoft, they are continuing to spend, and that means for companies like Cerebras and NVIDIA, lots more purchases of their products.
Shep, thank you as always. Bloomberg's Michael Shepard, as we keep our eyes on the stock. It topped out around 385, was halted for a bit, now at 305, up 65%. We'll have a lot more on this new issue when we reconvene at 5 p.m., the late edition of Balance of Power, only here on Bloomberg.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenevec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, a very good afternoon on this Thursday, May 14th, 2026. Carol Master, Tim Stanovic, live here at Bloomberg headquarters in New York City. A massive IPO, the biggest of the year so far. We're not done yet. So, folks, there's more to come, of course, here in 2026. A massive surge, though, on the first day of trading. We're talking about Cerebras. We're going to talk about that a little bit later on. Actually, in just a moment, you've got major equity averages here in the U.S. hitting records again, on track for record closes, Tim.
Yeah, we teased it, so I'm going to say, Carol, 64% higher for Cerebras right now. It was up as much as 109% earlier in the session. Right when it opened, it was paused for volatility. We're going to have more from Ed Ludlow in just a minute, who spoke to the CEO of the company just a little earlier.
He did indeed. Also, pull out your Greek history notes to understand the U.S.-China relationship, at least from China's perspective.
Or just have Carol Master send you emails that explain this. Thank you for that this morning.
I love it. Like, I was thinking, God, am I the only one who doesn't really know? And I did a deep dive. Anyway, we're going to get to that in just a moment.
Plus, putting money in motion. This as we leave the old rules-based order and enter a new rules-based order. Jim Caron at Morgan Stanley Investment Management Portfolio Solutions Group. He's standing by, and he's going to join us in just a minute.
So timely as we watch that meeting over in Beijing. Also, the Wheels Up CEO on earnings, its deal with Delta, and so much more. And then a voice that we leaned on big time during COVID.
Yeah, and maybe not so great when he comes back to the studio because we're talking potential for another pandemic. Dr. Amish Adalja from the Johns Hopkins Bloomberg School of Public Health is going to join us. We're talking hantavirus this time.
What you need to know. All right, folks, what you need to know on the markets. Let's toss things over to Charlie Pellet.
Very much. And what you need to know is all about Cerebras, up now by 64% out of the gate, roughly 185. Right now, Cerebras 301, looking at a gain of 63.8%. This on a day when stocks are pushing higher. This on a day when we got the S&P 500 index at a record. Right now, 74.91, did trade above 7,500. Keep it locked in to Bloomberg Television and Radio to find out if we close above or below that big round number. We do have the S&P right now higher by 45, up 0.6%. Dow Industrials at 49,990. Spent a lot of the day above 50K, up right now by 0.6%. We've got NASDAQ also advancing. NASDAQ Composite Index at a record up 0.7. The NASDAQ 100 Index also up now by roughly 0.7%. The VIX holding above 17. We've got the 10-year at 4.45%, the 2-year 3.98%, and the 30-year 5.00%. A retreat for gold right now at $46.72 the ounce, down 0.3%. West Texas Intermediate crude. A lot of focus on the Middle East. WTI up 0.9%, 101.94 a barrel. Also now barrel of Brent 106.16, up by about 0.5%. Again, Cerebras first day out, up now by 63.4%. Boeing shares, they're lower by 3.8%. Boeing did agree to buy 200 planes. China did agree to buy 200 planes from Boeing in a multi-billion-dollar deal that would mark the nation's first purchase of U.S.-made commercial jets in nearly a decade. But some disappointment with Boeing down by 3.1%. Coming up after the close of trading, we'll be hearing from Applied Materials. And round one of the PGA Championship underway in Pennsylvania. At last check, South Africa's Aldridge Potgieter sits atop the leaderboard at 3 under par. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. Carol and Tim, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Going back to where Charlie started, Cerebras shares at their high up 108%. Right now up about 65%. Stock now with a $65 billion market cap, Tim.
I want to bring in Ed Ludlow. He's co-host of Bloomberg Tech on Bloomberg TV with us from our San Francisco bureau. Ed, is it a strong IPO? I think is an understatement. This thing just blowing past expectations.
Yeah, I always go relative to where the IPO priced, right? So they priced the IPO at $185 a share, above the top end of their marketed range, $160 a share. It opened at $350. We're at $304. But I think the point that Cerebras CEO Andrew Foundman made to me is like the moment in history is that this is the biggest semiconductor IPO of all time. It is the biggest IPO of the year so far in the United States, but like the awkward bit being SpaceX is still to come. But, you know, like I think there's also a lot to say about what Cerebras actually is. Like, why is there such institutional investor demand for this name? And it's kind of in line with what we see in the AI story, right? This movement from just training AI AI models to running them, the process known as inference. And what's really interesting about Cerebras is it does the whole system, top to tail, of a supercomputer. It does all the hardware engineering, all the building. If you compare and contrast, right, because that's what the market's doing, NVIDIA just does the GPU. It actually does the server tray with other components, but it relies on someone like a Dell to assemble that server. With Cerebras, they just do it themselves. And so in this conversation, I was trying to not be too combative with Andrew Feldman. I'm trying to understand the future there, because if you're taking on the cost of building servers, your margins are lower. And his basic point is demand is astonishing to get this really high-pace inference going. And that's what they offer.
I got to tell you, coming off of Milken out on the West Coast, that's what everybody wanted to talk about was data centers and the AI spend. Hey, just real quickly, 30, 40 seconds here, Ed, because I know you're going to come back at the top of the hour. We want to dig deeper into this company. But there's this other little chip company known as NVIDIA.
Is it almost a $6 trillion company?
Is that one you're talking about? Yeah. Okay. Just quickly, do they need to be worried?
Does NVIDIA need to be worried about Cerebras, do you mean?
Yeah.
No. I mean, just if you're a Bloomberg Terminal client, go on FA Go, look at the estimates for the fiscal first quarter for NVIDIA, for fiscal 27, and then just look at the rate of growth on top and bottom line, and NVIDIA is still currently unstoppable, and $6 trillion market cap. A lot of that is related to what we discussed yesterday about what Jensen would actually get out of a trip to China with the president. And again, we still don't know.
All right, you're going to come back at the 3 o'clock hour, and we so appreciate it. Our Ed Ludlow, co-host of B-Tech on Bloomberg TV. He mentioned the trip, U.S.-China. It is going on. It was a busy Thursday for the two leaders of the two largest economies in the world. Chinese order for 200 Boeing jets. We got that. President Trump saying President Xi offered help on Iran and pledged not to send weapons. And we also got an invite, right, Tim?
To the White House, September 24th, I believe. President also saying his comments earlier today, he stressed the importance of the relationship between the two countries. Check it out.
It's an honor to be your friend, and the relationship between China and the USA is going to be better than ever before. You're a great leader. Sometimes people don't like me saying it, but I say it anyway. Whenever we had a problem, we worked it out very quickly. We're going to have a fantastic future together.
That was President Trump earlier today while meeting with President Xi of China. And after Chinese President Xi Jinping entertained President Trump with goose-stepping soldiers, a flag-waving children, I think it's safe to say, Carol, the tone shifted a bit.
Yeah, you really kind of saw the Chinese leaders warning that Taiwan could lead to clashes between the superpowers amounted to a thunderclap in the choreographed world of Communist Party politics. President Xi specifically posed a big question. Can China and the U.S. avoid the Thucydides trap? And that is something that sounds super academic. It kind of is. If you recall the history of the Peloponnesian War, it's a bit muted. You're not alone. We all had to do some Googling to make the connection. Bottom line, it goes to the heart of Beijing's ambitions for the relationship between China and the United States. Let's get more. Adam Ferrer is Bloomberg Economics Senior Geoeconomics Analyst for the Asia Pacific. He is in our D.C. Bureau. Come on, Adam. I don't know if you were Googling. I was Googling this morning. What's the point here? Because it feels like President Xi came out pretty hot here.
Well, he certainly came out with a strong statement, and his commentary, including his mention of the Thucydides trap, is actually an oldie for him. It's something we've heard several times as he talks about the rise of China and the potential for conflict with the United States. But while certainly those direct words caught some people by surprise, our general take is that this is what we really expected out of him. Taiwan sits at the top of President Xi and China's agenda as they look out towards China's future and President Xi's own legacy in terms of trying to bring the island back into China's control. And what he was really doing was planting a flag and making clear to President Trump that this was a red line for China, and that he was going to proceed in that manner. The question really for us is, what else was the conversation? How else did the conversation go on Taiwan in the closed session? And what did President Trump say, right? With deep fears in Taipei and even in the halls of Congress here that President Trump is willing to adjust the policy of the United States towards Taiwan. Although right now we haven't seen any signs of that. And our estimates, from our perspective, we think it's less likely than some think.
Hey, Adam, before we let you go, what's really at stake for the U.S. and the relationship between China and the U.S.?
Well, for President Trump, this meeting was all about managing this fragile trade truce and, most importantly, keeping the flow of critical minerals and rare earths coming into the United States tech industry. You know, we saw last year the power and leverage that China has in that industry to, lead factories to have to slow down or shut down production lines, as we saw with some U.S. automakers when those key supplies dry up. And so for President Trump, this visit is about keeping things on an even keel, limiting further impacts on the U.S. economy as we look towards midterms, and finding a pathway forward on some other key issues like purchases of key goods like agriculture that China used to be a key purchaser of, but actually pulled down significantly following the initiation of the trade war. And so far, we actually haven't heard much besides this potential Boeing deal.
Yeah, light on deal so far, considering the corporate contingency that is there with President Trump on the ground in Beijing. Hey, Adam, thank you. So appreciate it. Adam Farrer, he's Bloomberg Economics senior geoeconomics analyst for Asia Pacific. I'm rushing because I feel like we've got a lot that we actually want to talk about with our next guest, because investors are watching all of this that we just talked about. Jim Caron is back with us. He's Chief Investment Officer of Portfolio Solutions at Morgan Stanley Investment Management Portfolio Solutions Group, right here in studio. Where should we? Good afternoon.
Should we start with the Peloponnesian War? Thucydides trap?
Yeah, I hope everybody paid attention.
Talking about emerging power unseating an existing power. Is that the whole trap?
See, he didn't need to do any Googling.
I know. Oman, where should we begin? Where do you think, what's important on this Thursday?
So, look, I think there's a lot of things that are going on. We're seeing it in the news cycle right now. We have a very important meeting between the U.S. and China. This is great powers diplomacy that's taking place. Talking about history, this goes back to the 1920s and the 1930s, where, great powers were going to decide what was going to happen, like what the new rules were for the world. And what we're really looking at is a new growth model. So we have these two very important economies, the U.S. and China, and the world needs today a new growth model. And the growth model isn't just for the U.S. to go into deficit to create subsidies for other countries to generate higher growth. And that's the Trump argument on Europe, and that's tariffs, and that's what that's all about. It's really about trying to think in terms of how these two global superpowers can compete for that growth, and also for Europe as well. Mm-hmm. So what you're seeing are business deals that are getting done. Clearly the Middle East is in the middle of this. And you obviously want to see a reindustrialization of the Western world. So that's the United States reindustrializing, and that's also Europe reindustrializing, and that's going to go into energy security, manufacturing, CapEx, the big spend right now, AI, technology, inference, all of these things that are going to build advanced manufacturing. This is all unfolding right in front of us right now, and it's pretty amazing from a historical standpoint.
It is, but what does it mean for the way that countries trade with one another? And I always go back to this. The classic Tom Friedman, the world is flat, like that did not pan out and has not panned out. It did for a short period of time, but we don't need to talk politics and the rise of populism, but there weren't a lot of, not everybody was a winner there.
Let's go back to Bretton Woods, right? So the Bretton Woods period, that's where the U.S. basically made an agreement with the rest of the world that it would have a deficit to fund growth in other parts of the world after World War II, right? So that's the rules-based order that we know. So the rules-based order effectively is how can we generate growth collectively? Now, what we're looking at today is an unwind of that. So that in that period, post-Bretton Woods was more globalization. People like to say deglobalization. I like to say selective globalization. So in other words, growth and partnerships and alliances aren't going to be there just for the virtuous aspect of adhering to this rules-based order of the past. Now it's going to be very, very much a transactional type of an environment. And that's what we're seeing between the U.S., Europe, and Asia.
Would this be true if President Trump wasn't back in the White House or hadn't done his second term? Because I do feel like things changed his first term around.
So that's a great question, because I don't think it really matters who's in the White House. Process is going to matter. Okay. So it did start under Trump, for sure. It started in his first term. Biden continued it. He didn't stop it. He didn't stop it. It all continued.
Especially with China, right?
Especially with China. I mean,
Yeah.
Biden was especially tough on China.
Yeah.
Trump's a lot easier on China. And so when we think about this, whoever the next president is or the president after that, this is a math problem. This is about countries trying to figure out how to get out of deficit, and they want to grow their way out of deficit. We have an aging population globally, China, Japan, US, Europe. That's going to put a lot of pressure on deficit. So if you need higher growth, how do you get that? And that's what the challenge is today. So from our perspective, we think about this as a major structural change that's putting money in motion, because what it does is it creates the world has to look for a new growth model. And there's a lot of structural changes that are taking place. This really opens the door to a lot of thematic investing between growth and value and technology and everything else.
Of these, you've got 4 investable themes, and you talked already about deglobalization, reindustrialization. I also love the concept of state capitalism. Are we going to see more governments? I mean, look what the U.S. has done and things that we are so critical of China and other places for doing. Do we see more of that?
Yeah, so what I call state capitalism effectively is the foundation of this investment. So the way that I look at this is that governments want to generate this new growth, but they can't do it themselves, because if they do, they go into deficit, right? So they need to, this is very key, what they need to do is incentivize the private sector to generate this growth. So how do you do that?
Through policy and so on?
Through policy and so on, right?
Yeah.
So if you want manufacturing centers, you change the tax code. You have accelerated depreciation on CapEx, accelerated depreciation on manufacturing facilities. You want the banks to finance this, deregulate them. This is happening in Europe. This is happening in the US. This is happening in Japan. This is happening everywhere. So the state policies, state capitalism, as I like to call it, that is actually really generating the incentives for the private sector. But given that it's a private sector solution, it's great for investors, because we get to buy the companies that actually do make this change.
But do you not like the government investing directly in companies and buying shares?
I'm never a big fan of that, right? Okay. I'm a small government guy, in general. So and look, I understand that sometimes the government does have to step in and help out. But Europe is the poster child for nationalizing companies all the time, for having windfall taxes on profits. I don't like that either, right? So there's a couple of different dimensions.
Are we walking down a slippery slope then with a company like Intel, for example?
Yeah, I think there are some national champions, and this is, I don't like the idea of government interference in companies, but it's just a general thing.
But there are some critical areas.
Right.
Like you said, critical minerals, rare earths.
Yeah.
Okay. In your view?
Yeah, absolutely. So well, if you think about like the banks, right? So think about the financial crisis, right? So should the U.S. not have only have one bank left after the financial crisis? Governments are always going to step in, and they're going to intervene, and they're going to support their national and they're going to support their national interests. It's a question of how long lasting that is, and it is a slippery slope. I don't like when they step in, because when the government does step in, they generally don't step out, that quickly, and it creates like a precedent for some of these things. So it's generally not a good thing. But if it's done in a way that's that's methodical and it's light, then it can be okay. It's a feature of the system.
Imagine if the president decided to sell shares of Intel right now. I don't know what the fine print said, but like after the run up, that would look like a very good trade.
It would be interesting. Is that like the ultimate insider selling?
It'd be a great trade.
I want to ask you about, in the notes you shared with us, Jim, the goal of your investment strategies is to get ahead of the money, not to follow it. I was thinking about that when I read it. What does it mean specifically regarding the AI build and the AI trend? Because I think everybody constantly says a lot of exuberance, a lot of enthusiasm, but we don't really know how it ends.
So the 4 major themes that are out there create our conceptual framework: deglobalization, reindustrialization, technological innovation, how that integrates with the reindustrialization, and the state capitalism. So if you can use that as a conceptual framework to understand what's driving the money, so manufacturing centers, how do you buy that? Like, how do you actually invest in that? If there's a change in policy, which industries, which sectors, which companies benefit? Create baskets of securities of the winners and the losers, and then watch how the companies behave, and try to figure out who's adopting technology to unlock unlock operating leverage. That's how I tend to think about it. So getting ahead of the money is understanding what the policy change is that's going to drive the capital and figuring out who the winners are.
How much of that is driven by politics, though? We're in a midterm year. We don't know what's going to happen in November. If the Democrats take control of the House and the Senate, for example, that could really limit what President Trump could do. What happens then?
It doesn't go away, it just changes.
Okay.
So if you think about it under Biden, Biden had the CHIPS Act and the Inflation Reduction Act. Those are major policies, and you can invest alongside those as long as you can figure out who the winners and losers are. Trump comes in, changes it. That's an opportunity to rebalance your portfolio and change it. Whoever the next person that comes into the White House, they're going to have their own view on how to do this. So as an investor, you've got to be a chameleon to some degree, and you've got to be able to adapt to these changes. Now, what we tend to do is we use AI and large language models to try to understand this on a global scale. So understanding tax policy, fiscal policy, regulatory policy in the US, Germany, Japan, France, and everywhere else, large language models are great at this, but you have to know the right questions to ask. And in our fund strategies, that's what we tend to do, and these are the baskets of investments, and it blurs the lines between growth, value, defensives, dividends, quality. That's an okay way to do it, but I think it's suboptimal. I think the themes as a conceptual framework really help us through this.
All right, so full disclosure, Cerebras, you guys were involved in the IPO. The stock more than doubled at its highs today in its first day of trading. It's still up about 67%. Some would say that's a very successful, many would say, most would say, all would say that that's a very successful IPO. I know we talked a little bit about, there's always that question about leaving money on the table, but what do you think that this IPO is kind of representative of? Is there going to be more Cerebrases in your view in the future?
So it's emblematic of demand at the broader sectors of the markets for chips, for inference and embedding technology into their businesses. I think the greatest opportunity for investing right now is to find these value companies that are out there who are incorporating technology. And the AI adoption rate is going exponential right now. So as every middle market, small market company, large cap company comes out and needs to have some component of a hyperscaler, some component of AI technology and chips embedded into their business, that's the demand. A year from now, we're not going to remember this IPO.
Isn't that every company, though, that needs that tech?
I love when you say that, right? Because that's exactly right. It is every company that needs it, but not every company is using it, and they haven't really adopted it fully. So the opportunity is to identify those adopters, invest in those, and that's what I mean by about getting ahead of the money, right? So if we understand which industry, healthcare is a sector that I think will benefit the best from AI. It is the best area in my view that can benefit from AI. But how do you play it? Do you buy pharmaceuticals? Do you buy insurance companies? Do you buy hospitals which have had struggled with profits? So creating like a basket around this to see who in the healthcare sector, what segments like the insurers, for example, could be some of the best beneficiaries of this. We construct like a basket around that, and that's how we start to invest, and that becomes a line item in our portfolios.
All right, so you always leave us wanting more. Come back soon.
Absolutely.
Really enjoyed it. Jim Caron, he's Chief Investment Officer, Portfolio Solutions at Morgan Stanley Investment Management, Portfolio Solutions Group, joining us right here in studio.
Hey, let's head to the other studio, just steps away from us. It's where Charlie Pellet is standing by, and he's watching the markets on a record day very closely. Hey, Charlie.
Hi, thank you very much, Tim and Carol. Yes, indeed, record for the S&P 500 index. Do want to begin with that hot IPO. Cerebras Systems, right to the numbers here, because the stock now surging 68% in its trading debut. This after the AI chip maker and data center firm raised $5.55 billion in the year's largest initial public offering. And again, Cerebras trading right now at $318. The Dow, the S&P, NASDAQ all advancing. A revival of the AI trade keeps fueling momentum in stocks. Case in point, S&P 500 index right now at 75.01, up 57, a record there, up by about 0.8%. Dow Industrials up 397, trading trading above 50,000. Did get as high as 50,200. Right now, the Dow's at 50,085, up 0.8%. NASDAQ and the NASDAQ 100 index are both at records. NASDAQ up 0.9%. NASDAQ 100 index up 0.7. Small caps joining the party as well. Russell 2000 index up 0.8%. The VIX right around 17 with a 10-year 4.45%. Spot gold down $14 the ounce, down 0.3%, 46.74 now. While West Texas Intermediate crude 101.28 a barrel, up now by about 0.3%. Briefly, the Walt Disney Company says it will add one cruise ship per year through 2031, and New York City planning a new tax on homes over $1 million bought with cash. Round one of the PGA Championship underway in Pennsylvania at last check. South Africa's Aldrich Potgieter sits atop the leaderboard at 3 under par. Coming up after the close of trading today, Applied Materials. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I bet this is something Charlie, because Charlie likes planes.
So Charlie's ready.
He's going to be interested.
I can guarantee it.
Right? Totally. Yeah. Hey, listen, Wheels Up, that's what we're talking about. They reported their latest quarterly update that came out Tuesday after the close, that it had also $100 million in committed financing to fund growth. I just want to point out the stock kind of traded all over the place the following day. It was up nearly 6%, down nearly 9%, ending the day off 2.5%. The stock, Tim, has since rallied about 18% in the past 2 trading days alone.
Well, we should note, yesterday the company did announce that $68 million debt facility. It plans to use it to help buy aircraft in the next 18 months. The stock down more than 99%, though, since that high back in July of 2021. That was when folks were doing a lot of private flying out of COVID. The stock down about 55% year to date. 13% of the float is short.
Just a little perspective, but this is a company we've been talking to for a long time. Do want to point out Delta is an investor in Wheels Up, and they've got a partnership with the airline as well. For more on the business, we're getting to you. George Mattson, nice to have you back. He's the CEO of the $213 million market cap private aviation company. It is Wheels Up. He's also a former board member of Delta. George, good to have you back here on Bloomberg. How are you? And tell us a little bit about the business. And you guys seem to be doing partnerships and doing some different things. How do you describe the company and all that you can offer a customer?
Sure. Well, first, thanks for having me back, and it's great to be with you. So we've been on this transformation journey for about 2.5 years now, since the Delta-led investment in October of 2023, at which time I stepped off the board of Delta. You mentioned I was on the board to run the company. And the idea behind that investment and our go-to-market strategy from then forward through today and beyond really lies in a unique proposition that we think we are exclusively trying to deliver to our customers in private aviation. This idea of a solutions platform or a solutions toolkit spanning across premium commercial through our partnership with Delta and private aviation on a flight-by-flight basis. So whether you're a member of Wheels Up, and we're proud to have 3,000 members of our programmatic offering here in the United States, or you're a customer who accesses private aviation through our leading global charter business. The idea is to provide the right plane for the next flight, not for every flight, as some of the other models in the industry do. And so we're 2.5 years into this transformation. The first quarter was a very consequential quarter for us because we hit a couple of very important milestones. We announced about 1.5 years ago that we were going to be replacing our entire jet fleet by the end of 2027. We, in fact, finished that 1.5 years early and are now completely out of our legacy aircraft types and into the 2 fleets of the future for us, the Phenom 300 and the Challenger 300, which have been performing as expected. And so we're very pleased with that. We also have sunsetted our legacy memberships that were supported by those fleets and are now exclusively offering to our customers memberships underpinned by those Phenom and Challenger aircraft.
So no more King Airs, for example?
We're still flying King Airs. Okay. It's a much smaller part of our mix going forward. But again, we can offer any customer any aircraft, whether it's a King Air, a helicopter, a seaplane, or a Global 7500 to take them around the world. Our business consists of 2 parts, and obviously the part we're best known for, the original business, is our membership business, and that's half our company. But the other half is this global charter business, which enables us to provide customers the right aircraft for the right mission for their next trip. And by the way, if that's a Delta, if that's a commercial need, If you're flying from New York to Atlanta and there's a bunch of Delta flights, we of course are happy to see our joint customers flying on Delta. And when they need us for a particular trip, whether it's on fleet or through our global charter business, we want to be there to provide the right solution for that mission.
Why did you transition from those older Citation 10 and Hawker aircraft to the Phenoms and Challengers? Wouldn't it have been cheaper to just keep the older aircraft, or was the maintenance getting to so high that it was more expensive to carry those?
Yeah, many of those aircraft were no longer in production, and the reliability of those aircraft were not at a scale and a level that were appropriate for the kind of operation we want to run. One of the very first things we said when we started this journey, day one, was we want to be the best run private aviation company in the industry, that we were going to follow the Delta playbook to do that. We moved the headquarters of the company day one from the sales office, if you will, in New York to the operations center in Atlanta, which is where we're all based. Leadership is based, where we run the company out of. And we've been on an operational turnaround journey as well. We publish our operational stats every quarter. We're the only private aviation company to do that. And we're hitting the cover off the ball operationally. We're running at over 99% completion. Half our days have no cancellations. We're running at over 92% on time. We had 14 days in a row to start this year without a single cancellation across over 1,000 flights. That wouldn't have been possible 2 years ago, and it wouldn't have been possible on our legacy fleet either. These new aircraft that we're flying are much more reliable. Maintenance availability is higher, utility is higher, efficiency is higher. The unit economics of the fleet are very different.
I'm curious, too, how much cash Wheels Up has, and when do you expect to become sustainably cash flow positive, George?
Yeah, so we have ample cash and liquidity now, and we, of course, raised $165 million as we announced with our quarterly results this week. We had our first positive EBITDA quarter in Q4, and we were expecting, by the way, Q1, which is a seasonally weak quarter, to be negative again. But we're on the path to sustain profitability, and we see the performance of the business model and the fleet we now have delivering that in the not too distant.
Will that simplified fleet materially improve margins as well?
Absolutely. The unit economics of these new aircraft are very different than the legacy aircraft that we've retired.
What about Delta, though, and that relationship? Will they need to continue to be pumping cash into you guys?
The cash we raised in this quarter funds our growth plan well into the future. It's a little bit of a function of how fast we grow. We are returning to growth again. Underneath our relatively flat revenue performance for the quarter is another story. We doubled our Phenom and Challenger revenue while offsetting that with the kind of expected orderly wind down of our legacy flight activities. And so, when we look at the profitability of these aircraft, the unit economic profitability, we see the business model becoming self-sustaining. So we don't expect to need to, as you said, pump a whole bunch of additional cash into the business going forward.
Hey, George, on the Delta partnership, I'm just curious what that pipeline looks like from flying on Delta, known for a premium product, to then spending a lot more money to fly private. What does that pipeline look like?
Yeah, so look, what captivated Delta's interest in this and what we've really been driving toward is this idea that private aviation, when delivered in the appropriate way, is an integrated extension of a premium commercial strategy. As Delta's gone on its premium journey, Wheels Up is a core part of that journey for its corporate and high-value customers who access both modes of aviation. This idea of creating access to private aviation when you need it, integrated into a broader relationship that spans across commercial and private. And so whether we're talking to Delta's 45,000 corporate customers or that subset of their 20 million strong SkyMiles member base, so 0.5% of 20 million people is obviously a lot of people, it's 100,000 people. These are the folks that we're going to together, joint marketing, ultimately joint digital integration, merchandising, and so forth. So that's the plan that we're executing.
So what portion of Signature members come over from Delta? What percentage?
Yeah, so when we started this journey, the vast majority of our membership was a leisure membership base. We're now close to 50-50 in terms of leisure and corporate members. And that is kind of an optimal mix, right? You want your aircraft flying with your corporate members during the week and with your leisure members during the weekends. and during holiday periods. And so this idea of smoothing demand through the week and through the year is an important part of our strategy as well. But corporate has been our fastest growing segment. We've grown corporate at 25% a year since we started this journey, largely, well, to a very significant extent, through our collaboration with Delta. And Charter has also been growing at double digits throughout all of this. And this idea of delivering global solutions is resonating and very different than I think the narrative we hear from some of the other folks.
So you know Bloomberg loves numbers, so I have to just ask you. So can you give us a percentage of what portion of Signature members are coming over from Delta? Can you give us any kind of number?
Sure. So we are, today we have over 800. We launched the Signature membership in September. We crossed over 800 members at the end of the quarter. So about a third of our total members are now Signature members, with the legacy members converting over every day. And right around just over a third of those members are corporate members today.
Hey,
go ahead, Carol.
We have, there's
so many questions.
We love talking about this space. External risks. What worries you the most? Fuel costs, regulation, economic slowdown at this point. I mean, and you can throw in what demand looks like. We only got about 35 seconds.
Sure. Look, demand remains very strong. Obviously, fuel is a significant input cost. We're somewhat immunized from that through the ability to charge surcharges to our customers. We haven't seen a significant change or any real change in demand since fuel spiked on the back of geopolitical activities. The ultimate, I'd say, headwind to our business is always the macroeconomic environment and where markets sit. And obviously, the market's at all-time highs. People are flying a lot.
All right. Listen, so much fun. Come back soon. Really appreciate it. George Mattson, he's the CEO, of course, of Wheels Up, joining us right here on Bloomberg Business Week Daily. When we come back, another nervous moment for public health. It's something we wanted to dive into for a while now. We're talking hantavirus.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. First day of trading for Cerebras Systems. Shares now higher by 73% in its trading debut. This after the AI chipmaker and data center firm raised $5.55 billion in the year's largest IPO. The company has a market value of nearly $72 billion. Again, we've got the shares up now by 73% in the first day of trading. The Dow, the S&P, NASDAQ are all advancing. The Dow above 50,000, up 375 right now, up 0.7%. Dow Industrials at 50,068. S&P at a record. Right now just below 7,500, up 54, gain there of 0.7%. AI fueling a record-breaking run. NASDAQ up 214, a record up 0.8%. NASDAQ 100 index up 0.7%. And the Bloomberg Mag 7 index up by 0.4%. The VIX just below 18 now, with a 10-year at 4.46%, the 2-year 3.99%, and the 30-year 5.01%. Gold is down 0.4%. Spot gold, $46.69 the ounce, while West Texas Intermediate crude and Brent both advancing. WTI up 0.6%, 101.61 a barrel. Brent 106.16, up by 0.5%. After earnings, Cisco Systems now up 12.9%. Applied Materials will be reporting after the close of trading. Round 1 of the PGA Championship underway in Pennsylvania. At last check, South Africa's Aldrich Potgieter sits atop the leaderboard at 3 under par. Again, recapping, stocks higher. S&P now up by 0.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News now, wherever you get your podcasts. And Bloomberg Business Week Daily continues. Once again, Carol and Tim.
Great. Charlie, thank you so much. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters in New York City. Well, CDC officials did brief media on the hantavirus situation in the U.S. They said there are no cases of the virus infection in the United States and that they are monitoring 41 people who had exposure to the hantavirus.
We turn now to somebody we talk to regularly during the COVID pandemic. Back with us, Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security, also an adjunct assistant professor at the Johns Hopkins Bloomberg School of Public Health, an affiliate of the Johns Hopkins Center for Global Health. His work focused on emerging infectious disease, pandemic preparedness, and biosecurity. I was joking when you came in the studio. I mean, we literally, we were talking to you every week for, 18 months, just a few years ago. You're the perfect guy to have back to talk to us about hantavirus. Are we entering another phase like COVID?
No, we're not, because these are very distinct viruses. There's 2 different viral families, 2 different set of biological characteristics, and it's not that every virus can cause a pandemic or even an epidemic. And hantavirus is one that has very constrained ability, even the Andes virus, to spread from person to person. It's not as contagious as COVID, not as contagious as flu. So we will have a public health emergency. We've got work to do, but it's not something that's going to threaten the general public.
But for some people, it can be, people have lost their lives, right?
Exactly. Pound for pound, it is a very virulent virus. But just because something is virulent doesn't make it more transmissible or make it something that can cause an epidemic. There's many diseases like Ebola, for example, or rabies is a great example, basically 100% mortality, but it doesn't pose a threat to the general public. So while people who get infected with hantavirus have a mortality rate of maybe 1/3, it's not something that spreads through a population very easily, if at all.
You know, we had this story yesterday in Bloomberg, and it was about Chilean scientists who, for years, were working on a vaccine. And actually, just before the pandemic, they couldn't find the $7 million that they needed to continue with clinical testing, so they kind of put it aside. And a lot of people are asking questions right now, like, oh, maybe a vaccine should have been developed. Given how rare this is, but how fatal it is this something that scientists should work on creating a vaccine for?
I always like to see more vaccines being made for everything, but you have to recognize the economic reality of the issue. If there's not a return on investment because the market size is so small, because there's such a small number of people that get hantavirus, biotech, pharma, they're not going to be interested. So what we have are multiple vaccines kind of in phase 1 level studies, and they need a lot more money, probably $1 billion or so, to get all the way to phase 3. Wow. There may be interest now in doing that, but it wasn't something that was high on the threat radar compared to avian influenza, for example.
I do remember during the COVID pandemic, Dr. Adalja, that we talked a lot about, is this just the first of many? I mean, how do you look at global pandemics and what might come in our lifespan still?
There's not some special clock where it says, oh, it's time for a pandemic and one happens, like 1918, 2019, maybe 100 years, but that's not a real hard and fast rule. It has to do with the way we live. Megacities, travel, interfaces with animals, interfaces with the environment, all of that plays a role. And obviously those pressures are getting more, and travel times are shrinking. Megacities are getting bigger, animal interactions more. So that increases the risk of a pandemic, but you have to also remember that we've got technological and innovative solutions that kind of allow us to master that problem, and we're increasingly being able to master that problem with things like mRNA vaccines if we have the will to deploy them.
Okay, if we have the will to deploy them, which is probably a perfect segue to helping contextualize this for us. A general American, should we be more worried about the hantavirus, or should we be more worried about pockets of measles outbreaks in the U.S.?
Pockets of measles outbreaks in the U.S. are definitely more worrying. That actually causes the general American to change their behavior. Measles is reestablishing endemicity. We're likely to lose elimination status. We've already had 3 deaths from measles in 2025. This is unheard of.
Do those deaths prompt Americans now to pay attention and say, wait a second, maybe the move away from vaccinating young children was not the right move?
Some of them do, but some of them are really, they're really stuck in the mud here, and they won't move. It's an entrenched view, especially from our Health and Human Services Secretary, who has been anti-vaccine for decades and decades. So it does move the needle literally in some people, but not everyone.
But I have noticed that he is speaking out less now on hantavirus, for example.
That's a good thing. We don't actually want him, or I don't want him to speak about hantavirus, but maybe that's because they recognize they have to do this competently, that they have to have the confidence of the American public, and they know that RFK Jr. is not somebody that instills confidence. He plays to his crowd, his anti-vax crowd, and that has no place in what's going on now with hantavirus. So the less he speaks, the better the response will be.
How does the medical community, or at least from your group of medical professionals that you speak to, how do they see this administration? How do they see this particular health secretary in terms of his impact longer term? Or do you think it's just this administration, and then when a new administration comes in, things can change again?
No, I wish it were that. I think that he's done so much damage. Some of it will be irreparable. If you look at the CDC, completely decimated, budget cuts, people quit, people were fired, the place was shot up by a gunman. All of that is going to be hard to recover from. And it's also the fact that when it comes to vaccine architecture and the ecosystem, he basically knew where all the pivot points were, and he's dismantled the entire ecosystem in terms of the advisory committee on immunization practices, the way the vaccine courts are run, all the cronies he's installed, and all the mistrust and distrust. He's done so much damage that I don't know that we come back from this very quickly.
What's the impact on American health?
It's going to, we're already seeing it. Measles outbreaks all over, pertussis outbreaks everywhere. We're worried about diphtheria. We're worried about many different vaccine preventable diseases, and our pandemic preparedness is in shambles. The mRNA vaccine contracts that they had signed with Moderna, that HHS had signed, he canceled all of that. He said we need to take a pause on infectious disease. He's put his own people in NIH and other places, and it's really dismantled the entire way that we think about infectious disease preparedness.
You know what's noticeable, I think, is how during the Biden administration, and when we spoke to you quite a bit during COVID, there was a lot of concern from people on one end of the political spectrum, distrust coming from the government, distrust of vaccines. Now it seems like a completely different political spectrum is being is questioning this administration. So it seems like there's this question about public health and messaging, no matter who's in power.
That's exactly the worst case scenario. Is now public health and infectious disease preparedness is a political issue. There's a Republican version of it, a Democrat version of it. It's gotten sucked right up into tribal politics like everything else in life. And now you have a Republican CDC director, a Democrat CDC director, and they're not going to be the same thing. And that's not how you manage an infectious disease. An infectious disease doesn't care who's in political power.
Just got 30 seconds left. Could the hantavirus mutate to become more contagious?
There's no evidence that this is mutating. All viruses mutate, but there's no evidence that there's any kind of mutations going on that could make it more transmissible.
Thank you, thank you. We have been talking about this in the newsroom and just trying to get a good feel of it. Dr. Amish Adalja, thank you so much. Senior scholar at the Johns Hopkins Center for Health Security, adjunct assistant professor at the Johns Hopkins Bloomberg School of Public Health. Of course, the Johns Hopkins Bloomberg School of Public Health, supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Thank you, thank you.
I'm just taking a look at markets right now on a day it could shape up to be another record close. The S&P 500 up 0.8%. That NASDAQ 100 also set to close at a record up 0.7%.
All right, stick around, everybody. We continue on Bloomberg Business Week Daily. We take a look at stocks on the move on this Thursday. Carol Massar, Tim Stenovic, and this is Bloomberg.